on NDTV Profit.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to. Get the management to answer questions relevant to you. Watch Know Your Company, weekdays at 11:30 a.m. to understand your next big bet. New year. New power panel. India market open. Now in its boldest lineup. This is where the trends get tested and stocks get conviction.
I'll recommend a buy call on a stock only when I'm fully convinced on the stock. With a table-thumping buy.
And when the street wants the levels, he brings the chart.
Charts speak the truth, and I deliver the levels with no frills.
Parag Thakkar and Kush Bohra are now part of the morning crew with Tamanna, Neeraj and Alex. Same show, sharper voices. Every morning on India Market Open. Your favorite market show just got better. On NDTV Profit, for your profit. When the headlines move fast, perspective matters. On Editor's Cut, our editors come together with experts to distill the week's information blitz into clear perspective. Down the stories shaping the world, from markets and the economy to global conflicts and what lies ahead. This is where experience meets insight.
US President Trump says the US will begin Project Freedom to help foreign commercial ships navigate safely through the Strait of Hormuz amid ongoing tensions in the Middle East. The initiative would start Monday morning, Middle East time. Meanwhile, US futures trade flat on Monday as investors evaluate President Trump's plan to guide ships through the Strait of Hormuz alongside signs of progress in US-Iran peace negotiations. Crude futures slide for the third straight session over talk optimism. Onto markets back home, then the Lal Street is set to start the week on a little bit of a cautious note amid mixed global cues and geopolitical jitters. Nifty 50 finds immediate resistance at 24,350, 24,600 levels, while Gift Nifty hints at flat opening with positive bias. And as counting of votes for 5 state elections start today, all eyes will be on the verdict which will decide the fate of Mamata Banerjee's 4th term bid in Bengal and measure Vijay's debut impact on Tamil Nadu politics. The results will also show if the BJP and the left can hold their grounds in Assam and Kerala. Good morning. You're watching Markets Today with me, Shreyanti Singh, and over the next half an hour or so, we'll tell you everything that you need to know to start your day on the right note. In fact, let's begin with just that, get you the handover when it comes to the entire Middle East tensions as well. Now, when you talk about US President Trump's commentary, he's announced a new plan to escort ships through the Strait of Hormuz, dubbing it Project Freedom as well. And when you talk about this particular move, it aims to protect vessels from neutral countries and will also be beginning on Monday Middle East time, and that's the word coming in from him. That's also flashing on your screens as well. Iran, however, has warned that US intervention in the waterway would violate the ceasefire, and Tehran is saying that it is reviewing Washington's response to its 14-point proposal to end the war, even as Trump has also termed the plan unacceptable. Meanwhile, of course, you do have tensions that remain high, and that's across the region with continued fire along the Israel-Lebanon border, and also fresh maritime security incidents near Iran, despite Trump really signaling that optimism coming through over the ongoing talks. When you talk about some of the commentary as well coming in from Tehran's side, they're warning that any American interference at this point in time will be considered a violation of the ceasefire, and they're doubling down on this particular assertion as well. So that's largely the kind of commentary that you have when you piece it through. Let's also quickly take a look at the impact as well. Before we do that, Wall Street, let's take a very quick look at the check right now in terms of markets. Now, on Friday, you did have fresh milestones when it comes to Wall Street. S&P 500 and Nasdaq, some strength as you can very clearly see on your screens as well. Especially on Friday, S&P 500 about a 0.5% uptick coming in. And Nasdaq is the one that jumped close to 0.9% thereabout. So largely powering through on the back of that tech momentum. But the Dow, as you can very clearly see, about a 0.5% downtick coming in as the rotation really kicked in. But like I mentioned, let's also quickly take a look at the US futures positive bias thereabout that you're seeing. So S&P 500 and Nasdaq, yet again, you're seeing strength in both of these indices on the futures front as well. And Dow Jones, again, a little bit of a negative bias that you're looking at right now. But where you're seeing decisive strength really emerging is actually Asia. Let's quickly take a look at the Asian picture as well. Now, a couple of pointers to this. First up, you do have Nikkei as well as Hang Seng, where you're seeing a little bit of strength, about a 1.4% uptick also coming in Hang Seng. So decisively higher, but when you talk about Kospi as well, you're seeing quite some strength coming in. Look at that 3% uptick also, and some of those record levels for something like Kospi. Shanghai also a little bit of a positive bias that's reflecting through largely. But on the flip side, there's actually oil prices that are slipping in a volatile trading day session as well. And when you take a look at the prompt spread as well, which is nothing but the difference between the Brent and WTI contract for the July futures rates, you're looking at that really also contract just a little bit and be a little bit narrower than we've seen in the last few weeks gone by. Brent, with that said, is about $108 a barrel right now. So little bit of a tepid move that you're seeing coming in for both Brent as well as WTI. So largely that's something that you're looking at right now. In terms of those cues, of course, you do have the output that was raised by OPEC as well, and that's also adding a fresh trigger that you should be watching out for. But with that in mind, all of this pieced together for our markets, what does it mean? And what are the F&O cues also are indicating right now? Puneet, in fact, is joining me with just that.
Well, thank you for that. It's going to be a very interesting day because, of course, led by some election mandate will drive the news flow. But overall, the open in terms of the Nifty implied open today indicates a start in the green. So we'll be starting off over 150 points at this point of time. So let's move across, show that at this point of time. In terms of what we've seen consistently in the Bank Nifty as well as the Nifty 50 as well, has been that with this start, we'll be above the 24,200 mark on the Nifty 50, continuing to be around that psychological level of 24,000 at this point of time in terms of spot and the actual market rates as well. And selling was seen across on Friday, and hence continues to be a crucial day for the markets as we go into an earnings heavy week as well for Q4. The Bank Nifty, we highlighted that there would be reactions coming in from Kotak Mahindra Bank earnings, but slipped below that 55,500 mark as a psychological mark. So yet again in a very in a zone where there is not too many supports at this point of time, but foreign investor positions has been something to watch out for, where we've seen that consistently in terms of the index long as well. So let's pull up that chart very quickly and show you that position, because it slipped in the previous week from the highs of almost 19 to 20% to just 11.4% at this point of time and had made a low of 13% after the monthly expiry last Tuesday. Now, May series will be led by earnings driven, but something to watch will be the consistent selling that we've seen in FIs. Put call ratio also at 1.16 at this point of time, but the open interest distribution that we continue to monitor across key levels, it has been throwing some mixed trends. 24,500 continues to be a level which favors the calls, while 24,000 is the level where both calls and puts have active open interest at this point of time. Reduction seen in 23,500 call options in this week as well compared to what we've seen on Friday. So that's the other key aspect. Finally, stock-specific action we've consistently highlighted for the gainers that K Fintech and Vedanta saw a build-up of shorts with a rigor as well as higher open interest as well. But in terms of open interest losers, in terms of OI change, you've seen maybe just Nuvama and we're just seeing longs being unwinded, and Bajaj Finance seeing covering of shorts after a decent set of earnings last week. So overall, stock-specific action continues. The auto pack will be in focus as well on the back of the sales numbers for the month of May.
Absolutely, and let's talk about just that print, because I'm looking at a slightly mixed but interesting picture. Definitely, domestic demand seems to be the highlight here as well.
Well, most certainly, it's not recalibrated across players this time around. So this one should be May, of course, May auto sales. Let's go across and look at the key numbers also very quickly. Royal Enfield continues to be strong at 31%, one of the major players at 1.13 lakh units. But what we've seen also is that the other players like Hero MotoCorp, which had a very low base, have also reported strong numbers, but it has come down below estimates, and so has TVS. So it's a month where you're seeing individual outliers at this point of time, with Eicher Motors in the two-wheeler pack continuing to be the one that outperforms. In the four-wheeler pack though, we've seen Maruti Suzuki report one of the highest sales numbers for the company at a 34% growth. Similar growth numbers seen for Tata Motors as well, with a very strong rigor in this time around as well at almost 59,000 units. It slightly missed the estimates that we were working with, but with what we've seen for Hyundai as well, while it's a flat growth, the domestic volumes at 52,000 is one of the highest in the last few months. In terms of Mahindra & Mahindra, it was a miss this time around, and the likely reason is that there has been a recalibration between the wholesale and the retails. Retails have been slower, so Mahindra has pulled back inventory at this point of time. In terms of commercial vehicles, Tata Motors as well as VECV continue to be in focus. Strong growth yet again for Tata Motors, but tractor makers also have been in focus. You were expecting a month where a high single-digit growth was expected, but both Mahindra and Escorts especially coming out with a very strong set of numbers here. So all these players continue to be in focus after decent sales numbers, but there are individual outliers there with Maruti Suzuki in the four-wheeler pack, Eicher Motors in the two-wheeler pack, and what we've seen in Escorts within the tractor makers as well.
Absolutely, and that's definitely one space to really watch out for. Thank you so much, Puneet, for joining us with that entire lowdown. But let's also get you Varsha as well, who's joining us with that entire list of stocks that are going to be in focus bright and early this morning. Varsha, over to you.
Yes, absolutely. A lot of stocks which will be in focus on the back of news flows. Let me start with Indus Towers and Vodafone Idea, wherein the Department of Telecom has finalized AGR dues at rupees 64,446 crore. So Vodafone Idea and Indus Tower should be in focus on the back of this news. Do keep a watch on that. Dixon Tech and Amber will be also in focus as FDI rules has been notified. Gravita India and all the recycling stocks will be in focus. This is when government has advances critical mineral security. This is to strengthen the overall recycling segment. Talking about Ramakrishna Forgings, this company is expected to enter forged wheels business with rupees 2,000 crore Chennai plant. Siemens and NCC will be in focus on the back of order wins. Well, Siemens has received an internal work allocation of rupees 1,825 crore, while NCC secures 4 orders worth 1,703 crore in April. Talking about Tata Power, company is going to invest 6,500 crore to set up a 10 gigawatt photovoltaic ingot and wafer manufacturing facility. Nothing but the backward integration. Lastly, Tech Mahindra will also be in focus as they're going to acquire 85% stake in Alluri Tech. So all these stocks will be in focus on the back of news flows.
No, absolutely, and thank you so much, Varsha, for joining us with that entire list. So there you go. That's a very comprehensive list that Varsha compiled for you in terms of some of those stocks that are going to be key to watch in today's trading session. And we've of course told you about a sector that you should be watching out for But that said, of course, you do have some of those cues coming in on the back of geopolitics that are going to be top of mind for investors as well. Kivra Jangid, Professor and Director, Jindal Center for Israel Studies, is joining us right now on the show. Thank you so much for taking time out, sir, and joining us bright and early this morning. You know, a lot of things that you're looking at right now when it comes to the geopolitical landscape right now, especially when it comes to Middle East, you do have top of the mind the entire Project Freedom announcement that is coming from President Trump. How are you taking a look at this, and what does this really signal for you as well?
Shiranshi, the situation doesn't really look promising from the market's point of view. I think markets hate unpredictability. But the whole situation, in the absence of any respectful deal, they are postponing the eventual outcome of this, almost paused war for more than 30 days now. So I think what Donald Trump is signaling is that he will reject the proposal that was given by Iran yesterday. And the only thing that they are trying to do is to give optics that there is another round of ammunition movement to Israel and ammunition movement to UAE to indicate that America will attack Iran again because Iran is really not stepping from its maximalist demands for a ceasefire.
No, absolutely. And how are you really looking at the entire 14-point plan as well as 9-point plan? That entire conversation that you have, there seems to be a little bit of optimism that, if you read between the lines, you could really catch it. Is that the sense that you're also gathering, or do you think that there's still a lot that is up in the air? There's a lot that is, uncertain on the table?
Well, there is less optimism because there is almost a zero compromising position that the both parties are showing to each other. 14 points or 30 points, the fundamental issues are three. Can Iran have a nuclear enrichment? Can Iran carry on with the blockade of the Hormuz? And can America allow Iran to have proxies like Hezbollah in Lebanon? Now, Iran is carrying a position of power in terms of negotiations. It might have lost the battle and borne more damages inside the territory, but politically speaking, it has this uncompromising position. And so does Donald Trump. Now, fundamentally, before this war, America had to compromise a bit and allow a certain degree of nuclear enrichment and say, fine, there would be no level above 60 for your enrichment, and that may take care of the threat of the nuclear bomb in Iran. Now, that position is got complicated because of the Hormuz. So now America is in a way pushing two envelopes at the one, in one go. That you unblockade Hormuz and you also commit to this nuclear enrichment. And Iran is bargaining which one it can get. My sense is, for the Iranian vital interest, I think they will bargain for the nuclear enrichment right. They will open the Hormuz because it also gets Iran a bad name with others. But in return of Hormuz, Iran is going to get the nuclear enrichment. And the current dilemma in America is to get a deal respectful enough for the nuclear issue in Iran.
Right. No, absolutely. And that, thank you so much for, brilliantly summing that up in terms of those 3 points as well that are very crucial to watch as well. Thank you so much for joining us as well, bright and early this morning. So there you go. That's key commentary coming in terms of how you should be looking at all of these headlines from the Iranian front as well. But let's also get back to the markets. Take a look at some of the stocks that are going to be in focus to watch out for. Something like a Kotak Mahindra Bank is going to stand out on the back of delivering a strong set of numbers in the fourth quarter. Both margins and asset quality that you're looking at improving with better than expected net income as well. So that's largely the summation of it. But Shivam, in fact, is joining in with some more details when it comes to the earnings fine print here. Shivam.
Well, a strong set of numbers from Kotak Mahindra Bank this quarter, and starting with the key highlights of the result. The first up is the net interest income, which has seen a better than estimates growth, and that was on the back of strong credit growth. The margins have also improved as there has been a decline in the funding cost, and also there has been a rise in the low cost deposit. Their CASA mix has improved a lot. Also, the credit growth was led by a strong momentum in the corporate lending segment on YY basis, and on the profit side, it has also seen the improvement on the back of lower provisions. Asset quality has also seen a improvement on the lower credit cost too. Now, looking at what the management has said on the slippages, so the improvement in slippages was mainly driven by the granular retailer collection and the unsecured stress cycle that has been seen in its retail CV segment and MFI and credit card segments that are largely behind. And also on the credit cost front, the improvement is expected, and in retail and CV segment and credit cards, the collection efficiency has also improved and the delinquency levels has also come down. Now, in MFI segment, the retail they have restarted the disbursements, and the portfolio quality is comparatively more better than previous time. The management has going forward will focus on the fixed cost reduction through automation and digitization, and the main focus will be on to cost to asset reduction too. Now, on the front of guidance, the company is has guided that the advances growth will be around 1.5 to 2 times of the nominal GDP on a sustained basis, and they will focus on growing the gold loan book aggressively in FY27. And on the margins front, they are expecting margins to moderate in FY27. Now, coming to the brokerage's views, Morgan Stanley has maintained a overweight rating with a target price of 500 and has stated that the quarter for Kotak Mahindra Bank was good, and the bank stands at an attractive valuation. Looking at the few key metrics such as the profit after tax, margins, net interest income, they have all beaten the estimates, and slippages and credit cost have fell sharply.
No, absolutely, and thank you so much, Shivam, for joining us with that entire earnings fine print. So there you go, that's Kotak Mahindra Bank. That's going to be important to watch out for. But what else is important for you to watch out for this morning? Now, counting of votes for 5 state elections to start shortly, and all eyes will be on the verdict, which will decide the fate of Mamata Banerjee's 4th term bid in Bengal and also measure Vijay's debut impact on Tamil Nadu politics. There's a lot that you're looking at right now. Vasudha Venugopal from Chennai is joining us with the ground report there.
Well, Shreyansi, it's very important to understand that today is going to decide the fate of several important leaders. M.K. Stalin, the Chief Minister of Tamil Nadu, and Mamata Banerjee, TMC Supremo. Both of them have been faces of the opposition, also very crucial part of India bloc. And today, whatever Bengal decides is going to be in some ways historic, because if Mamata Banerjee comes back, she heads for a 4th term. And this would also be another foiled attempt by the BJP. But if the BJP comes back, then it is over to 2011. Remember that the left lost power in 2011 after 32 long years of uninterrupted rule, and Mamata Banerjee's coming into the scene changed everything. So if the BJP comes to power in Bengal, it also changes everything, not just locally for the people of Bengal, but also it will have national implications. Remember, the delimitation bill is also likely to make a comeback in the monsoon session of the parliament. So the numbers of the TMC and the TMK are also going to matter quite a bit. When it comes to Assam, it's of course, BJP managing a majority number on its own is going to be crucial for Himanta Biswa Sharma. And of course, in Kerala, it could be the end of left, and it could also be the revival of the Congress party. But coming to the state where I am in, my home state, Tamil Nadu, which is where a lot of action is, because if Vijay manages to do well, it also would mean, dangers, threats for the Dravidian party. Sam Daniel is here with me. Sam has been covering, Tamil Nadu politics for many years. Sam, what is at stake here, and who has more to lose?
Well, the ruling DMK aims for a 2nd consecutive term, something even Stalin's father, late Chief Minister Karunanidhi, could not achieve. And in that sense, they've been winning 3 elections. They've strengthened the alliance, made it more formidable, and they hope that the alliance arithmetic will work for the advantage. But we have a wild card entry this time, Active Vijay, who commands a cult following. He has a huge following among women and children, women and youth in particular, and he hopes that he'll be able to sweep elections, maybe do a kind of Anna Durai or MGR who had won elections in the first place. For the AIDMK, the stakes are really high because after Jayalalitha died, EPS has been losing election after election. 3 elections they've lost, and now he has to really prove himself that he can actually steer the party to reclaim the lost political ground. It's a kind of a make or break moment for EPS. So stakes are high for really all the three parties, although it's a 5-cornered contest.
Absolutely. Shreyansi, it's also important to understand that cinematically these personalities have been very important. While there are analogies being drawn to M.G. Ramachandran or NTR, remember that they lived at a very different time. Vijay lives in a very different time. Remember, he's been working very hard to ensure that his party grows, but the DMK has roots in social justice, welfare, and more importantly, the Dravidian identity, which has been very important for the growth of Tamil Nadu. In fact, TVK, Tamilaka Vetrikayagam, is the only party apart from the Nam Tamlar Katchi which does not even have a Dravidian in its name. Sam, do you think that's going to impact, because Vijay is really focused on his Tamil, does the DMK going down also mean there could be implications in the way, Delhi looks at Tamil Nadu?
Very true. In a sense, the Dravidian ideology, if DMK loses or comes down in its tally, could raise questions on the effectiveness of the Dravidian ideology and whether TVK, in a sense, is going away and leading the younger voters, first timers, the Gen Z, towards a different kind of polity.
Absolutely. So the DMK Plus Alliance won 159 seats last time, reducing the AITMK to 75 seats. Like Sam said, the AITMK needs a victory more than anybody else, but this is also a prestige battle for the TVK and in some ways could decide the way Tamil Nadu will vote in future.
Well, absolutely, and thank you so much, Vasudha, for joining us bright and early this morning, as well as Sam Daniel for also brilliantly summing up what the election verdict is going to be looking like. Those answers will emerge for you shortly, but it's a wrap on this edition of Markets Today. Thank you so much for tuning in. India Market Open up next.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to. Get the management to answer questions relevant to you. Watch Know Your Company, weekdays at 11:30 a.m. to understand your next big bet. New year. New power panel. India Market Open. Now in its boldest lineup. This is where the trends get tested and stocks get conviction.
I'll recommend a buy call on a stock only when I'm fully convinced on the stock. With a table thumping buy.
And when the street wants the levels, he brings the chart.
Charts speak the truth, and I deliver the levels with no frills.
Parag Thakkar and Kush Bohra are now part of the morning crew with Tamanna, Neeraj and Alex. Same show, sharper voices. Every morning on India Market Open. Your favorite market show just got better. On NDTV Profit, for your profit.
Economy, business, world, technology. Noise filtered, numbers decoded. Insights that rewire your worldview. From governance to growth, we connect the dots. Your daily edge, your global advantage. India Business Report with me, Gauri Dwivedi, weeknights on NDTV Profit.
When the headlines move fast, perspective matters. On Editor's Cut, our editors come together with experts to distill the week's information blitz into clear perspective. Down the stories shaping the world, from markets and the economy to global conflicts and what lies ahead. This is where experience meets insight. No noise, no hype, just sharp takes on what to watch next. Editor's Cut, every Friday, 3:30 p.m. only on NDTV Profit. You're watching live from the NDTV Profit headquarters in Mumbai. This is India Market Open with Tamanna, Alex and Neeraj.
A very good morning. You're watching India Market Open. For all of those of you who have tuned in because you're more excited about what's going to happen in the markets than in the elections, thank you. Thank you for coming in. Honest admission here, because I think one eye on the screen is going to be on elections. But so here's what we're going to do for you. We're going to ensure that you have enough information and analysis. It might be a little more succinct and precise, but you'll have enough analysis right here on NDTV Profit on what is happening in the elections as well. It's 8, so the first postal ballots will start coming in a bit, so all of that will be covered for you. But there's so much to unpack today, and markets at least looking like they're going to start positive.
Yeah, I mean, to my mind, this election verdict may not have an impact on the markets per se, because the market is bigger fish to fry, if you will.
Yeah.
The pun is intended here.
Bengali fish.
But yeah, I mean, there is some whiff of good news from the global front. It may last only for 12 hours or 24 hours until the next Truth Social post, but be that as it may.
Yeah, I think this Operation Freedom. I think the one line in that Operation Freedom post where he's saying that this is something that we all want to do together, even Iran, to, you know, let these sailors out. Maybe that is being seen. But I don't know, I haven't heard anything clearly from Iran saying that they're willing to participate in this operation.
Yeah, except for that one post which says the Hormuz won't be operated by Trump posts. This was the small reaction.
That and any attempt to get around or interfere, the US to interfere with maritime activity in the Hormuz will be seen as an act of war.
Yeah, but you know, there's an actual humanitarian crisis brewing there, because imagine there are people stuck on ships for months now, food supplies running out, sanitation is not how it should be. Beyond a point, these ships, that whole trip was not meant to be stuck on the seas for that long. So hopefully there's some relief.
Yeah, I mean, if they're India to those ports, it's 3 days.
Yeah, no,
but election should be fun, right?
Sorry?
Election should be fun.
Election should be fun. I love the fact that at least 2 pollsters said we are not going to give only any exit polls. We don't know what's happening. I thought that was very telling. Should we talk about elections first before we get to our global cues, you think? All right, Nilanjan Mukhopadhyay with us this morning, just because that's the flavor of the season right now, isn't it? Today is a bit about elections, a lot about markets as well. But senior journalist Nilanjan Mukhopadhyay joins us now on the show. Nilanjan, you know, for our viewers, let's pull back a little and put into perspective why these state polls, this set of state polls, becomes crucial from a national perspective.
It becomes crucial, you know, because West Bengal, first of all, is virtually the last frontier for the Bharatiya Janata Party and Mr. Narendra Modi, the Prime Minister of India. It's also important, West Bengal is very important because if Mamata Banerjee is able to win, then it is going to change the dynamics and the entire equation within the opposition in the country. There is also an expected victory of the Congress in Kerala. So it is going to be, very interesting to see as to how the various opposition parties interact with each other. There is, of course, Tamil Nadu. The big question there being whether the basic principles of Dravidian politics, is it all going to continue for another 5 years, or we have a completely new kind of an political overall there with the TVK led by the film actor Vijay. If that is going to be, the party is going to be doing very well, then it means that there is going to be a complete change in the nature of the politics. So much is at stake, and it is going to determine not just the nature of state politics in all these states, but also nationally it is going to be important, because a victory in West Bengal and of course Assam is going to set the tone for Mr. Modi's charge towards 2029.
I suppose, Nilanjan, also because of the timing, right? State elections, which come in the middle of this cycle of your general elections, is also a temperature check. And at this point, with the West Asia crisis, what is happening geopolitically in the economy, it's important to understand how a large swath of voters are feeling.
Well, yes, India, of course, is said to be a land of serial elections. We are at any given point of time either preparing to go into an election, or have just put an election behind us, or are in the middle of elections as it is now. So that is it, that the moment the excitement of this dies down, there is going to be immediate, curiosity. What is going to happen next year in Uttar Pradesh, Uttarakhand and Punjab, so that gets over, then there will be another set of elections before us. But this particular lot has come, as you rightly pointed out, in the middle of the West Asia crisis, and throughout the entire campaign, there have been widespread speculations that prices of fuel and petrol, diesel, LPG, all that would go up the moment people press the EVM and they are locked up ready for counting. So over the last 2 days, after the 29th of April, when people voted in the last phase in West Bengal, there has been steady speculation across media, and also huge queues in petrol pumps across the country. Those kind of reports have emerged. So I really wonder whether it makes sense, if prices have to be increased and there is a certain amount of inevitability about which the people have also accepted, then why delay a price rise? Why not in the middle of the campaign? I think these are the various issues which are there, that the government has to de-link elections, from major policy decisions which have to be taken in any case.
Nilanjan, morning, Alex here. So in the run-up to results day, there's been some debate about the fact that a couple of pollsters have thrown their hands up in the air and said they can't call this, or they don't want to call it because of the lack of data. One, why do you think that is? Why are people unwilling to share their view in these exit polls? And two, do you want to stick your neck out and call the result before the result?
No, I would not. I'll take your second question first. That I definitely would not like to stick my neck out and put a figure to the tally from any of these states. But yes, the most crucial state, which I have been personally taking a very keen interest in, not just because of the fact that I happen to be born in Bengal, but also because I think that it has a greater bearing on national politics than the other elections. Assam is more or less decided at the moment that it is in the sway of the BJP. Tamil Nadu remains open. Kerala, yes, it appeared that after several stints, there is actually a door open for the UDF, the Congress-led UDF. But as far as Bengal is concerned, I definitely think that the BJP would be able to enhance its vote share from what it was last time, that is 38%, and the Trinamool at 48%. So I expect the margin between the two of them to become much more closer and become a very keen fight. Finally, how do the numerals settle down, we really do not know. As
Yeah.
far as exit polls, do you want me to take that? We have time.
No, we have to wrap up, Nilanjan, and I think exit polls now has really become yesterday's story because we'll start seeing the numbers now in a bit. But we hope to catch up with you again once the results are really clear, because this sort of clarity and clear-eyed view that Nilanjan brings to the table is always interesting to hear. Thank you. Always a pleasure speaking with you. All right, quick recap for what markets are looking like today. US markets have closed mixed in Friday's trade. You had actually the S&P 500 and the Nasdaq hit new highs. The Dow was a little down and out, about 152 points down. Let's pull up futures as well. So it's been a seesaw, as we have been seeing, in understanding whether US and Iran are any closer to a deal or not. And you're seeing US futures completely flat as that clarity still evades us. Apple shares, meanwhile, climbed nearly 3% after reporting earnings and a revenue beat. One standout was the outgoing chief, Tim Cook, talking about how he's over the moon on Apple sales in India. So Apple there in focus. Meanwhile, treasury yields were largely unchanged as manufacturing data came in below expectations. The 10-year was at 4.37%. OPEC Plus has increased oil output by 188,000 barrels a day. So let's pull up Brent for you. Brent July has cooled off to about 108.2. Spot prices are also showing signs of cooling out a bit. This is a big decision from OPEC Plus after Dubai exited OPEC Plus, or UAE exited OPEC Plus. Let's pull up Asian markets for you as well and look at what's happening there, all up in the green, as is India, at least as far as the implied is concerned. India implied, indicating that you're going to have a good start, and some of it might have to do with Trump's latest post on Project Freedom. So I'm not going to read out the whole thing. We'll show you the post, but essentially what they're planning to do is that we have told these countries in the Middle East and the United States that we will be guiding their ships safely out of restricted waterways so that they can freely and ably get on with their business. Again, these are ships from areas of the world that are not in any way involved with the war. So they're planning to do this. They're calling it Project Freedom. Now, the problem with this is that will this completely turn into another leg or another reason for escalation of hostilities? That's really what the concern is. But look at what Trump says. He says, I'm fully aware that my representatives are having very positive discussions with the country of Iran, and these discussions could lead to something positive for all. So I thought that was important as well. And maybe that's one of the reasons for the uptick. I mean, I think the verdict is still out whether a surprise in West Bengal will boost market sentiment more than for a temporary period, if at all.
Yeah, that's a good question to ask. Let me set the context before we get into the trade setup for the day by telling you what happened last week. And you had broader markets that showed quite a bit of resilience actually in a choppy week. You had banks that underperformed with the index losing ground. So take a look at the weekly changes. You have the Nifty 50 that edged into the green for the week as a whole, just 0.4% higher. Remember, it was only 4 trading sessions out of 5. Friday was a holiday. The mid-cap index gaining about 0.6%. The small-cap index stood out with gains of close to 2%. Meanwhile, the Nifty Bank seeing cuts of as much as 2% and highlighting that underperformance for that benchmark in trade last week. On Thursday, you had the benchmark Nifty 50 that lost 0.75%. 2 out of the 4 sessions were in the red. Small caps outperformed, with the index only losing about 0.4%, and the mid cap index lost about 1%. It is less than 3% away from 52-week highs. Bear that in mind. And this apart from the Nifty Next 50, also around that same mark away from the 52-week highs. Bajaj Auto was a top Nifty 50 gainer on buyback consideration, and only 10 Nifty 50 stocks advanced. Reliance Industries was one of them, ended up in the green, having gained as much as 2.7% from the low point, and was a big contributor therefore for the recovery that you saw on the benchmark Nifty 50. Nifty IT was the sectoral bright spot, gained 0.4%, and most sectors lost ground, led by metal, PSU banks, realty as well. And market breadth tilted in favor of the declines at the end of the session.
Yeah, and well, things are looking okay right now, but let's see how they last. I was from amongst everything else, just before we get to trade setup, I was listening to Ruchi Sharma at one of the conversations, and he spoke to Rahul as well earlier, Rahul Kavallar, editor-in-chief. But one of the things that he said in one of the conversations that came up is that and it was astounding to me that TSMC, one single company, their weightage, TSMC's weightage in the MSCI EM is more than all of India put together. That's the extent of bet that FIs are making on AI trade, and because we don't have it right now, which is why you're not seeing flows. So it's pretty astounding, that statistic, if you will. Now, the trade setup for the day today, earnings look good though, good thus far. Remember, every Monday we kind of do this small dissection. I'm not going to get into details right now, but the EBITDA growth in quarter 4 is the highest in the last 7 quarters. Even the profit after tax growth by the matter, or the EPS growth as well, despite the dilutions. But EBITDA is what matters, and for now, it is looking the strongest. Now, you can argue that quarter 1 is when the skeletons will come out, the impact of the conflict will be seen, but be that as it may, if you feared that quarter 4 would be back, thus far, quarter 4 is actually looking very, very strong. So, which is actually very good news. But you also see the reaction to Wari results, reaction to Edelweiss, all shows that the markets do not have even the slightest room for any kind of disappointments. And if there's a whiff of disappointment, the markets will punish you as the way markets punished Wari on Friday, or on Thursday rather, or for that matter, the way Edelweiss also fell. Very, very sharp gashes into those stocks. And you know, they'd run up quite a bit. So the market really wanted things to do well. But if you show slightest disappointment, and both of them did, you get punished brutally. Two-wheelers are showing moderation as well, and in four-wheelers too, you're actually seeing a mixed bag. Now, is this the whiff of maybe some bit of moderation in demand? I don't know. I mean, Maruti looked okay, Tata Motors looked okay, and I think the healthy order backlog for Maruti, low inventory levels, capacity unlock, etc. might be driving it. But by and large, autos haven't quite really set the stage on fire this month around. Guys, I don't know if you're reading into this as moderation or something else, but it does look a bit sluggish, especially two-wheelers. They didn't look very great.
I thought some were better than. I think it was a mixed. I thought it was a mixed bag. Some
on passenger vehicles, 100%.
Yeah, some did very well. Two-wheelers maybe could have moderated.
But
seasonally,
Maruti and Tata Motors PV.
Yeah, seasonally, you think that this month maybe, or you could wait for it to pick up.
Well, one hopes that it is not the impact of confidence loss because of the conflict. Just hope that that is not the case.
Yeah, because that would be the most latest indicator that you would get to any kind of response to the conflict right now. We'll have to wait and see. Yeah, among the factors to watch, of course, elections are up there. Results in 5 states will be announced. Exit polls have been unable to present a clear picture in West Bengal, and the markets will have to wait and see. Meanwhile, the Nifty, for the setup today, the Nifty managed to stay afloat near the 24,000 mark. The short-term trajectory depends on its ability to hold a narrow support corridor. Crucial supports at 23,800 to 23,750. If this breaks, expect a slide to 23,500, which is the line in the sand for the short-term bullish trend. The bull case is that we see a move past 24,300 that opens the door to 24,700. The banking index, though, was the weakest link last week, following over 2% drop. Unlike the Nifty, it may have a bit more downside before finding its footing. A short-term dip is likely to test 53,600 to 53,500. A recovery target post-dip, a reversal towards 56,000 and eventually 58,500 is expected. The technical view suggests buying the dip near the support levels, especially 23,750 for the Nifty and 53,500 for the Bank Nifty. So those are some of the levels that you should look at. But let me go across to Puneet to talk about the F&O setup this morning.
Well, thank you for that. Definitely big election day coming in, but largely what we've seen for the markets, consistent selling from foreign investors even on Thursday, over 8,000 odd crores being sold. Implied open does indicate a start in the green. We'll be above the 24,200 mark, but currently what we've seen consistently that there was selling, of course, on Thursday, hence closing a tad below 24,000 odd levels, the psychological mark we've been speaking about. And the Nifty Bank as well has been the other key factor, where it's now slipped below the 55,000 mark again, and here not too many supports in these levels. So this will be a volatile week again for Nifty Bank, and continuing to monitor all those trends as we come across post results of major banking names largely over, and this will be continuing to be in focus going forward as well. In terms of index longs, we've hit a new low of almost 11.49% of consistent 19 to 20%. That changed last Tuesday with the monthly expiry for April, and those positions haven't been rolled over too many. So the index long for foreign investors has now slipped to a record low, at least what we've seen since the conflict started, and the put call ratio also showing a similar trend as of now. Open interest distribution has been largely stable as what we highlighted. As the index has been at around 24,000, you've seen at that level both open interest for calls and puts being the highest, while 24,500 continues to attract the most in terms of calling action. Finally, individual stocks, we've highlighted a couple of them on K Fintech and Vedanta and in open interest gainers. And for the losers, there's only one key one that we're continuing to monitor based on the open interest change. So let's go across to the next one. And that's largely based on Nuvama, which saw longs being unwinded in the system. So overall, continuing to monitor all earnings reactions, but Autoback continues to be in focus, which was definitely a mixed month this time around.
Okay, let's take a look at some of the stocks that should be on your radar. At least here's what's on my wish list, or watch list, I should say. I'm starting off with Maruti Suzuki. It's a thumbs up because it's recorded its highest ever monthly sales. Total sales were up 33% year on year at 2.39 lakh units versus an estimate of 2.13 lakh units. Domestic sales were up 31% for the year. Exports were up 44% for the year, and total passenger vehicle sales were up 35% at 1.87 lakh units year on year. So the numbers have been good. LCVs have also done well. Those were up 2%, and overall market share jumps to 42% in the first 2 months of FY27. They're targeting to reach back to a 50% market share by 2030, and that's quite something for Maruti with all the increased competition. Kotak Mahindra Bank is the other one. Overall, a thumbs up for Q4. Net interest income was up 8.1% at 7,875 crores. Operating profit was up 7% at 5,855 crores. Net profit was up 13.4% at 4,027 crores. The gross NPA at 1.2% versus 1.3%, and net NPA at 0.25% versus 0.31%. There was a drop in provisions by 36.2% as well. Here's what Morgan Stanley is saying on Kotak Mahindra Bank. They've maintained an overweight with a target price of 500 rupees. They're saying quarter 4 was a good quarter, and the bank has attractive valuations. Their PAT has beaten estimates. Net interest margin, net interest income, and core PPOP has also beaten estimate. Slippages and credit costs have fallen sharply. Commentary was confident, and earning resilience and attractive valuation makes it one of our key picks amidst macro risks. The other one that I have on my list is Mazagon Dock. Decent set of numbers. There's another defense company which didn't do well in terms of reporting numbers, but Mazagon was definitely decent. Revenue is up 21.3% for the quarter at 3,850 crores. EBITDA is at 543 crores versus 119 crores. Margins at 14.1% versus 3.8%. Net profit at 679 crores versus 325 crores. They've declared a dividend of 4.62 rupees per share as well. So here's what's happened for them. Revenue has improved, driven by execution across key projects, including destroyers, frigate, ONGC's part replacement project, submarines, and MRLC of submarines. They've delivered their 4th frigate to the Indian Navy on the 30th of April this year. They've received platform supply vessel orders of 370 crores from the Shipping Corporation of India, and their order book stands at 20,540 crores. Their margins have improved, supported by provision reversal related to exports and ICG orders as well. So Mazagon is one that at least has performed well in terms of its numbers.
Zentech is the
other one. Zentech is the other one, which was not that great.
Yeah, just I was guessing. All right.
Yeah, so that was quite and also because so far the defense companies which have posted have done a good job versus last quarter, where they were all looking a little painful. So you could say lumpy business, blah blah, but the year end has been good for them, not for Zentech.
Not for Zentech. It was actually a strong contender to make it to my list, but I didn't pick that. I have 3 other stocks to talk about, all on the back of earnings. Jindal Steel stood out to me, and a very strong set of numbers. Let's first talk about the takeaways. A strong revenue growth led by domestic sales volume. That sales growth stood at 16% on a quarter-on-quarter basis. The overall volume was higher by 15% on a sequential basis. Now, the rise in spot prices was supportive, and that aided realizations, as a result of which the adjusted EBITDA per ton has risen by as much as 45% on a sequential basis. It was adjusted for actually a forex gain in the fourth quarter. The PAT growth, despite an 833.6 crore exceptional loss, was quite considerable, and that loss was on impairment as well as inventory write-down of their Australian arm. Remember though that the shares are up as much as 15% year to date and 36% over 1 year, as a result of which some brokerages have weighed in saying that the upside might be capped. In fact, Citi has written saying that it's maintained its sell rating but hiked its target price to 980 from 785. That's quite the jump. And they're saying that it was strong pricing that drove performance in the fourth quarter. Some cost offsets, ramp up focus, upside from spot prices seem to be capped at this point. The EBITDA per ton though has upside potential from fourth quarter levels, and a lot of optimism according to them appears to be priced in. DMart or Avenue Supermarts is the second stock on my list. You've seen a spike in consumer purchases in March, which aided the sales growth. In fact, the management weighed in and spoke about why that was. They thought that it was conflict related, and it returned to normal towards the end of the quarter. Same store sales growth is at the highest level in 2 years and ahead of estimates. It stands at 10.8%, and there's also margin expansion of 42 basis points seen in the quarter. They've seen aggressive store addition not just in the fourth quarter but through the year, but for the fourth quarter it stood at 58 stores. Some of those key numbers: 19% revenue uptake, 27% increase in EBITDA, PAT number up as much as 19%. I've picked one note, that is Morgan Stanley on Avenue. It maintains an overweight with the target price of 5188. They say a slight margin miss, but everything else looks particularly good. They talked about the like-for-like growth, and they also say that the business hasn't seen any supply chain disruptions. This was from the press release. And they also talk about the fact that there was that geopolitical-led purchasing that took place at the end of the quarter, which normalized. And finally, SIS. This stood out because it could well be a turnaround quarter for the company. Of course, it had disruptions on account of the labor code, etc. in the third quarter, but you actually had the highest ever quarterly revenue and EBITDA in the quarter gone by, and both their domestic as well as international business on security solutions have seen growth of 30+% on the revenue, and EBITDA improvement in the overseas business has also aided the overall performance. So decent set of numbers for these guys. It might actually reflect in the stock price today.
Yeah, what didn't make to my list and almost made to my list was maybe an Equitas or a Dr. Lal PathLabs, right? Such strong numbers, and in Dr. Lal's case, highest revenue growth in 15 quarters, so many target prices raised, but just there's so many stocks. So very quickly, my list before we move to autos, I'll start off with Adani Enterprises, and using the Jefferies note here to just highlight what they did, because it sums it up very effectively. They've maintained a buy. They've raised the target price to 2,800 from 2,600 on Adani Enterprises. They say that stronger March quarter EBITDA driven by airports, Adani, ANIL and copper business. The profit after tax is negative due to higher depreciation led by Navi Mumbai Airport and the copper assets, but the EBITDA number is one they are focusing on, and the company is guided to FY27 EBITDA ramp up. They expect over 30 billion or 3,000 crores of incremental EBITDA for the company going ahead, and which is why the target price raise. Watch out, it's been a stock, maybe the stock reacts to these numbers on what seems to be an okay day for the market wide as well, so keep that in mind. Two very important stocks, you could argue, Vodafone Idea and Indus Tower. Vodafone in particular, such retail ownership there. Now, what's happened? Back of numbers, dividends, etc. I'm just quickly gonna tell you what the brokerages are saying about this as well. On Vodafone Idea, Citi's maintained a buy at target price of 14. He's one of the oldest telecom analysts. I'm using the Citi note here for Vodafone Idea. Citi believes that the chapter of regulatory uncertainty is now largely behind. the government reassessing AGR dues at 64,000 crores as of December 25 is 20% below the outstanding amount, but it's still great news. It meaningfully improves, according to Citi, the economics of liability, reducing the burden on Vodafone Idea, and they believe that Vodafone is better positioned to close its spending to 25,000 crore bank debt raise as well. So thumbs up for Vodafone. Very likely could react positively. Keep an eye out for that. On Indus, I think the jury is out there. So while Citi is positive because they say there is lots to like in what Indus has delivered, they have maintained a buyer target price of 530. They believe the resumption of dividends after a 4-year pause is positively. It helps anchor a 4 to 5% dividend yield. The Q4 dividend and the operational metrics were positive. Keep in mind though, the quantum of dividend is lower than what was expected in the market, and therefore you might well see, despite the dividend resuming, Indus Tower react negatively. In fact, Jefferies has a negative view. They stay underperformed. Their target price is much lower, 370. Keep an eye out for that. I think the band is 375 to 475 odd. So bear that in mind. Vodafone, Ramkrishna Forgings, very quickly, the last one on my list. Revenues up 28%. EBITDA looked strong, 208 crores versus 95. Margins at 17.1 versus 10.4. The reason why this is important to highlight is because the profit number looks down 72%, but the quarter by and large has been good. The core profit is lower because Q4 FY25 included a one-time tax write back of 223 crores, as a result of which the base is higher. But otherwise, on the EBITDA performance, RK Forgings has done a good job, may react positively. My 3.
Okay, let's just do a quick check of the first set of numbers that are showing up, and remember, you would be seeing the numbers as per what we're having verified at this point, and that's what we would actually prefer to do more than anything else. So let me start with West Bengal, where you are seeing a dead heat right now. And remember, these are postal ballots. The first half an hour will be just the postal ballots which are going to come through. So you'll have to wait for clear trends to emerge. But 12 each, 12 to TMC, 13 to BJP. So it's showing you how close a fight this is, and maybe one of the closest fights in West Bengal in recent times. Let's look at Assam, where most polls were giving the incumbent a second chance, and it's showing that trend entirely, with Himanta Biswa Sarma at the helm, leading that entire charge. The Chief Minister of Assam maybe coming back once again with the BJP with 22 seats right now, Congress at 2 and AIUDF at 2. Let's look at Tamil Nadu, and Tamil Nadu has also got a bit of a plot twist in it because there's a new party with superstar Vijay as TVK. Their challenger, who will they really challenge is a question, but DMK so far clearly in the lead as far as Tamil Nadu is concerned. Let's look at Kerala and what's happening there. At this point, the UDF leading with 10 seats, and this is what most polls are predicting as well. And then Puducherry. Puducherry is something we should pull up very quickly. That's a small number of seats, so maybe you'll have some clarity quickly. The NRC with 3 seats right now. So, okay, lots of numbers to unpack, not just poll numbers, but sales numbers as well. And the April auto sales print is giving us a mixed bag. It's some are good, some are bad, and some are not so great. I wouldn't say ugly. Puneet, who's fared how, and where have they all stacked up?
Well, we've had 4 clear winners here, most certainly, but it's a very mixed bag this time around, and very different from what we've seen the last 5 to 6 months with the GST cut-led demand push essentially at this point of time. So Royal Enfield was one which stands out in the two-wheeler pack with a sales growth of 31%, continuing their 1 lakh over momentum in a month. But when you look at the other key players here, you've yet to report numbers from Bajaj, but pull across the next tab, show across Hero and TVS as well. Hero MotoCorp was the year where the base here was very, very low. So hence you've seen a massive 86% jump, just a slight miss versus the estimate that we were working with. For TVS, it's again a 7% growth for the company, but again a miss here as well because the export growth is almost flat in this particular quarter. Motorcycles are down 9%. So within this, Aisha stands out. Within the passenger vehicle space, Tamanna spoke about Maruti Suzuki, 42% growth in the small car sales have been very strong. Exports also are 45%, so definitely a standout here. Tata Motors, again, missing estimates, but I think the market will take 31% growth for the company at this point of time. It's been much higher, but at this point of time, this growth will be looked at very interestingly because Mahindra & Mahindra has missed estimates, and the growth has been very limited at this point of time at 7%. So possibly the Vahan data, the retail sales have been slower this month, and hence pulling back some inventory is what Mahindra does very categorically every time. And commercial vehicles also here, you've seen Tata Motors continuing to be a clear winner here with a strong growth of 28%, handsomely beating estimates. And the tractor makers, we didn't have too much in terms of growth expectation. High single digit is what we were expecting, but over a 20% growth, Escorts definitely a key one here. So overall, Eicher Motors, Mahindra, Tata Motors PV and Escorts will be the 4 key players with very strong sales growth in the month of April.
All right, thanks for that wrap, Puneet. And let's talk about this in a little more detail. In fact, we're joined by Sri Kumar Krishnamurthy, who's Senior Vice President and Co-Group Head, Corporate Ratings, ICRA. You've heard that conversation, or rather that summation, Sri Kumar. What did you make of the two-wheeler number in particular? Because that's where there seems to be some sluggishness. Is that a sign that there could be a demand situation that companies will have to face, or is it a flash in the pan?
Yeah, good morning. Thanks for having me. When we talk about two-wheelers in particular, because this is a segment where a lot of rural-led factors come into play, we will have to kind of consider how the last April to September period has been versus how this April to September is going to look like. Certainly GST 2.2 effect of H2 was very much there. So there is a very divergent trends between H1 and H2. But talking specifically about April versus April in general is a period of subdued sales that we normally see after a strong March festive-led demand actually won't be there much. But interestingly, this April what we have seen is that 2-3 factors have supported the growth. One, the fact that the marriage season is actually kind of ending in end of May, so to some extent there is some kind of momentum that is actually continuing from Q4. Two, not much of price hikes have actually happened yet because of whatever is happening in the global scenario. A large part of fuel price hikes is yet to happen, and third part is the good yield or the rural output. So all these factors have kind of supported the growth in the month of April. We expect the month of May also to kind of have this continued momentum. But what will be interesting to see is how the period from June to September would look like, because this is a period where the reason to buy factors won't be there, one. And two, whatever price hikes that could happen in the current month is likely to have some kind of an impact. But the critical part is H2, because last year we had a very strong base of H2. This year there are expectations of weak monsoon guidance and a possible El Nino threat.
Okay,
So
we'll have to wrap it here, but we'd love to invite you back for a more detailed conversation on what's happening with the auto sector. Sri Kumar, thank you so much. Lal PathLabs in focus, solid set of Q4 numbers. We're going to be hearing from the management in just a bit, but Varsha, what really has been the standout for you?
Well, I would say a volume growth and the increased guidance was the standout for this quarter. But, let us just speak to the management and let's see what is the growth outlook ahead. We are here joined by Mr. Shankha Banerjee, who is the CEO at Dr. Lal PathLabs. Hello, sir. Welcome at NDTV Profit. Always pleasure to have you. You have seen a strong volume growth, but realizations were modest. How sustainable is this volume-led growth, and what is the realization that you are seeing going ahead?
So, good morning and thanks for having me on the show. Firstly, a volume growth for this quarter, which we are talking about, patient volume has come in at 8.2%. And we have sample volume growth, which is close to 12.9%. So both parameters of volume that we track have done well. But as we have always said in the past, one quarter numbers are really not the way to judge this business, because sometimes there could be some shift between quarters. So if you look at the annual patient volume growth, that's about 5.2%. So it's an improvement over last year. and the realization per patient has also gone up close to about 6.6%. So I think we have a combination of patient volume, sample volume, as well as realization growth, which all put together has delivered the results that you see this quarter and for the financial year. And we believe that both these levers we should be able to continue to grow in the coming financial year as well.
Right. But Mr. Banerjee, EBITDA margins declined despite strong growth. Of course, this is on the back of increased spend on infrastructure and advertisement. But what's the steady state margin that you're expecting for FY27?
So expansion, stability, I think even in the next financial year, we are looking at opening between, 12 to 15 new labs. So the margin guidance remains between 27 and 28% at an EBITDA level. And again, if you look at the final full year number, which is again a better way of seeing how the margin profile for the organization is shaping up. Pre-exceptional items, our margin for this financial year has also come in at between 27 to 28%. So we will maintain similar margins in the next financial year as well.
Right. So since your FY27 guidance targets a return of 27 to 28% range, how much of that recovery depends on suburban business finally reaching the same margin profit as your North India operations operates in?
So you see, this full year, we have said that for a few quarters, the suburban business had underperformed, given a large scale changeover that we had done in the IT infrastructure and some linkages around it. However, last quarter, suburban growth has started picking up. So we believe that, going forward, suburban growth will actually contribute more to our revenue growth aspects as well. But overall margin profile of 27 to 28% that we are guiding is not very largely dependent upon, suburban reaching this level of profitability. Also, you and the viewers may note that suburban diagnostics has now been, completely subsumed into the Lal PathLabs P&L. So we are not really tracking suburban margins separately as an indicator.
Mr. Banerjee, SwasthFit, now contributes 28% of your revenue and is growing twice the company rate. Is there a saturation point for wellness packages, or do you see this becoming 40 to 50% of your total business over the next 3 years?
So I think there are, Varsha, two ways to look at this number. So firstly, when we say it is 27, 28% contribution to our overall revenues, all of that number is really not preventive. We have situations where, patients can come to, some center and even if they have a prescription, they may end up buying a package, or doctors may be also prescribing package. So it may not all be preventive, firstly. Secondly, if you look at, the way the diagnostic industry is structured today, most of the testing is still in the preventive, sickness or illness segment. Now, overall, I think preventive is growing in terms of contribution, and therefore the headroom for package sales is still quite high.
Right. With a strong net cash balance, Mr. Banerjee, you have ample headroom for inorganic opportunities. Now, after the suburban acquisition, are you looking at more regional tuck-in acquisition in the south or west, or is the focus now purely on organic lab maturation?
So, as our business model, it is primarily focused on organic growth, and that's one of the core things on which we spend a lot of time and energy. But having said that, inorganic is always on the radar. And we would be looking at, maybe large platform kind of possibilities in South, maybe some other markets in West where our presence is weak. But in our brand strong markets in North and East, we may consider tuck-in deals as well. So that's really how we are going to approach it. But having said that, organic will be the primary driver.
Right. Lastly, Mr. Banerjee, as you reach a more stable pricing environment, will the next leg of revenue growth come from a price hike in your flagship test, or are you doubling down on the high volume model through SwasthFit?
So we have, indicated that in terms of our pricing or price increase, it's 3 years since we have taken a price increase. So we are in the zone where we may consider price increase, but it is unlikely in the next few quarters. And we are keeping a close eye on, how the competition pricing is moving, the cost of goods, etc. I think those are the elements that we are watching out for, and we will decide, but it is not likely in the next few quarters. So our growth will primarily be underpinned by, better volume, which could be, like I said, a mix of sample volume growth as well as patient volume growth, and the mix benefit that we are getting, whether it's in terms of, the test mix, geography mix. I think that's which is giving us an advantage in terms of improving our realizations. So those will be the key drivers, at least over the next few quarters. But yeah, we have our eyes on the pricing angle as well.
All right. Well, thank you so much, Mr. Banerjee, for joining in and having a conversation with us, and all the best for the business. Well, viewers, time for a short break. On the other side, we'll get you top trading strategies for the day.
I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
Economy, business, world, technology. Noise filtered, numbers decoded. Insights that rewire your worldview. From governance to growth, we connect the dots. Your daily edge, your global advantage. India Business Report with me, Gauri Dwivedi, weeknights on NDTV Profit.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to.
Welcome back. You're watching India Market Open. All right, a lot of data that we're going to give you right now. One is what the tally is so far in elections of 5 states, the results in 5 states, and we'll tell you what the implied is. So the implied 152 points up, 87 out of 294. Leads have been declared. These are not wins, these are leads. Remember, in elections, typically you have counting in several rounds. And so we're getting you the leads as they come in. BJP ahead in West Bengal at 49 versus 37 in TMC. This in itself, this snapshot in itself is quite historic for the politics of West Bengal. Let's go across to Assam and see what's happening there. There, clear lead for the BJP. There's not too much confusion there, unlike West Bengal where there is a head-to-head fight right now. For Tamil Nadu as well, the DMK seems to be in the lead, but the ADMK is catching up and the TVK managing to make a dent so far as the initial leads are concerned. And then let's look at Kerala and Puducherry very quickly before we get to your top stock calls of the day. The UDF in the lead in Kerala with 20 leads right now, or 20 seats out of the 34 that have been counted, and Puducherry is showing actually a bit of a split kind of a situation so far, but less than half of the seats is what we have leads for right now. Meanwhile, implied about 150 points up. Kush, Bora, Parag, Thakkar joining in. The elections is more of a sideshow today in terms of, at least for the markets. Of course, for the rest of the country, it's the big one. But for markets, what do you think is the biggest factor, Parag bhai?
The biggest factor is Strait of Hormuz. No doubt about it. No doubt about it.
Yeah.
This Project Freedom, which I think Mr. Trump has started, if the number of ships pass through Strait of Hormuz, that increases materially over next 2 to 3 days, it will be a big relief for the markets. And of course, West Bengal and Assam elections are also important, critical, and that will have a 1 or 2 day impact in the market. But I think longer term trend of the market will be decided where crude grows and how the availability of the energy goes, whether it is oil or LPG or gas.
So club that with the OPEC plus announcement of an increase in output, is that also positive in your opinion?
Yeah, it is positive. So basically we are seeing Brent at 108 now, which we saw at this Brent, this expiry Brent was 114.68 on Friday when our markets were open. So I would say that there is some relief today. Let's hope that political outcome is also good, so that we'll have a good day.
I think maybe the one state will decide whether people think the political outcome is good or bad. Let's wait and watch. Kush Bora, how are the charts looking? If we start off marginally higher today, what kind of position building should one do?
Yeah, but I think we need to cross 24,300. Just to answer your question, 24,300 is that number on the upside that we need to cross. But move over poly market, follow the Satta market is what everyone's looking at. Now come.
Which one?
My hometown of Rajasthan. Follow the Satta. No, the reason I mentioned that is because every time election season comes around, I get messages from long lost friends in treasury and fund management. Follow the market में क्या बोल रहे हैं, क्या होने वाला है, correct? And that's the same thing happened. So it's, by the way, India's biggest informal satta bazaar.
क्या बोल रहे हैं follow the market में?
जो largely polls बोल रहे हैं वो sync में है.
Polls कुछ बोल ही नहीं पा रहे ना.
So West Bengal, there is a chance कि जो current opposition है वो power में आ सकते हैं. There is a good possibility. Assam तो खैर पता ही है. The relative other states are relatively smaller. So West Bengal is the main one, and they are saying BJP has an edge right now.
Yeah. Okay, we'll have to wait and see. Kush Bora is multi-talented. This morning he's telling us about the follow the Satta market.
Forget about the Nifty levels.
But I think Kush, you should...
24,300.
Yeah. But also let's get your picks.
Yeah, of course. Just a quick word on the indices before that. I wasn't very optimistic on the markets. I'm not very pessimistic also. We did speak of exhaustion on Wednesday, and thankfully Thursday markets reacted that way, where indices and stocks both saw some money being taken off the table. So I hope the viewers benefited with that. Even right now, the indices and the indicators are fairly neutral. So I would suggest that if you have positions, continue to hold. Big event day, you might want to keep positions light if you take them intraday. 24,300 on the upside, 23,700 on the downside. These are the numbers to watch for. Now, as far as picks go, Still going with a mix of long and short, and being Monday, we've got a weekly pick, and today it's GE Shipping. Good moves, good accumulation, good institutional participation as well on this. So 1645, 1725 are your targets. 1500 is where you keep that stop loss. Genus Power is something that we've discussed last week as well. Consolidation in a corrective market. So 323 and 333 are your targets. 300 is where you keep that stop loss. And InfoEdge continues as a short idea from Thursday, where the first target was hit. 974 second target, it came very close to that, but you need a hedge in a market like this. So continue short on InfoEdge. 965, 954 are your revised targets, and a stop loss at 987.
Okay. All right. We had a big update in the telecom space, which Neeraj already pointed out to you. It was in his three stocks, in the pair of Vodafone Idea as well as Indus Tower in focus. And that's because the Department of Telecommunications has finalized the AGR dues for Vodafone Idea at 60,046 crore rupees, which was lower than the earlier estimate. Somit joining in to talk about how different this is and what this means for the company. Somit?
Yes, DOT has finalized that AGR dues for Vodafone Idea at 64,046 crore as against the 87,695 crore which was marked by the Department of Telecommunication earlier. So a waiver of nearly 27%. This 27% is slightly lower than what the street was anticipating. They were expecting the waiver to be anywhere between 40 to 50%, but nevertheless, it's a sentimentally positive, the waiver amount that has come in. Now, what will be the payout structure for this? There is a moratorium till FY31. Then Vodafone Idea has to pay around 100 crores every year over FY32 to FY35, and the balance 63,646 crore will be paid in 6 installments over FY36 to FY41. That is close to 10,600 crore every year that Vodafone Idea will need to pay post FY36. Now, what does this do for Vodafone Idea? It reduces that debt, reduces the cash payout burden, and could also help the company raise debt for its capital expenditure plan going forward. What is the financial implication here? No interest will be chargeable on the same amount. Hence, the company will record this debt now at a net present value. So, if you assume a discounting rate of around 10 odd %, then the net present value of this AGR dues comes down to around 18,000 crore rupees. So, most likely there could be a one-time accounting gain, which is a notional gain that Vodafone Idea might record in its book in the fourth quarter of FY26. But do remember that one should still be cautious when it comes to Vodafone Idea. Firstly, because the AGR waiver is lower compared to what the expectation was. Secondly, we are yet to see any major customer additions for the company. Spectrum dues, that is something that the company has to pay going forward, and that is and the amount is close to 46,000 crore rupees over FY27 to FY29 versus a cash EBITDA that the company generates of close to 9,000 crore rupees. 3 tariff hikes have yet done, and yet the company has not reported any solid revenue growth. So that is one of also the concern. And obviously going forward, Vodafone Idea will not be the first mover to take a tariff hike. This is as per the company statement. So there might not be any new tariff hike or new tariff hike going forward. So that could also be a concern for Vodafone Idea at this point of time.
Viewers, I've worked with Somit now for nearly 10 years, and every single point of time that the street turns constructive on Vodafone Idea, Somit would come and say that, hey, hang on, this is a problem. And the stock then refuses to budge. So I'm inclined to believe that he tracks this so closely. Just before we get in Piyush Pandey, Somit, just a follow-up question here to you very quickly on Indus Tower, 30 seconds, because the dividend number is a bit lower than what the street was working with.
Well, yes, the street was expecting the dividend to be anywhere between 20 to 25 rupees, but the company has announced a dividend of just 14 rupees. Another change was that this year the management has clearly said that the dividend policy remains unchanged, but each year board will take a call on the dividend payout. Earlier there was a minimum dividend payout policy which now has changed. So this could be taken negatively by the street, given the fact that the capital expenditure also is expected to remain high for Indus Tower going forward. But on the positive side, the Vodafone Idea news is positive, which also means that there could be more tenancy adds, and also the company has clearly mentioned that they are seeing a limited impact of geo tenancy exits at this moment. So those are the couple of positive points for Indus Towers, but on the negative side, dividend is lower and could be lower even going forward.
Okay, but thanks Somit for that. Piyush Pandey, telecom analyst, joins in right now with his thoughts on what does this mean. And Piyush, it seems that for both things, and let's start with Vodafone, that there are positives and negatives both. Do the positives outweigh the negatives for Vodafone?
So I would say, of course, this relief is significant relief of around reduction in AGR dues by around 23,000 crores. But I would say, apart from that, they would need to close a fundraise, a significant fundraise and maybe a tariff hike of around 15 to 20% is something which can help it to improve its cash flows. See, we need to remember that apart from AGR dues, they also have to service the spectrum dues, and they have around close to spectrum dues of close to 1.2 lakhs crores, and a significant part of it is coming for repayment in over the next 3 years. So I would say this relief would definitely improve near-term visibility. It would help it to survive, but in order to thrive, I think a couple of steps need to be taken. First, it needs to close a significant fundraise, then maybe a tariff hike, and then if they start adding customers, then that can be something like, say, which would be keenly watched by the investors.
Okay, Piyush, I take it that therefore you're not going out and saying that I want to buy Vodafone Idea today. If it starts off maybe 4-5% higher, you are not inclined to buy Vodafone. I presume that's the case. Very quickly, Piyush, we have 30-40 seconds. On Indus as well, do you have a positive view?
Indus Towers, like, I would say Indus Towers is a better play to ride this relief for this Vodafone Idea. So Indus Towers, we are seeing good amount in terms of co-location and tower addition, even in the Q4. And I expect that over the next 2 years, that momentum should sustain. And even valuation-wise, it looks very, very reasonably priced, and with a strong near-term growth trigger. So I would say Indus Towers looks better to ride this AGR relief for the Vodafone Idea.
Okay, packed show, Piyush, but really appreciate you joining in and giving us this very focused answer. I think it will help investors and viewers quite tremendously. Thank you for your time today. All right. Well, that's on telecom, but Somit is here for what's heard on the street as well in the chatter from the dealing rooms. Somit, let's make it quick. What is it that you are hearing today?
Firstly, Firstly, on MCX, there are sell flows on the large HNI desk. Dealers indicate that the premium value has fallen sharply for MCX, and this could lead to lower revenues in the first quarter of FY27. They were indicating a drop of nearly 30% on a month-on-month basis. For Crompton, there are buy flows on PMS desk. Dealers expect strong Q4 numbers. And when it comes to some insurance companies like SBI Life, HDFC Life, and ICICI Lombard, there were buy flows on the lower levels on the DI desk on Friday. Delivery volumes are also on the higher side, so keep an eye out for these insurance names in trade.
All right, so we're going to keep it quick and pacey today because there's so much to unpack. I just want to take one follow-up from Parag Thakkar on Vodafone. Would you buy Vodafone after this AGR cloud has, I wouldn't say lifted, just moved thoda sa?
So Bharti Airtel is 9% of my portfolio that I keep saying, and I would continue to do that. Bharti, see,
but in fact, Parag, we're talking about all viewers.
In order to improve prospects of Vodafone, to get the fundraise, to get the bank loan, there will be a requirement of tariff hike, right? Only this 27% reduction in the AGR dues will not serve the purpose fully. So whenever tariff hike happens, Bharti Airtel benefits, and Bharti Airtel is the biggest survivor of this industry, even in the onslaught of full competition.
It's a yes and no question. Would you buy Vodafone today?
No, I'm not going to buy Vodafone.
What about Indus Tower?
So Indus Tower has been my one of my favorites. We exited at the higher price, but we might look to buy if people are disappointed with a lower dividend, which is 14 rupees, which an expectation was higher. So if it goes down below 400 or so, we might think to buy.
Hey, on the charts, all three of these? Why are you laughing? It's a serious question.
I was going to tell Parag bhai, देखो ये पूछेंगे a Vodafone Idea, you and I have to stick to our guns. No, in the last 6-7 years, it's not made money. Of course, it's had swings up and down, but Vodafone Idea is not something that I would suggest. I know there is heavy retail participation, hence I'll give you levels. 8 on the downside, 13 on the upside, 12.75, 13 on the upside. You could play for these levels. I honestly don't suggest. I genuinely suggest Bharti Airtel from a medium-term perspective. Indus Towers is where Parag bhai and I perhaps differ because 390, 395, that's a strong support zone tested multiple times. If that is broken, the structure could weaken and the stock would slip to about 365 zones. So Indus Towers perhaps where we differ, but Bharti and Idea, I think we've got very similar views.
Okay, so that's the telecom story, but there's so much to unpack today. Central Bank in focus after its Q4 results, with profitability taking a hit from a one-time tax-related adjustment. We spoke with Kalyan Kumar, Managing Director and Chief Executive Officer of Central Bank of India, to understand the impact and the key drivers behind the numbers. Listen in to what he said.
Yeah, thank you. Actually, there is a provision in new finance bill for migrating to new recognition of deferred tax asset as per the new norms. That is approximately 25%. So we have made recognition of deferred tax asset in financial year 25-26 and with 25% instead of 35%. Therefore, there is a benefit of incremental benefit of income tax by almost 10%. And that will actually result into the incremental profit to the tune of approximately 600 crore to 700 crore in financial year 26-27. As we have taken this one-time hit in this quarter Q4 of 25-26, in coming year and year onward, we have benefit of 10%, which will actually improve our profitability.
Okay, we'll get you that entire interview later on NDTV Profit. But right now, because we've been talking about elections, what it means for West Bengal, of course, all of the states, focus on West Bengal for a couple of reasons. Also because that's where the surprise is expected, right? Everything else is falling in line with what was largely expected. But we have to give it our profit twist, right? So Sharad Dubey joining in to talk about which are the companies, sectors and specific stocks that could have an impact of whatever comes out of West Bengal today. Sharad, I hope you've been brushing up on your Bengali.
Yes, it is, and it's kemon ache. It's a way to start with, but nevertheless, for the corporates, it's very much important, especially from Bengal itself. And there are some important companies. These are the mid caps and the large caps, which I have picked up for you, which is very much important, which are based out of Bengal and also having significant business exposure. First is, of course, Shree Cement, a market cap of more than 91,000 crores. They are doing an aggressive capacity expansions, especially on the premiumization front. And we know that their cost saving capacity is also very strong for the company. Berger Paints, interestingly, they are expanding their dealer network, and more than 2,500 new color bank machines is also being made. This is based out of Kolkata. Other stocks also which should be in your radar should be Bandhan Bank. Recently, very strong numbers also came in, and the company is pivoting to higher secured loans and improving the asset quality. Apart from that, CSC, that's the new energy business. That's where the focus is happening, and they are having a huge power utility monopoly in the state of Bengal. Apart from this, let's look at Imami. This is a rural demand recovery, and the aggressive D2C brand acquisition is something which is standing out for Imami. And for Century Ply, they are expanding into the high margin MDF capacity, and recently there was an MDF price hike also for the industry. Apart from that, we are having companies such as RR Cable, that's where they're diversifying into railways and EVs as well, and Titagarh, I mean to say RK Forging, sorry, and Titagarh. That's the second stock I'd like to point out, where the Vande Bharat order is showing a very strong revenue visibility coming in. These are the important stocks which should be in your radar. And apart from that, we are having Birla Corp, where Mukutban plant, that's a ramp up is happening over there, and Texmaco, that's a small cap. Over here also they're getting consistently the railway rolling stocks as well, and the EPC execution. So of course we are seeing a lot of stocks, especially in the mid cap and the small cap, buzzing already in trade last week, but definitely these stocks should be in your radar. They will be buzzing at least in the earlier hour of the day's trade.
I hope there's more Bengali than just that that Sharad has.
Well, we'll wait for the results and then
brush up. Oh God, Neeraj, please try.
No, this is how it is.
Okay, all right. What is buzzing in the pre-open session? Let's just take a look at what your key gainers are. Vodafone Idea, since we spent so much time talking about it, 10% up. No matter how many fundamental analysts come and say that, you know, hang on, doesn't move and everything, the way it reacts to news is very clear. I want to pull up Indus Tower as well to see if that is moving as well. About 1.5%. Remember, Indus Tower also reported results which were quite tepid. So there is only so much sheen that is getting from Vodafone Idea. But some of the notes, brokerage notes on Vodafone Idea, also talking about how now this AGR problem is behind them. Sundaram Fasteners doing well today. Aster DM, also decent set of numbers, doing fine today as you know, we're seeing it pair out. I want to look at what a Zentech is doing. Let's look at what a Mazgaon is doing and have some of those on your screen too. Both of them have reported. Zentech, we told you, was a poor set of numbers, 4.5% down. Mazgaon was looking a little more decent. So you're going to see some action there, maybe. Before we get views from Kush and Parag Bhai, let me get Sharad back to talk about our big brokerage call of the day. What are you tracking, Sharad?
Today, interestingly, we are having Indegene International as our big brokerage of the day. Now, JP Morgan has upgraded the stock from neutral to overweight, and even the target price has been hiked from 500 to 600 rupees per share. Now, interestingly, they have stated that the organic growth is accelerating, and that is why this upgrade has come in. Apart from that, there are a couple of more reasons also which should be in the radar. Fourth numbers were mixed on a beat, but there was a beat when it comes to the revenues. And interestingly, the organic revenue growth is something which was really well, and the CC growth, after 2 periods of high single digit growth, it actually turned into a double digit growth. Now the company has won 2 large deals also in the last 2 quarters, and that should ramp up going ahead in this current quarter of FY27 as well. And also margins should see an improvement from the current levels, and that is why we can say that JP Morgan has upgraded the stock.
Okay, thanks a lot for that, Sharad. Interesting. And 9:08, is the market reacting at all to any of these election leads that are there on your screen? Maybe not, but it looks like at the West Bengal end there is a nail-biting contest in the offing. But in Assam, it's an orange sweep. In Kerala, it's quite the opposite, and both of those are on expected lines, one would argue. So the cliffhanger is really in West Bengal, and it'll be interesting to see how it goes up. Maybe a couple of hours, I guess, is what it'll take for it to be clear. So let's wait and watch for that. But as the rates settle down, 1 or 2 key names: Equitas Small Finance Bank, Dr. Lal PathLabs, and Sona PLW. Let's say those 3 names should come up on your screen and see what's happening there. Dr. Lal, despite a very strong number, it's about 1%. Sona BLW not quite in the red, which is good, but Equitas SFB on that massive uptake on their profitability, of course, because of a low base, up about 6.5%. I believe you have tracked this closely. Yes. Is it a part of your portfolio, maybe, or otherwise also? No. But you track this space closely. Yeah. What did you make of the Equitas SFB numbers?
So fantastic numbers. So basically 213 crore PAT. Market cap is just 7,800 crores. They are saying 1.5% ROA for FY27 itself, which means 1,000 crore PAT, which is trading at 8 PE. And price to book of 1.2 times. So I think if the situation would have been normal, where you would have expected a normal asset quality behavior, then it would have been a great buy, I would say. It would not have been available at below 70 because last Q3 was also very good for them, and Q4 is even better. So I would say that, and in Q4, you will see many results, right? You saw in all the financial asset quality have improved. Provisions have reduced except for excess. They did a special provision, standard provision. But I would say that, so Equitas is a great buy, but you have to have that outlook on the economy which should be more clearer. Okay. Because a lot of businesses on the ground are right now passing through a tough phase after war has started.
Sure. I'm looking at the broader markets and a few standouts here based on numbers, and we've been talking about this since morning. On the earnings front, if there is a whiff of a disappointment, it's beaten down sharply. So, by the way, on the screen you have that lovely update from West Bengal. It is in fact going to be proving, or rather is proving to be a cliffhanger. 100 seats is where BJP is leading along with its allies, and TMC Plus at 82 or thereabouts. Tamil Nadu is relatively clearer. DMK quite comfortably at this point in the lead, but 114 seats at this juncture are showing those leads. Kerala, the UDF seems to be comfortably racing to victory there, but still quite a few seats to see a completion in the counting. I do want to point out Zentech. That's a stock that I was pointing out to. 11% down at this juncture, and we're done with the pre-open session. So it's a clear reflection of what the street is seeing with regard to the numbers. On the downside, how far can it go at this point?
1450. There's a convergence of the 50 and the 20-day moving average. It's already run up quite a bit, so some profit booking was par for the course, but this is definitely way more than profit booking. So I would see the stock consolidate near 1450 mark, perhaps spend some time there, and then perhaps it could inch higher gradually. But I would look at the 1400, 1450 zone to be held on to in this downtick.
Okay, Sundaram Fasteners, I want to look at. Sona BLW we talked about. I want to look at that. Some of those stocks looking decent after the results. Sundaram Fasteners has also posted results. Remember, there's a whole bunch of results that have been coming in. What HSBC is saying on RR Kabul and Kajaria, I thought was also interesting. So on RR Kabul, HSBC has maintained a buy and raised its target price to 1,770 from 1,600. 610. The reason they're giving is that they're saying they've closed FY26 on a high. Growth thesis is intact. Wires and cables have delivered a solid 34% year-on-year top-line growth led by volume and commodity tailwinds. Strong wires and cables drove that revenue 10% higher than the Bloomberg consensus. So there's a strong call on RR Kabel by HSBC. That stock in the pre-open session about 2.5% up. I want to look at Kajaria Ceramics. Also a lot of positive notes this morning on Kajaria Ceramics, although the stock is completely flat. HSBC has maintained a buy and raised the target price to 1400. A strong quarter that was supported by Middle East crisis disruption in the industry. The Q4 is a beat on expectations. PAT at 1.6 billion rupees, more than doubled year on year. Disruption in unorganized segment due to fuel non-availability led to shutdowns. And I actually want to come to you on that. We've been talking about this Morbi crisis. The unorganized sector will be more hit. Relatively, a Kajaria Ceramics would be in a better position.
Yeah. So in every business you will see that. So
where the organized player
we discussed Greenply, Kajaria, many others. Every sector you will see this, that the organized, even I have spoken to many of our portfolio companies which are even small caps, but they are leaders in their space and organized. Those will gain market share during this energy crisis kind of situation. In any crisis, like COVID also it happened, right? So the smaller people will get bigger problems.
Yeah, does seem like that. Okay. Okay, 4 minutes left for the markets to kickstart trade. We've of course spoken about Sona BLW as well, and there is a note out there which is positive.
It's actually quite positive on Sona Comstar, where they've reiterated a buy and raised their target price. They're saying it's a decent Q4 and growth is back in the fast lane. Margin is a near-term headwind because remember they had a bit of a margin squeeze. They're saying the earnings are in line, better than expected, and revenues are offset by margin pressures. Core auto revenues are witnessing a 16% growth. EBITDA margin did drop, but they're saying Q1 could see more pain for key wins from Europe and legacy driveline business. Sona BLW and Sundaram Fasteners, both of them. Because auto numbers again was a mixed bag, but are these auto anchs a better bet?
Yeah, so basically see, most of the businesses have done well in March quarter. Let's wait for Q1. Q1 is a main crucial litmus test, I would say. But of course, they are good companies. Sundaram Fasteners is a fantastic company, superb management. And they had this tariff issue. They had a large business in US. So now that tariff might have come off, so that might have helped them.
Yeah, well, Ramakrishna Forgings, you would say the same?
Same.
Let's wait for Q1.
Yeah. But Ramakrishna Forging, one good thing which I am seeing for forging companies is that Class 8 truck sales in US have started doing well, which is good for Bharat Forge, MM Forging, RK Forging kind of companies.
Okay, interesting. Okay, Kush, on the charts, any of these auto anchs?
In fact, just to mention a couple of them that we've discussed in the past, Wheels India has done phenomenally well. We discussed that around 1,000 odd, right? I mean, now it's 1,300 odd plus. So I think that one's doing very well. Even some of the other names, Sona Coms, I think the structure's not as bad. You were seeing some volume dip, but overall the structure's not as bad. I think a stop loss around the 690, 695 and a hold is a better option on Sona Com. But like I said in the past, auto anchs from a price perspective haven't really shown that kind of a dip.
Quick view on Kotak Mahindra Bank. We haven't spoken about it. You like the numbers?
Yeah. So the numbers were good. Slippages fell 37% QOQ. But the problem is that management sounded cautious on the NIM trajectory. And that is, I think it is unique to Kotak Mahindra Bank because of its term deposit maturity. So I don't think the stock is going to react positively.
It's down.
But I would say that if it falls significantly, it's a good buy because structurally it remains very attractive actually. But I don't own the stock, and I think today, because of this NIM commentary, very cautious commentary on NIM for FY27, the stock might react slightly negatively.
Yeah, like we were saying today, bigger fish to fry. Not just on the election front, maybe for Kotak Mahindra Bank. On charts, very quickly.
No, consolidative to negative biased, 365 on the downside. If it's held, it could just go sideways.
All right, well, we at NDTV Profit, what we are doing is showing you both the election verdict and the markets together. So it's a screen you don't want to miss. Here's how the markets are starting this Monday morning.
0.5% higher. Not bad a start, you have to admit. In fact, it's building on a little bit of strength, now up nearly 1%. I don't know if this got to do with the West Bengal early leads or something else, because a much better start than what the implied was suggesting at 8 a.m. frankly. Banks about 0.76%, mid caps doing okay, small cap should be doing okay because the market breadth is looking positive. 1503 versus 411. Let's get the heat map up on the screen and show you what's moving and what's not. On the large caps first, Maruti, strong start. Both Tamanna and Alex highlighted this in the morning. Great month for Maruti and Tata Motors PV, and we're seeing Maruti at least do well. Bajaj Auto is doing okay too. Adani Ports, very strong results by the way for Adani Ports, and which is why 3.5% uptick. HUL, again, election verdict, I guess. Most brokerages have said that the guidance for FY27 looks positive. HUL is reacting well, but it's not just that, right? Tata Consumer, Shriram Finance, Interglobe Aviation, crude prices falling, Indigo rising, and just a large whiff of green that we have right now versus very little red. Reddy is down, Kotak is down about 4%. That's not positive for that one, but aside of that, not too many losers. Frankly, the morning light now looks like belonging to the gainers. Let's see if it stays this way, but some very strong starts, Tamanna, to a bunch of names out there.
Yeah, I'm a little surprised at how badly Kotak is getting punished. About nearly 5% down right now on the stock for Kotak Mahindra Bank. Yes, Adani Ports also, after a whole host of brokerages and the results, doing very well. Bajaj Auto, again because of the numbers. And when you see the sectoral in this heat map, you are probably going to see the auto sector right up there. There you have it, the Nifty Auto about 2% up, Nifty Realty also 2% up. So those are doing well. Pretty much a green screen, which is a very positive take right now. The private banks about 0.25% down over there. The Nifty private bank 0.25% down. Let me pull up the small cap and the mid cap if we can and look at what's happening there. Also positive. The Nifty mid cap 150 about 1% up. So now you can decide who to give credit for this. Is it the election results or is it Donald Trump saying he's starting this Operation Freedom in the Strait of Hormuz? So you know that choke is getting unplugged in that sense. Could be either or, but the advanced decline ratio is looking good this morning. So that's definitely a positive. Let's talk about specific stocks, and there were so many newsmakers. Remember, we're coming back after a long weekend. And the verdict at the end of that long weekend seems to be that net things are better than what was expected. So Vodafone Idea, after those AGR dues relief, is about 3% up. Indus Tower not so much, because remember the results were okay. It wasn't that great, and really beyond a point that AGR dues story is not helping Indus Tower. Results, let's look at some of the results. Sundaram Fasteners, Sona BLW. Sundaram Fasteners about 8% up. Sona BLW seeing a bit of a downtick because there was a margin squeeze. Avenue Supermarts also seeing a bit of a downtick. Equitas SFB, Small Finance Bank, about 5% up. Mazgaon Dock about 2% down. I'm actually looking at Zen Tech, not I'm looking at the defense company, not Zenzar Tech. So we should change that. I want to look at ESAF, Small Finance Bank, and Idea Forge as well. Both have reported. Idea Forge was actually a turnaround quarter, and that stock really sizzling this morning, about 15% up in the first kind of data that is coming in. So you have a lot of results which are responding positively. So there's more than one reason really for the markets to feel confident this morning.
Yeah, Tamanna, absolutely. And a few names are actually taking me by surprise. Of course, some unexpected lines. And I'll call out a few more numbers from the broader markets. Valor Estate is doing particularly well, up about 14%. HFCL is close to 10% higher and doing particularly well. Gravita India is up and about. But really, it's the frontline counters that are standing out. So take a look at a couple of names in the Nifty 50 itself, moving in opposite directions. On the one hand, you have Bajaj Auto. It's up about 4.1% in trade today, and that means in 2 trading sessions, it's well over 8% of gains. So I'd be curious to find out from Kush Bora whether you would take money off the table on Bajaj Auto if you manage to get in earlier. this is on the back of the expectation of that buyback, which is going to be considered that the stock is reacting. And on the flip side, I wonder if it's rebounded from the low point of the day, but it's losing ground. Kotak Mahindra Bank, which is taking it on the chin, and that commentary perhaps on the NIM is what is leading to a little bit of uncertainty on this one, because it was trading with cuts of 4% earlier today in the first few minutes, and it has recouped some losses. So on this pair, would you buy in at those lower levels for Kotak, and would you sell right now for Bajaj Auto?
So let's start with Kotak, Alex. Usually what happens is you skip the gun. You talk about HDFC, ICICI and Axis, and then you just move on to SBIs and the other names on the PSU side. So Kotak, at least in my list, doesn't really make that cut. Price action also hasn't really been encouraging over the last few years, I would say, right? So doesn't really make the cut. 365 is the level that we spoke of. Briefly slipped below that, but has gained ground. I think consolidation will continue. Nothing to write home about. I would still stick to ICICI, even Axis for that matter. If I have to trade on the on the banking names. Bajaj Auto, the structure wasn't great. It was the buyback news had just pushed the stock higher, gave it that push above the breakout levels of about 10,000. I'm just rounding it off. Now, I wouldn't suggest buying, but yes, if you do have, you should continue to hold, perhaps even consider partial profit booking and keep a stop loss near the 10,200 mark. Any dip below that should be taken as an opportunity to exit.
Okay, what about Valor Estate? It's now building on those initial gains and trading with gains of about 17% right now at 120 plus. Would you hold?
Hold is the best option. In fact, there is a recovery underway on Valor Estates, but 17% up, already having moved quite a bit. The risk reward ratio from an immediate trade does not really make sense. But yes, given the kind of momentum and the initial volume uptick, it's definitely a hold. I would suggest a stop loss near the 114 mark.
Okay, on the losing end, you have, as I pointed out, actually Tamanna also pointed this out, Zen Tech. Let's go across to NDTV to find out what the latest updates are on the election front.
Of the BJP, they made an entry into the country on the Ram Janmabhoomi agitation, which did not have in the initial years great resonance in Bengal. The people who came from Bengal were the outside settlers. The Kothari brothers are the iconic heroes of the 1990 firing in Ayodhya. What has happened very consciously over the past few years is that the BJP realized the limitations of the Ram politics. That is why in this election, several speeches you would have seen Mr. Modi or Mr. Amit Shah referring to Ma Kali, Ma Durga. Is something very interesting. Just a second. Yeah. There's been a very interesting another development. In the last week of April, just as the second phase of elections were approaching, Mohan Bhagwat performed the Shilanyas of a temple in Nagpur which is named Ma Bharat Durga. For the first time, cultural nationalism is being merged with religious nationalism. That is what you see. Bharat and Durga, that is being drawn, that parallel is being established. An 18-handed idol fusing the two is being installed there. So it is actually a new form of cultural nationalism, not just on the shoulders of...
We've been talking a lot about West Bengal and Tamil Nadu. Let's spend a moment on Kerala and Assam as well. In Kerala, 87 out of 140 leads the UDF, that's the Congress, currently leading on 47, up a whopping 24 from the last time. The LDF on 29, down 32 from the last time. If I look at it from a party perspective, the IUML...
All right, well, now the big news of the morning, and Tamanna, come in because you've been tracking this for such a long time now. The big news is, this is an unprecedented development, you can say, in our lifetimes at least. Tamanna, I don't remember having seen this, but the BJP making its mark in West Bengal seems like.
I mean, that was one bastion where politically it seemed near impossible, even if you thought about it 10 years ago, 7 years ago, that the BJP would win a majority in West Bengal, and they definitely seem to have done that. This I mean, the numbers can change from here or there.
But the lead, Tamanna,
the lead
is very large, right?
It's very large. It's very large. So this is astonishing to say the least. And there was so much to confuse pollsters and people who are in the job of predicting elections. A high voter turnout can be anti-incumbency, but it can also be because of SIR. People are coming in to show that they're citizens and prove that they're citizens, and that's why they're voting. So which one is it? Not clear. It wasn't very clear even with exit polls, to the extent where pollsters were saying that 6 or 7 out of every 10 people that they are interviewing are refusing to tell them who they voted for. So they just didn't have enough data to go through. One of the reasons for that could be also people were scared to say that they were changing their vote. Elections in West Bengal and politics in West Bengal is a lot of gundagardi on the ground, and the same set of gundas actually go from party to party. So hopefully they don't come into whichever party is ruling right now. They're in that gunda business no matter what party wins. But that's really what we're seeing. So if that's what is happening, this is a historical win for the BJP.
Yeah.
I mean, with this, then which other bastion is left? It's just Kerala.
Yeah, I mean, South India is anyways counted as a difficult one.
Yeah, no, but I mean, because they are at least in partnership with the AIDMK,
sure.
so they have a foothold there.
That's true.
So in that kind of partnership, in fact, what's happening with Tamil Nadu would also be interesting to see. The DMK looking comfortable there at 62, but I mean, West Bengal from a market's perspective is huge.
By the way, just wondering in Tamil Nadu, because it's not equally split, but the other two have sizable seats.
TVK as a first timer
is superb. My question, Tamanna, is can there be a change because
of course
there are two other parties which have got large numbers?
Of course, I mean, it's going to become very interesting post results if this is how it goes. But so far, it's turning out to be quite a morning and earlier than expected, which with this kind of a mandate in West Bengal by 9:30 we have a clear picture, means that the people have decided. And this was great data that actually NDTV on Data put out, where they talked about that how in the last several decades there have been only 1 or 2 elections where it's been a close contest in the final tally, that the winner wins by a large margin in West Bengal. And that has been consistent over the years. So there is very rarely any kind of a split vote or a hung house in West Bengal. Let's see if that happens this time round. Yeah, it's a huge change right now.
Great analysis, Tamanna. Very good analysis. By the way, viewers, just keep in mind what this also means, that the last elections upsurge that the BJP got was not a fluke or not a flash in the pan. They're building on that strength. Now the question though that I have to my mind, guys, is there a market's impact of this? So first to Parag Bhai and then to Kush. Parag Bhai, a bunch of businesses headquartered there, operations there, etc. Would you view this positively for them or not necessarily so? We'll have to play it by the ear. How do you think of this?
So I would say that, and with a disclaimer that I don't own that stock, Bandhan Bank is a clear beneficiary if the governance changes for the positive in the state. 42% of the loan book is in West Bengal, around I think 18% is in Assam, and already the numbers are improving. Already microfinance business is improving, asset quality is improving, collection efficiency is improving. If the governance also improves significantly in the state, this can, this can give you phenomenal returns.
1 month it's up 40% already.
Yeah, that's why I'm little bit, I would say that I'm a little bit on the back foot. Otherwise it would have been a phenomenal buy.
So therefore you are waiting and watching?
I'm saying, waiting, and today of course it will react positively if the real outcome is this, which is right now. But it is structurally positive for this bank.
Yeah, but also to change things takes time. Even if there is a new government which comes,
positive.
Market will price it in.
Kush
Bora, on the charts though, is there a trade because it's gained 40% already?
So first I'm going to say follow the Satta Bazaar rocks.
Acha, just follow the Satta Bazaar. Have a call on when petrol prices and diesel prices will increase, retail prices.
I can check.
That's the bigger question.
I've heard stories where they lay wagers on whether 2 clouds will meet or not. Some stuff like that. So I'm sure they'll have a wager for this as well. No, but just to come back to data and the markets in particular, and come to Bandhan Bank also. It is very surprising that the result is in favor from by the looks of it from what the market would have wanted. But the 24,300 and the 24,200 call option have been building on massively. So I would be a little circumspect. In the morning, we spoke of 24,300. That's the line. Once that is taken out, you will see further up moves. I want to see Nifty take out that level first. So until that happens, this positive bias obviously will continue. But a big break, 24,300. That's the level that you want to watch for. And yes, I have been tracking Bandhan Bank for some time now. There has been a structural shift. If you see, there has been these lows of 2025, early 2025, that's been held on to, and the stock has really not tested those. Now it's gained ground. Yes, it's risen 40% in the last month or so, but the risk-reward ratio is very, very favorable from a positional trade perspective. Perhaps a buy on declines closer to the 185, 190 zone, a good entry point.
You know, just because we're talking about the leads over here, the Election Commission of India is the final say. As per them, there are 3 leads to the BJP, 1 lead to the BGPM, that's a local party, and 1 lead to the AITC. So it comes with a lag. But then that I'm saying let's wait for some of those numbers as well.
Quick follow-up here. Is there a phase 1, phase 2 element in West Bengal? How many seats in phase 2 if it's yet to be counted?
No, everything will be counted together.
Achha, it's all counted together.
But there are rounds for every seat. Depending on the size of that constituency, there'll be 1 round, 2 rounds, 3. It can be up to 11 or 12 rounds. And then that's the batches in which those votes are counted.
So it's not phase 1, phase 2 or whatever?
No, phase 1, phase 2 is how the polling takes place because it's a very large state.
And you were explaining this earlier, right? Over the weekend, you were saying that initially the postal ballot opens up and then there could be a sharp swing.
But that happens till 8:30.
It's done.
This is done. This is pretty much the election result that we're seeing, unless something changes dramatically, which, like we said, it's going to be historical if the BJP comes back. You can say after 15 years of the TMC, you will have anti-incumbency and they position themselves, but that's how it's looking right now. You know, we were talking about those Bengal-based companies, and we'll just pull some of them up on your screen. Shree Cement is one of them. Bandhan Bank we spoke about. Let's just look at how those stocks are doing actually, more than the details about them. We want to see the stock prices right now. Shree Cement, Bandhan Bank, CESC, Imami are some of those which are based in West Bengal, and a lot of those up and about. We should actually get a stack of Bengal-based companies. That'll be interesting to see. Century Ply is another one. RK Forging is another one. Titagarh Rail. Are we seeing a Bengal election impact coming in on some of them? Not on RK Forgings, but on Titagarh Rail, Birla Corp and Texmaco as well to some extent. So there's elections, then there is so much else also to unpack, and I want to talk a bit more about Kotak Mahindra Bank. If we can just pull up Kotak Mahindra Bank for a second and look at what's happening there. Getting punished today, about 3% down. We'll come to you with a detailed report on what Mr. Vaswani told us over the weekend as well. But before that, let me go across to Varsha, because brokerages are bullish on Adani Ports, with HSBC, Goldman Sachs and Jefferies maintaining buy ratings and hiking targets on strong Q4 execution. Varsha, what are they saying?
Well, yes, absolutely, they are bullish, and hence they have hiked target price and have maintained the buy position. But what they're saying is that a stronger medium-term outlook was driven by better ROCE visibility, and Q4 FY26 EBITDA grew 20% year-on-year, which and was and it was a beat when it comes to the financial numbers. Well, international ports EBITDA surge, which was supported by Colombo ramp-up, and FY27 guidance of around 250 to 260 billion is broadly in line with the slightly above estimates what the brokerages were expecting. Management remains cautious when it comes to the Middle East disruptions, but outlook remains stable. They are targeting doubling of EBITDA by FY31, which implies almost 18% of CAGR growth. ROC is expected to improve to 20% versus 16% in FY26, which will be largely driven by organic expansion and high capex pipeline. Also, talking about the other brokerage, which is the Goldman Sachs, they are also bullish when it comes to this counter. According to them, Q4 performance was strong with multiple growth levers contributing revenue in line with expectations. Logistics revenue and marine revenue drove growth. Cargo volume growth was up 13%. Well, FY27 guidance, well, they are bullish when it comes to the overall growth and the guidance given by the company till FY31. While Jefferies, if you see, they have maintained buy and hike target price. According to them, 2.3 times of EBITDA rise target over FY 26 to 31. EBITDA 9% was above estimates on port realizations, and FY 27 EBITDA growth was guided at 9 to 14% year on year, and a volume spike was due to post NQXT terminal additions. And lastly, according to them, capital allocation focus remains given by the company. So overall, brokerages are bullish when it comes to Adani Ports, and hence they have hiked target price.
Okay, it is one of the top gainers on the Nifty 50, up about 2.5%, but off the high point of the day. We'll get a quick view from Parag Bhai on this. Parag Bhai, you've seen the numbers and actually quite a few brokerages coming through positively. Is it still something that you would consider buying?
Yeah, simple. It is very simple actually. The annuity cash flow business, unique business, right? Location advantage, scale advantage, and growing at 15% EBITDA wise. And so it should deserve around 16 to 18 times EBITDA. And based on that numbers, if you give say 18 times EBITDA to FY28 EBITDA, in my view, my estimates, the target comes to around 1920. So it still has that. So based on clear maths, and it's a predictable business also.
1920 is the price that that Parag Bhai is looking at, and based on the internals, right? So on the charts.
Let me throw in a couple more stocks from the group. Adani Ports has always been my number one from the pack. Good run up. Now I think it's a buy on dips, but definitely a hold. Strong momentum, but approaching overheated territories. So around 1625, 1650 if you do get an entry, go ahead and buy. Adani Power, you could perhaps book profits because overheated, but strong uptrend. Here to buy on dips. But the stock that stands out for me now is Adani Enterprises, and the reason I mention that is because after about 5 to 6 months, this is closing above the 200-day moving average. I think this has a favorable risk-reward ratio, 2300.
Still, after 40% upside over the last 1 month.
Remember, 333 stocks out of NSE 500 gained more than 30%. There will be strength.
Yeah. Also, I think in Adani Enterprises case, the results and the target price upgrades are fairly strong.
Sure.
So let's wait and watch. But okay. All tilt on FMCG. Before that, Kush, Parag Bhai, thank you so much for joining in. Parag Bhai, you will like the next 10 minutes that we're doing because we have a really strong conversation with Nestle. But before that, HUL as well in focus, improved growth visibility according to brokerages. Let's get in Mahima with more details. Mahima.
Right, so I'll start with what Morgan Stanley has said. They've maintained their equal weight rating, hiked the target price to 2480. What they're saying is that in near-term growth visibility has improved. Pricing support could help drive overall earnings growth in FY27. This augurs well for near-term stock performance as well, and FY27 growth is expected to be better than FY26. And volume and pricing drivers could, see rebalancing going forward in FY27. Inflation will be managed by cost savings and further price hikes is what they've penciled in. Citi has maintained buy but cut the target price slightly to 2750. What they're saying is that portfolio transformation is gaining traction. However, volatility largely has been managed and maintained. What they're saying is that FY27 is likely to see a calibrated volume as well as value rebalance, same as what Morgan Stanley also mentioned. HUL has taken 2 to 5% of price hikes already, which is partially offsetting 10% of cost inflation. With further actions, likely volatility will persist going forward. They see HUL well placed to negate the inflation impact overall. So this is the overall view that Citi has had on HUL. So overall brokerages have largely maintained their stance. Slight here and there target price changes have happened.
All right, thanks so much, Mahima, for that. Pull up HUL, it is trading with gains of about 3.7%, holding very close to the high point of the day. You know what else is holding very close to the high point of the day? The benchmark Nifty 50. It is trading with gains of over 250 points and currently trading with gains of about 1.1% at the high point of the day. I wonder what the broader markets are doing. They're also gaining over 1% each for the mid-cap index as well as the small-cap index. Enough time has passed, I think, for you to take a look at the advanced decline ratio. So pull up that chart. It is at the widest point of the day. So I think there is clearly a tinge, guys, of that political factor playing in, maybe beyond the geopolitical tailwinds, shall we say.
Who knows? At the best of times, we're guessing what the collective market is thinking. Could be. But then again, if this is the kind of results, it's important for a couple of reasons. Because you are at a time when the government is going to have to make tough decisions like effectively increase petrol, diesel prices. You can't go longer without it. Do you have the support to do that is the question. And then the answer clearly seems to be yes. If this is the result which has come in, there will be an inflation pinch. Do you have the support to do that? The answer is yes. So that is why I suppose the markets are also looking at this favorably. People often ask me, well, are markets pro one party? I don't think that's necessarily the case. But you could have a view on that. But we're talking about elections, we're talking about markets, and we're talking about companies. Cholamandalam Finance posted a strong Q4 with asset quality improving and profit beating estimates. Lower slippages and credit costs lifted earnings, while disbursements stayed robust across segments. We're speaking to the management. Hiral is joining us for more.
Thanks for that. Exactly. Cholamandalam Finance has actually reported a robust performance in the fourth quarter, with consolidated profit jumping approximately 30% on a year-on-year basis. In fact, if you talk about the quarter, it was marked by a strong, broad-based disbursement growth, and you did see improvement in asset quality as well. There was healthy growth in terms of AUM across segments. And if you talk about the disbursement growth, that was mainly led by vehicle finance and the new businesses that did come in. In fact, the operating profit growth was on the back of strong NI and fee income. Profitability absolutely beat estimates, and the net interest margins expanded on lower funding cost. To talk to us about more on what FY27 has in store, D. Arul Selvan, Chief Financial Officer at Cholamandalam Investment and Finance, joins in. Mr. Selvan, welcome to the show. Always a pleasure to speak to you at NDTV Profit. My first question coming to you is, overall, if you have to talk about FY26, we've seen an AUM growth of around 21% that has come in here. How are you looking at FY27 from here on? Are you seeing a good improvement, or do you think it could be slightly subdued with what's happening around?
Morning. We expect to repeat a similar or even a better performance in FY27. But we keep our AUM growth in the range of 20 to 23% as we had always kept in the in the earlier sessions also. So we are targeting to grow the AUM by 20 to 23% in FY27.
Okay, so what segments will drive this growth? Will it be home loans, LAP, or SME? Because maintaining pace is going to be important now.
See, what we are seeing in Q4 is most of our business lines, which is diversified across various products, have started, showing good amount of traction in growth. So we expect this to happen. Vehicle finance will also grow. The new businesses will grow. Gold will grow. LAP and HL will grow, the mortgage businesses. So all this is expected to show a good amount of growth in the coming year. So we expect the growth to be, coming across all the business lines.
Okay. And are you seeing any concerns in any segments which could probably be on your watch list for FY27, that, okay, these are segments where there could be a potential slip? Which would they be?
See, in case the global risks escalate, and then there are issues with regard to supply side and especially with regard to fertilizers or other commodities which needs to get transported, slows down, then there could be a slowdown in the requirements for vehicles, and so there could be a slowdown in the vehicle demand. But as you know, and we're seeing a large effort to de-escalate the situation, and hopefully this will get de-escalated. Thankfully, this is coinciding with Q1, Q2, where generally the first 2 quarters in any financial year for vehicle finance would be a little slower growth as compared to the third and fourth quarter. So I'm sure by the end of H1, most of these would be behind us, and we should see the growth coming in once the festival starts.
Okay, so festivities is something that we should be watching out for. Overall, in terms of disbursements as well, a growth of 25% in the fourth quarter. Will you be able to maintain similar levels in the coming quarters as well?
The Q1 will be a muted quarter always. This is across various businesses also. So Q1 you will see a little amount of drop in the disbursements. But AUM growth would still sustain, because last year Q1 was a dull quarter. So we can, I'm sure we'll do better than last year Q1. And so we should see improvement over Q1, but it will not be certainly an improvement over Q4 of FY26. So to that extent, you will see a slowdown. But I think that is part and parcel of the seasonality that we go through across our various products.
Okay. The other interesting aspect is when you talk about, the net interest margins and the credit costs. Now, what is that number going to look like if you have to look at FY27?
See, FY27, we are right now projecting that the NIMs should hold at the year level. Like if you look at it and the overall year, we did around 8%. We should hold it at that. My hypothesis is based on the fact that the newer businesses will grow faster, which have got a higher yield. And so their contribution to the NIM will be marginally better. So that should offset even in case there is a slight increase in the cost of funds that may come up in the second half of this year. So overall, we expect to hold the NIM, and credit costs could be marginally higher in the new businesses, but as a whole, they were not a large proportion. So for that to influence the overall credit cost would not be significant. But we should show a lower credit cost, especially considering the management overlay we considered last year, that is in FY26. As compared to that, we should target around 1.5% credit cost overall.
Okay. And when you're talking about stage 3 assets, how has it been in the fourth quarter? And if you have to look at, the actual recoveries versus the rundown of the fintech lending portfolio, where does that stand?
The fintech lending portfolio has run off most of it, so you should see an improvement. A part of that improvement is reflected in the Q4 results itself with regard to stage 3. Stage 3 had improved considerably as compared to Q3, though it is slightly higher than Q4 of last year. But however, if you see the stage 2, it is lesser than last year's Q4 itself as well as the Q3 of this year. So that is the sort of a pre-indicator of the upcoming stage 3 in the coming quarters, and that should therefore be auguring well to keep our stage 3 well in control. In Q1, these two numbers may go up again. This is again the seasonality factor I spoke earlier. So these two will move up as compared to the Q4 numbers, but they will be certainly lower than last year, as well as we will end the year at a much better numbers as compared to current year.
Okay. And in terms of where ROAs and ROEs go, where do you look at, maintaining them in terms of FY27? Because if I'm not mistaken, 3.5% has been your target for FY27. Do you still stick with that? And what specific levers, say, may it be mix change or lower credit costs, or, these will be the most critical to reaching this kind of a target in the next 12 months?
See, that's where when I said credit costs at 1.5% and holding NIMs at the same level, obviously that would directly give me the 3.5% ROA pre-tax for the current for the FY27, because and we will hold OPEX at similar levels. So there is also a possibility OPEX can be brought on a bit more to the targeted levels of 3%, which would improve it further. But right now, I wouldn't want to commit. Our target remains at 3.5% pre-tax ROA for FY27.
Okay. And my last question, Mr. Selvan, is in terms of the recent conversions of CCDs. Now, the Tier 1 ratio stands at around 14.5%. That's the kind of range. Is there any requirement for fresh equity infusion in FY27 to support the kind of growth that you're looking to achieve?
See, we keep constantly evaluating the requirement. As earlier reiterated, our internal threshold is 13% on Tier 1. If we cross that threshold, we will certainly seek capital. But we will also look at opportunities in the market and take a view on whether to come a little earlier on this. But right now, I'm not able to comment about this, as we need to evaluate the growth opportunities as well as our capital requirements, and then take a call on it in consultation with board and other senior people.
Okay, so that was Chola Finance. Let's talk about 4% up and in focus. We were talking about the FMCG space, and Nestle has seen a good momentum post its elections. Management typically takes its time to speak to the press, and my colleague Mahima and I caught up with Manish Tiwari, MD and CEO Nestle India, to talk about their quarter and whether the performance that they've seen can be sustained. Listen in. Manish, thank you so much for your time to NDTV Profit, and I must say, I think the street was pleasantly surprised when they saw the Nestle numbers. What was the secret sauce this time round?
Yeah, thank you, Tamanna, for having me. I think there is no secret sauce, there's no silver bullet. Tamanna, if you look at the trajectory of results, even the quarter before that, we reported close to 18% growth. So I think it's the good old playbook of CPG. Strong brands, invest behind them, and very, very disciplined execution, and some great work on the cost front. I think that's what brings the magic together.
But having said that, if I go into a little bit of detail, there was some tailwind from GST rationalization. It had come in that quarter, maybe some price, rationalization passed on. That would have fueled this. On the other hand, your advertising and promotion costs went up. That also fueled growth, but margins stayed intact. What was the operational focus that allowed you to execute this?
Yeah, I think you're right. I think some of the changes on the income tax front and then the GST relief which was given by the government definitely created a positive market momentum. I spoke about execution. I think I'm really proud about how the team executed the GST transition, because a lot of peer companies reported disruptions. We only saw the upside on the whole thing. So yes, that came together to sort of give the momentum. You spoke about advertising cost. I see it as an investment. The investment we are putting behind our brands, even the quarter before that had grown by 42%, followed it up with 52%. And I think that's what is creating the momentum, what the overall market momentum, and then of course what we are doing with our own brands. I think that's what's resulting in the kind of growth we are seeing.
And is this growth sustainable? This has come, of course, volume growth. It's not really price-led growth. So is this a sustainable trajectory that you're seeing? Which areas are leading to this volume growth, or which categories are firing?
Yeah, I think as of now, if I look at the growth, it's quite secular. We've got, in the last quarter, we've got double-digit volume growths across all our businesses. Of course, there are some of the newer businesses like pet care, which is Purina, Nespresso, which are growing at very, very high double-digit growths. But even our core businesses of dairy and nutrition, culinary, which is Maggi, confectionery and coffee, all of them have double-digit volume growth. I think going forward, there are some headwinds which we are all been discussing. The commodity pressure, some uncertainty around monsoons and the geopolitical thing. But I think what I feel good about is, because we have the right enablers in place, I feel confident about delivering growths which would be better than the overall category growths. I think that I feel confident about. But depending on how some of these variables move, Tamanna, there could be a slowdown in terms of market growth and consumer sentiment.
Okay, interesting. Just want to understand with regards to what you just mentioned, with regards to raw material inflation plus this geopolitical crisis going on. Mr. Tiwari, the margins that came in for Q4 were on a surprising note for sure. Do you think these margins will be sustainable going forward? Will you be taking price hikes going forward in Q1 because of all of these factors combined together?
Yeah, I think the Q4 margins were high, but it's a cyclical thing. This quarter, the margins are always a little better, and one should look at it from that perspective. I think going forward, there are two aspects to the whole thing. One is overall commodities. We are seeing a softening of coffee, which has been very beneficial for the company. Coffee prices were at all-time high, record highs last year. So we saw some softening on cocoa and coffee, and then we saw some hardening on milk and wheat. Now what's added to some of these challenges is the West Asia situation. Because of that, packaging material, utilities, these are going up faster. And of course, palm kernel oil is going up. So right now, we are a little challenged with the commodity inflation. If everything had been normal, I would have felt confident that my team could actually absorb some of these costs due to optimization and saving plans. But what adds to the complexity is the uncertainty in terms of how long some of the geopolitical crisis would add. So when we started the year, I felt very confident that this year would be all about volume growth. I now see the mix shifting a little more towards price, while our intention is still to grow volumes, but there would be some price-led growth because of the pressures and the uncertainty in the market.
Okay, that's interesting, Manish. Price-led growth, what is the kind of trajectory you see? Which are the categories where you see that there is room for that kind of price-led growth?
No, I mean, my first preference, the entire team believes in volume-led growth across our categories, be it confectionery, Maggi, coffee, because a lot of our businesses, the penetration is actually very low. I mean, we are still a tea drinking company, confectionery penetration is low. Even something like noodles, the monthly penetration even in urban markets would be 25%, which is like 1 in 4 households consume a noodle. And therefore, it is very, very sensitive to price if we want the penetration to grow. I would take price hikes only when we could not manage the onslaught from commodity and some of the uncertainty. But our focus would continue to be on volume-led growth, not on price-led growth. Price would creep up because of the things which we just discussed.
That's fine. The reason I'm asking is because analysts are penciling in about a 3 to 4% growth price hike as early as Q1 FY27. Because of all of the reasons you've talked about, and that's across the board, right? Packaging is getting more expensive, some raw materials, etc. Is that something which is in the realm of feasibility? Have any kind of price hikes already been taken this quarter, in the running quarter?
No. Yeah, so as of now, we're sitting like 33% of the quarter done almost. We've not affected any price hikes for the reasons which we just spoke about, the packaging material or the geopolitical crisis. Going forward, you'll have to be a little more watchful. But my first port of call would always be efficiencies to try and absorb that before we get on to pricing.
Mr. Tiwari, the broader FMCG sector is, closely watching the urban demand. This time, as Tamanna was mentioning, there was a 500 crore beat in terms of your top line, fueled by income tax, GST rate cuts, etc. Do you think that from last quarter, the stance being, cautiously stable, now things are looking more stable where urban consumption is concerned?
I think, a month back, Mahima, I would have said it was looking more stable, but there is some uncertainty in the market. There is some wait and watch because of some of the prices on fuel, etc. So it's a little more, till February end, even the Nielsen trends were showing strong growths. If you look at Nielsen trends for urban growths, they have slowed down in March. Now, some of the recent crises which we are talking about, we would get a good Nielsen read only by by around June, July. So there is a little bit of slowdown which is happening on the market as reported by Nielsen for foods.
Okay, all right. So that's the management of Nestle speaking to NDTV Profit and giving you a sense of what's lined up ahead. Volume-led growth is what they're focused on, laser-focused in fact. The stock is not doing too much, up about 0.1%. The stock that is moving though is Kotak Mahindra Bank, still possibly the worst performer on the benchmark Nifty 50, losing about 2% but off the low point of the day. And there's a reason why the street is not impressed, and that has to do likely with a net interest margin. But there's more besides that to focus on, and Shivam joining in to tell you about what those numbers stack up to. Shivam, what according to you stands out with Kotak Mahindra Bank?
Well, yes, the Kotak Mahindra Bank reported a strong set of numbers, but the stock is trading down. And looking at the few key highlights that have been not working for the bank is the net interest margin, which has grew quarter on quarter, but there has been a decline of around 30 basis points if you look at it on a YOY basis, and it stands at 4.67% from 4.97%. The recoveries have also been at a lower side and on a YOY and quarter on quarter basis. And if you look at the other income, income, which includes the trading and MTM income, that has also seen a decline on by 54% to 117 crores versus 252 crores. Now the management expects that the margin going forward will have a slight moderation in FY27, and also the regarding the West Asia conflict, management is expecting that it will have some impact on the business, and uncertainty will continue to persist. Now a bank will also have to make a provisions amounting to around 2% of the net worth to meet ECL guidelines. Now overall the stance of brokerages have been positive, and the management commentary also looks pretty confident, but still despite this the stock has been down.
Got it. All right. Thanks so much for that, Shivam. Let's also get you what the management had to say to a specific question that my colleague Piyush Shukla asked over the weekend. And this is to the bank's Managing Director and Chief Executive Officer Ashok Vaswani about the outlook for margins. That is the pain point today. So listen in.
We have with us Ashok Vaswani, sir, from Kotak Mahindra Bank, the MD and CEO. A robust set of Q4 numbers, sir. What is your guidance entering FY27 considering the West Asia conflict on both loan and deposit growth?
Clearly, the West Asian crisis is going to have some kind of impact, if nothing else, on the supply chain. It is a very fluid situation, as you can imagine, and we are being very watchful of that. But hopefully, we will be able to guide our ship through this safely and securely.
What about, is there any target that you have above industry average or both on loan on deposit side for the year?
Right now, things are very, very volatile. Under normal circumstances, BAU circumstances, we've always said we'll grow our advances at about 1.5 to 2 times nominal GDP growth. But in this volatile environment, we'll obviously have to figure out how things go.
On ECL, the RBI has come out with final norms. You mentioned in the press conference about less than 2% hit of your net worth on the... but from a policy perspective, is this a more proactive and this is a more prudent sort of a model that banks should follow in line with global standards as well?
Yeah, this is what is globally done. I mean, everywhere around the developed world, this is the process that is followed. So I'm glad that, we in India are going down the same path.
And finally, on your margins, they are top of the pyramid in terms of your peers. Are you confident of being able to have a range-bound sort of a margin in FY27?
Yeah, our margins are very good, and we are hoping to retain that kind of leadership. It really is a function of how the deposit pricing is concerned, and we would expect some tightening in deposit pricing. So you may see some gradual decrease in margins through 2027.
You made some very interesting comments on why IDBI was not a right fit, and in terms of future acquisition also. There are a couple of good books on the block. With regard to Deutsche Bank, would you like to say whether you are interested in acquiring their retail business?
Piyush, look, like I said at the press conference, there are three questions we answer for every single acquisition. And by the way, look at all opportunities. We do have excess capital and we have the ability to grow. So we look at every acquisition. M&A is a very important part of our entire strategy. The three questions are, number one, does it strategically make sense? Number two, if it strategically makes sense, does financially it make sense? And number three, does it take away a lot from management bandwidth? And if the answer to the first is yes, then you move to gate 2, and if the valuation is yes 2, then you check on management bandwidth distraction, and if that is manageable, you go ahead with the deal. So these are the three questions we ask ourselves for every single acquisition.
What is the answer to 3 of these questions in the Deutsche Bank proposition?
Well, we'll look at it. Let's see how it kind of pans out. Like I said, we look at everything, and we'll balance out the results.
Okay, detailed interview from Piyush there. We'll take a very short break. Before we go into that break, I want to pull up markets on one side and I want to pull up the tally of election results from 5 states on the other side. Markets are clearly cheering what you're seeing on the screen, one way or the other. One thing is clear, the Indian voter has become quite vocal in what she wants. There seems to be no ambiguity as far as West Bengal is concerned. 165 leads for the BJP, 287 out of 294 leads now available, and the halfway mark has been crossed quite definitively. Is there a chance that this could change? Well, very little, right? Because of the quantum of that lead. The Nifty about 1% up right now at 200 points. counting. I want to look at Assam. Assam was expected that the BJP would come back to power, but they've come back to power if these leads hold in a very, very strong way. And this is a vociferous vote for the BJP by the people of Assam. I want to look at Tamil Nadu, we'll look at Kerala and then Puducherry as well. Tamil Nadu is looking like a bit of a different picture. The DMK, as of 20 minutes ago, was seeming like they were clearly in the lead. But TVK, a new party with 82 seats, it's just, I mean, the whole picture is up in a flux. One would say that initially, if it was expected that West Bengal would be the most exciting fight, I'm still talking about Tamil Nadu, guys. If West Bengal was the most exciting fight, maybe that's shifted to Tamil Nadu now with TVK and Superstar Vijay with 82 leads right now. That's the leaderboard for you. These are the leaders right now. UDF 77, they are in lead in Kerala, and that was expected. But there was only one agency, I think My Axis, which gave TVK a clear lead, and I don't know if that's going to happen. But so more than one first in this election, turning out to be more exciting than was initially thought.
Very much so, very much so. And well, yeah, assumption that if TVK were to win, would it be considered as historic as BJP's in West Bengal? Maybe not. More. Really?
I'll tell you why, because I was listening to some of the analysis on NDTV in fact today, and TVK is one of the few parties which has not put Dravidian politics at its center, which was the first for the whole politics of Tamil Nadu since the inception of independence there and the way they have moved forward. So a newbie coming to the fore. Remember, BJP has been increasing its vote share consistently in West Bengal for a while now. So they were not saying it's not historic, but in terms of the element of surprise, this is the bigger one.
Yeah. But in terms of central relevance,
of course. But that's because the BJP is at the center, majority party at the center. But in terms of the surprise, oh wow, that's happening factor, this is.
Just a quick follow-up to Tamil Nadu, since you mentioned that it's so historic. Do they swap very regularly?
Right?
Yes, it's usually one term each. TVK came in like an unknown factor right now. So, all right, if elections is what you're seeking, of course, you have all of the NDTV network to watch. We are going to have our own election analysis after this very short break. Tejas Mehta is going to be with us. And of course, we're tracking markets too. All of that when we come back.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor,
Welcome back. All right, let's do a quick market check before we move forward, and a couple of things happening there. One is the tally in 5 states, those results coming in, and of course markets up about 232 points. Tejas Mehta joining us now to talk a bit about what this really means from a central political system as well, and what it means for these particular states. Tejas, thank you so much for coming in. Which has been more astonishing for you, the West Bengal verdict so far or the Tamil Nadu one?
Well, I will steal your lines and I'll not lie that because I heard what you were speaking just before the break. I think it's obvious Tamil Nadu is the shocker, and I would be wondering what Rajnikant and Kamal Haasan are thinking, because they did dive in somewhere, at least Kamal Haasan did with his party, but not wholeheartedly as TVK has done, or maybe the times have changed. There's also anti-incumbency in Tamil Nadu. The IDMK is no longer that strong, though they are doing reasonably well. And I think that is where the BJP really comes in. I think Tamil Nadu and Kerala, of course, are the last citadels for the BJP. Bengal has been absolutely smashed today on expected lines, as you said, because they have this effort has been going on for a very long time, and the fatigue we were seeing within the TMC and on the ground with TMC voters was quite obvious. The silence has spoken louder than all of Mamata Banerjee's speeches today. So I think Tamil Nadu is going to be absolutely fascinating, and the last word, of course, is not spoken in Chennai.
Okay, specifically on West Bengal though, this is something that has been in the works, as actually Tamanna pointed out just a short while back. So when you talk about the impact for central politics, this has the bigger impact. Would you agree?
I mean, we'll have to see what happens in Tamil Nadu. If TVK and AIDMK can form the government together, then I think both these states are going to benefit hugely, because the double engine Sarkar, as they keep talking about, that's going to really play out, especially in Bengal, because Mamata Banerjee has been she has been actually replicating the center schemes with her own schemes and giving it to the people, so they don't feel it is missed out in any ways. But at the end of the day, the center, whatever they will be giving now will smoothly flow down to the people, and that has not been happening for the last since 2011 actually. So at 2014 when Mr. Modi came into power. So that's going to be the huge change we're going to see, and then you're going to see the BJP go down into the hinterland, into all those areas where TMC currently holds a stronghold. Of course, there's been a huge polarization of votes which has taken place on the ground, and in those seats where the Muslim vote bank is much larger, you are going to see ultimately the BJP coming down, because once you start delivering on policies, people tend to then start voting towards those who deliver.
Just good morning, Neeraj here. Put this into perspective of what it could mean from a national level, because after winning 6 states, you can argue that in this one, Assam was maybe a given, West Bengal was the not given one, right? And in some sense, that it has happened too for the NDA, that they are in power there. And as you said, if there is a party formation in Tamil Nadu as well, what is the implication for this from a central perspective, considering that now there is a clean slate until UP comes up in February?
I think the BJP now is like dominating like never before, because remember, with winning these seats and with such huge margins, one can almost say out of they have won Pondicherry, they have won Tamil Nadu, possibly they may come into alliance in Tamil Nadu, one can say, and Bengal and Assam. Their first of all seats in Rajya Sabha, increased considerably, in a massive way. Secondly, they also will be, absolutely dominating the next election, whichever the state elections are, because where is the opposition now? I mean, you'll be constantly asking, where is the Congress? And now the two stalwarts, Stalin and Mamata Banerjee, will no longer be there on the dais. I mean, they'll be their opposition leaders, but that unity, which was almost not seen for the last many years, it's going to wither out even more. So I think one would have imagined after 15 years in power, the BJP would be really, on a downward slide, and that's not happened. I mean, it's got stronger and stronger, and it's phenomenal. I mean, this political success unseen, perhaps in the Asian and the history of India.
So well put. Tejas Mehta, lovely talking to you for this short conversation, and I'm sure we'll get chances to do more because this is proving to be a very interesting election outcome. Thank you so much for joining us today. Really appreciate your time.
Thank you.
All right. Big market voice and an apt guy to have today, Rajiv Batra, Head of Asia and Co-Head of Global Emerging Markets Equity Strategy at JP Morgan with us on the show. Rajiv, great having you. Thanks so much for taking the time out, and I'm sure all three of us want to quiz you so much on what's happening globally and the relevance thereof, because that's the bigger story for the market. But since we are on this topic, and it seems like there is a change afoot in West Bengal, and very likely a change afoot in Tamil Nadu as well, two of the largest states going into the elections this time. What does the political story in India tell you, and the implications of that for the markets?
Thanks for having me back on the show. I'll say that the alignment of state and the central government with the common parties, and also the stability what investors as well as people want at a regional level, plus at a state level too, if that start appearing at a broader term, it will definitely boost the potential growth prospect for the country. We have seen potential growth estimate have improved over the last few years, but it has not risen as substantially as what one wants. But if results what initial numbers are showing that fructify once the official counting close, yes, markets on a near-term basis will take it in a positive stride.
Rajiv, hi, morning. And so let me then zoom out and ask about the latest situation with regard to Project Freedom. There seems to be some sense of relief at the start of the trading day today that says that maybe things are easing out. But would it be too early to call? Ultimately, you have to see that reflected in crude oil prices, and they're still elevated.
No, well pointed out. Right now, the big bone of contention over here is when the Strait of Hormuz will get open, which have never gone shut in the human history, and now it is shut. So till that doesn't get open and amply reflected into the oil prices, till then only we will get clarity overall. So if oil prices start receding for the next 6 and 12 months to the direction of $80 mark, which subside any kind of a growth concern, till then, like any kind of a rally, especially in the spaces where growth still remain a concern, will be meant for selling rather than buying overall, because for sure, our base case is that diplomacy will prevail over escalation, but because of this uncertainty, we still expect input cost and oil prices to remain elevated for at least next 3 to 6 months in a row, and that will put, you can say, a downward pressure on growth and earnings estimate.
Rajiv, here domestically today, I think some of the focus on election results and your commentary on it was very well put about how the center-state tandem is being looked at. But do you think the bigger concern as far as India goes continues to be what happens with the flow of energy and the Strait of Hormuz? Because we seem to get beaten no matter what happens, sometimes more than those participating in the war. And does that become one pain point that continues till there is some clear solution?
100% oil derivatives or anything which is imported and that is getting disrupted because of this, you can say a small strait getting impacted overall has been a concern for India. Remember when we started this year, it was a Goldilocks regime for global as well as emerging markets overall, where you would have been seen a broad-based global growth plus policy support around the corner, which means anything that is cyclical, value, high beta have tend to do well. But since this conflict broke out, there have been a regime shift overall, where now anything which is energy sensitive or you can say a cyclical is taking a whack, and anything which is non-economically energy sensitive or structural growth, they are tend to doing well. So we are in a two-speed economy at this juncture, where anything that is linked to energy, or you can say imports that are getting impacted through this transit route, will be in some sort of trouble. Now, whether it is just a blip or it is a longer term pain, that will be decided on how longer this uncertainty continues.
Rajiv, you have a great sense on flows, and the overarching beliefs is that because India is not present, quote unquote, in the AI trade, flows are leaving India and going to places where the AI trade is present. South Korea, etc., in the emerging market space, Japan and US in the developed market space. Is it as simplistic, part one? And does this change at some point of time? What can cause that change?
So yes, flows are getting impacted, and flows are not just negative in India. We are seeing that outflows even in Southeast Asia country, that is ASEAN. We are seeing outflows in some of the, you can say, EMEA or CEMEA markets also, which are also oil and gas importers per se. In fact, in the month of March, entire emerging markets saw outflows, even the AI favorite markets like Korea and Taiwan. This particular month, or you can say last month in April, when flow started resuming, obviously the commodities world, that is Latin America, or the tech related market, that is Korea, Taiwan, were the first one to see the rebound related inflows overall. So till we don't shift back from a stagflationary tilt scenario, which we are in right now, towards back to above potential or a Goldilocks growth scenario, it will be a struggle for commodities, oil consumer, or you can say an energy derivative sort of a country to receive meaningful inflows. Some bit of a flows may stay in a developed market, particularly the US, for a safe haven prospective purpose. But beyond that, if it is coming outside, it will largely go into, as I've said, to a non-economically energy sensitive, that is structural growth sector like AI and tech, or it will go to a real asset based sector, which has a tailwind of higher oil and commodity prices, which largely is Latin America and some part of Middle Eastern countries.
Yeah, that's an important point. Rajiv, the other big conversation that we're having, and we're in the midst of the earnings season, but everybody seems to be looking through these numbers to say that the real litmus test will come about in Q1. Have you had reason to believe that the earnings forecasts that currently exist for FY27 might be a little rosy, will have to be cut down?
So generally, if you will look at India for the last 10 to 20 years, whatever earnings number consensus start with, by the end you close the fiscal year, earnings are generally revised down 3 to 4 odd %. That's in a normal year. In a year where there are disruptions taking place, and like right now we are in a situation where our assumption is $100 average per barrel oil price is more a second quarter phenomena, and from third and fourth quarter we will start inching towards the territory of $90 to $80 per barrel kind of an oil price. If it's a protracted kind of a situation and oil prices remain a 3-digit mark for close to, let's say, 2 quarters, 3 quarters, then earnings numbers could be revised much more further downward from here. At the starting point where consensus is sitting at 17% earning growth for 2026 and close to around 15% for 2027. JP Morgan number is 11% for 2026 and 13% for 2027. Remember, our number was lower even in outlook when we came for this year. Current numbers have been marginally revised down by 2% and 1% for both the calendar year, taking account the disruption only in this ongoing quarter. But if the disruption goes beyond this particular quarter, number will need to be still revisited. And economic data points is already showing us that March data point has been resilient, but even before going into the war, we can see the cyclical recovery in India has already started fading. IP number which came positive month on month in month of March, that come after the 2 negative print month on month. Similarly, when we look at consumer durable versus consumer non-durable data, consumer durable largely thanks to auto and GST cut has been holding well, but non-durables have been inching towards a downward trend overall. So we can say buffers are getting thinner over here, and if macro data points are showing the signs of fading, earnings will also need to react and consensus will need to cut.
You know, I'm just wondering, Rajiv, how are you looking at financials right now that we have enough data in, the numbers are in? Are you looking at the Q4 data or also possibly pricing in some impact on asset quality if things don't improve with the West Asia crisis?
Thanks, Samana. So if you look at the earnings season for fourth quarter, close to 25% odd companies in MSCI India World has reported, and largely it is IT and financial companies. Pertaining to your questions on financials, advances, numbers which has been given by the corporate, that is largely in line, or I will say even above what JP Morgan estimates was. Deposit number have been mixed, and you can say a bit concerning was the tighter liquidity scenario in the month of March over there that has hit over there. But what is interesting to watch is both growth and valuation data point. In terms of growth, we had 16% credit growth for the month of March, much higher than 14.5% number witnessed during 16% for April, 14.5% for month of March. Even you can say the first 2 weeks data point which has come, that is also in league of around 15%. Now that growth is happening when bank stocks, Nifty banks index have seen a decline, and valuation for my private banks are looking quite lucrative. In fact, if we look at last 20 years or 15 years basis, they are looking quite attractive. Coming to your question on asset quality, starting point is important. Based on the starting point, the asset quality pressure is not there. The numbers on both NPA and GPA sides are very low. If it is a COVID kind of a shock, remember it will take not few months, it will take at least 2 to 3 quarters to start showing up in an asset quality. But in case if this shock is just for this particular quarter and it can be resolved by, let's say, by May or May end or in a June per se, then I don't think so it will percolate and become an asset quality issue overall. For that to happen, you need it to be a problem beyond 1 quarter.
Okay, thank you so much, Rajiv, for speaking with us.
Yeah, just one, Rajiv, quick 10 seconds though. Are you revising your Nifty target by any fashion? Quick 10 seconds.
No, not at all. We stay with the 27,000. We still remain positive on emerging markets, and on like Asia markets, we have 12.5%, 13% upside, and on India, on a base case, we have close to around 12. So the neutral call on India is a relative call, not an absolute call. Absolute call terms across emerging market, we still anticipate positive return by this year end. Relative term, the bar is very high compared to cyclical growth, which markets like Korea, Taiwan, and China is offering based on innovation and AI.
Yeah, well put. Okay, Rajiv, that sums it up. Really appreciate your time today on an important day, I must add. Thank you so much for taking the time out and being with us.
Thank you.
Well, guys, this is markets. We can't end without this thing. So the verdict is that the surprise in Tamil Nadu, very...
Double surprise.
Double surprise. Double surprise is a good term.
Double surprise. I don't know if the first one is a surprise. It is a surprise because even those who were saying that the BJP will win, I'm seeing 170 seats. It's 290 out of 294. 170 seats for the BJP, way ahead of the halfway mark. And, you know, we talked about this, that how in the history of West Bengal, there's maybe only 1 or 2 elections where there was a close fight. The people of West Bengal, once they make up their mind, know what they want to do. That's the leaderboard. The BJP leading in West Bengal, the Kamal leading in Assam, also with a huge majority. Tamil Nadu has pulled a surprise from its hat. TVK, superstar TVK, is going to be perhaps forming the next government, and possibly by himself or maybe with some support. UDF, the Congress alliance coming to power in Kerala, the vote share in West Bengal also, and do we have the numbers there? 57.75% of the vote. That is astonishing. That is astonishing. So yes, West Bengal has voted for Parivartan. I'm not saying the pronunciation correctly. Parivartan.
Parivartan.
Yeah. Okay, has voted for change. There is no doubt over there. So after 15 years, it was there for the taking, right? And the BJP was clearly well positioned to do it. But I think the story in Tamil Nadu is also turning out to be very exciting. Clearly, markets are enthused as well.
Guys, brush up on your top songs from West Bengal and from Kerala, from Tamil Nadu.
We nominate you unopposed.
Wholeheartedly.
We elect you to do
but
this.
Neeraj
You have 100% vote. But you know, I don't know if viewers know this, but Alex has a great voice. A superb singing voice.
On that note,
you are unopposed, elected to do all the singing on this table.
There are only two people voting, and they have vested interest to nominate me, and so therefore we'll figure this out in the break, and we'll be back on the other side to get all of your questions answered. I'm sure you have quite a few of them. Ask Profit up next from Tamanna, Neeraj, myself, and the team that put this show together. Thank you so much for watching. Stay tuned. This is NDTV Profit.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to get the management to answer questions relevant to you. Watch Know Your Company weekdays at 11:30 a.m. to understand your next big bet. Presenting the all-knowing, all-powerful Tech Guru.
Whoa. Guru? I'm no guru.
Okay.
I'm just a guy who loves his tech.
A show where the mysteries of megabytes and motherboards shall be unraveled.
Bro, nobody talks like that anymore. This is all about connected ecosystems, EVs and AI that you can use in your daily life. That's what we do on Tech 360. Real talk, real reviews, tech that you can actually use.
Tech has changed. So should your tech show.
Economy, business, world,
technology. Noise filtered, numbers decoded. Insights that rewire your worldview. From governance to growth, we connect the dots. Your daily edge, your global advantage. India Business Report with me, Gauri Dwivedi, weeknights on NDTV Profit.
Hello and welcome back to NDTV Profit. You're watching Ask Profit, a show that answers all your stock-related queries. My name is Puneet Zaveri. With me, as always, is Mahima Vajrajani. And starting off a very, very eventful day today. Markets are up in the green. It's all about the elections, and you're seeing BJP winning a couple of key states. You've seen two surprises also in West Bengal as well as in Tamil Nadu, but the markets are having quite a bit of fun by itself as well. Up in the green, 24,200 continues to be a key level, and let's pull up the heat map as well. You've seen stocks like Maruti Suzuki flying up in trade today on the back of sales numbers, and that stock continues to be one of the key favors in the Nifty 50 gains. You've also seen some movers like HUL now, which is one of the biggest gainers, up almost 4.2%. Bajaj Auto post sales numbers is also doing very well, and Adani post its results last week. You also had a brokerage note, a key one at that, talking about the plans of the next couple of years, is also up in the top 5 stocks as of now. You're seeing some pressure today on Kotak Mahindra Bank. Results are largely okay, but some key aspects and misses, especially is also on the commentary side, is the key factor that's hampering the stock right now. ONGC is the other loser as well, but pull up the sectoral heat map as well on this Monday morning, and you are seeing some key ones. FMCG continues to do well, but Realty is the big gainer for today. Nifty Media slightly under pressure right now, but largely a screen that's continuing to be in green at this point of time. Also, the advanced decline ratio giving us some perspective of the broader markets as well, because you have seen largely almost a 2:1 kind of ratio, but that has increased to 4:1 now in terms of the gains. And Mahima, clearly the mid cap and the small cap index also showing you that.
Yeah, I mean, before I address that, 291 already out of 294 seats in West Bengal. We're seeing those numbers coming out, and BJP has already crossed that 170 seat mark. So majority to kapka cross ho gaya, but we're now seeing a 175 number on that West Bengal seats. But yeah, talking about the broad end of spectrum, as Puneet mentioned, slightly outperforming the benchmarks, but almost in tandem with where the Nifty 50 goes. The mid cap 150 is up about 0.9 odd %. The small cap 250 is almost up by about 1% now as we speak. Both trading near its day's high point. Let's pull up the BSE 500 quickly and see as to what are the counters that are buzzing away in trade. Some specific names that are seeing big moves. You have SIS, Dr. Lal. Dr. Lal, of course, on the back of numbers. You have Equitas Small Finance Bank, which is also up 11%. Chola is also up 9%. So a lot of earnings specific stock buzzing is what we're seeing. On the flip side, you have something like a KSB, Kajaria Ceramics, Sonal, BLW, Mazagon, as well as Sun TV seeing a downtick in that range of 4 to 7% each. So that's with regards to, of course, where the markets go. With that, let me also welcome in our guest for the day. I think we're joined by Gaurav as well as Mr. Chokalingam, who's joining us now for answering all your stock-related questions. Let me start up by taking the first question, which is coming in on Sterling and Wilson. This is from Raghuram Patros, writing us from Bhubaneswar. He says that he's holding at the levels of 215. His time horizon is for the next 3 to 6 months. Wants to know as to what the charts are indicating. Gaurav, a very good morning to you. Your view on the charts for Sterling and Wilson?
Hi Mahima, very good morning to you and to all the viewers of NDTV Profit. So Sterling and Wilson, the company is doing well. Renewable energy space we are bullish on. He can hold on to his position.
Got that view, Gaurav, and welcome to the show. The next question that's coming in now, this one is from Harsha from Vijayawada, and she's holding on to TCS at this point of time at 3225. Now, you discussed this stock quite and plenty over the last few weeks, but Mr. Chokalingam, she's bought it at 3,200. What's your view on the stock now? We've largely seen the large cap IT earnings come and go by in that sense. Do you continue to stay on the sidelines, or what's your view on the stock now?
I generally avoid large IT stocks, only Infosys, that too tactically. But otherwise, my view on the large IT stock is that wealth creation story is over. Even, close to 10% growth in profit and revenue is most difficult going forward because of AI threat. I would avoid. But if somebody is holding and very defensive investor or conservative investor, one can continue to hold because tactically such companies can give anywhere around 5 to 10% upside because they are heavily beaten down. PE is also comfortable at 17 times and 2P is also under tremendous pressure. So therefore tactical opportunity is possible.
Okay, all right. So that's the view coming in on TCS. The next one that we have is coming in from Mahesh, who's asking about Eureka Forbes. He's got around 40 shares at an average price of 646. He says that it's trading currently lower. What's the long-term outlook on this one, and whether he should average on dips? Mr. Oklingam, I'll stick with you for this one. Any view on Eureka Forbes?
Yeah, it's a beaten down, good quality stock, very old company in the country. If there is any decline of more than 5-10%, one can accumulate for long term.
Got that view. The next question coming in now, it's on Nalco, bought at 370 from Sai. Now he's from Hyderabad, asking if he should continue to hold on to the stock or sell out. Now, Gaurav, you've seen consistent momentum on Nalco. Would you advise him to continue holding the stock at this point of time?
Hi Puneet, very good morning to you. Yes, the viewers should hold on to the position. Stock is looking good. It has corrected from its highest point that was somewhere around 445 odd levels, currently trading 10% lower. This is a good time to add up. Take a closing stop at 380 and hold your position. Look for targets close to 480-500 zones in the next 1 to 2 months.
Okay, the next one that we have is from Arvind, who's asking about CESC. He says that it's a Kolkata-based company and he's looking for a medium-term window of around 1 to 2 years. Wants to know whether there could be a significant rise from the current price point, considering the election results. Okay, so his question is based on the entire perspective, whether the election results, whatever they may be, will be in the favor of the company or not, and whether he should take a position right now or not. Mr. Okulingam, any view that you can give on CESC, especially from this angle?
Yeah, considering last 4-year annual performance, it looks good. Valuation is also quite decent, around 17 times. And also power has emerged as a thematic sector of late, post-war. So tactically also it is possible. So it is a good to buy at the current price. That's my research view.
Got that view, Mr. Chokalingam. But next question coming in now from Kaushik Mehta. He's holding shares of DLF, bought at roughly 330 shares, bought at 671 each. Now, he wants a 3-year view on the stock. Mr. Chokalingam, DLF, one of those companies where pre-sales and the cash flow are quite like to like in that sense. Would you recommend him to average down a little bit, buy more since it's below his average price? And what's your 3-year view on the stock?
Yeah, 3-year view is too good. If it corrects, one can accumulate. Already stock is beaten down. Let us, understand the fact that the land bank story has emerged as a very attractive thematic story across all the major cities. Land values are going up, and this company already holds sizable land bank, lot of inventory also, and also it has got a lease-based business model through subsidiary. So for medium to long term, it's a good stock to buy.
Right. Okay. The next, I think we've got our first caller for the day. Pradeep is calling us from Visakhapatnam. Pradeep, a very good morning to you. What's your query about?
Yeah, very good morning. My stock query is on Eternal. I want to know if it is the right time to enter into the stock for the 3-month perspective.
Okay, I'll take this up with Gaurav then. Gaurav, your view on Eternal right now. Today it's of course up 0.4%, but it did see some profit booking post the earnings. But overall, your view on Eternal from a short-term perspective?
Mahima, we are maintaining a cautious stance of Eternal. As far as short-term positioning is concerned, stock is not at all looking attractive. I'll suggest a viewer to wait for some more time. Let the stock go past 270, which is the immediate hurdle. Once that is taken out in a short-term horizon, the stock can go up to 310, 320 odd levels. As of now, it is a avoid.
Avoid as of now is what Gaurav recommends on Eternal. The next question coming in, and viewers, you can also call us for stock related queries. Number for that, the landline number is flashing on the screen as well. But let's go across and take the next one. This one's from Nihal Mohandas from Mumbai. He's sent across a few bunch of stocks, Mr. Chokalingam, Gillette, PNG, Colgate, as well as Wipro, ITC, TCS, Pidilite and Nestle. Amongst them, any of them which you like for the next 1 to 2 years, any particular space that you're bullish on? Okay, we'll reconnect with Mr. Chokalingam at this point of time, and maybe I'll just take at least another query with Gaurav, since this one's a long-term view. Gaurav, on the next question actually coming in now, it's was on Mazagon Dock. Stocks down 4.5% today. Any view here? Because of course reacting on results, but what's your view on the stock now?
We are very bullish on the shipbuilders, all the three of them, although Cochin Shipyard being our favorite. Cochin, Mazagon and GRSE, they are all good. The modernization plan of Indian Navy, I think it is more than a lakh crore project that is being rolled out by the Indian Defense Ministry. This will be these three companies will be a clear beneficiary of the same. We uphold a long-term bullish buy on these stocks. Mazagon Dock is also a part of it, so viewers can hold on to the stock, keeping at least 2 to 3 years horizon.
Right, so that's the view coming in on Mazagon Dock. I think we've got our next caller lined up, if I'm not wrong. Manav from Gurgaon is calling us. Manav, a very good morning to you. What's your query about?
Hi, good morning to everyone. So today I have a query on Nalco, National Aluminium.
Okay.
So I've been holding on to these 50 shares of Nalco at an average price of 192 for about like a little more than 17-18 months as of now.
Okay.
So since now Q4 results are also out now, so what should be my strategy? Like, should I hold on to it, or should I book profit, or invest it somewhere else?
Okay, Manav, got your query. I'll take this up in a while, but that flash is on your screen coming in with regards to JP resolution case. NCLT upholds Adani Group's resolution plan. NCLT dismisses Vedanta's appeal. So that's the update coming in with regards to that counter, and we're overall seeing a bump up in all those names. NCLT says no ground to interfere. It upholds Adani Group's resolution plan. Has completely dismissed Vedanta's appeal as well. NCLAT has backed basically NCLT's order in this particular case and uphold Adani Group's resolution plan as well. On the back of that, we're seeing Adani Enterprises going up by about 2.3%. Vedanta is also up by 6.5%, but that's largely on account of the corporate action that we've seen on 1st of May. But again, NCLT says that no grounds to interfere so far with regards to this case, and has backed the order in this case completely. So that's with regards to an update coming in on this JP resolution case. Like I said, they've said that there's no grounds to interfere at all, and has upheld Adani Enterprises. NCLAT has dismissed, they say no grounds to interfere at all, and we're seeing that bump up in the stock also coming in up 2.3%, and has backed NCLT's order in that case coming in. So overall, the upper court has upheld Adani Group's resolution plan is the major update coming in on this particular resolution case right now.
Some comments coming in from our reporter Danish, who will be joining us very shortly, because from NCLT some key comments coming in that they are of the view that the decision of the COC in the 24th meeting held on 14th November 2025 is not to take into addendum into consideration. It is neither invalid or an untenable decision, is what NCLT has said. There has been no material irregularity by the resolution participant as well, and do not find any ground to interfere with the order passed by the authority. So those are some additional comments coming in as well, and we'll of course be joined by Devin Choksi of KR Choksi Securities. Mr. Choksi, very good morning to you, and thanks so much for joining in. Just your first view of what this NCLT resolution has come, and it is firmly affirming that there has been no irregularity in this case. What is your first opinion?
Yeah, good morning.
Well, I think NCLT affirmation has come only after the Supreme Court's order. So obviously, I think Supreme Court has denied any kind of interference, and I think gave the full authority to NCLT. NCLT has also basically, taken this particular matter very systematically. I think the COC has definitely given preference to Adani Enterprise, largely because of the fact that various businesses within the JP Associates are basically finding its contours in the Adani group of companies. And that's where probably I believe that I think the preference of the creditors went to the Adani vis-a-vis the Vedanta as I see it. Maybe I think the real estate business, if you want to see it, or maybe I think other businesses that also I think you want to see it, are all basically forming a synergy with Adani Group at this point of time. And we believe that I think that's where probably the preference have gone. Good that NCLT has also cleared along with Supreme Court. Now at least I think the firm integration process will happen of the businesses of JP Associates into Adani Group. And I think that's where probably the larger amount of prospects will emerge for most of the present creditors also.
Then it also says that there has been, they don't find any ground to interfere with the order passed by the adjudicating authority. Just want to get a sense, that's a strong comment coming in. How are you reading this commentary that has come in with them saying that, there's no need to interfere as well in this one?
Yeah, I think generally NCLT, whenever they passes an order, I think they take into account all 360-degree angles, into it. And if somebody has objected to it, I think they have a business to give a comment on it. And glad that they are giving a comment in very specific words without any ambiguity, that they don't see any ground for interference. So that also establishes the authority of NCLT in a way, from whichever way you want to look at it. In a way, it is good because I think ultimately the certainty is required by everyone, including the buyer, including the creditors. And it is where probably I think the businesses would get more confidence. If every now and then, suppose if somebody is to change the decision for whatever reasons, I think that will not create certainty. And I'm glad that I think this process has been followed with a good discipline.
Also, Devin, we've seen that the upfront cash payment by by Adani Group, of course, of almost 6,000 crores was the key difference with Vedanta's order as well previously. And we've also seen post that the other group entities, that these all assets will go into certain group entities of Adani Power, Adani Ports, amongst others. Do you feel what would be the next step essentially from here for investors as well of Adani Group companies, as well as whoever, as well as the resolution of JAL post this? So what would be some of the key steps coming forward?
So largely, I think the Adani Group companies, and as you rightly mentioned, the power company among all, I think they all will be looking at how the integration is taking place and how successfully and how speedily this integration taking place. My understanding is that I think they have been preparing the ground before the order came in. So probably I think they have covered the ground at least 6 months ahead of time in form of integration that they wanted to do. I believe that I think this integration will assume a large and greater speed now with the order coming in. So in my viewpoint, I think the shareholders of Adani Group of companies will certainly see how exactly JP associate companies are getting integrated into different businesses of Adani Group and how successfully I think they start delivering the larger part of the potential from these businesses. Of course, I think the JP associate businesses would require some amount of further capex in order to bring them up to the higher amount of potential that they assume. So certainly, I think these are some of the points on which I think one will keep an eye on and see how soon, how fast they integrate these businesses.
Then stay by, my colleague Nimit is joining us to tell us more in detail with regards to this JP resolution case. Nimit, over to you.
Yes, absolutely. So the NCLAT today has upheld Adani's resolution plan to take over Jayaprakash Associations Limited, and in fact what it has done is it has laid out 7 questions. While a detailed order is yet awaited, but it has answered those 7 questions broadly. What it has said is that the key challenge that was to the COC's wisdom itself was rejected, saying that there was no problem with the way the COC acted. It also said that the post dated addendum was valid, as was contended by Vedanta heavily in this case. Now, whether there will be an appeal or not, we are yet to see. Vedanta is yet to comment on that. They've already earlier moved the Supreme Court, but the NCLAT has made it clear that there are now no hindrances in Adani moving forward with its resolution plan here. The NCLAT upheld the upfront payment which was higher, and the wisdom of the COC in making that choice whether to decide a larger overall package or a larger upfront payment based on its point-based criteria that it created for this case. That was upheld again, and it found that there were no grounds to interfere with the COC's order as well as by the NCLT's earlier order in this case. Now there is no restriction on Adani moving forward with its resolution plan. Whether there is an appeal, we are yet to see.
Well, thanks so much for that, Nimit. But getting you all these key updates on this aspect as well. But we'll just get another question with Devin Choksi as well, since we have him here. Mr. Choksi, the other aspect of the appeal that, as Nimit highlighted, is the other key factor to watch right now. If that is when happens, will be the key aspect. But you also touched upon that there has been a 6-month process into planning of this, and now that the things have gotten another key win in that sense from NCLT and giving that clarification. Should we expect that unless there is another appeal and we look at that, the things should speed in much more faster than already that the plans have been in place at this point of time?
But I don't see any reason for any other appeal now that having got the NCLT clearance and the Supreme Court stamp on it, I don't think that there is further scope for further appeals. At the same time, I think various businesses which are getting integrated, they should be of keen interest. I think you have the cement business getting integrated. You have got the ports and logistics business, I think, which is getting integrated, and real estate business with the land bank, which is also getting integrated. So obviously, I think in case of Adani Group, I think these are all the separate companies under whom I think these particular businesses, respective businesses are getting integrated, and that would be interesting to see because I think every company will have their own balance sheet and every company will have their own cash flows to further invest into some of the assets that they are acquiring. How soon, how fast they get integrated, how soon, how fast I think they get further expanded into is something which will be seen with a greater eye. In my viewpoint, I think the roadmap becomes very clear. Next 2 to 3 years are going to be the years of, I think, fully absorbing these assets and growing these assets, I think, to a higher level.
Okay, Devin Bhai, thank you so much for getting us those details. We've also, by the way, Swapnil Kothari is also joining us. He's a senior lawyer of Supreme Court now. Mr. Kothari, thank you so much, first of all, for taking out the time. The same question to you as well, right, Mr. Kothari? With this entire update coming in, how are you reading this? And, as Puneet was mentioning earlier as well, do you think that there would be another case of appeal also going forward here?
Well, possibly Vedanta has got all the rights to go into appeal against this decision. But, and it possibly will and possibly should as well, and give it one final shot before it gets rejected, and luckily if it gets accepted. But given the fact that Adani name is a heavyweight, I think, and the way the resolution plan was proposed, outbidding several other top contenders, I don't see really a plausible solution for Vedanta as such, in the sense that it can give it a shot. It has got a right to appeal. But I don't know how far that appeal will succeed, because if a decision has been made, looking at all the aspects, and Adani has been given the green signal, then I don't see any reason why any higher court also should interfere with this process. Just because Vedanta is aggrieved, these things happen. This is business. This is commercial business. And at the end of the day, what seems plausible and what seems viable and what is faster should prevail. And if that is the decision that has been arrived at, then one doesn't see the need to interfere with it, except some sort of an emotional begrudging or anything of that sort that Vedanta may prove or plead. But that is not going to really work, because what it needs to plead or prove is the fact that its resolution plan was better than that of Adani on most of the counts, and that the order that was passed in favor of Adani was an error apparent on the face of the record, or was prejudiced, or did not look at some of the most important claims, or omitted certain things, or was fraudulent. So these little 3, 4, 5 grounds are there for appeal. And I don't know how far Vedanta is going to be able to substantiate even one of them. So good luck to them if they choose to go and appeal. But otherwise, I think they should just forget this whole saga as a bad dream, if at all they want to consider it as a bad dream.
Well, Mr. Kothari, they're answering some key questions, but also, Mr. Kothari, just before we let you go, just one final question, because you mentioned that what are some of the key aspects that they could look at in terms of this appeal. There have been multiple key questions that have been also answered, as my colleague Nimit highlighted, that there was no problem with the way COC acted. The post-dated addendum was also valid as well, and there could be an appeal for that. And the NCLT has made it clear that there were no hindrances. Do you feel that the majority of the issues and the questions that were raised are now put down to rest finally?
Yes, pretty much. I think they're pretty much put to rest. And I don't really see these things happen day in, day out. I don't, to us, to the common viewer, I can understand, or a common person, I can understand that this is a big deal. But I think when you're sitting in the chair of Vedanta and Adani and you have several people, it's like a, wrestler's fight or a test match between 3-4 top teams. And, on a given day, one team wins. And if you have some better plan or better solution, or if your people have worked out a better resolution plan, then I think you have to learn to accept defeat.
Thanks so much for joining in, giving us your esteemed opinion on this matter as well. But viewers, that was one of the key updates and the breaking news that we were addressing here on NDTV Profit. And a lot more stock-related queries, of course, on the other side after this very short break. So do stay tuned.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो पतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to. Get the management to answer questions relevant to you. Watch Know Your Company weekdays at 11:30 a.m. to understand your next big bet.
Economy, business, world, technology. Noise filtered, numbers decoded. Inside.
Welcome back. You're watching Ask Profit here at NDTV Profit. For viewers who are just tuning in, you can either give us a call or send us all your stock-related queries on the WhatsApp number that will be flashing on your screen up there in a while. But I think we've got our next caller. Bharat is calling us from Andhra Pradesh. Bharat, very good morning to you. What's your query about? Hi Bharat, can you hear me? Okay, I think we seem to have lost the caller, but we do have his query. He's asking about Waaree Energies. Got 200 in quantity at the levels of 3,300 per share. And by the way, on this side of the show, we are also joined by Ajit Mishra. Ajit, a very good morning to you. Waaree Energies is the counter that Bharat has a question on. We don't know the time horizon, but your view overall on the technicals?
Yeah, good morning, Mahima. So what we are seeing right now is that the stock has been experiencing volatile swings from last several months. And after this recent surge towards 3540, 3550 zone, which was close to the previous swing highs, the stock has witnessed a sharp correction of late. The good part is that we are still holding above the long-term averages. So a possibility of consolidation around the current area means above 3,000 level seems high, and probably then we may see an attempt of recovery also. So as of now, you can continue to stay put with 2950 being the stop and upside around 3300, 3400. If the view is short term, you can consider maintaining as a target zone.
Got that view, Ajit, and welcome to the show. But taking the next question, I think Mr. Chokalingam, we posed this question from Nihal Mohandas from Mumbai before, in the previous, before the break to you, where a bunch of stocks that he mentioned from the MNC space like Gillette, P&G, Colgate, and within India, ITC, Imami, Pidilite, and Nestle. Either of those stocks that you like for the next 1 to 2 years is his question.
Certainly, Gillette is one idea which I like a lot. And then ITC. I would give a buy call on ITC. I firmly believe that ITC has a potential to grow FMCG business, and also like hotel business, they may unlock value from 1 or 2 business like FMCG or even IT business by listing them. So these are the 2 stocks I like among all those you have mentioned.
Okay, all right. The next one that we have is from Prashant, who's writing us from Bengaluru, asking about solar industries. Wants to know as to what should be the entry price for this one, and going forward, what are the targets that you can expect on this one? Ajit, your view on the charts?
So Mima, again, here also we are seeing volatile swings, but the good part is that now at least the volatility has subsided and the stock has been hovering in a very tight band with tone on the positive side. So for fresh buying, dip towards 20 EMA mark means close to around 14,800 is a good area to look for fresh long. And he may add more in case if it further slips towards 14,200 mark. For the entire position, 13,500 is the strong base now, the long-term moving average. And gradually the stock can extend towards this record high zone, which is around 17,500 plus. So short term, it looks sideways. So wait for any dip for fresh longs.
Got that view, Ajit. But the next question coming in on Gateway Distillery Parks, and our viewer Ambika from Chennai is holding 2,000 shares of this counter bought at 60 rupees. Now her question largely being, Mr. Chokalingam, if she can add further now to this particular counter at this point of time. Stocks up almost 4.5% today. Would you advise that?
For long term on decline, one can buy. Right now, the surge in the oil price is basically negative for all logistic companies. But definitely, this company has got a good medium to long term perspective. So I would recommend accumulate rating on declines.
Okay, all right. The next one that we have is on CEAT. Anjali from Bengaluru has purchased 50 shares at the levels of 2458. Wants to know if she can go ahead and buy more, average at the current levels. Ajit, your view on the charts?
So CEAT, we are seeing that the stock has experienced, a strong up move of late post numbers, but now we are seeing possibility of consolidation after this, surge. So one can look for sign of consolidation with a bit of stability. Then only one can look for fresh long position. So close to around 3,200 is the next space that we have in CEAT. So around that area, she can consider adding. Avoid any fresh long at current levels.
Got that view. But the next question coming in from Narendra, he is from Bangalore and asking that he wants to invest 1 lakh rupees right now into HDFC Bank and Kotak Mahindra Bank. Now, is that something that you would recommend, Mr. Chokalingam, for the next 3 to 5 years? We also had result reactions coming in now on Kotak Mahindra Bank. Largely, Mr. Chokalingam, how did you view the results, and is that something that you would add for the long term?
Certainly, yes. Of course, my bias is always for small and mid cap, but for anybody, you need to have a 30% at least exposure to index stocks. In the index, Nifty and Sensex, I think both are looking good, HDFC Bank and Kotak Bank, because the industry prospects look too good. Even now, the industry credit growth is still very strong at around 14%. And HDFC also has posted a decent uptick in the business growth. Kotak also doing reasonably well. Both are beating the industry overall average credit growth. And both have unlocking possibility also, because there are many subsidiaries which are yet to be listed. So 3 to 4 years, the banking industry is a bankable one, and these two stocks are good to consider buying for medium to long term.
Okay. The next one, Mr. Okalingam, we've got in fact 2 questions on the same counter. That's Wartime Transformer. And both San and Satyan has said that they bought this stock basis your Diwali pick recommendation, and it's crossed the target price. Satyan has already exited the counter, but San says that he's still holding. What should he do next? For Satyan, it seems he's already exited. I'm combining 2 queries here. He's said that in terms of...
Right. So I think because, I think on Voltime also that's been one key aspect, right? It's been quite, in terms of let's look at the 1-year chart also, but largely, and those earnings right now flashing on the bottom of the screen of Ather Energy as well. But very quickly, just Mr. Chokalingam, what's your view on Voltime Transformers right now?
We have given a sell call just a few days back based on the valuation after making 50% return. I think the current price is fairly valued for its earnings. I would sell on rise.
Okay, all right. So that's the view coming in on Voltam. The next one that we have here is from Muni Rajulu, who's asking about Sansera Engineering. She's got around 50 odd shares at the levels of 2413. Wants to know whether to hold, add, or sell from a slightly long-term perspective. Ajit, your view on the charts?
So Sansera, Mahima, the overall uptrend is intact. We are seeing marginal profit taking after every surge. So it's a healthy uptrend, which is reflecting on charts. Even for short to medium term, we believe that the tone is likely to remain positive, with 2300 being the new base now. So with that as a stop loss, you can continue to hold. Upside is open. So let's say if it reaches to around 2800, 2900 mark, he can trail his stop loss to 2600 and stay put.
Got it. Well, let's go across to the next caller from Hyderabad, and Ravi has a stock query for us. Ravi, very good morning to you. Welcome to Ask Profit. What's your query?
Yeah, very good morning. Yeah, I am holding currently 18 shares of GV Turnover T&D.
Okay.
India. Bought at 3170. I just want to know, shall I book profits and invest in some other sector, or shall I hold?
And Ravi, did you buy this with a long-term view or a short-term view?
Yeah, I can hold for next 6 months.
6 months, okay, got it. Ajit, on GVTND, he's sitting on handsome gains of almost 23,000 rupees. Would you recommend him to book that and buy into some other stock or sector? What would be your opinion?
So certainly it means the kind of surge that stock has experienced in last few months from 2400 to 4600. Still, the trend has not reversed. It's just that we are seeing a bit of profit taking or more of time-wise correction after this strong up move. We are still above the 20 EMA mark, so that shows that the trend is intact. 40 to 30, that's the area basically where we have the immediate support. So with that as a stop loss, you can continue to stay put. Upside around 4800 to 5000 area, you may consider booking profit, and around that area you can consider energy stocks like JSW's Energy, Tata Power, PFC, any of the names for fresh accumulation.
Okay, all right. The next one that we have is coming in from Rajesh Maheshwari. But in fact, before we just go to that, there's Ather Energy numbers flashing on your screen up there. Revenue has seen an uptick of almost 74% odd. The stock, however, not reacting much to the earnings, but we have Puneet who's analyzing those earnings for us as we speak. Let's try to pull those numbers also up. Revenue has almost seen an uptick of 74% odd. Net loss at 100 crores versus a loss of 234 odd crores. So losses have also narrowed in terms of that number. Of course, the EBITDA number and margins will be something that we'll be watching out for.
And it's actually quite narrowed also in terms of EBITDA loss, just around 69 crores versus a loss of 172 crores. And the bigger aspect was that Ather has climbed materially in terms of its market share. Now, it was almost the number 4 player at 12% market share in the same time last year. That has jumped to 18% now. So it's the number 3 player after TVS and Bajaj. And hence, as the sales are increasing, the cost per unit is also coming down, and that's reflected in the numbers. So sales have increased, that's reflected in the 70% growth in revenues. EBITDA has also come down almost a third in that sense. to down to 69 crores. Now, of course, market is pricing in a lot of these positives ahead. So you've seen almost in the last 6 to 8 months and almost just a year back when the company actually came out with its IPO at almost 315 odd rupees. It's almost tripled in that sense from that price. So a lot of those positives in the price and hence not seeing too much of a reaction right now. We'll wait, of course, for the investor presentation and some more commentary coming in now. But definitely very good set of numbers for the company and a lot more to watch out for. And the listing gains, there you go, are up on 188% from the listing price as well. But just a quick view, Mr. Chokalingam, it's of course the numbers are quite fresh, but the sales momentum has been very strong for Ather at this point of time. How are you viewing this counter now? I know valuations are slightly more stretched than what you'd want, but an opinion here?
See, one has to look at two things, whether it's a good company and then it's a good stock to buy. If you are on first question, it's a great company, not just good company. 4 years, 8-fold jump in the revenue. But is it a good valuation? I have a serious doubt. Because as you rightly mentioned, it's a fourth player. 3 players are the traditional two-wheeler players and with a lot of cash profits. And, the base effect also, arithmetic also has a limitation. After growing 8-fold in 4 years, I find it very difficult to grow at the same momentum. And these traditional player also will give a lot of tough competition. So I would give a sell rating on any further recovery in the stock price.
Okay. Oh, so that's the view coming in on Ather Energy. The next question, in fact, that we have is from Rajesh Maheshwari that I was, asking as well. He's asking about Balaji Mines. He says he's got 85 watt shares at the levels of 2485. Wants to know from a short to medium term outlook, is this a good chemical stock to stay invested in? Ajit, your recommendation on the charts?
So Balaji, what we are seeing right now is more of consolidation after this initial up move, but the overall trend still looks down to me. So in case if the view is short term, it's prudent to avoid.
Okay. All right. So that's the view coming on Balaji Mines. We've got Ram calling us from Chennai. Ram, a very good morning to you. Go ahead, ask your question.
Yeah, good morning. My question is both on fundamental and charts, which means for both Mr. Chokalingam and Ajit. I'm actually looking to enter the AMC counter and I'm evaluating between HDFC AMC, Nippon, ICICI and Aditya Birla. So I wanted to know which of the stocks is fundamentally good from a 2-year horizon, and from a charts perspective, what is something that which is still lucrative to enter even at these kind of price run-ups that some of these stocks have already gone.
Okay, so Ram, overall your time horizon is 2 years, right?
Correct.
Okay, all right. I'll take this up with Mr. Chokalingam then. Mr. Chokalingam, your view on these AMCs that Ram just mentioned, any one, if you had to pick, which one would that be?
Both are good, but between them, ICICI AMC is better. Because AMC is a structural story. I'm not sure whether one can make money in 3 to 6 months, but definitely if you have a 3 to 6 year view or even beyond 2 year, one can definitely hope to make money because this is going to be a ever growing industry. Every week 4 to 6 lakh new investors are entering capital market, including the mutual fund industry. So it's going to be perennially a growth story. It's good to consider buying them for long term.
Okay, there's one more question, Ajit, that we've gotten on ICICI AMC, and this is from a short-term perspective, which is from Puneet Saxena, who's writing us from Ghaziabad. Wants to know from a 3 months to 1 year perspective, how is it looking on the charts? Your view on this?
So Mema, after this profit taking phase from its record highs, we are seeing consolidation. So it's a recent listing. We don't have much data, but still, basis what the chart indicates, possibly we may see a consolidation around this current area. Means around 3200, 3150 is something that stock might try to form the base before the next leg of the up move. So as of now, you can continue to stay put. 3100 is the stop loss area for existing position, and in case if it rebounds, 3450, 3500 will be the first area of resistance.
Got that view, but the next question coming in now, this is from Madhu Babu from Hyderabad, and his question is on CAMS. Now he's bought 100 shares at 770. Ajit, he can hold up for the next 6 months. Would you recommend him to doing that?
So interestingly, Puneet, that while we are seeing strong traction in some of these capital market names, CAMS, CDSL, they have not performed in line with the the other counters. Having said that, after this recovery, we are seeing a kind of a base formation around 720, 730 area, which also coincides with the long-term averages. So probably in the next attempt, it might witness a move toward, let's say, 800, 820 levels. So as of now, he can continue to hold his position with 710 as a stop.
All right. The next one that we have is from Pankaj, who's writing us from Pune. He says that he's got around 6 lakhs to invest in with a time horizon of 5+ years. Mr. Oaklingam, if you were to pick certain stocks, which would those be right now to invest around 6 lakh rupees?
So I would give my research calls, and he should take his own, since I am only a research analyst license holder. Definitely, first equity strategy should be that you should put at least 30 to 40% minimum in the Sensex and Nifty stock to mitigate the possible risk. So the stocks which we are bullish are, L&T, Reliance Industries, ITC, and then Mahindra and Mahindra. These are the large cap stocks. For possible alpha creation, we have stocks like Nesco, Bombay Burma, and FDC Limited, EIH Limited, Actimis Medicare. And then in between, one can consider, large mid-cap stocks. So there one can go for mid-cap index stocks. So right now I'm not prepared for this question. So if you give me a few more minutes, then I can come back on that.
Well, Mr. Chokalingam, definitely quite an answer there as well on across how you look at it. Very interesting there, but most certainly, hopefully that answered your question as well. But viewers, the next question actually coming from M. Ahmad on Railtel. He's bought 100 shares at almost 400 rupees for about a 6-month view. Should he continue to hold, Ajit?
Of late, we were seeing that the railway counters witnessed strong rebound, but from the last couple of weeks, we are again seeing the momentum at least is kind of subsided. Volumes are okay. Stock is still hovering around the key area of the long-term moving averages, but for the fresh traction, and since he has bought it at very higher levels around 400 plus zone, a stability above 300 is quite important. So basis that, he can continue to hold his position, avoid averaging at current levels. 300 should be the stop. Around 365, 370, he should reevaluate his position.
Okay, all right. The next question that we have is on KFin Tech. Our viewer has invested at an average price of around 936. 129 shares is what he or she is holding. The time horizon is around 2 years and wants to invest around 2 lakh rupees into this one. Mr. Oaklingam, the viewer query basically is whether to invest that entire 2 lakh rupees in KFin Tech more to average out, or to diversify and invest into CAMs. What would you recommend?
See, generally, unless the investor himself is a professional or highly risk-taking, one should not go for a single stock. It has got its own risk. So fundamentally, between KFin and CAMs, I prefer KFin, though valuation is slightly stretched. And trading at around over 40 PE, but still its medium to long-term prospects look good. So my preference is for KFin Tech.
Got the view, Mr. Chokalingam. The next question coming in now is from Manoj from Mumbai. He's holding on to DMart at 4,550. Asking what's the future for this particular counter. Mr. Chokalingam, you highlighted that if it's for Ather Energy, actually, that those two questions, if it's a good company and if the valuations are permitting. So for DMart, does that opinion stand of what you said on Ather, that it's a good company and the valuation stands, or is it slightly more expensive now?
No, absolutely right. You are right. I mean, and also there is a structural issue. All of us know that, even we saw the Reliance Retail, how the momentum in the retail business is slowly going down. So there is a structural issue of e-commerce businesses are doing much better than the physical formats. So I would prefer stock like L&T to DMart.
Got that view. But viewers, since we missed out on the first round of the rapid fire, of course, addressing some latest news, we are going to take a 5-minute rapid fire round in this edition of Fast Profit. Chokalingam as well as Ajit, you know the drill. The first question coming in now It's from Sudhakar from Bangalore, and he wants to know about Shriram Properties, if it's a good time to invest in this stock. Ajit, would you recommend that?
Shriram Properties hold is the call with stop at DD2.
Okay, Garden Reach Shipbuilders bought at the levels of 2850. Add more, average at the current levels. Ajit, your view on the charts?
Hold with stop at 2600.
The next question coming in now, it's on Vari Renewables. Would you recommend at this point of time, Ajit, to continue holding the stock at the current market price?
Vari Renewables, yes, it's a hold with 950 as a stop.
PFC 90 shares bought at the levels of 451. Continue to hold. Mr. Oaklingham, your view?
Yeah, certainly hold. On decline, one can accumulate also.
Krupesh from Mumbai wants a view on Trent. He's holding shares at 4,200. Mr. Chokalingam, your view?
Since it is beaten down a lot, and also because of this anticipated decent result in the short term, one can hold it for a tactical gain of 10-15% from current level.
200 shares of GMR Airports. Sachin from Bengaluru has bought that. He's not mentioned the price, but continue to hold, Ajit.
Yeah, hold and can add more with the stop at 94. Upside potential 110.
The next one coming in now, it's all from Deepak, and actually we took a fundamental view, but Ajit, Deepak is asking on DMart at the current levels for the next 3 to 4 months. Is it a good buy?
So yes, gradual up move is expected. 40-50 should be a stop, and 5,050-200 position targets.
City Union Bank, shall I make a fresh entry right now from a long-term perspective, is what our viewer is asking. Mr. Oaklingham, your view?
Yeah, for a very long term, one can consider.
REC bought by Murli from Kerala at 300 rupees. He's holding 650 shares. Mr. Chokalingam, would you recommend him to continue holding or sell out and switch to PFC?
Fundamentally, it is a good stock. Both PFC and REC trading around 1.2, 1.3 price to book. One can hold it.
Okay, the next one that we have is on Z Entertainment. Mirza from Bengaluru has bought 10,000 shares at levels of 95. What's the short-term target on this one, Ajit?
The overall downtrend is intact, so advisable to reduce.
The next question coming in now, it's on GRSC bought at 2850 by a viewer. Mayur, he wants to know if he can average more at this price. Would you recommend that, Mr. Chokalingam?
I would at best give only hold call, not a buy recommendation on this.
Ujjivan Small Finance Bank, 3,000 shares bought at the levels of 57. 1 year chartical view. Ajit?
Looks positive. Expected target around 74-75 with stop at 50.
Mohan from Chennai wants to know about Motilal Oswal Financial Services and if it's a good time to add this counter now. Would you recommend that, Mr. Chokalingam?
And I would consider on decline only.
Okay, HCL Tech, 20 shares bought at the levels of 1361. Hold on, sell, Ajit?
Exit.
The next question coming in now, it's on Yes Bank, and our viewer has bought shares at 15.63. He's holding 800 shares. Mr. Chokalingam, a view on Yes Bank?
Medium to long term, one can hold.
Transformers and Rectifiers bought at the levels of 319. 100 shares is what our viewers holding. Hold, accumulate more. Ajit, your view on the charts?
Reduce.
The next question coming in now, it's from Murli. He wants to know about Bosch Limited or Foseco India, which is a better counter to hold, Mr. Chokalingam, for the next 1 to 2 years?
Both are not comparable, small cap and very large mid cap. Bosch is a very safe stock, good to hold for long term.
Okay, please advise good levels to exit ONGC. Suvina from Noida is asking this. Ajit, your view?
Maintain stop at 285 and stay put.
Alright, okay, that brings us to the end of this rapid fire round as well as Ask Profit. Mr. Oaklingham as well as Ajit, thank you so much for taking out the time and helping us answer all those 48 queries that we managed to answer in show today. But with that, like I said, completely out of time on this edition of Ask Profit, but do stay tuned. KYC comes up next.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार। विमल, बोलो जुबान केसरी।
Economy, business, world, technology. Noise filtered, numbers decoded. Insights that rewire your worldview. From governance to growth, we connect the dots. Your daily edge, your global advantage. India Business Report with me, Gauri Dwivedi, weeknights on NDTV Profit.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversation.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to get the management to answer questions relevant to you. Watch Know Your Company weekdays at 11:30 a.m. to understand your next big bet. New year, new power panel, India market open, now in its boldest lineup. This is where the trends get tested and stocks get conviction.
I'll recommend a buy call on a stock only when I'm fully convinced on the stock. With a table thumping buy.
And when the street wants the levels, he brings the chart.
Charts speak the truth, and I deliver the levels with no frills.
Parag Thakkar and Kush Bohra are now part of the morning crew with Tamanna, Neeraj and Alex. Same show, sharper voices. Every morning on India Market Open, your favorite market show just got better. On NDTV Profit, for your profit. When the headlines move fast, perspective matters. On Editor's Cut, our editors come together with experts to distill the week's information blitz into clear perspective.
Hello and welcome to KYC. I am Sharad Dubey and you are watching NDTV Profit, and we are getting you the hottest show amongst all the KYCs, and we get you the best companies where we try to figure out is there any hidden story to it, and of course we bring out small and mid-cap companies also for your analysis. So let's give you some hints. Ahmedabad-based stainless steel manufacturer, there are a lot, but let's give you some more hints to understand what's happening here. They have delivered a very strong Q4 numbers, and that's where my interest came in the stock. The third hint I would like to give you is the stock is up more than 30%, you could say, in the last 1 month itself. Of course, this name which I'm going to talk about, it's coming first time in KYC and it's a relatively a newer name. Of course, this was an SME migration candidate also last year. So get that and get more discovery. The company name in focus is Mangalam Worldwide. Seems very new, right? But don't worry, by the end of KYC show, you will understand the company and its growth outlook. But why are we calling this company? That's the main question. क्यों ये अहमदाबाद की company जो है मेरे interest में आई है? First question is definitely going to be the Q4 numbers and the outlook ahead. They have been doing really well. And what are the key levers for it? And is there any pitfall attached to it? The second question, most important, is the inflation. Will this inflation impact? Mostly the steel players have been impacted. Will it impact here also or not? That's the key question to be asked. But the company does claim that it has a backward integration at play as well. That's why you'll try to understand the business first. कि ये धंधा करती क्या है और धंधे में मोट क्या है धंधे में. That's the juice which everybody wants to listen to. Also, another question for Mangalam Worldwide will be the outlook on the value-added products. As we are seeing, the entire industry is moving towards that. Is there any new product foray? And how are the pricing and the realizations looking like? And most importantly, client ka confidence kya hai? That's the question we will be asking. Apart from that, we'll of course ask about the capacity utilization, the capex plans for FY27, and of course the street has given an approval, especially coming in the BSE listing as well. Working capital delays, there is some issues, but is this a business impact or is this seasonal? That's something we'll try to understand about Mangalam Worldwide, and also the growth prospects for the stainless industry as a whole. We know that this is a big industry and it's growing, but we understand how much the organized market is growing और कंपनी का क्या मार्केट शेयर बन रहा है. That's the question to be asked, and Chandragupta Prakash Mangal, the MD of Mangalam Worldwide, will be answering all these important questions to us. But let's try to understand more कि कंपनी करती क्या है. So this is a discovery of sorts in KYC. First time the company is coming. It's established in 1995. Ahmedabad-based company, and it's a fully integrated stainless steel products are there, or the mill, if I talk about it, and that is where I feel there might be a moat in the business. But they are manufacturing stainless steel billets, ingots, rollings of SS, that is stainless steel flat bars as well. So a lot of products are there, but mainly in the stainless steel segment. Round bars, bright bars, and seamless heat exchanger tubes are also there. So there are a lot of SKUs also where we'll judge the company. Company के पास 4 manufacturing facilities and 190,000 million tons per annum facilities there about the company. Let's also talk about the company's migration. This company migrated to the NSE main board in September 2025. That means last year तक company एक SME company थी और SME से main board पे आए. That means growth is coming. It's present across 30 plus countries and 15 cities in India as well. But of course, a lot of businesses towards the western side of India. Recently, they entered into the retail market, and that is coming in the castor oil products. That'll be pretty much interesting to talk about. And also the marquee clients. Let's look at it, what the company is having. It includes L&T, and other important clients includes Voltas, and also we have Aarti Industries, a lot of chemical companies which are there in Gujarat. Of course, SRF also comes, and NTPC, and to name a few, even PI Industry. So these are the marquee clients coming in for the company. Also, the recent approvals have come in from SABIC and Qatar Energy, जहाँ पे foreign JVs होती है, वहाँ पे कंपनी के कुछ tie-ups दिख रहे हैं. और industry data is also pretty much important, where the government has boosted the steel production in India and they're targeting 300 million tons per production in the year 2030. Apart from that, other key data also from government, or the push is something which is very interesting. The inclusion of the specialty steel under the PLI scheme, that is also a key growth trigger in this segment. And of course, to help the industry, the government has been raising the import duty on most of the steel items, and this already happened twice, each time around 2.5%. And also the measures include anti-dumping and safeguard duties, which is already helping the Indian stainless steel and the specialty steel industry, and of course the steel industry as well. But what's working for the company? It's a fully integrated stainless steel player. That's the first portion, and that's of course a moat also company. FY27 outlook remains strong. This is what we have gathered from the earnings which recently came in the 4th quarter, and the company is moving towards the export markets, already present in around 30 plus countries. So we'll try to understand what's the breakup of the revenue coming in, and we just discussed the government initiatives when it comes to the steel sector. But what's not working? Working capital days, they have increased. Of course, this is a part and parcel of the business, but definitely there is something to look out for. There is a lack of analyst coverage for this stock. So that's, of course, for the retail, you need to study a little bit more, dig deep more, and of course, watch the KYC show. There's a lack of FIDI participation. Company ka market cap 1000 crore ke upar aa gaya hai, but definitely that's something to look out for. But remember, the stock has run up. Valuations are expensive. That is why it's not working. But let's give you the entire picture of how do we judge the company, and let's get in the rating parameters for KYC to give you the entire picture of what matters and what doesn't. Income statement, balance sheet, cash flow, holy grail of financials, that's what we will be working out for. Return ratios will be there. Shareholding, of course, we'll try to understand what promoter and retail holding is there. Street cred is very much important. Paisa kitna kamaya gaya is stock se. Valuations, we'll try to compare it with its peers, and of course understand whether it's attractive or not. And last but not the least, we'll talk about the outlook segment. Where does the company stand? Short term, medium term, long term, all details you will be given there. The first one, let's talk about the rating parameter, and that's the income statement. And largely the 3-year CAGR up, revenue, EBITDA, PAT dekhe, all of them are above the 20% mark. Revenue is up 23%. Even the PAT has seen a good jump of 45%. And what led my interest to this count is the Q4 numbers also. And that is where the numbers have been strong. Of course, the top line numbers were not that strong, but look at the EBITDA and net profit. Generally, when you look at these companies, EBITDA is the most important thing to track, and that has done well. This is the amount I'm talking about. So overall, operationally, the numbers have been strong. Let's look at the margin profile now. Now what happens going ahead? If you could just show the margins also of how things have moved, and this is where we see the margins have been gradually going up. It kind of, came in at 5, but then in FY26 and then fourth quarter, that has gone up to 10 odd percent. That's a double digit margin, and that's a consolidated EBITDA margin I'm talking about. So net, the income statement is a strong move, so I'll give a thumbs up for it. Let's talk about the balance sheet, what happens here. And this is cash flow segment. If you could just show the balance sheet, cash flows largely is strong, that we have mentioned, but if you could just show the balance sheet, yes. So I think the cash, okay. So this is the cash flow segment which we are talking about, and we'll of course get you the balance sheet also. And balance sheet, largely in my analysis, the debt levels have gone up, so it's a neutral rating, but cash flows, there has been an improvement, especially the cash flow to conversion number, that has done well. So overall, it's a strong thumbs up when it comes to the cash flow segment. So we have done income statement, cash flow and balance sheet. And let's talk about return ratio. That's the fourth one, and that's also pretty much important to talk about. And over here, ROE numbers have been taken, and also the ROC numbers, and largely it was around 19% of ROE in FY23. There was a dip, and then we're seeing an up move coming in back, and that is something which we are seeing in the ROC numbers also. If you could just pull out the ROC numbers, then we'll understand where the movement is happening. And let's just show the ROC numbers, and we'll see that growth momentum happening. And well, that number is not coming, but largely the ROC numbers have also come on the stronger side. Let's also talk about the shareholding segment, what has happened, and largely the shareholding has remained same. Promoters has been 66 odd percent, and it's around 67%. But there's a issue with me in the analysis. There's no FIs and DIs, though the company's size is small. It just migrated from SME last year, but even after that, the absorption is not coming from institutions, so that's a little bit of concern. Rest things remain the same. So shareholding, I've given this a neutral rating as well. Let's talk about the street cred, about how much the stock has given the earnings overall. And for the investors, congratulations. Most of the parameters it has ticked in. The last 1 month, the stock is up 33%. From March lows itself, you talk about it, stock is up 41%. And since its IPO, the last 5 years data, or whatever is nearer, we have seen a 247% gains and 123% gains coming in the last 1 year itself. So congratulations for, of course, medium-term, long-term shareholders for this stock, and that is why I'll give a strong thumbs up when it comes to the street cred. Let's talk about the valuations and see what's happened here. Mangalam Worldwide, remember, the overall numbers are at their lifetime high levels. That is why it's the highest P is coming at trailing 12-month P of 34 times. The nearest competitor which we can actually adjust, or we could compare, is Venus Pipes. That is around 30 odd times. So both of these players, the valuations are on the higher side, and currently the valuations are not that attractive if you are listening to this KYC right now. So it's a negative rating or a thumbs down when it comes to the valuations. Apart from valuations, let's talk about the outlook. There's a direct listing in BSE. It's already listed in NSE. Now the board approval has come to get it listed in BSE as well, and because of that, of course, a lot of institutions might be looking at this stock, and that is why we get you these companies in KYC. The strong FY27 demand across oil, gas, chemical, pharma, engineering and infra. This is what the management commentary has come in the outlook going ahead. But take a lot of things with a pinch of salt whenever any management outlook also comes in. Let's look at the other outlook also. This includes the integrated business model. That is where the street is remaining bullish on because of this integration. And that is why, in case even the costing goes up, they can nullify that. Short-term, medium-term outlook may be impacted due to inflation. That's a concern happening across the industry, and of course this might impact the company as well. How much it impacts, how much the company mitigates, that's the important thing to look at. So it's a neutral rating when it comes to the outlook for Mangalam worldwide. But let's give you a revision of how much ratings in KYC we are giving this company, and of course we'll ask the management also about a lot of queries in this segment. Largely income statement cash flow has been positive, return ratio is good, 15% के ऊपर generally अच्छा होता है. That's why I've given a strong thumbs up. Looking at the street cred, the stock has already given a strong returns to the investors, and because of that steep up move, the valuations are not attractive right now for this company. Shareholding, of course, FIDI participation is not there, and that's a little bit of concern for me. Outlook, of course, medium term, long term looks strong, but the rising inflation costs will definitely impact the entire industry. And to give a little bit perspective, the entire rating is around 5.5 out of 8. This is largely in line with what the numbers we generally give. So definitely the stock has run up, and that is why a little bit of concern on the valuations is there. But let's talk about Prakash Mangal. He's of course the managing director at Mangalam Worldwide. Almost 8 to 10 years of experience he has in the managerial level, and interestingly his education has also come in from the US market. So that's something we should be watching out for. And apart from this, we'll be joined in by him shortly, but we'll just take a short break.
केसरिया से मन जोगी हुआ रे, दिल झूमे देखो पतवारा हुआ रे, केसरिया से मन जोगी हुआ।
हर पल मनाओ केसरी त्योहार, विमल बोलो जुबान केसरी।
Economy, business, world, technology. Noise filtered, numbers decoded. Insights that rewire your worldview. From governance to growth, we connect the dots. Your daily edge, your global advantage. India Business Report with me, Gauri Dwivedi, weeknights on NDTV Profit.
Presenting the all-knowing, all-powerful Tech Group.
That's pretty interesting. We just spoke about the company Mangalam Worldwide. Of course, the company has a listed play also, which is there in focus. But remember, it's a conglomerate, and we are talking about the stainless steel company. And there are some queries to be asked also. And largely, if I could just repeat the numbers which I had given, if you could just show the numbers, we had given totally 5.5 out of 8. Of course, the concern being the valuation. That is where the run-up has happened. And looking at the numbers, let's just give you the Q4 numbers also, how they have panned out. That's very much important. Largely, we have seen a good growth, at least in the EBITDA front. And the margins outlook, if we talk about it, that has also turned double digit as well. These are the numbers which we are talking about. And if you could just show us the overall history of the numbers, that is where we will see how the company has gained from an SME to the main board company, and how things matter going ahead as well. And just want to revise the balance sheet also, which was missed last time. Just look at it. The book value has been decent. The borrowings, on the other hand, that is also, we are seeing some kind of move happening, and definitely this is something which we'll be watching out for. But net, the overall setup for the balance sheet, we see largely it's a neutral thing. Of course, the debt levels are on the higher side as well. But to get in more perspective, we will be joined in. Okay, the guests will be coming in some time. I just wanted to give you a perspective on the cash flows as well. That is where the movement has happened on the positive side. Just look at the operational cash flow to the PAT ratio. That is where we are seeing a good move happening. But of course, street trade, let's just pull that up also to see whether the returns, how much have they been made or not. And largely for the last 1 month, the stock is up 33%. That is where the interest came of mine. And Prakash, you could say the March lows onward, the stock is up 41%. 1 year, it's up 123%. Last 5 years, that is where the money has been made. If you are an SME investor, this is how the story happens. Company comes to the main board, and now the company is focusing on the BSE listing as well. Let's just talk about valuations, and that is where the concern comes in. 34 times its trailing 12-month P, and Venus Pipes is also 30 times. And joining us right now is Chandragupta Prakash Mangal. I'm sorry for the delay which has happened. There's some technical error was there. But Mr. Mangal, I have a question for you. The Q4 numbers were strong. Your FY27 outlook, what it is? Give us both the answers.
Yes, as already mentioned that the Q4 numbers have been strong. The Q4 has this year has performed way better in terms of the EBITDA and PAT levels compared to the Q4 in 2025. The EBITDA is around 10.99% this year as compared to 4.82% last year, and the PAT levels are at 5.77% compared to 2.61% last year.
Right.
Going forward in this year, FY27, we look towards a similar growth that we are expecting.
And what about the rising cost, which is plaguing your industry? Is there going to be a kind of a margins hit, at least in the first quarter, because we are seeing there's a rise happening of costs all across?
Yes, there is certainly a rise happening in the cost of the goods that we manufacturing. A part of it is absorbed by the company and a part of it is passed on to the customers. Also, being fully integrated gives us an additional advantage that we are selling more of the value-added products, which are the finished products, and those have more margins compared to what we sell in the initial level.
What will be your margin outlook on a blended basis for the next 2 to 3 years?
I'm positive that it will be in the EBITDA levels will continue to be in double digits.
Okay, so EBITDA level, double digits, that's something to look out for. But this is the first time which your company is coming in KYC show, and generally it's a largely untracked company. So I just want to understand a little bit about your company and what's your moat against your peers.
So Mangalam Worldwide Limited is a fully integrated stainless steel mill, starting from scrap melting, where we are melting capacity is around 66,000 tons annually. And then we are rolling these products and further finishing these products into bright bars. And furthermore, we have a piercing unit where we are finishing our own bars into seamless pipes and tubes. So you can say we have a full range of products. We have a diverse range of products. We are more into grades, higher grades, where we are producing 300 series grades and TI grades and Martin-Seti grades as well.
Right. And so Mr. Mangal, just want to understand a little bit more about the pricing and the realization trends of your industry. What is it currently right now? How the pricing and the realizations looking like?
The pricing in regard to the products, right?
Right.
So the pricing right now in the last quarter, you can say due to the rising cost and raw material has increased more than 15%. And it is continued, the raw material pressure is still there and continue to rise. And we see we expect a further rise of 5 to 10% in this quarter.
So, Mr. Mangalam, you are talking about the growth, but on the other hand, the price rise and the realizations is also happening. How much time does a pass-through mechanism work in your industry?
To pass through, can you repeat the question?
The pass-through mechanism which is there, अगर भाव बढ़ता है तब आप अपने clients को कैसे जो है pricing hike करके देते? Do you do that?
So our pricing model is more or less flexible, and the pass-through mechanism is immediate on immediate basis. Whatever we are experiencing and increasing is passed on to the customer.
Okay, fair enough. And your current capacity utilizations, what's the current mark looking like, and any capex has been earmarked for the next couple of years?
So current capacity utilization all in all is around 80%, including all our factories. And we do not have any capex plan as such, but we are going to invest into balancing machines where we are going to increase the portion of our finished products, which currently brings us around 25 to 30% of the revenue. We're going to increase that to around 50% of the revenue in the coming year.
Right. And working capital days, that seems to have increased. What is the company doing to reduce this, or is this just a business aspect or a, industry aspect where the working capital goes up, and why?
The stainless steel industry or steel industry in general is very capital intensive, both fixed and working capital wise. What we are doing strategy wise is we are increasing more of value added products, which are the finished products, and going more into the export markets. We are diversifying our products. So all these reasons are why the working capital has increased. And I think, and I know that it is in line with all our peers and the industry levels, what the working capitals we have at the moment.
Fair enough. Mr. Mangal, just give us more details about your export business. It says you have a 30 countries exposure as per your exchange filing. I just want to understand what's your revenue breakup here, and what's the strategy change for the company moving ahead for these export markets?
So the export markets, if you ask me in absolute terms, the revenue right now that coming from exports is around 6% of the total revenue. But if you see from the compare it from the year before, it was around 2.5%. So the exports have grown more than 100% in 1 year, and we are focusing heavily. We are exhibiting. We are increasing our network via agents and partnerships, and we expect a similar growth in the coming years. So the focus is there on exports, so you can expect that we'll have a similar growth in exports of 100% more.
Right, so around 12% of revenue contribution we can expect in the coming quarters, 10 to 12%
yes.
now?
Yes.
Fair enough. There's this new segment you have entered in the castor oil products. So there's a new retail entry. Could you just explain us what do you mean by retail industry? Largely you have done B2B work, it seems like, and now you are entering the retail segment, that also the castor oil segment of the products. Give us some light on that.
So basically, that is a part of our group company, which is Mangalam Global Enterprise Limited. The retail segment, what we are entering into is the nutraceutical and wellness. We are doing cold pressed oils in that, as well as nutraceutical in form of oil based.
Right, and
the brand is neat.
Right. Fair enough. Mr. Mangal, I just wanted to understand a bit of industry-specific question, not company-specific. Growth prospects for your stainless industry. How much the industry is actually growing, and company, how much is it growing? And can you give me an organized market share of your company?
So as you look at the stainless steel industry, it is growing close to 9 to 10% year on year. The stainless steel demand of finished products, mainly the utilization of stainless steel happens in industries like automotive, oil and gas, defense, and aerospace now. So since these industries are showing good demand, this demand for stainless steel is also increasing. As part of what we are doing in this as a company is stainless steel. We, being a fully integrated unit, we are contributing quite a bit. We are getting ourselves approved in the oil and gas sector. Recently, our company is approved in EIL in seamless pipes and tubes, which gives us an edge in supplying to oil and gas industries. So that's what we are doing. As part of having a market share, I'm sorry, I won't have that numbers in an organized manner.
Fair enough. But let's just talk about the last question on the industries. You spoke about the oil and gas segment. That itself is growing a lot. So if you had to break up, in terms of the order book, how much of the order book is coming from the oil, gas, and where are the demand inquiries picking up? Give me the sector's name.
So we are a B2B manufacturer. So we are directly, there is a very less portion we are supplying to oil and gas, but indirectly, like forgers or processors or component manufacturers, we are selling a lot of bright bars and round bars and pipes, which are further processed into heat exchangers or components, and then sold to the oil and gas and chemical and other sectors. So majorly the demand, like you said, is from the oil and gas sector. I won't be able to quantify that in terms of percentage number.
Fair enough. We'll wait for the time when you start quantifying and giving us the numbers. But nevertheless, thank you very much, Mr. Mangal, taking out your time and giving us the entire perspective about your company and the industry where you're working. So that's a pretty interesting take coming in from the company, but definitely there is a hint of caution as the pricing or the raw material costs are on the expensive side. It might hit the numbers in the Q1, but overall, of course, the company claims that the long-term story remains strong. To get interesting companies like this and discovery of these counters, tune in always to KYC at NDTV Profit.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to. Get the management to answer questions relevant to you. Watch Know Your Company weekdays at 11:30 a.m. to understand your next big bet. New year, new power panel, India market open, now in its boldest lineup. This is where the trends get tested and stocks get conviction.
I'll recommend a buy call on a stock only when I'm fully convinced on the stock. With a table thumping buy.
And when the street wants the levels, he brings the chart.
Charts speak the truth, and I deliver the levels with no frills.
Parag Thakkar and Kush Bohra are now part of the morning crew with Tamanna, Neeraj and Alex. Same show, sharper voices. Every morning on India Market Open, your favorite market show just got better. On NDTV Profit, for your profit.
Economy, business, world, technology. Noise filtered, numbers decoded. Insights that rewire your worldview. From governance to growth, we connect the dots. Your daily edge, your global advantage. India Business Report with me, Gauri Dwivedi, weeknights on NDTV Profit.
When the headlines move fast, perspective matters. On Editor's Cut, our editors come together with experts to distill the week's information blitz into clear perspective.
Positive start to the week on the Lal Street as Nifty trades above 24,200 level with broader markets moving in tandem. All sectors trade in the green, barring the tech sector. The National Company Law Appellate Tribunal or NCLAT dismisses the plea filed by Vedanta in connection with the ongoing JP insolvency proceedings while upholding Adani resolution plan. Kotak Mahindra Bank sulks in trade today despite delivering strong Q4 set. Expectations of Middle East crisis clouding the future margins weighs on the stock. Vodafone Idea shares surge after the government reduced the AGR dues by 27%, easing the financial stress on this telephone operator. The move, along with a structured repayment plan, has improved the investor sentiment. As counting of votes for 5 state elections is underway in the country, trends show BJP wave sweeps Bengal, crossing the halfway mark, while Vijay's blockbuster performance stuns Tamil Nadu. Assam shows faith in Himanta Biswa Sarma again, and Congress-led UDF crosses halfway mark in Kerala. Hello and welcome. You've tuned into Markets at 12. I'm Nisha Poddar, and yes, it's election fever in the country, which is also impacting the overall market sentiment. And therefore, there is green on the screen at the current moment, and it is really consistent with its gaining propensity. When it comes to Nifty 50, over 200 points gained and almost close to 1%, 24,200 level looks comfortable. Let's take a look at what's really aiding Nifty 50. In fact, 2 banking stocks, the large ones at that, HDFC Bank, ICICI Bank, are the top contributors in terms of 60 points out of 220 odd points being added by these. Other big boys like Larsen & Toubro, Big Boy Reliance Industries, also HUL are the key contributors. On the dragging side, remember Bharti Airtel, which did well in the previous week, is now seeing some correction, and also from the IT pack, TCS, Infi are the key draggers. In fact, if you really take a look at the trends across the sectors, most of the sectors are in the green, are really gaining as per the momentum of the overall market sentiment, barring IT as a big dragger and a sore point in the market today. And of course, media, which doesn't have much of a weight on the market. But when we look at the broader markets, that's also showing a slight bit of outperformance to the key indices. So really, the market is really looking happy, and all eyes would be on the election results, especially West Bengal and Tamil Nadu. All right, let's take it to our top story today. That's really a big development coming in. NCLAT has upheld Adani resolution plan for JP and also dismissed Vedanta's plea against the earlier order. Let's get my colleague Nimit to tell us all about this particular order and what it really means. Nimit, tell us.
Yes, so a big setback for Vedanta today as the NCLAT has upheld Adani's resolution plan, rejecting Vedanta's appeal in the case. Now, it laid out 7 different points which it answered, and the detailed order will be out soon and we can report to you. But what it said is essentially that it finds no fault with the COC's commercial wisdom and the decision thereby to approve that COC decision by the adjudicating authority, which is the National Companies Law Tribunal. Now, what this means is that Adani, there are no impediments on it now from executing its resolution plan. Its resolution plan, remember, was overall at of a lower amount than was Vedanta's, which was Vedanta's key challenge to this, that it had a larger amount, and the COC should have executed that wisdom that it has with some restraint, understanding that a larger plan is better. But the court, the NCLAT here, said that no, the COC has chosen upfront higher payments, which was in Adani's plan, and executed based on that wisdom. based on a certain point criteria that it created, which it found that was absolutely fair in what was done by the COC here in this case. Adani can now go ahead with the implementation of its resolution plan here for JP. Whether an appeal will be filed by Vedanta in the Supreme Court, we are yet to find out, but action may be taken in the next few days if it has to.
All right, so that was Nimit giving us all the details of what really transpired in the courtroom. And it's a big decision coming in and also sets a precedent for IBC-related cases. Now, Abhisar Divanji, an expert on this particular matter, Anup Rawat, who's a legal eagle with the legal expertise. Both the gentlemen join us now to discuss this very important case. Anup, starting with you, what do you make of NCLAT really upholding this particular matter? Also, the wisdom of COC was in the question when Vedanta appealed against the resolution that was passed by the Committee of Creditors.
Yeah, I think we should commend NCLAT for coming out very clearly in favor of upholding the commercial wisdom, which has been the bedrock of the insolvency law here in India. The process was known to all the parties, and they knew that what are the ground rules they need to follow, and the process has been followed to the T, and the result has come out basis that process. And both the adjudicating authority, the National Company Law Tribunal, and the Appellate Tribunal, they have upheld that process, and it is in the domain of COC to decide what is commercially the best proposal that should be taken forward. So I'm happy that we have seen a very consistent principles being applied in such cases. And hopefully for this particular resolution process, which is going on for almost a year now, we can see a quick conclusion.
Right. Anup, thanks for pointing that out. A quick conclusion of the recovery mechanism through the IBC process is one of the cornerstones also of this particular process. Abhisar Divanji, we have chatted a lot in the past about the IBC processes and how, going against the CSC order only delays that particular verdict. What do you make of this particular verdict by NCLAT? What does it mean for IBC processes on the whole?
So, time and again, Nisha, the courts have said it, individuals have said it, that the commercial wisdom of the creditor needs to be protected, right from Swiss Ribbons to SR Steel to every other case. And by the way, if you simply read the law, Section 32 of IBC basically says that there are only 5 points on which an NCLT needs to opine on. So there is no reason to go up to any court and say, why was my bid not accepted? Obviously, the creditor is the most impacted. And he would make sure that the deal that he gets is obviously the best. Why would a creditor not do that? So, because they're managing public funds. So, at the end of the day, I don't think another bidder is in any position to actually comment on whether a bid is in his favor or no. Because that is, he puts himself in a conflicting position anyway. So, I think that even if this goes up to any other level, NCLT also, rather than hearing it, should have just squashed it in day one. And I hope the Supreme Court does the same. The simple reason that IBC is a process where people have to understand that qualitative and quantitative decisions will be taken. And those decisions, if questioned only on quantitative matters, can never succeed.
Right, quantitative and qualitative, that's a very important aspect that you have really mentioned. Anup, if I can, as you wear your legal hat, if I can ask you on quantitative and qualitative as well, how does the COC as well as the court also really look into the matter when it comes to the recovery mechanism? And here the debate was on the headline number versus the faster resolution with a higher upfront pay.
Quantitative and qualitative parameters are something that the Committee of Creditors decide, and all those parameters are relayed and disseminated to all the participants of the processes who want to submit a resolution plan. So these quantitative and qualitative parameters, after detailed deliberations, are known to all. And what has happened in this particular case also is that, the Committee of Creditors have applied all these quantitative and qualitative parameters in a very transparent way, and then have come to a conclusion. Insolvency resolutions cannot be seen only from a perspective of one dimension. These are the issues of revival, and revival with the certainty. And therefore, whatever qualitative parameters have to also be considered for these resolutions are equally important. And in this case also, the courts have time and again now have held that the parameters have been applied in a fair and transparent way, and a conclusion has been arrived at. Therefore, I don't see any reason for any further dispute or any argument around this issue. Even if it goes to the Supreme Court, our sense is that the similar judgment is likely to come.
So once it had reached the doors of the apex court, Anup, legally speaking, that optionality is available for Vedanta. And looking at the technicalities that last time it was sent back to NCLAT, how do you read into the situation on the chances of really apex court adhering to that or really taking that matter?
I don't see any great merit in further objection to this after NCLAT have, in a very detailed way, given its verdict. I think they have gone into all the aspects, and they have upheld the process. They've also said that the resolution professional has carried out the process in the transparent way, and then there is no material irregularity in the way the process has been run. Once the process sanctity is decided and commercial wisdom has been applied, there is nothing that can interfere in the implementation of plan after that. So therefore, I don't see how this argument against the plan approval that has already happened now can sustain in Supreme Court.
Right. So that matter needs to be seen whether or not it goes to Supreme Court and whether the plea will be admitted by the Supreme Court. So that's the next bit that we have to really see. But Abizar, a final word on this. What does this particular case and many such cases and recovery plans and resolution plans which have been held up because of the matter being taken to court and the way the courts are now conducting themselves, what is the precedence that is getting set for IBC on the whole?
So I think IBC has time and again proven that commercial wisdom of creditors should be respected, and I just hope that there is a higher level of maturity in all components of IBC, including resolution applicants as well as the courts. And I would like to emphasize just one fact, that the courts have also to some extent exceeded their own brief, which basically says that they are not responsible for making sure that the plans are qualitatively and quantitatively better. If you look at Section 32, it basically says courts need to make sure that CIRP costs are given a priority, that operating creditors are given at least the liquidation value, dissenting financial creditors are paid for, interim management and supervision mechanisms are put into place. That is about it. It doesn't even talk about getting into the dispute around whether this bid is good or not. So I think when a defeated or an unsuccessful resolution plan goes to court, I think he lands himself into a conflict situation day one because they are the defeated party. If a third party were to question a process and say there is something wrong in this process, I could still understand. So for example, in this particular case, if NARCL is the holder of assets on behalf of the banks and the banks were not satisfied and they complained, I would still understand. But a competing bidder is simply in a conflicting position.
Right. So that's an important point that you made on the technicalities of the COC as well, Abizar, that the banks and the ones who are set to recover from this particular matter are not the ones really refuting the strongest and the single largest lender over here who has also taken the call. So that's an important matter. And of course, one more point that needs to be put out in this discussion is that the more the delay, the resolution becomes even more tougher. And that is one aspect that is also duly noted in the IBC processes. Thank you so much, Anup, as well as Abizar, for joining in this important discussion and important corporate development when it comes to the acquisition of JP assets by two large groups really warring over it, and NCLAT has really decided to go with the COC wisdom on giving it to Adani Group, while Vedanta had really contested that in the court. Whether or not Vedanta takes it to the apex court, Supreme Court, needs to be seen. All right, let's shift gears, and we are in the thick of earnings season. Laurus Labs came out with their results, and the big boost coming in from the CDMO operations in terms of the revenue is really rewarding that particular stock. It's almost 5.5% up in trade today. Let me get the management going on what really lies ahead for Laurus Labs. Dr. Satyanarayan Chava, who is the founder and CEO of Laurus Labs, joins in. Thank you so much for joining us on NDTV Profit. And of course, your stock price is really smiling and being rewarded by the shareholders. Tell us more about the CDMO push and how sustainable is it and the growth propensity going forward.
Our division, which is growing significantly, is our CDMO division.
Yes.
We have supplied 3 NCE APIs in the last 18 months, and those are at the very early stages of their life cycle. So we have a very long road ahead for the molecules which were supplied recently. And several interesting programs are also in the clinical phase 3. We expect those will be commercialized as and when our partners get approval from regulators. We also have created capacities to take those opportunities in the near future. One trend what we observed is the CDMO partners, when we do late stage clinical programs, they want a facility which will be able to supply commercial quantities, and at the batch sizes where we will supply commercially later on once the product is approved. So our investments, what we have done in the recent past, helped us to gain confidence from our partners, and we expect our CDMO division will continue to grow. That is the reason we are also increasing our capex in the next 2 years to almost 3,000 crores. If you look at our investment, capex in the last year was about 1,000 crores, but next 2 years, that number will go up significantly.
So Dr. Satyanarayan, so your capex is really being boosted when it comes to the CDMO play. But what pipeline, what percentage of the pipeline is in the phase 3 commercial stage versus the early stage? And when will CDMO become the main revenue driver for you? If you can give us some sense on that.
We're indicating in our analyst call as well, by FY30, our current contribution of CDMO is about 30%. It will go to 50% by FY30. And we have a good number of programs in the clinical, advanced clinical phase. And some of the programs are in therapy areas where the volumes are very large. And that is the reason we're also very bullish on this segment.
Right. So you said a very important, target that you have set, FY30, 50% will be from CDMO. So that's the target set. And of course, CAPEX is being built into that. But I also wanted to understand, while you are increasing your growth prospects on this, you have clocked in a superb, margins picture for this particular quarter. Margins stand at 28.3%. And a YOY basis, it's a huge update from 24.5%. Now, is this kind of an EBITDA margin really sustainable? And what are the key drivers going forward?
2 things here. One is our gross margins are also very healthy, over 60%. And we expect to continue the trend in the FY27 and beyond that also. We are confident to maintain that gross margins. Second, the facilities what we created in the last 2 years are started giving commercial revenue. So leverage is also kicking in. These two helped us to achieve significant growth in our EBITDA to over 28%. And in FY27, we're also confident to achieve EBITDA closer to 30%.
Right. When we talk about the antiretroviral ARV, which is a top contributor, can you give us a sense on its growth prospects going forward as well?
We are maintaining our leadership position in antiretroviral therapy. We produce either APIs or formulations for 40% of the world HIV patients. And we continue to maintain that leadership position. Interestingly, last year, we haven't seen much price decline. While we gained a little bit of volume, we always used to say ARV business is a sustainable business, about 2,500 plus or minus 200. In fact, last year we did cross 2,800. We expect to maintain that revenue levels with reasonable margins. We don't expect this division is going to grow significantly. If you look at the contribution coming from HIV, while we are maintaining the sales, is coming down in the percentage wise.
Right. You don't see significant growth in ARV segment, you said. In terms of the pricing outlook, how is it panning out? And if you can give us a sense for the next 2 to 3 years pricing outlook in this segment.
The pricing, I would say, is very stable. There will be some price pressure because of the Middle East crisis on the solvents. We were able to manage that. Partly we were able to pass it down to our customer, partly we were absorbing. And to offset that price increase, solvent prices increase, we are also taking up asset utilization to much higher level than this, and also trying to do some process optimizations to improve yields and all.
Right. So, Dr. Satyanarayan, if I can ask you, what are the top risks that you see at the current moment with so much global uncertainty, supply chain, tariff, all put together? What are the 2 important risks which can derail what you have set forth? And how do you assess that?
There are 2 divisions which are, I would say, very stable. Our ARV revenues are very stable. That's a significant portion of our revenues. And second, CDMO revenues are also stable and growing. See, if we don't have orders or commitment from our partners right now, it's not easy to get revenues in the current financial year. So these 2 divisions, which are major, are very, very comfortable. And the rest of the business is also very stable. We do also have a significant portion of generic revenue coming from integrated programs. That is also very genericized molecule. I think except the availability and prices of solvents, we don't see significant risk coming on our way in FY27.
Right. And a very quick question and a quick answer to that, Doctor. This is your stock will be going ex-dividend soon. Of course, the record date for dividend has been announced, and the dividend this year has been lower than the last year. About your ability to keep paying dividend at the same, propensity. How do you see that very quickly?
As our profits go, we don't see any challenge in paying dividends to our shareholders. We don't see any challenge.
All right. Thank you so much for joining us, and all the best for the next quarter. That particular stock is over 5.5% up because of the CDMO push, and that is going to be by FY30 50% of the overall portfolio, and that being boosted by capex. Let's focus on another counter, which is Kotak Mahindra Bank, and that is really seeing selling pressure in trade after a strong set of numbers coming in, over 2.5% down. Aditya Shah, the founder of Hercules Advisors, joins in. Aditya, what do you think is really impacting Kotak Mahindra, share price? Because the top gainers or contributors to Nifty 50 are from the banking pack, like HDFC Bank, ICICI Bank. So it's not the sector; it is stock specific. So what is it that's really ailing the sentiment post the results?
So I don't think as such there's a problem with the company. The valuation for the stock is expensive. I think that is playing out. If you look at the loan growth, you look at the deposit growth, loan growth at about 14%, deposit growth at about 16%, slippage is at about 1,000 to 1,100 crores at a multi-year low. So I don't think there's a problem as such. One of the things which the market would be disappointed about is that Kotak has made it very clear that they will not go for the IDBI merger unless the valuation is lowered by the government. So that is one of the things, and the valuation could be one of the factors. Other than that, I don't see any problem with the results. The results were really very good, and the guidance from the management continues to be strong.
All right. So the company's prospects are strong, but Aditya, in-house, have you also taken a call post the results on either upgrading or downgrading this stock?
No, already we are positive on the private sector banking space. PSU banks have done extremely well with respect to stock prices over the period of last 2 to 4 years, and we feel that private sector banks now have time to catch up. So HDFC Bank and ICICI Bank continue to be the top pick. Kotak, followed by Kotak. Kotak will also do well, and of course, SBI will also continue to do well as time really moves on.
All right, so positive momentum. Aditya Shah, thank you so much for a quick take on Kotak Mahindra Bank's stock price, which is seeing some selling pressure. With that, out of time on this edition of Markets at 12, but do keep it with NDTV Profit for all the news and the market action. Thank you so much for tuning in.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो सुबह केसरी
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversation.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो सुबह केसरी
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to. Get the management to answer questions relevant to you. Watch Know Your Company, weekdays at 11:30 a.m. to understand your next big bet.
Economy, business, world, technology. Noise filtered, numbers decoded. Insights that rewire your worldview. From governance to growth, we connect the dots. Your daily edge, your global advantage. India Business Report with me, Gauri Dwivedi, weeknights on NDTV Profit.
New year, new power panel, India market opening, now in its boldest lineup. This is where the trends get tested and stocks get conviction.
I'll recommend a buy call on a stock only when I'm fully convinced on the stock. With a table thumping buy.
And when the street wants the levels, he brings the chart.
Charts speak the truth, and I deliver the levels with no frills.
Parag Thakkar and Kush Bohra are now part of the morning crew with Tamanna, Neeraj and Alex. Same show, sharper voices. Every morning on India Market Open.
Hello and welcome to NDTV Profit. You're watching Trending Stocks with me, Hiral Daria, and Sharad Dubey, who's standing at the NDTV Profit market pit with all the action in the markets today. Sharad, an interesting day of trade with the way markets have opened, and all eyes are probably in terms of the battleground across states right now. What are market cues telling you?
Well, that's right. Good afternoon, Hiral. And largely we had a gap up opening, seeing at the global moves, but then there was a range, and right now we are trading near the day's low level when it comes to the markets. A slight correction coming in from the day's high, and this includes for both Nifty and Nifty Bank also. But nevertheless, both of the indices, the technical counters still remain strong. If you just pull out the Nifty Bank also to show you where the movement has happened, and yes, look out here, this is where the downtick has happened, and it's finding some kind of support in this 54,700 odd levels. But let's look at the key factors to watch out for in today's trade as well. And of course, the volatility still continues to impact the benchmark indices, so we will see some kind of a movement happening in these counters. Of course, the global sentiment is also important. Nifty support between 24,000 to 24,100, that's the immediate level where we saw the bounce back. And the Nifty Bank, there is a key support level at 55,000 levels. Apart from this also, if you look at how the markets are moving, both Nifty and Nifty Bank's technical levels still remain strong. Of course, a little bit of volatility is at play, and the value buying is there in SMIDs, the small and the mid caps. That is where the broader indices are outperforming. So nevertheless, post the earnings impact, we are seeing a good buying in the small and mid cap. Strong strength in realty, pharma and metal pack. That's where most of the indices are more than 1% up. Of course, realty is seeing good buying. Little bit of weakness persisting in IT and media, but remember, IT sell-off is largely done, so that's something we can look out for. But markets are tracking 5 state polls, especially West Bengal. That is where the interest is lying, as a lot of companies are listed from there, and we are seeing a good volume action as well. So this is how the markets are faring. Of course, the state elections results is important, and also the global sentiment, how things are developing. But yes, you can expect a range-bound movement in the markets.
Okay, so range-bound movement in the markets is what you're seeing so far. But very quickly, if you have to look at the election counting numbers as well, categorically you have TVK, which is kind of leading in terms of Tamil Nadu, and if you have to look at West Bengal as well, Assam, 98 seats, it's BJP plus alliances, so that's where the leadership is coming through as well. Assam, again, it's BJP with 98 is the number so far that we're looking at, and likewise if you're talking about Kerala, UDF is at around 85, Puducherry, NRC plus around 15. So that's the leaderboard that we're pointing out to right now. But these are interesting moves so far, and we will keep getting you updates, on a constant basis that you're seeing on the screens. But let's shift focus to individual stocks. Let's see what's on our watch list. HUL, the brokerages have turned bullish post numbers, so that stock is in focus. Adani Ports, again, a bullish view coming in there, in terms of earnings. Auto sales companies are in focus because April numbers have been pretty mixed, so a very divergent reaction that you're seeing in terms of individual companies. Kotak Mahindra Bank, what is interesting is that brokerages have been positive, but the commentary when it comes to the net interest margins, where the management has indicated that net interest margins will gradually moderate, and that's what is putting pressure on that one. DB Realty has won a 40-year land dispute case, and that's what is the reason why the stock is up in trade. Epigral, the highest ever quarterly revenues is what they've reported. Bombay Dyeing, a luxury residential tower in Dadar is what they're looking at, and strong moves coming in there. Dr. Lal PathLabs, the guidance and the volume growth has been very strong. Zentech, a weak set of numbers, and that's the reason why the fall. And you're seeing a Tamil Nadu poll impact coming in on a Sun TV. The margin pressure has continued for a KSB, and JP Morgan has upgraded Indegene to an overweight. You have the Department of Telecommunication who slashed the AGR dues, and that number is at 64,000 odd crores, on the back of which Indus Tower and Vodafone both are in focus. And a lot of Bengal related stocks that are in focus because the BJP has crossed the majority mark with regards to where election polls go. So that's what is on the watch list. But Sharad, over to you to take the rapid fire with Kunal Rambia.
Thanks a lot, Hiral, for that. Good afternoon, Kunal. It's always a pleasure to have you on our show. We're starting our rapid fire segment, and the focus would be Valor Estate. Earlier, it's called DB Realty. The stock has seen a good up move coming in on back of a positive corporate development. What are the charts suggesting? Good time to partially book profits in this counter. What's your view on that?
Good afternoon, Sharad. So overall trend on the Valor Estate is being very, very positive. In fact, if you look at the extreme lows of 2022, this counter is still in the positive trend itself. So rather than booking profit, I'll think of initiating a buy, fresh entry at this level with the stop loss of 110, and the positional targets can be as high as 165 to 170.
So initiate buy coming in for Valor Estate, but of course the next stock in focus is Epigrel. I wanted to take your views on that. What are the charts suggesting?
A very significant positive rally from 830 levels to almost 1350 levels. Risk reward ratio is unfavorable, so new entry will be a difficult task. But if someone is already holding, the trailing stop loss can be 1225 and the positional targets can be 1600. Any decline near to 1225 can be a fresh entry level also.
Right, after a long time from the consolidation, I'm seeing Bombay Dyeing doing really well. Of course, a positive development coming for its real estate arm. But Kunal, your views on Bombay Dyeing?
Absolutely, as you mentioned, consolidation and the breakout was seen at around 119. Counter is today itself trading at 130. So yes, fresh entry can be made here. Stop loss can be 118, and the first can be the swing high level, which is 155, 160. Can be good short-term targets. Advisable to keep trailing stop loss on this counter.
Right. Apart from this, Kunal, Dr. Lal PathLabs, strong set of numbers, and after 2 to 3 years of compression in the industry, we are seeing good up moves coming in most of the diagnostic stocks as well. Your views on it, and what will be the medium-term targets?
Absolutely, Sharad. So if you look at the extreme lows of 2023, this counter has been overall in the positive trend, but the volatility is very, very high. So the stop loss can be actually 1300 and the immediate targets can be 1800 on this counter. Fresh entry can be taken with the stop loss of 1350, which is today's low itself. And this can be a good trending counter for at least next 1.5 to 2 months.
Right. And Kunal, your views on Sun TV? After a long time, it's getting action on the charts. So your views on that?
I would literally avoid this counter because of extreme choppiness behavior. But if someone is holding, the support can be 540 and the resistance is 640. That's the range to watch out for short-term trading.
Right. And Kunal, another counter, KSB. Your views on that?
Absolutely a significant correction, and the beauty of this is that the correction started right from the high of 2024, which was 1000 levels. So scary as of now on the charts. Rather than catching the falling knife, if someone is already holding, it's an advisable to take an exit as early as possible. The immediate support on the chart is 825.
Right, and let's just talk about the flavor of the day. That's the Bengal related stocks. So, as reports are suggesting that BJP has crossed the majority mark, and interestingly some names are there like CSC, Berger Paints, Imami. Any of these stocks which is showing some good volumes?
The volumes are happening across all the counters which you mentioned, honestly, Sharad. But the good counter to watch out will be Imami because risk-reward ratio is extremely favorable. This counter is still within the consolidation and the breakout is placed at around 465, 470. Any closing above that can be a good, the beginning of a new trade. Stop loss can be 440 and the targets can be 525, 530 levels.
Right. Thanks a lot for that, Kunal, for the rapid fire segment. I just want to add one thing about Imami. They have a high rural exposure as well. And in case the rural demand goes up, we might see some alpha in the stock as well. But over to you, Hiral. What are you gathering from the Google trends?
Sharon, before we even look at Google trends right now, it's imperative to actually look at what's happening with Godrej Properties on the back of the numbers, as well as to see what's happening in terms of where Brent goes, because in terms of Brent, there is a cooling off effect that's coming in there. But Godrej Properties has seen a good spike on the back of the numbers. If we can just have those ones, the net profits, a surge of around 70% has come in there at 650 odd crores, and that's the reason why you're seeing that spike. I will quickly get in my colleague Mahima as well to talk to us about the same. The revenues have seen a growth of around 63% at 3,458 odd crores. And if you talk about the EBITDA, a 522 crore number in this quarter versus just 110 crores is what we've seen. In fact, let me go across to Sharad, who has Mahima with her to decode this for us. Mahima and Sharad, what is that first cut number looking like? Because a strong spike coming in there.
Exactly. Thanks a lot, Hiral, for that. Joining in, we have Mahima. Mahima, what's the initial takeaway from these numbers?
Right, so overall, I think it's a good beat in terms of both the top line and bottom line. If you take a look at the numbers, revenue has seen an uptick of 63%. EBITDA has come in at that 522 odd crore versus that of 1110 odd crore earlier. Margins have also significantly improved. In terms of other income, that's gone down. So I think revenue from operations is what is contributing to the top line. Net profit has also seen a growth of 70% Last time, in fact, when we spoke to the management, they had said that they're on track to beat revenue guidance of 32,500 crores in FY26. The expected booking value guidance was at 123% of FY26, and they were saying that there would be robust collections and that will translate to operating cash flows in Q4, and probably that is what has happened, and that is what is aiding the top line. So this is the, of course, first cut. We yet to see the press release and the investor presentation come out, but I think last time, that, as they said, that a lot of collection is going to happen in Q4, and that's probably reflecting in the top line. So that's the overall view of how and why the stock is probably jumping in trade right now.
Thanks a lot, Mahima, for that. And Kunal, just wanted to get the technical view for Godrej Properties also, and look at the realty pack also. They are also doing really well. Not only Godrej Properties, but just let's see what's there on the technical charts when it comes for Godrej Properties.
So on the Godrej property, after the significant correction from 3,350, 3,400 levels, this counter has made an almost double bottom formation at 1465, and the breakout was at 1890, which is just happened on the chart now. So yeah, it can be a fresh initiating of a trade with the stop loss of around 1830, and the first technical target being 2200.
So that's with regards to where Godrej Properties goes, and interesting numbers as even Mahima was getting for us. In fact, let's quickly look at what's happening with the OMCs, with the way Brent has been pointing out. So two segments, ONGC, Oil India, continue to remain in focus, and on the other side, HPCL, BPCL, IOC. These are the ones which will somewhere benefit as well on the way Brent prices go, but it will put pressure on ONGC, which is down in trade. You have a IOC also, which is corrected from the day's highest levels. Kunal, you have a cooling off effect that's coming in when you talk about Brent July futures, because you're talking of levels of around 108, 109. In fact, last week we did see Brent June futures, which had already climbed to what, $122 to $123 per barrel. Your take when it comes to OMCs, what are charts indicating?
As you correctly mentioned, this commodity has been extremely volatile in the recent times, and at the same time, the counters have also turned extremely volatile. BPCL, after making extreme bottoms of around 275, has jumped up to 320 and now consolidating near 300. So yeah, I think this counter seems to be, this entire segment seems to be, taking good support in the recent times. Specifically for BPCL, I think the good support is the 275 to 80 levels to watch out for, 290 levels to watch out for, in fact. And the immediate target on the upside can be 335, 340. I think BPCL is likely to outperform the entire pack, followed by IOC, where again the recent bottom was around 130, with the stop of 140 or 135 rather. One can go long, and the targets can be 155, 160.
Right. Thanks a lot, Kunal, for that. Just to give a little bit of perspective on HUL, and its earnings and what are the brokerages talking about. Again, joined in by Mahima. Mahima, what are the details for HUL?
Right, so Shad, overall brokerages have largely maintained their stance on the counter with regards to their ratings, but Morgan Stanley has slightly hiked the target price to 2480. What they're saying is that overall there has been improvement when it comes to near-term growth visibility. Pricing support could help drive overall earnings in FY27. There could be, this could augur well for the stock going forward as well. What they're saying is that FY27 is going to be better than FY26, and volume and pricing drivers growth could see some rebalancing going forward, and inflation may be managed by cost savings as well as further price hikes. Remember, HUL has right now taken calibrated price hikes anywhere between 2 to 5%. That kind of offsets 10% of the overall cost inflation. Citi, on the other hand, has slightly cut the target price to 2750. They're saying that portfolio transformation is gaining traction and overall volatility is manageable. FY27 is likely to see calibrated volume and value rebalance. So similar statement as what Morgan Stanley also made, and they're saying that they see HUL as a well-placed counter to navigate inflation and gain share from regional players. So this is the overall view of what brokerages are making of Q4 HUL earnings.
Thank you so lot, Mahima, for that. And we are just joined in by Sachin Jasoja. Good afternoon, Sachin. It's always a pleasure to have you. We are discussing the HUL's performance with Mahima. Just could you give us more details about HUL?
Hi, thank you for having me. Yes, HUL, in this kind of stocks, the earnings is always sticky, and the cash flows are very much visible. Now margins are intact. But look, when you see the overall pack, we know a lot of D2C brands are coming in the market. They have got now different kind of distribution channel. They are able to approach and make some dent even to the incumbents. So looking at that scenario, and your valuation is already above 50 multiple, your last 3-year growth has been maybe 2 to 3% in terms of sales growth, even if it goes up to maybe 3 to 4% in coming 2 years. So I think at these valuations we will not be so comfortable, but when you look at the overall pack, you find some kind of companies which are into different segments, maybe Tata Consumer kind of companies which have been growing faster rate, maybe more than 10-12% compounded in terms of sales growth. I think still the money should flow over there rather than to the players who have been struggling to grow by more than 4-5%. So overall, yes, cash flow side, it is a good play. Again, in this kind of volatile market can give little weightage to this kind of stock. But overall, when we look at the valuations, we are not very comfortable at this juncture.
All right, valuations are not comfortable when it comes to HUL, but let's look at the other counter, Adani Ports. Brokerages have turned bullish on this. Why? Just give us more details. We are joined in by Varsha. Varsha, hi.
Hello, Sharad. So, 3 brokerages have given a buy rating or are bullish on Adani Ports, and they've hiked their target price as well. Now, what they're saying is, let us start with HSBC, which is bullish on Adani Ports. They say that strong medium outlook driven by better ROC visibility, and Q4 FY26 EBITDA, if I were to talk about, was grew 20% year on year, which beat the estimates. International Ports EBITDA surged, supported by Colombo ramp up, and FY27 guidance of around 250 billion broadly is in line with what Street was expecting. Management remained cautious due to Middle East disruption, but outlook remains stable. They are also targeting doubling of EBITDA to rupees 520 billion by FY31, which implies almost 18% of CAGR. Let's see what Goldman Sachs is saying. Again, bullish on the counter. Q4 performance strong with multiple growth levers contributing revenue, which is in line with the expectations, and logistics and marine revenue drove the growth. Also, lastly, Jefferies, again bullish on the Adani Ports, and what they're saying is that EBITDA 9% was above estimates on port realization. FY27 EBITDA growth guided at around 9 to 14%, and they're also targeting 14% CAGR on domestic port volumes by December 2030, and capital allocation remains the key focus area for the company.
Thanks a lot, Varsha, for that detailed analysis. Sachin, just wanted to get your views on Adani Ports as well. Stock is also up 4%. Your views on that?
Yes, so we have discussed Adani Port multiple times, and we have been very constructive on this particular company. Reason being, one, it has got the largest port in India. It is growing very fast. The management has already given the guidance of 14-15% kind of volume growth in coming years, compounded growth. So looking at that scenario, and it's a business where it shows you the economic activity of the country also. So when you look at the export-import kind of activity, and when you guide for 12 to 15% kind of a recurring income every year, so trading at these comfortable valuations, we are quite convinced that overall, and they have got interest into the Eastern allocation also, and I think the election can play a role over there in their favor also in coming years. So from that perspective, I think all the things looks like favorable to Adani Port.
Okay, so that's with regards to where Adani Ports is concerned. But moving on, as the centre finalises Vodafone Idea's AGR dues at 64,000 odd crores, sources tell Vodafone Idea is in talks to raise up to 35,000 crores via banks. My colleague Piyush Shukla joins us with all the details. Piyush, what are you picking up from your sources? Because this becomes a major benefit to Indus Towers as well, which is buzzing in trade.
Absolutely, it is actually a very good news for Vodafone Idea, the relaxation on AGR dues, and we are picking up from our sources that a consortium led by SBI is actually assessing granting a incremental loan to Vodafone Idea to the tune of 35,000 odd crore. Of this, around 25,000 crore will be via term loan, and the remainder would be via working capital. Banks had earlier around 8,000 8,000 crore or exposure towards this Vodafone Idea, and the understanding with bankers right now is that this will be used for fresh capex and not repayment of earlier dues. We are aware that on towards the last month end, the center has cut Vodafone Idea's AGR dues by 23,600 crore rupees to 64,046 crore rupees. There's a moratorium on payment for the next 5 years, following which Vodafone Idea will pay around 100 crore rupees annually between FY32 to FY35, and after which FY36 to FY41 they will have to make 6 larger installment of around 10,608 crore each year. Like mentioned, banks already have 8,000 crore rupees of exposure to this particular company, and with the relaxation given by government, they are in favor of, they are assessing and are in favor of granting fresh loans to the telecom company.
Okay, thank you so much for that, Piyush. Sachin, how are you looking at this? Because all this while we were talking about the relaxation that has come in when you talk about AGR dues, and now, Vodafone Idea will be looking to raise money. How successful they are is the key question from here on. How are you looking at both these counters then?
See, although, many efforts are being made to revive that company, but still look from the investment perspective. The company is already a 1 lakh crore company. Let's assume that the company, that moratorium comes in play, and they need not to pay interest for certain period of time. They get the fresh funding also for the capex, and the company become profitable. But still, for Vodafone in next 2 to 3 years, to generate even 2,000 crore or 1,000 crore PAT will be very, very difficult in this competitive scenario, even with the fresh funding and trading at a 1 lakh crore kind of mark. So I think it is not an easy task for Vodafone to recover from this scenario. And from the investment part, I will still be very, very cautious and would prefer Bharti or Reliance at this point of time. But yes, if any strategic partner comes in play, who joins hands with Vodafone, who buys some stake, and all other efforts are also being made to revive the company, in that case, we may review and can be considered. But otherwise, it's a tough play.
It's a tough play coming in there as well, because revival and resurrection is the key in the case of Vodafone always. But moving on, Zen Technologies, now that stock has been under pressure today, down nearly 10 to 11%. And if you have to talk about what's weighing on the stock or what's not worked, that becomes critical over here, because clearly if you see the kind of degrowth that has come in, we've seen a downtake of around 69% in terms of where profitability goes. Revenues are down as well, around 45%, and there's a compression that has happened in terms of the margin profile of the company. Margins have actually come down to about 28.6% versus a 42.5%. It's higher interest cost as well as operations cost that has hit the margins and the profitability. And the execution and order timing delays are the other ones which are actually the key reasons over here. Now, if you talk about the order conversion time, that has been delayed beyond the actual advised expected in FY26, and there has been a temporary slowdown in both domestic and export shipment momentum. The emergency procurement pivot has actually slowed down the regular orders as well for Zentech from the government, and the working capital strain that has come in is on the back of the working capital days which have actually got stretched. And the only silver lining over here for Zentech is the order book, which is very strong on a consolidated basis. And secondly, they've said that FY27 will be a year of execution. Now, all eyes will be, in terms of what actually happens. Sachin, Zentech, how are you looking at this one? Because in consonance to this, if you see Idea Forge, which is also a defense company, is seeing a strong reaction on the back of numbers. If you just pull up that one on the screens, you'll get to know a Zentech, which is down in double digits, versus Idea Forge, which is up in double digits. How are you looking at both these counters?
Yeah, so you yourself mentioned, Idea Forge was struggling for so many quarters, and with one good quarter, the stock is up, and the same way Zentech is down. So that's the nature of equity also, and specifically for the defense stocks where execution is the key, the order delay can happen. So I think it is better to stick with the companies which have got diversified portfolios. And the kind of valuations where defense stocks have reached, it's really high in most of the companies where they'll be able they will not be able to justify that kind of valuation in near term at least, because see, these will be the lumpy orders. The technology may be outdated. You have to upgrade yourself again and again. And many new startups, the government is very open to new startups also in this particular field where the drone technology is changing very, very fast. So it's not an easy segment to be in. And even the market leaders of that segments are challenged by the new private market names over there also. So I think one has to be cautious. But yes, as Zentek has given the guidance that the next year will be the year of execution, one can still, if somebody is invested, can still hold it for some time and can review for 1 or 2 quarters. If the execution happens, then the stock may come up. But yes, the overall segment of drones will be really, really challenging to invest.
Absolutely. So let's see how this pans out. But moving on, cement prices are headed for a second hike in May, but demand is yet to cooperate. My colleague Ridhima Bhatnagar joins us with all the details on the basis of the conversations that she's been having with distributors et al. Ridhima, what do you have for us?
So cement prices could rise by 10 to 25 rupees per bag. Now, this is as per the distributors, and they expect that this price rise could happen on May 5th. Remember, this is the second price rise. The last one happened in April. Now, the cement prices, distributors, if you talk about zonal wise, North and West zone could see a price rise of about 10 to 15 rupees, whereas South and East zone could see a price rise on a higher denomination by 25 rupees. The distributors say that demand hasn't really picked up in cement, so these price hikes may not be absorbed. Now, last month the price hike happened by the tune of rupees 10 per bag. Stocks in focus include Ultratech Cement, Ambuja Cement, Shri Cement, to name a few. The prices are mainly rising because of propylene shortage. Their prices have increased by 70% for propylene, which is used for packaging the cements, and also the freight costs have risen by 10 to 15%. And due to this, the cement prices have been rising, and they have even affected the allied industries like real estate sector, where the prices, where cement is used 18 to 22%, and also in infrastructure where it is used by 80%. Now, analysts say that this could affect the margins for Q1 FY27 by 25 to 30%, and not just this, for Y-on-Y basis by 45%. And the price hike required is about 50 rupees and not 10 to 25 rupees. Let's see what happens. It's a wait and watch.
So additional price hikes that could be on the annual as well post this one. But thank you, Ridhima, so much for giving us that information. But completely out of time, that it's a wrap on this edition of Trending Stocks from Sharad, the team that put the show together, and myself. Lots more lined up on the other side. Please stay tuned to NDTV Profit for all the action in the markets as well as on the political front.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to. Get the management to answer questions relevant to you. Watch Know Your Company weekdays at 11:30 a.m. to understand your next big bet.
Economy, business, world, technology. Noise filtered, numbers decoded. Insights that rewire your worldview. From governance to growth, we connect the dots. Your daily edge, your global advantage. India Business Report with me, Gauri Dwivedi, weeknights on NDTV Profit.
New year. New power panel. India market open. Now in its boldest lineup. This is where the trends get tested and stocks get conviction.
I'll recommend a buy call on a stock only when I'm fully convinced on the stock. With a table thumping buy.
And when the street wants the levels, he brings the chart.
Charts speak the truth, and I deliver the levels with no frills.
Parag Thakkar and Kush.
In a very interesting contest, BJP wave sweeps Bengal. Big defeat for TMC as trends show the BJP crosses the halfway mark, rejecting Mamata Banerjee. Meanwhile, Vijay's blockbuster performance stunts Tamil Nadu. TVK set to give a big blow to the ruling DMK and the main opposition party AIDMK in his poll debut. Access in My India's exit poll projection for Vijay matches with trends. Meanwhile, Congress-led UDF surges ahead as left's last bastion slips out of its grip in Kerala, as well as some shows faith in Himant Biswa Sarma again, and NDA inches closer to halfway mark in Puducherry. Meanwhile, positive start to the week on the last street as Nifty trades below 24,100 with broader markets moving in tandem as well. Almost all sectors trade in the green, barring IT and media. The National Company Law Appellate Tribunal dismisses the plea filed by Vedanta in connection with the ongoing JP insolvency proceedings while upholding Adani resolution plan. Good afternoon. You're watching Lunchtime Trades with me, Shreyanti Singh, and this is the show that gets you a roundup of everything that is happening in the world of commodities, news and updates as well on the top buzzers at this hour, all while you grab lunch. And normally, we tell you about what the markets are doing right now, but before that, let's take a very quick look at the update coming in on the elections front. There's a lot happening and a lot of headlines that you need to make sense of. The BJP is maintaining a comfortable lead well past the halfway mark as counting is underway for the West Bengal Assembly elections 2026. In fact, Inderjeet is joining us with some more details in terms of what the tally is indicating right now. Inder.
Yes, Shreyansi, it has been very power-packed and quite interesting elections this time, and it's about 5 election battlegrounds where we are talking about 4 states and 1 UT, and all of them are quite interesting. And the most interesting elections this time are West Bengal. You can see TMC has not crossed the halfway mark, while it's BJP which has dented the TMC bastion. And the most important elections of this year are Bengal, because here you can see BJP has crossed the majority mark, which is you can see here 193 at this point of time, while TMC, these are just the trends, not the results as of now. And if we talk about how BJP has performed in these elections, because there were a lot of big guns, those who did a lot of rallies in Bengal, and Mamata's bastion has been hit, and BJP has clearly seen from the trends that they are sweeping in Bengal. And if I talk about the key seats, which is Mamata Banerjee now, who was initially trailing, but now she's leading, and after that also from Bhawanipur, she has recently released a video also where she has claimed that election commission is not showing the correct numbers, which is not correct, but we are showing our viewers the correct numbers on the television screens. Similarly, let's talk about the other candidates. Shubhendu Adhikari was contesting against Mamata Banerjee from Bhabanipur, and you can see he is trailing from there. But Shubhendu Adhikari is also contesting from Nandigram, where he had defeated Mamata Banerjee last time. So these are some of the Bengal numbers, and similarly Shashi Panja, you can see she's also trailing from her constituency. Now let's move ahead and talk about another interesting battle, which is Tamil Nadu, and here you can see TVK, which is making its debut in Tamil Nadu, is leading, and it has crossed the 100 mark. And nobody had projected except the Axis My India that TVK is going to have a blockbuster performance that we can see. And similarly, it's a big hit for the ruling party in Tamil Nadu. And if we talk about the key leaders, you can see Udayanidhi Stalin is trailing, and he's the current incumbent deputy CM also. And similarly, other candidates also are trailing. And now let's talk about other state elections, and moving ahead, and we talk about Assam right now. And in Assam also, BJP has crossed the 100 mark, and they have crossed the magic number as well. And but quite interesting, because this is the first time that BJP is going to be the largest party in Assam. And let's go back to Shreyansi.
No, absolutely, and thank you so much, Indrajit, for joining us with that detailed picture. So there you go. It's better than any sort of Bollywood thriller right now, and that's something that you're seeing emerge when it comes to the elections. A lot that you're looking at that is emerging as a very important new trend. Of course, you do have Mamata Banerjee claiming that the votes are being counted quite slowly right now. The tide seems to be turning in her favor as well right now. But let's also zoom out, take a look at the broader picture of things. Madhavan Narayan, senior journalist, is joining us on the show this afternoon. Thank you so much, sir, for taking time out and joining us. First things first, one very important question that is to be asked right now is that, do you see a very different mandate really showing itself, unveiling itself right now when it comes to state elections? Because this is not really status quo by the looks of it right now.
There is very clearly an anti-incumbency wave of sorts in 3 of the major 4 states going into power, whether it's Tamil Nadu or West Bengal or Kerala. Because please understand, in Bengal as well as in Kerala, there have been 3 terms for Mamata. She's it's fatigue of sorts that has kicked in. We can say pretty much about Kerala the similar way. Because Pinarayi Vijayan was seen as a strong man. It's rare in Kerala to win a second term. He did. And therefore, but we are back to the old equations. The UDF led by the Congress is back in power. Tamil Nadu is more interesting because we have a never tested party led by a film star, which is barely 6 months old, storming to power. It looks like they are only a 7-8 seats short of majority as things stand right now. And that is most interesting because they have no political experience or administrative experience. But DMK, which has been the ruling party that is being dislodged, worked a lot on both development as well as administration, and was not short of party organization or funds. In spite of that, they have lost, and that is significant. Shows that there is a wave of a Gen Z wave, you could say, which has gone against the DMK, because about 20% of the voters of Tamil Nadu, about 1 crore voters, you can say, are below the age of 40 or in what they call the voting but below 40 age. So all that makes it extra special. But otherwise, we can see, as I remarked the other day, this is an election in which the young and the restless are against the bold and the beautiful. So you can see that is impacting. And Tamil Nadu is particularly interesting because it's an industrialized state, which has got 98% smartphone penetration. So there is a completely new, as we say in Tamil, this is Vera level. It's a new level of political awareness that has come into the picture. And that makes it more interesting because it's not the usual seesaw between 2 parties.
No, absolutely, and it doesn't seem like it is, political seesaw between 2 parties right now. In fact, it's very interesting the way that the trends are emerging as well. But, speaking of interesting, I also want to double down in terms of the commentary coming in and some of the voter counts also the poll results also coming in, early trends also coming in from West Bengal. Is it a one-cycle anti-incumbency that you're looking at, or do you think that there is a proper shift that you could possibly be seeing on the ground when it comes to Mamata Banerjee's bastion or otherwise, when it comes to this entire regime in West Bengal?
First of all, it's an elected government. I prefer not to call it a regime, but yet it's been a controversial government. So there will be three angles I want to mention in this to be very clear on what is really going on. First is that Mamata Banerjee government did face a lot of criticism in spite of welfare programs for its aggressive cadres and in the rural areas. So that BJP has capitalized on. And so there was a lot of ground level controversies involving TMC cadres. That is part of the anti-incumbency sentiment. But the second thing you have to notice is that because of what happened in Bangladesh, there has been a rise of Islamism and there has been a heavy minority Muslim population in West Bengal, while the BJP has been leading a campaign which is very clearly polarizing Hindus and Muslims, even though they talk more about infiltration, the body language as well as the phraseology has been such. So that has played a major role in the cultural identity getting the better of the economic agenda. That is one thing which is special. But last but not the least, which is why the thing is controversial, is that the SIR deletions, the special intensive revision of electoral rolls by the Election Commission, and the aggressive role played by the officers appointed by the Election Commission to supervise the elections has made it controversial, because roughly in about 60 seats, and there have been 27 lakh deletions in what they call the second round, and voters are not able to vote in spite of being otherwise eligible, is the broad story. And when that happens, in about 60 seats, you can see that the victory margins of the BJP is less than the number of deletions of voters who were not able to vote. This makes the victory a little controversial, shaky from a social moral standpoint, on which the TMC is not going to take it lying down. The TMC led by Mamata Banerjee is not likely to take anything lying down. And although it's a bit of a fait accompli in terms of the fact that the victory is certain for BJP, it is going to have a bitter aftertaste in many ways from what I can see.
Absolutely, and there's some commentary that has already emerged coming in from the party as well. Lastly, I just quickly wanted to try and understand a little better what you think about the new hero who's emerging in Tamil Nadu politics as well right now. When you talk about Vijay, is it the celebrity effect that you see kicking in, or do you see him as a kingmaker? How are you really looking at his debut performance right now?
I think I was joking that he acted in one movie called Sachin, and he's having a Sachin Tendulkar-like debut, which is very strong. But that is where the interesting part lies. He's only 6 months old in politics, has no previous political or administrative experience, and but it would be wrong to say it is completely the cinema glamour, although it has played a role. Unlike MGR, whose movie scripts were directly aligned with the DMK ideology of playing working class roles like the cowherd or the rickshaw puller, the roles played by Vijay in his movies are of a smart leader, like a life coach. Therefore, that has perhaps rubbed off on the mood of the people, along with the fact that increasingly educated people of Tamil Nadu. There's a very interesting statistics I want to share. There are about 42 to 43% higher education enrollment in Tamil Nadu. Roughly the same percentage also is about the women's participation role in Tamil Nadu's workforce. So there is a 98% smartphone penetration, which I mentioned, all of which makes Tamil Nadu no longer a typical third world kind of a election where just blind loyalties play a role. These are smart people asking smart questions and having conversations on Instagram and threads and all. So that has played a major role in a benefit of the doubt being given to a new entrant. So in that sense, it's similar to the Aam Aadmi Party in Delhi in the around 2010 and a little later, where a new phase is preferred where there is allegations of corruption and dynastic rule in the DMK. So there's going to be a more of a wannabe, we want to do it kind of youthful pressure. There's a Gen Z appeal, Gen Z, if you will, that is playing out in Tamil Nadu. But the fact that Vijay doesn't have any administrative experience and even his team is largely untested, although there are defectors from ADMK and some very educated people joining the ranks, is going to be a big challenge for him. So, as we say in Tamil Nadu, they say party is one thing, administration is another thing. Kachi veru, achi veru, they say. So, this is going to be a very interesting play out of that. But it's very clear that Tamil Nadu is heading for a new phase in political culture.
No, absolutely, and that seems to be very evident right now. And you're not alone, when you make that observation about the actor turned politician as well. That's something that's caught the eye of a lot of people on Twitter as well when it comes to some of his roles that he's essayed in the past. Lastly, just a quick word in on this one. I just wanted to try and understand if you think that voters are prioritizing personality over party structures this election. Is there anything that you have an opinion of at this point?
Yeah, it's a good question. Let me answer that with a nuance. I see some of the personalities that applies to NGR in the past also. These are not just personalities. I call them the personified manifestations of aspirations and ideologies. So they are very, there is a lot of what you can call iconography or semiotics here. There is an iconography associated with the idol. It's not blind loyalty or love. It's like they're saying this is the person, just as today there is a brand ambassador who represents certain values, these people also become brand ambassadors for socio-economic ideologies. And to that extent, the glamour is less important than it is made out to be by superficial analysis. It is about, do you represent the brand values? So if aspirational, efficient administration, which is non-corrupt and helps the young move up, that is the brand value that Vijay represents, either through some of his movie roles and or through some of the speeches he's made, or in his body language, not even wearing the traditional veshti anymore. He wears trousers and wears shirts, uses a lot of English words. This is no longer identity politics. This is aspiration politics.
No, absolutely, and that's quite the nuance that you're looking at. If you delve a little deeper, take a look at some of these factors that you have, some of the roles that he's essayed over the past years, and his debut, of course. It makes for quite the thriller in itself as well. Thank you so much for taking time out and joining us this afternoon. So there you go. That's some very interesting nuance also coming in, aside from the voter count that Indrajit told you about. But before we move on, let's also take a look at Central Bank. Now, that stock is in focus after its fourth quarter results. And you do have profitability that is taking a hit from one-time tax-related adjustments. In fact, we caught up with Kalyan Kumar, Managing Director and Chief Executive Officer, Central Bank of India, starting with, why the slippages really rose to the highest level in the fourth quarter. What are you looking at when it comes to the slippages here?
First of all, I will like to tell you this year, overall year, our slippage ratio is 1.16. That is reduced from 1.45 as of previous year. There is marked improvement, and credit cost also we have booked 0.52% this year, and because we have made less provision. Overall, containment of slippage was very good in this year, but you are right, in Q4, our slippage was more. In January month, it was 334 crore. Any one account was there, their slippage was 90 crore, and also and second month, like February of last quarter, in February the slippage was reduced to 90 crore, and in March it is 130 crore. In that way, actually we initiated several steps and focused approach we have made by making our feet on street model very, very impactful and effective. And better oversight was created, and we used technology for better monitoring of these assets, and resulted into the good amount of containment of slippages. And our guidance to market for slippage is we are going to maintain it less than 1% in current year 26-27.
I also wanted to understand, the RBI has come out with the final guidelines on expected credit loss model. From a central bank perspective, what is the estimation you have in terms of the provisions that would be required? And now that you have to categorize loans in stressed assets stage 1, stage 2 and stage 3 category, what would be the impact on your credit cost, and also the capital impact on your capital adequacy ratio, because you will have to provide from it from your capital base?
Actually, I will like to tell you, Central Bank of India is fully prepared for migrating to ECL norms from 1st April 27. And for that purpose, systematically, we are making provision since last few quarters, and total provision of rupees 1,525 crore for stage and stage 2 in standard assets we have made already. And 100% provision for stage 3 assets also is there. We are very much comfortable and don't anticipate any major impact post-migration to ECL guidelines. Apart from this, RBI has now permitted banks to take the provision as required at the time of migration to general reserves without routing through the P&L account. It will facilitate us to absorb ECL impact without any adverse impact on the profitability and other important ratios. And as we have made proper provision also, as I told you, 1,525 crore in standard assets for stage 1 and 2. And also our reserve is more than 9,000 crore. And that's why I am fully confident that from 1st April 27, easily we will migrate to ECL norms as stipulated by our regulator, Reserve Bank of India.
Sir, your loan book has actually grown in the mid-teens sort of a category. Your RAM segment has done well in Q4 FY26. What are the segments where you see the loan demand coming from, and in FY27, what would be the focus areas?
See, Central Bank of India is having more than 4,585 branches across the country, within which 65% branches are rural and semi-urban. It actually really gives us strength to operate in India, Bharat, and where RAM sector has more role to play. So since when I joined this organization on 30th September, after that we have started outreach program across the country for retail, agriculture and MSME. Therefore, you see that in MSME RAM growth is more than 20%. Retail has grown by 25.67%. Agriculture 17.90%. MSME 17.06%. Very good growth. Corporate side also 1,09,950 crore, and it has grown by 14.5%. That total advances has grown by 18.76%. That's why actually we have built this rhythm and structure through which, because we have identified potential branches in the clusters for agriculture and MSME. And through those cluster approach and active specialized branches, we are driving this. Therefore, in this year also, RAM sector is going to be our main growth driver. And also corporate side also looking to the better return and risk between that we are selecting, and we'll proceed that side also. In corporate side, LRD, data center, warehouse, HEM project, these are going to be our priority.
Noted. But sir, do you have a particular guidance with regard to loan growth in the next fiscal?
Loan growth is 14 to 16%. This was previous year also, and this year also it is 14 to 16%. But we have grown better than that, more than 18%, 18.7%.
So that's the word coming in from something like a central bank. Now that stock is in focus on the back of its fourth quarter results. But what else is in the spotlight right now? Bitcoin, let's talk about that as well, because it's back above the 80,000 mark as risk appetite really returns across markets. You're looking at strong tech earnings, steady ETF inflows as well, and a little bit of regulatory optimism, and that's really pulling crypto higher, even as geopolitics is adding a little bit of volatility right now. So you do have institutions stepping up, and traders are now eyeing a potential move towards $85,000, and that's the key level to really watch out for. But by itself, you do have 80,000, that is already a key psychological pivot. And that's also something that you're looking at. With that in mind, let's also quickly take a look at the world of commodities as well. So when you talk about oil prices, they're largely steady right now. So you do have the Hormuz plan that is facing a little bit of skepticism. Brent also holding above $108 right now, just back below $108 thereabout, just a little bit below that, amid security concerns. So that's something that you're looking at as the broader construct here. And the tanker incident also keeping the risk premium elevated. So it's not like the war premium is not there in the barrel. That's very much something that's reflecting with some of those elevated levels. And what's also key to note here is that the prompt spread, which is nothing but the difference between Brent and WTI, is also, getting a little contracted as well. Kunal Shah is joining us on the show right now. He's the head of commodities at Nirmal Bang as well. Thank you so much, Kunal, for taking time out and joining us. Before, anything else, I just quickly wanted to try and understand what you think about oil prices and gold as well right now, given, the paucity of time, and also the construct for both of these commodities right now.
Well, I think gold right now is stuck in a very narrow range, absence of any bullish trigger right now available, because on the downside also the floor seems to be limited considering whatever is going on. The central bank buying has slowed down in the first quarter, and in the second quarter also. To start with, we've not seen any big numbers coming in. ETF, there has been a constant redemption from last 15-20 days. So it seems that the gold prices, the upside right now is not going to be significant. They are stuck in a range, and 4,800 seems to be the near-term support resistance for gold. It should not go above that. So if you ask me from the MCX point of view, I think 1,55,000, 1,56,000, those are the levels, where one could go for a short, and 1,40,000 are kind of levels where one can cover their shorts. Silver, on the contrary, looks relatively better considering what is happening in the solar space. The demand of solar panels have been shooting up from last 20 days.
No, absolutely. And I just wanted to double down very quickly before we let you go and try and understand where you see gold headed from here on, because you've seen it declining the entire war right now. You do have a little bit of range-bound move that you're looking at. Towards the end of the year, do you expect a pickup then?
Yeah, absolutely. By the end of the year, we expect gold to again go above $5,300, $5,400. Still, it will deliver you 10% return going forward. And I believe that these are the lull phase where the de-dollarization trade is at this moment not doing well, mainly because of the disruption what has been caused by the war, and that has led to central bank selling gold. So I think these are the short-term aberrations in the market. The long-term trend continues to remain bullish, and we are not very bullish, but we are expecting gold to test $5,400.
Absolutely, and thank you so much for taking time out and joining us. So there you go, that's key insights coming in. Gold prices are going to be ticking up towards the end of the year, but that's all the time that we have on the show for now. Thank you so much for tuning in.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
Economy, business, world, technology. Noise filtered, numbers decoded. Insights that rewire your worldview. From governance to growth, we connect the dots. Your daily edge, your global advantage. India Business Report with me, Gauri Dwivedi, weeknights on NDTV Profit.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you The investor don't have to. Get the management to answer questions relevant to you. Watch Know Your Company weekdays at 11:30 a.m. to understand your next big bet. New year. New power panel. India market open. Now in its boldest lineup. This is where the trends get tested and stocks get conviction.
I'll recommend a buy call on a stock only when I'm fully convinced on the stock. With a table thumping.
Good afternoon. You're watching Small Cap Buzzers on NDTV Profit with me Somit Sarkar and my co-anchor Varsha. In the next half an hour, we'll take you through the most important small cap stocks that have been buzzing in trade either on the back of price or volume action. So first, let's see what's on the show today. Firstly, we'll be speaking with the management of Meghna Infracon Infrastructure. Now, the company is looking to expand its premium residential and commercial footprint across Mumbai. They are looking to add close to 600 crore worth of gross development value, with a cumulative estimated gross development of more than 1,000 odd crore rupees going forward. Apart from that, we'll be also speaking about Idea Forge. Now, the company has reported its strongest quarterly performance. Highest ever annual order book of close to 530 crore is something that we have seen in financial year 2026. For Bazaar Style, the company has a massive presence in West Bengal, and given the recent government change, the stock has been buzzing in trade. It has been up for the last 2 consecutive trading sessions. And lastly, when it comes to Bombay Dyeing, that stock has been gaining in trade after it announced the launch of an ultra-luxury residential tower in Dadar. The revenue potential of this tower is close to 6,500 crore rupees, and that is the reason why the stock has been gaining in trade. Coming back to the markets, the Nifty has fallen sharply from the day's highest point. At one point of time, we were cruising around the 24,300 level, and right now we are back to 24,020. A sharp fall of around 300 points. But let's go across to NDTV to get latest update on election.
Science victory. This is the science, the data science, and second is Axis My India team working in ground and working in back office here in Bombay. This is the victory of science, data science. You would see that why the other polling agency could not predict or could not capture the mood on the ground, because we at Axis My India, we go to all the seats all the time. If you see all our 4 states, all of them this time on the exact poll. That is what Axis My India is known for. Once again, we are able to predict exact poll in these 4 states where we have predicted. Once again, the good and the hard work of the Axis My India team in all 4 states where we have done, and we all know that we haven't predicted the Bengal.
Pradeep ji, first of all, congratulations. It's great to see your young team for once, along with all of you, all your team members who did all the hard work are there. If you can hear me, you know, the day after you came out with your exit poll, we grilled you again, asking you if you are confident about your projections on Vijay, and you said you are even more confident. So you must be very happy for sticking your neck out.
No problem. 100%. I hope you enjoy that.
Yes, from here across the country, nobody was believing this. They said all fluke kind of a thing. All the political pundits, observers, other polling agencies, they were all laughing at Axis My India when we predicted Tamil Nadu, and that too Vijay victory in this fashion.
Yes, that's right, Pradeep ji. I just want to ask you, as one of those who was skeptical of your poll, as one of those who questioned you about the poll, you underestimated the DMK. You got the TVK right, but the DMK has gone well below what you had estimated.
No, DMK also, let me tell you, the DMK alliance, the vote share as of now is 32%, and we predicted 35% for the TVK, which is the same 35% at this point of time, and we predicted AIDMK alliance about 23%. They are at 27%. Still, there are margins where the AIDMK is leading in a very thin margin. The more number of seats AIDMK is leading with double digit and 3 digits as compared to DMK Alliance and the TVK. I am pretty sure that DMK will again be the party number 2 and party number 3 will be DMK. This is what we have predicted. And if you see the...
Pradeep ji, do you think that this is essentially a young generation? Would you classify this as a young generation, next, or rather a next gen vote, where there is a generational change in the way that Tamil Nadu has voted, and it has voted above the traditional binaries, the traditional tropes we had seen so far working in Tamil Nadu?
Oh, absolutely. If you see our poll prediction, we have predicted in the age group of 18 year of age to 39 year of age, where the 42% of, which contributes 42% of the voting universe in Tamil Nadu, that is where Vijay at the TVK were scoring very high, more than 50% all put together in this age group, and he was scoring fairly good among the 40 plus age group, which is around 25 to 30%. And this vote got consolidated, clubbed with the female vote. There also we predicted the TVK vote share is way higher than the second best, which is the DMK, in terms of vote share among the female. And in our poll, among the male member, it was at par with DMK.
सर ये केक का आप वेट कर रहे हो, केक काट लो, सब आपकी वेट कर रहे हैं कि भाई केक कब कटेगा. आई थिंक एक्सिस माय इंडिया एंड प्रदीप गुप्ता रियली डिजर्व अ केक एंड इट्स
म्यूजिक चला दीजिए. आ जाओ मुकेश.
और सर आपका वर्ल्ड फेमस इन इंडिया डांस हमने मिस कर दिया था.
नहीं, वो डांस मिस नहीं हुआ था, ऑन एयर हुआ था, हमारे यहाँ पे ये कटा हुआ था, लेकिन एक बार आपका वो डांस भी बनता है. And imagine people were laughing polling as being bogus, etc. The fact that they've got this right is very, very incredible. This can't be a fluke. You can get some. This is what my core belief has been for a very long time. You can get some polls wrong, but you can't get this kind of a result unless you've done real polling. Okay, let them celebrate. Let them celebrate. Let's cut to them. Hello.
मैं इधर आता हूँ. ये लेना, डांस ले लो.
हाँ. No, but Pradeep ji, that's not going to work. Veera has the move. Veera, please. Pradeep, wait. You have to do the Vijay. This is the victory of Vijay. You can't do some non-Vijay move, Pradeep.
No, I wish I was not in a dhoti.
Well, let's go across to our first management on the show, Vikram Jayantilal Lodha, Managing Director of Meghna Infracon Infrastructure. So firstly, to start off with the 600 crore gross development value project that you're supposed to launch, or you have launched. Could you give us some more details on this, where these areas are, by when do you expect the project to complete, and what kind of pre-sales can we expect from this project in FY27?
So these projects are spread across Goregaon, Khar, Juhu, and Bandra, and the project and Thane. So Thane we are launching in the month of first week of June. We are waiting for the clearances from the MIDC, and by August and September and Juhu we are launching in May. August, September we are launching Khar and Goregaon. So I guess by max by September we should be on floor, these all 4 projects.
And what is the kind of pre-sales that you're estimating for FY27 and FY28 from these projects?
So total we are expecting around pre-sales we are expecting around 30% of it. So I guess more than 200 crores is our target.
Hi Mr. Lodha, welcome at NDTV Profit. Now how will the company fund this expansion? Internal accruals, debt or JV partnerships? What's the update on that?
So far the growth has been funded through our internal accruals. Our sales performance across the launch projects has been strong enough. Our preference is to stay as lean as possible on leverage. So ideally we would like to keep the business largely debt free. That said, as volume increases and the pipeline scales up, we are open to using debt selectively, especially when we have to go, we have a strong visibility on the cash flow and sales. So it's really about being disciplined. We use capital where it makes sense, but without stretching the balance sheet unnecessarily. For us, growth is more important, but the balance sheet strength is non-negotiable to us.
Right. And also, just wanted to understand the model itself. If you see, is company prioritizing scale? That means more projects or premium projects that you will be taking up. Just wanted to understand the model that you are taking this going forward.
So going forward, always the aim is we want to be known in the market as a redevelopment specialist. And there's a difference. I prefer this model is because going into land acquisition model, you're putting in a lot of upfront financial capital. And in redevelopment model is more of a lower financial outlay, but the investment is more of a emotional capital investment we require. So that because we are closely working with the resident, understanding their concern, upgrading their lifestyle. Personally, I prefer that model. And the other big advantage is the location. Redevelopment allows us to enter established micro markets like Bandra, Khar, Juhu, where supply is limited and demand is always strong. So for us, it's less about land banking and more about city building.
Also, if you could just give us some sense on how have been the demand since the war has started. Is there any concerns that you're seeing? Are buyers holding back? And also on the cost side, has the raw material cost increased for you?
So after the war, we have seen little sales down, but most of our locations are we've selected our locations wisely, and most of the right now 5 projects are on flow, and almost out of 5, 3 are almost 80-85% sold out. Investors are in fact looking for more deals, and I don't see any problematic situation right now.
Right. And Mumbai's redevelopment project, if I were to see, is highly competitive. What is your edge over, say, larger or bigger players? What's that moat or unique advantage that you have?
So, redevelopment model itself gives us a natural advantages. Firstly, we are operating in already established micro markets. So there's always some level of latent demand. In fact, in many of our projects, about 15-20% inventory is already sold or taken up by the existing resident themselves. Second, limited inventory because these are small land parcels. We are typically launching anywhere between 15 to 100 apartments. So we are not under pressure to sell 200, 300 units in one go in the same location. And third, we've spent a lot of time building a strong pre-sales engine. In most of our projects, we are already at around 30% sales at launch. So yes, there is some pressure in the market, especially, but we are trying to manage through these structural advantages. At end of the day, right location and right design, it just picks up.
And sir, given the strong demand for premium housing, what is the pre-sales growth that you are expecting for FY27 and going forward?
So we are expecting around a 50% growth in that, and the premium segment there is demand, and still, I mean, we've just announced these, and we have already got inquiries, and through our channel partners, through our investors, that the demand is there in luxury premium.
So talking about the geographical expansion, what is the strategy going forward? Which are the new regions or areas that you want to venture into?
So right now we are, first we were Andheri, we are looking forward, Khar, Bandra, Thane. So we are spreading our wings left, right, center.
Okay. Also, if you could just give us some sense on how are you seeing the GDP, gross development value, or new projects that could come up beyond FY27?
So for us, getting this 1,000 crore GDP was a milestone. And in next 2-3 years, we are expecting this GDP to be touching 2,500 crores soon. There are many projects in pipeline which are under various stages of negotiation and all. So I guess we should touch in next 2 years, 3 years, 2,500 crore.
Right. So talking about the launch pipeline, if you could, give us more details on that, the current ongoing projects, and of course the future pipeline projects.
So future pipeline projects, I won't be able to till I am not able, till I don't have a clear picture, I won't be able to give. But I guess this is what we've announced, the 600 crore GDP, we should be anywhere fully on floor by September end. We should be on floor with all the projects.
Right. Well, thank you, sir. Thank you for joining us and giving us the way forward for the company. Now let's go across to Tapan Doshi, research analyst at CA. Tapan, you heard the management strong development pipeline is what they have planned going forward. How are you looking at this counter at the current valuations?
Good afternoon, Sumit. Yeah, see, the management is quite optimistic, but the only thing is, it's like a micro cap. The stock has run up a lot. Now it's almost more than 200 PE. And the revenue up is there, year-on-year good growth. Even if you see that projections, hopefully it will come. So I think that will add back to the revenue. Pipeline execution is the key driver. Because it's a micro cap stock, one has to take care of the liquidity and governance risk also. So, but I think the stock will be highly volatile because the stock has run up in recent time also. So even though everything is good, I think I'll be a little bit cautious here and wait for the correction, then only getting. Valuation is not currently favorable to enter at this level.
Okay, so Tapan would be waiting for the correction, and as per him, the valuations are not attractive and he'll be cautious when it comes to this counter. Well, moving on, time to dive into the F&O market setup and the Q-shaping trade today. Let's bring in Sharad for more details.
Well, thanks a lot for that. A little bit of volatility is something which we have seen from the last time at around 10:45, where we had seen how the markets are functioning, but nevertheless the technicals remain strong. Look at Adani Ports, top gainer in Sensex, followed by HUL and L&T as well. Little bit of sell-off coming in the IT names, and of course Bharti Airtel and Kotak Mahindra Bank are also dragging the Sensex. But nevertheless, the overall setup still remains strong, especially on the broader indices front. But coming back to the F&O space, let's look at the key long build-up which stocks are showing good momentum. BHEL, that stock is up almost 8% and Vedanta also seeing good buying. That stock is up almost 7% as well. Let's look at the short build-up that includes Sona BLW. Of course, the earnings impact is there. Avenue Supermart's profit booking coming here. This stock is also down 4%. And looking at the long unwinding candidates, we are having Oil India, and from the EMS space, there is PG Electroplast as well. Not much of a trade here. And short covering, we have HAL. The stock is up 5%, followed by Chola Finance on back of earnings. That stock is up also almost 4%. So earning specific moves and some West Bengal related stocks are doing well in the trade right now.
All right. Well, thank you so much, Sharad, for all the details. Moving on, Idea Forge is in focus. Let's pull up that stock. The stock is up almost 20%. There you go. Yeah, 20% in trade. This is on the back of strong Q4 numbers that we have seen for this company. But let's bring in Puneet for more details on that.
Well, thank you for that. Revenue's grown almost 7 times on a YY basis for Idea Forge, coming at 140 crores versus 20 crores in the same time last year. This has also helped boost the gross profit margin also in this quarter, coming at 67% versus almost 35% on a YY basis. EBITDA as well has come in at 61 crores versus actually a loss that the company did at 21 crores, and net profit as a whole has come in at 60 crores versus a loss of 25 crores. So it's a big beat on numbers, reflecting in the stock price performance as well. But looking at the numbers in a little bit more granular detail, they've executed almost 40% of their open order book in this quarter itself, and they've also received their first order from the United States. So with this context, they're moving into FY27 with an order book of almost 310 crores and will give them visibility at least for the next couple of quarters, to say the least. The revenue mix has also been very interesting. Defense was almost 86% for this year, for fourth quarter specifically, and 14% was civil, but for the whole year, defense is now roughly around 69 to 70%. So higher defense orders executed in this particular quarter was a big boost. They also, of course, have a manufacturing facility here in-house in Navi Mumbai in Maharashtra that spans across 21,000 square feet and comprises the areas testing zone as well as production zones within the same factory. And in terms of product developments for the future, they have developed a UAV tech with new drones, which is the Netra 5 as well as the Zolt, which they've spoken about as well in the previous quarterly conference calls. They also have mentioned specifically that improved communication and surveillance system will help boost further order inflows. But that's the picture for Idea Forge, a good quarter four for the company.
Absolutely. Well, thank you so much, Puneet, for all the details. Tapan, what about Idea Forge, considering the strong Q4 numbers? Stock is up 20%. What should investors do, taking into consideration the valuation in picture?
Well, brilliant result. Now, if you see, even from here also, it looks like 25-30% revenue CAGR may be there. And defense order pipeline is good from here. Export orders also scaling up gradually. Of course, now the lumpiness of the revenue will be there. Again, it's a defense, so it may happen that it may spread over the quarters. But I think defense spending is rising in India. That will help this company. Overall, I'm quite positive on the stock. Of course, the stock has run up a lot, so one can wait for a little bit correction. But yes, if anyone is having, hold it for a long term, not a problem.
The next stock in focus is Bazaar Style. Now that counter has been buzzing in trade. Now this is largely because, or might be because, of a change in government in West Bengal, and this company has a large exposure in that state. Let's get in Mahima with more details on Bazaar Style.
Right, so Amit, so as you rightly mentioned, probably buzzing on the back of the expectations of, Bengal election results. And if you take a look at the way it's, Bazaar Style is panned in West Bengal as a whole, they have a dominant presence. Over 94 stores is what they hold in West Bengal itself from the entire northeast coverage that they have. And the last two trading sessions have been extremely good for the counter. In the last 1 month also, it's seen a gain of about 40-odd%. Now, and this was, this entire rally was also on the back of the Q4 business update that they gave. Overall revenue growth, standalone revenue growth at 35%. Total number of stores also saw an uptick of around 23%. Sales per square feet was up by about 3-odd%. They opened 11 new stores in Q4 itself. Highest ever revenue from operations has been seen in FY26. So they've, surpassed their FY26 revenue guidance of 1,842 odd crores. In terms of, the recent updates coming in, not very recent, but in January, Cupid had gone ahead and invested 300 crore in this company via preferential allotment of warrants. And in terms of valuations, however, with the kind of run-up that we've seen, are not looking cheap anytime now, because V2 retail stands at 56, V-Mart stands at 42, but Bazaar, as compared to both of these, which are, like players of Bazaar Style, stands at 120 times. So valuations, of course, is nowhere near cheap. But this is the overall update of where Bazaar Style stands and probably why it's buzzing in trade today.
Right. Tapan, any view on Bazaar Style? Do you see this as a sentimentally positive for the counter?
It's a sentimentally positive, but if you see, the stock has also gone up a lot. Of course, new store additions will be there, around 100 stores, and revenue CAGR will be around 20 to 25% next 1 or 2 years. Of course, inventory risk is always there for the fashion cycle and all that, and high competition is there in this value retail. So working capital intensive model is there, so we always have to see the margins and all that. My take is that EBITDA margin 8% is on a lower side, and the way the Bazaar Style has gone up, I think one can wait for entering at this level.
Right. Well, moving on, Bombay Dyeing and Manufacturing Company is in focus. This is on the back of launch of ultra luxury residential tower. But let's bring in Shivam for more details on that.
Well, yes, the stock has been up 16% in today's intraday session and has touched the 4-month intraday high. Also, this has been the single biggest day advance in since last January 2024. Now, the stock is buzzing on the back of launch of this ultra luxury residential tower named 3 Island City Center, and the revenue potential for this project is expected at 6,500 crores. Now, first let's talk about the real estate arm, Bombay Realty. The company has increased its focus on the real estate segment through Bombay Realty over the past 3 to 4 years and has completed around 2 major real estate projects in Mumbai. The first one is the Island City Center residential project, which involves 1 ICC and 2 ICC, which has been a significant achievement for the company. And second is the WIC Worli, which is a commercial tower. Now, moving on to the 9-month financials for the company, the revenue stands at 1,064 crores, which was lower by 14.6% on YOY basis, and the net profit of the company was at 6 crores compared to 479 crores in previous year. Now, this significant difference is due to an exceptional item of a profit of around 538 crores due to a sale of land, and which was recorded in FY24. Now, looking forward to the segment-wise breakup of the revenue, the Bombay Realty constitutes around 6.24% of the total revenue of around 100 crores, and this and if you look at the capital structure of the company, which remains pretty stable, and the debt to equity ratio for the company has been 0. And few other key factors to watch out for is the cyclicity which remains in the Indian real estate sector, and which in turn will impact the demand and pricing of the real estates, and the volatility in the prices amid the geopolitical concern.
Right, all right. Well, thank you so much, Shivam, for all those details. Tapan, do you track this counter, and what should investors do when it comes to Bombay Dyeing?
Well, this company is mostly dependent on the realty monetization, and I think that pipeline will continue, and realty segment growth focus is there. But here, no, textiles, that area is quite weak. Again, if you see, the profitability is quite volatile. Last quarter also it was a loss making, and business visibility is quite low from here. And we have to rely on how much realty monetization will happen. So balance sheet improvement hopefully will improve. But I think looking at the business model, I think that's a avoid from my side, because not a complete visible roadmap I can see from here directly.
Right. Well, thank you so much, Tapan, for all the details and joining us for the conversation, and thank you so much. Well, viewers, this is all the time that we have on this edition of Small Cap Buzzers. Stay tuned to NDTV Profit.
केसरिया से मन जोगी हुआ रे, दिल झूमे देखो मतवारा हुआ रे, केसरिया से मन जोगी हुआ।
हर पल मनाओ केसरी त्योहार, विमल बोलो सुबह केसरी।
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversation.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to. Get the management to answer questions relevant to you. Watch Know Your Company weekdays at 11:30 a.m. to understand your next big bet. New year, new power panel, India market open, now in its boldest lineup. This is where the trends get tested and stocks get conviction.
I'll recommend a buy call on a stock only when I'm fully convinced on the stock. With a table thumping buy.
And when the street wants the levels, he brings the chart.
Charts speak the truth, and I deliver the levels with no frills.
Parag Thakkar and Kush Bohra are now part of the morning crew with Tamanna, Neeraj and Alex. Same show, sharper voices. Every morning on India Market Open, your favorite market show just got better. On NDTV Profit, for your profit. When the headlines move fast, perspective matters. On Editor's Cut, our editors come together with experts to distill the week's information blitz into clear perspective. Down the stories shaping the world, from markets and the economy to global conflicts and what lies ahead. This is where experience meets insight.
Hello and welcome back to NDTV Profit. You're watching Ask Profit, the afternoon edition. My name is Puneet Zaveri. With me, as always, is Mahima Vachujani. And over the next half an hour or so, we'll try and answer all your stock-related queries. So if you haven't already, do start sending in on the number that will be flashing very shortly on the top of your screen. Of course, it is an election day and you've seen a historic mandate being won by the Bharatiya Janata Party in West Bengal. Also in Tamil Nadu, you've seen a new government of TVK being formed in, and the market is also very interesting at this point of time. So pull up the Nifty 50, pull up the heat map also, and that'll give you that key perspective. Of course, we're down from the highs, but still continuing to be in the green, and about 24,000 very importantly as a key level as well. Now, in terms of the winners, you're seeing Adani Ports as well as Adani Enterprises now leading the charge for the Nifty 50. HUL, L&T as well as Eicher Motors are some of the other gainers today, but you've seen sell-off from the highs for Maruti Suzuki as well as Bajaj Auto after posting strong strong April sales numbers at this point of time. The sectoral heat map also is very interesting. Of course, Kotak Mahindra Bank continues to be the biggest Nifty loser, and hence you're seeing pressure on the banking index today. But the IT and the media continues to be down today. Nifty Bank very flat at this point of time with a tinge of negative bias, while Realty and MNC as well as the healthcare index are the top gainers. But overall, in the advanced decline ratio, Mahima, we're continuing to see that almost a 3 to 3.5 times advances gain is what we saw in the morning. And quite a bit of that has subsided right now, and that's visible in the mid cap and the small cap index.
Yeah, I think even the mid cap and the small cap index are off from its day's high point, have seen some downtick now, but recovered from the low points as well. For the mid cap 150, it's up by about 0.5%, the small cap 250 is up by about 0.5% as well. It'll be interesting to watch out for as to how the day ends, because a lot of this news action is also on the basis of elections plus earnings, etc. So we'll have to see as to how stock specific counters do. Quickly, if we can pull up the BSE 500 and then get in our guests to answer, get answers to all your stock related queries. There you go. That's the BSE 500. You have Dr. Lal Path topping that chart now on the back of its numbers, up 15%, followed by SIS, Equitas Small Finance Bank, Balaji Mines, BHEL. On the flip side, you have counters like KSP, Kajaria Ceramics, Sun TV, as well as Sona BLW, which are seeing a downtick in that range of 5 to 8%. But let's start taking your queries. To answer them, we are today joined by Narendra Solanki, Head of Fundamental Research Investment Services at Anand Rathi Shares and Stockbrokers, joining us now, and soon we'll also be joined by Vishnukant Upadhyay, who is the AVP Research and Advisory Master Capital Services. Narendra, the first question that we have is on Samvardhana Motherson. Shankar from Bengaluru wants to know if this is the right time to make an entry into this counter. He's planning to buy around 500 shares. Would you recommend that? A very good afternoon to you, first of all.
Yeah, good afternoon, Mahima. See, overall auto ancillary space, we are very positive on. Right now, we do not have any recommendation on Samvardhana. But looking at the overall picture of the sector, we are positive. But there are few issues regarding exports. So as soon as the trade deal related tariffs and the West Asia war cools down, I think then the exports would pick up momentum. So the holding period might be longer for the client. But yeah, overall, the sector is very positive, and it's one of the good companies to have in one's portfolio. But yeah, holding period may be a bit stretched.
Got that view, Narendra. But let's go across and take the next question. Priyanka from Mumbai wanted a view on MRPL. Now she's holding 500 shares at roughly around 183 and wants a kind of like a 6-month to a 1-year view. Let me welcome in Vishnukant Upadhyay, AVP Research and Advisory at Master Capital Services. Now, Vishnu, very good afternoon to you. What's your view on MRPL and what would your recommendation be for Priyanka? Hi Vishnu, am I audible to you? We seem to have some technical issue there, but Narendra, by any chance, any view that you might have on MRPL at this point in time, if not in coverage, anything that you like from that space?
Yeah, we do not have any recommendation on this specific stock. But on the space, I think the space would continue to remain volatile because of the volatility in the underlying commodity. So I think it would be better to shift to another sector which is performing really well, and it would be between like it can choose auto ancillaries. Then in consumer also looking very good as well as given good results. So one can go and look out for some stocks in the FMCG segment as well.
Okay, all right. We have Vishnu back with us. Vishnu, MRP is the counter that our viewer wants to know about. What's the long-term view on this one?
Hi, very good afternoon. Well, so, stock is trading with a bearish trajectory, and in today's trading session, we have seen prices, toppling below at 200-day exponential moving average. So, yes, for a very short term, stock is looking weak, and I wouldn't be surprised if prices approach towards 148, 147 sort of level. So, it's a completely exit counter as of now.
Okay, all right. We've got our first caller for this afternoon edition. Prashant, I think, is calling us from Bengaluru. Prashant, a very good afternoon to you. Go ahead, ask your question.
Good afternoon. My question is on the power counter. I have been researching various stocks in this counter, and pretty much most of these stocks have run up, and the ones which are selected are either the ROE or the ROC are around 10, and the debt ratio of each of these identified stocks are quite high on the debt. So I wanted to ask for a short to mid-term kind of a range. Is there any stock that is still available at a price which we could enter at today's market price? I'm currently holding Tata Power and Suzlon Power and Green Energy is where I want to enter and buy a few more stocks, but I'm unable to pick one stock, so I needed a recommendation on that.
Okay, all right. Prashant, got your question. I'll take this up with Vishnu. Vishnu, you heard Prashant's query. What would your pick be in the power space?
Well, so both counter is looking quite good. If you talk about JSW Energy, so the stock is currently trading up the cluster of all key moving averages. So, in fact, showing a short-term as well as a long-term strength in the counter. I believe as long as it is staying above 539, 540 sort of level, so this is a buy the dip counter. And on the higher side, I'm expecting 600, 620 will be on card very soon. While talking about Tata Power is also a breakout candidate. If you look at a weekly graph, the stock has given a very clear-cut breakout. But, last couple of days, prices are showing some sort of profit booking from the higher levels. But yes, it is also a by the dip counter. I believe any decline close to 430, 420 will definitely provide an opportunity to create a fresh long position in Tata Power as well. So, yes, he can, distribute the money in both counters, JSW Energy and Tata Power as well.
Got that view, Vishnu, but the flashes on the bottom of the screen, Ambuja Cement's results are out, and The profit has been a big beat in this particular quarter, and so has the revenue also come in very strongly at this point of time as well. So profits up almost 78% in this quarter 4 of FY26 at 1830 crores versus 1025 crores in the same time last year. You've also seen the total income rise to almost 7206 crores, and we'll start flashing all those numbers very shortly on your screen. You've also seen that, in terms of this is of course of the standalone number I'm talking about. Consolidated, the revenue is come in at 10,915 versus 9981 crores in the same time last year as well. Now, it's an interesting quarter for the cement companies. You've seen that input tax cost will be an impact to watch out for in quarter 1 of FY27, but most cement companies are expected to have a strong quarter 4, and Ambuja would be one of them as well. Now, you've seen the numbers for ACC already come out. Those will be consolidated here with Ambuja as well, but in terms of at least the two key numbers for profits as well as for revenue, it seems numbers that are largely in line and very strong as well in terms of profitability as well. We'll get to other details also in terms of the EBITDA per ton amongst others, because we'll wait for the press release to come through, get the volume number and get put across the EBITDA per ton number as well, because expectations are for a strong number in this particular quarter, but some more details awaited for Ambuja as well in this particular quarter. EBITDA number now flashing in, it's down 21%, and a lot more details yet to unpack from this particular result, but get back to the margin picture as well at this point of time.
I'm just wondering, because we've talked about how this raw material inflation is going to hit the entire industry, right? And price hikes, one calibrated price hike has already happened in the cement space. I think there is another expectation of another price hike going forward in May as well. The expectations are that in south the prices might go up by 25 rupees per bag, in east around 25 per bag as well, and north and west around in that range of 10 to 15 per bag. So Q1 is going to be an important one to watch out for, but most certainly good set of numbers. We're seeing that bump up coming in the counter as well. If we can try to pull up the charts, it's up 1.5% as we speak for Ambuja Cements. There you go. It's bouncing back from its low levels right now. Vishnu, any view on Ambuja Cements as we speak, if you've had the chance to take a look at the numbers or the space per se?
Well, Mahima, so from our technical standpoints, I'm able to see that the prices are currently oscillating in a proximity of 21-day exponential moving average. In fact, the prices are continuously forming lower highs kind of pattern, but the way prices recoup from the lower levels around 394, 395, it is indicating that the prices are garnering strength from the lower levels. So yes, the candidate is now currently buy the dip, and I believe as long as the stock is trading above the 420, 430 sort of level, so every dip close to that level will provide opportunity to build a fresh long positions for the target of 480, 490 in short term.
Got that view, Vishnu, and of course we'll come back with more details once the press release is out in terms of the volume numbers. But definitely the power as well as the fuel costs haven't inched up materially on a YY basis, and hence that is a key positive at least at this point of time. But go across to the next query from Afreen from Hyderabad. She is holding 20 shares of Vijaya Diagnostics at 1,115. Holding 20 shares, so in a minimal profit right now, but asking what she should do with this counter now, and if she can hold for the next 1 year or so. Narendra, what's your view on Vijaya Diagnostic at this point of time?
Yeah, again, it's not under our coverage, and we do not have any recommendation on this stock.
Diagnostic space that you have coverage on, anything that you like right now?
Not at the moment.
Got it. Well, anything on the charts, Vishnu, that if you can help me with at least for Vijaya Diagnostic, because she's been holding for the last 1 year, and asking if she should continue to hold also.
Well, Puneet, so the stock has given a very clear-cut breakout, and I'm quite sure the prices are likely to extend this winning streak towards 1250, 1260. But one thing I would like to highlight here is that prices has, given a too much return in last 4 or 5 weeks, so there has been overextended gain in the prices, so we can't rule out the possibilities of a corrective dip. So one shouldn't get fear on that corrective dip. That could be an opportunity to accumulate more stocks. So having said that, on the higher side, 1250, 1260 will be on card. So yes, stay with the position.
Okay, all right. So that's the view on Vijaya Diagnostics. The next one that we have is on Vedanta. Our viewer MM Kapoor bought 10 shares on 29th of April at 776. Says he's sitting on a loss right now. So he's just bought it before the demerger date. Wants to know as to what should be the next course of action for him. I mean, it's because he's just bought it. It's very difficult to kind of give an answer to this one. But still, I'll try. Narendra, post the entire demerger takes into effect once the share gets credited, in investors' accounts. Do you think all of them should be a hold from your side, or should there be some profit booking in certain counters?
Yeah, again, I think we have to wait for the valuations to emerge in the listed stocks which are going to be listed. And I think it would be better to take a call post-listing at what valuation those stocks are trading based on their independent valuations. So I think a client may wait till the listing happens, and then would be the better time to take a call on what to do.
Got it. Well, let's go across and take our next caller from Hyderabad. And Ram has a stock query for us. Ram, very good morning to you. What's your query?
Yeah, good morning, team. So I do have query on Ola Electric. So I have invested 40,000 shares at 40 rupees.
Okay.
Okay. So it is a long-term bet. I see the sales is increasing. So can I hold for the 2 to 3 years kind of stuff on this counter?
Ram, this is almost a 16 lakh position. Do you also have other stocks in your portfolio, or majority is Ola Electric right now?
No. I do have couple of counter on my portfolio, but it is a high risk, high reward kind of stock in my portfolio.
Got it. Well, Ram, I'll check with Narendra if he has coverage on Ola Electric. I fear not, but Narendra, just in terms of positioning as well, right? It's a company that's going through its own transition, and the limited data at this point of time, only for a couple of months where sales have started to come back. Just in terms of positioning, would you recommend him to continue holding Ola Electric? And if you don't have coverage within the auto pack in the OEM space, what's your preference?
Yes, yeah, we do not have any active recommendation. And if he wants to take a position on electric EV scooter sales, so I would be going for TVS Motor. And Ola Electric, I think, especially in two-wheeler space, is struggling in terms of its product. However, there have been positive developments into its gigawatt battery manufacturing facility, wherein we are yet to see volumes, but the production has started. And I think if one is taking a position in Ola Electric, then I think it should be based on its performance in battery capacity rather than two-wheeler sales at the moment. Yeah.
Okay, Narendra, a quick question on defense counters. Zuma from Bengaluru wants to know if she can go ahead and buy one of these: Paras Defense, Idea Ford, Zentech. Which one are you liking in that space from these three?
I would prefer Paras Defense.
Okay, all right. And she's looking from a 1 to 2 year horizon. So, Paras Defense is what Narendra is recommending right now. But viewers, time to take our rapid fire round. Narendra as well as Vision, you both know the drill. Try to keep your answers as short as possible. The first one that we have is on Godfrey Phillips. Ramesh from Chennai has bought 50 shares with the levels of 2 to 1.5. Hold or sell from a long-term perspective, Narendra?
Do not have any coverage per se on this stock.
Any view, Vishnu, on Godfrey?
Hold with a stop loss of 2080.
The next question coming in from Vijay from Chennai on Indian Bank. He wants to know a short-term target here, Vishnu.
Yeah, so basically stock is currently falling, in fact, but keeping a stop loss below 810, one should hold the position for the target of 920.
Inox Wind is the other one. Rajiv from Delhi wants to know a 6-month view on this one. Vishnu, Inox Wind, what are the charts indicating?
Yes, hold the position.
Dheeraj wants to invest into Coforge. Results out tomorrow, and a big one, Narendra. Do you have any coverage, and what should Dheeraj do right now?
I think the IT as overall space is into a consolidation phase. We have some kind of recovery few months back, but I think till the time that tariff issues resolves and the war situation resolves, the sector would be into a consolidation space. So he can continue to hold on to the IT space, but it would take another 2 to 3 quarters in order to significantly show some improvements overall.
Got it.
Got it. The next one is on Hindustan Zinc. Madhusudan from Hyderabad wants to know if this is the right time to purchase, or maybe what would be the right time, basically, is what he wants to know. Vishnu, your view?
Yes, definitely. The stock is trading above the all moving averages. One can go long.
HAL bought at 4492, holding 10 shares and asking what's the next target. Vishnu, what would you recommend?
Which is to?
HAL, Hindustan Aeronautics, bought at 4492 by a viewer, Divya, and she wants to know next target.
Yeah, the stock is all set to extend the gain towards 4750 sort of levels.
Okay, the next one is on BSC. What could be the right entry price to make an entry? Rakesh Gupta from Delhi is asking. Vishnu, your view?
Yes, definitely. The stock has given too much gain in last couple of days. So I believe any corrective fall towards 3540, 3560 will be a good entry point.
Yathas Hospital, Vishnu, a viewer wants to make a fresh entry into the stock. What would be a good time to enter?
Well, so I believe 790, 780 will be a good entry point.
Ujjivan Small Finance Bank, is this the right time to enter from a long-term perspective, Narendra?
Yes.
The next one's on Central Bank. Our viewer Shiv Kumar is holding 200 shares at 39. Narendra, if any active coverage on the stock, or if not, any preferred pick in the banking space now?
See, in overall banking space, we continue to like PSU banks. However, much of the re-rating has been happened. So right now, the private and PSU banks are evenly placed at the moment. So if you want to take exposure in large bank, then SBI is the one we prefer, and followed by Indian Bank, and in private bank, it's Axis Bank and ICICI Bank.
Okay, BHEL, hold or exit, or maybe buy more and average out? Murli from Hyderabad wants to know. Vishnu, your view?
Yes, definitely. One can hold the counter.
Vishnu, next one coming in on Precall. Our viewer Lalita has bought it at 670 and asking if it's a good time to average now, or should she continue to just hold?
Okay, so well, basically the stock is oscillating in a very broad horizontal band. So I believe let the prices come down towards 540 and there one can go low.
Got it. Well, that's the end of the rapid fire as well as this edition of Fast Profit. But Vishnu as well as Narendra, thanks so much for joining in, helping us solve all the stock related queries over the last half an hour or so. But viewers, that time at the end of the show, thanks so much for watching. India Market Close comes up next.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to. Get the management to answer questions relevant to you. Watch Know Your Company weekdays at 11:30 a.m. to understand your next big bet. New year, new power panel, India market open, now in its boldest lineup. This is where the trends get tested and stocks get conviction.
I'll recommend a buy call on a stock only when I'm fully convinced on the stock. With a table thumping buy.
And when the street wants the levels, he brings the chart.
Charts speak the truth, and I deliver the levels with no frills.
Parag Thakkar and Kush Bohra are now part of the morning crew with Tamanna, Neeraj and Alex. Same show, sharper voices. Every morning on India Market Open. Your favorite market show just got better. On NDTV Profit, for your profit. When the headlines move fast, perspective matters. On Editor's Cut, our editors come together with experts to distill the week's information blitz into clear perspective. Down the stories shaping the world, from markets and the economy to global conflicts and what lies ahead. This is where experience meets insight. No noise, no hype, just sharp takes on what to watch next. Editor's Cut, every Friday, 3:30 p.m. only on NDTV Profit.
Welcome, you're watching India Market Close, and markets have come off. They've come off the highs, but still positive enough, about 0.5% up, but dramatically off the highs of the day. I would say some profit booking coming in, Neeraj, and advanced decline ratio showing that as well. After all, how much will you celebrate, an election victory? Some of the problems have still come to fore. Do you think that's the sense, or is it a sell on rise attitude which has come into the market considering what's been happening?
Yeah, actually, in some sense, Tamanna, more of what we were talking about in the morning as well, but then the two of us were talking in the morning that in some sense, this state election verdict is welcome, but not a market moving event simply because the market is bigger fish to fry, if you will.
Yeah.
And I think
Bengal is fried quite a bit of fish. A lot of people fried today with the election results, as happens, because that's been a spectacular story. All right, let's pull up the Nifty heat map for you and show you what's happening over there. The intraday of the Nifty will also show an interesting picture. But first, Adani Ports firing on all cylinders. Adani, and there's a Jefferies upgrade on both those stocks. And standard disclaimers here, you're watching on this program on NDTV, which is owned by AMG Media, part of the Adani Group. Having said that, a slew of brokerage notes positive on Adani Ports. There has been some action as well in terms of change of hands, block deals, etc., at least in that counter. Bharti Airtel on the losing side. Kotak Mahindra Bank just being punished for the management not sounding too confident on where their net interest margins are going to go. ONGC, TCS, ITC among the other losers. But overall, a pretty picture. HUL also with the brokerage notes which have come in this morning looking pretty robust.
Yeah, pretty solid, and Reliance pulling in that bit of weight, 2% higher as well. So that is looking good. On the broader end as well, if we get just the BSE 500 winners and losers very quickly up on the screen, and you will see Sona BLW and some of the others correcting out there on your screen. Kajaria Ceramics, KSB Pumps, Sun TV surprise. I thought the
surprise, no, DMK getting.
Yeah, okay, that's why.
Yeah.
But the other angle was that because of the Mittal family bagging Rajasthan Royals, would Sun TV come in focus as well? But yeah, I take on board.
This is Tamil Nadu elections.
Yeah,
DMK was expected by all polls to sweep and form the next government. Superstar Vijay has made one hero ka entry and really changed the entire plot twist. Can't have written this better. So that is Sun TV for you.
Yeah, you're right, actually. So I stand corrected that. Avenue Supermarts, a sharp corrective move after a lot of those wins were priced in, I reckon. Yeah. But the winners, Tamanna, Dr. Lal, we spoke to the management early in the morning. Fabulous numbers, best in the last 15 quarters. Balaji Ameen's BHGL. This is the winner, right, of today in some sense, 8% higher. And for a stock which is not that it was pummeled out of shape and gaining, it's actually gaining after having a meaningful uptick already.
Yeah.
So some very stellar.
Just wondering, because some commentary about how in BHEL one-off provisional expenses being reversed is also making it look good, but clearly the street happy with the fine print. I just want to pull up the intraday, if we can, of the Nifty and the small cap and mid cap, because you need to see this. This was going fine till mid-noon, all of the reactions to the results, etc., all of that happening, and then coming off. There is some improvement now as we are going into closing, and I wonder if we have the Brent rates up, because that might give you a hint as well, because look at what's happened to Brent. Mid-afternoon, you've gone as low as 102. So you're coming off there as well, but I think more sell on rise than anything else.
Yeah, and probably goes in with what the macro concerns are as well, Tamanna. And just before I ask you about elections, just that wee bit that for the this is the Brent prices, of course, and well, a bit of a bounce, but still 108 better than the weekly close.
Yeah. WTI June and 101. I wonder if we can get spot rates as well, because this is July, but I think June rates have come off to some extent. Should we look at the sectoral heat map very quickly? And just take a look at what is dragging down the markets. IT to some extent, maybe that's the drag on the Nifty because of its weightage. Nifty Media is all Sun TV today, I suppose, a lot of it. Yeah. CPSE, private banks, because otherwise the markets are doing okay.
Yeah, you're right. And just that macro concern and the CEA saying that CAD could be 2 times versus anticipation, and we might face some challenges to meet the FIS. So official confirmation, if you will, of there being a macro concern. But Tamanna, the other element is that whether or not it has an impact on the markets, the election verdict and what it has thrown up as a surprise. Very quick views
I think it will have an impact on the markets. I want to pull up the leaderboard because it shows you a snapshot of all the results and who the winners are.
The election leaderboard.
The election leaderboard, and that's what it is. So if I look at it this way, BJP roaring in West Bengal. I mean, this is cruel to the incumbents if you look at it that way. 194 seats. The halfway mark is in the rear view mirror as far as the BJP is concerned. So that's historical. Assam, they were expected to win, but again, a roaring mandate there. So 2 out of 5 with that roaring mandate is giving you a sense that the electorate is with the party at the center. It gives a little bit of cushioning to do things like increase petrol diesel prices if you need to, take some tough decisions if you need to, policy-wise to protect the economy right now. Maybe that's what the markets are cheering. TVK, this is the surprise. This party is a startup disruptor. This party was launched in February 2024. I'm telling you, this is the disruptor. This party is launched in February 2024, barely 2 years old, comes in and just sweeps everyone out. Congress and its allies can take some solace from Kerala, but this was expected, so maybe not getting priced in. And Puducherry, again, this is a BJP plus alliance. So if I look at it, 3 out of 5, one who would maybe have some kind of an association later on a national picture is not looking too bad for the ruling party.
Yeah, you are right. And just the market implication aside of everything else being spoken about, I mean, a Bandhan intraday move today, at least for the first part of the morning, tells you why some of the aspects of the street or some of the market linked movements are also happening from a West Bengal election verdict, because the Bandhan started off flat at a point of time in the day, was up about a healthy 6%, still up about 3.5%. But this is after a 40% rally already behind it. So
Ashri Cement, Bandhan, Berger, some of those companies. Interesting tweet there from Harsh Goenka, who doesn't hold his punches, and he says, and we'll pull that up for you in a bit. He says that the Bengali business community is thrilled simply because, and I was pulling out some statistics, Neeraj. West Bengal in the 60s used to be number 3 in terms of contribution to national GDP. It is about 23, 24, I think 26th number as of the year 23, 24. Their per capita income is much lower than the national average itself. The amount of industrialization, and I'm not blaming any one party or whatever is happening there culturally, but this today what we're seeing is a vote for aspiration. Can you change over here and do what you've promised to do and display to some extent on a national level and in other states? I mean, they don't want this commentary that, all of the house help left to vote for the elections. There is so much more that comes out of West Bengal. So we're going to have some interesting ground reports there as well. So here's what's happening in the markets after that very long introduction. Here's what's happening. It's a sell on news strategy seen at higher levels. The Nifty dropped nearly 300 points from the day's high. IT, auto and PSU banks have led the fall from the day's high, of course. There's value buying though in SMIDs and broader indices are the ones which are outperforming. Supports are now seen around 24,000 while resistance at 24,300. Crucial supports now at 23,800 to 23,750. The bank Nifty meanwhile remains on a weak footing. 55,600 seen as resistance while index finding support around 54,700. If there's a further dip, you will likely test 53,600 to 53,500 today. So those are some of the key factors. But I was telling you about that Harsh Goenka post. And I wonder if we can pull it up. They're talking about Bengal's business community is absolutely delighted with the results of the Bengal elections. Development will be back on the agenda. Jobs and investments will follow. I was looking at the manifesto of the BJP. They promised 1 crore jobs, 3,000 rupees for every female who needs it, for women who need it. That's double of what the state government was giving. There's an unemployment stipend as well. So they have to now deliver on all those expectations that you're seeing there. Yeah.
Well, let's see how all of this were to shape up. And let's get in our experts now to try and understand what is it that they are making about it. Akshay Bhagwat on the technicals, Lancelot Ikuna on the fundamentals. Akshay, thanks so much for joining in. What is the market texture telling you today?
Yeah, so, I believe it was more of a price reaction on the domestic news. And now, again, the markets would start looking at the global factors once the clarity emerges tomorrow. Clearly, it's more of a range-bound market with 24,000 being the immediate support, which the Nifty is kind of clinging on to. But in case it does break these levels, then again, we need to be looking downside at 23,800 or so. And if the market has to catch momentum, 24,300 is the first benchmark, which it has to break past, then we look for further momentum. So it's a range-bound market. Trade the levels, 24,300 on the upside and 24,000 on the downside. Either way it breaks, you get a direction opening for the short-term scenario.
Okay. All right. Akshay, any picks this afternoon?
Yeah, so
Pharma is the sector which is buzzing today, and both my picks today are in the pharma space. Glenmark Pharma is the first stock I choose. 2393 is the current market price. Your stop loss on this buying position is 2330, and you look forward for targets of 2500 to 2550. The second trade is Laurus Labs, where there is a clean breakout on the technical charts of a resistance zone, and the recommendation is to buy Laurus Labs at the current market price of 1167, looking for potential targets of 1230 and 1250 with a stop loss of 1128.
Okay, I'm going to get Lancelot in a bit as well, but Lancelot, hold your thought, because some of that flavor today is elections, right? And we have Vedika Sood joining in from Kolkata, Deepak Bopanna from Chennai. This is at the heart of all of the action, and thank you guys. You'll have had a long day. I'm sure all of the action still developing. Vedika, I'm going to come to you first. Where are you exactly? Are you outside the TMC residence, or have you shifted now to the BJP headquarters where all of the action is?
I'm outside the BJP office, Tamanna, and inadvertently this is how you look with gulal on your head when they're partying inside after such a landslide victory. Of course, counting still on, but all indications that the TMC's bastion, Bengal, is going to the BJP. I'm going to ask my camera person to show you what's going on inside. If you can see, complete mood of party jubilation inside the BJP office here. There's loud music playing for a while. It looked like a discotheque, for the want of a better word, with everyone dancing away. But there have been sweets that are being distributed. Jhal Muri, which was obviously a very controversial issue over the last few weeks, distributed here inside the BJP office. Lots of selfies being taken, lots of leaders coming in, wearing white kurta and pajama, looking absolutely fresh. But within moments, the gulal descends upon them like it has over me, and they turn saffron in color. But let's just bring you some facts. You know, in 2016, Tamanna, there was a quiet entry by the BJP here in the state of Bengal, single digits. Then in 2019, it went on to become more, of course, in terms of 2021, double digits. Now triple digits. So it's been a huge win for the BJP here. It talks so much about their organizational skills here in Bengal. Contrast this to the Mamata Banerjee's residence, where I was all morning. Complete silence from 5:30 in the morning. I was there outside, camping outside her residence, about 150 meters away from her home. There weren't any carders there because she'd asked them to be at the counting booths, but complete silence in contrast to what you're seeing here. The big leaders streaming in here, Tamanna. This is a big win for the BJP. Many see this more as an anti-Mamata Banerjee vote than a pro-BJP vote as well. Of course, anti-incumbency has had a huge role to play, and the women have also been the change makers when it comes to this vote, this mandate for the BJP in the state of West Bengal. Back to you.
Thanks for that. And that's the update from Vedika in Bengal. Now, Deepak, you are outside the premises of the man who sprung a big surprise there. What's the mood out there?
Well, it's definitely not of jubilation and celebration like what Vedika is experiencing. And, as a journalist and anybody in the state would really want results which are clear in nature. Because one, it would mean very smooth and efficient governance. Because when you have a fractured mandate, and trust me, I know it, because multiple times in Karnataka when I've been covering extensively, has been, a fractured mandate, and that always gets ugly. One is for the people of the state, and other for reporters like us who need to be anticipating who the calls are being made to, where are the resorts that are being booked. Right now, it's 108, 109 seats. That's where, actor Vijay's party TVK is really stuck at. They need about 10 to 12 more to really feel comfortable with an absolute majority. Just to take you through the scenes here, it's a scene of suspense that remains. Yes, there's jubilation. They didn't anticipate, or probably many political pundits didn't anticipate that actor Vijay would be getting this sort of a number, which is absolutely big for a debutant who's only, of course, been in active politics now for the last couple of years, challenging two mega parties like the DMK and the AIDMK, and coming out with such a huge blow to both of them, especially the DMK, really bearing the brunt here, and the AIDMK as well is bleeding from its core constituencies. But the fact remains that they need about 10 to 12 more. Where are they going to get that from? They need to, of course, probably break away some of the allies from the AIDMK or the DMK. Who is it going to be? That is the suspense that will linger on for the next few hours. Back to you.
Okay, now so that's interesting, Deepak, because one would have thought with the kind of numbers that TVK has pulled through, it would be astonishing. But thank you so much, Deepak and Vedika, for bringing us all the reports and keeping that energy up. The import of the election results are manifold, and we're talking about West Bengal now, because if you think about the kind of change, the first time BJP has come into West Bengal, what does it mean? How does industry look at it? We're speaking now with Unmesh Chaudhary for more on that, and he's very kindly agreed to speak with us. Mr. Chaudhary, just to get a sense of how you're seeing this election result as someone from the state and as someone who is looking at what it means for the state in which you run your business.
Yeah, good afternoon. I think it's a very strong mandate in favor of BJP. It's a very strong mandate in favor of development, I would say. Bengal has been a state which has been underinvested. There has hardly been any infrastructure development. There's been very less industrial development, I would say. Not many companies have been on the same boat as us who have invested in the state. But there have been so many challenges. We don't have any industrial incentives and so on. So these are things that are really very positive, and we are extremely excited about the prospects of the state going forward. We believe that there will be an overall growth, an overall development impetus given to the state. And the beauty is it's a very clear mandate. It's a very strong, very clear mandate that has been given to the BJP this time for the first time, and I think the industry is extremely excited about it.
Unfortunately, we've gotten you on a little bit of a patchy line, but I'm going to try and ask you a question nonetheless. From the perspective of the state and policies that might need to change from your perspective, what ranks at the top of that list that you would hope to be taken up in the very near future? And if you could be a little louder, that would perhaps help.
Sure, absolutely, Neeraj. So I think, in terms of the number, the prioritization of the things that need to be changed, it's very difficult. It will be all like 1A, 1B, 1C, because all of them are first priority changes. But I think job creation and infrastructure development, I would probably put two of them together. Job creation by way of larger industrial impetus, and ultimately jobs are going to come up if there is industrial growth in the state. Bengal used to be an industrial capital and engineering capital of the country, and it has lost over the last so many decades its position. So now it's the time that we need additional industrial investments here, and that will lead to job creation. And the other is infrastructure. Infrastructure in the state has been crumbling, and we need that's the most important thing that is required in this state.
Umesh, thank you so much for taking the time out. Unfortunately, a patch land, but when you're back from the US, we'd love to do a video conversation with you on this in detail. Really appreciate your time today. Abhijit Roy, MD and CEO of Berger Paints, with us on the show as well. Abhijit, great talking to you. Neeraj, good afternoon. And could this be the start of many good afternoons for the state of Bengal? Simply because every leader who's your peer, who you've spoken to through the day today, has said that there was a case of underinvestment in infrastructure, in job creation activity, and all of that is something that they are looking forward to change. Would you second the same? Would you add on or supplement that thought?
Yeah, so I think, these are good times. Hopefully we are looking forward to
a lot more development happening on the economic front in West Bengal. West Bengal, unfortunately, for the last almost 49 years, 34 years of the left rule and 15 years now of Trinamool, most of the time it has been at war with the center. And so a lot of the development which could have happened, suffered a bit on account of that. So now with the double engine Sarkar coming in place, we would expect a lot more spends happening on the infrastructure side, and the completion of jobs which are still incomplete, sort of like the metro rail project, which is small tracts of land which are pending to be acquired, or it just needs speeding up a little bit, and I would see a lot more happening there on the infra side. As far as other areas are concerned, I think two big areas stand out. One is the fiscal incentive and an industrial policy which deals with that. That is missing as of today. In fact, the West Bengal government actually passed a retrospective act saying that all incentives given earlier also stands cancelled. And then that went into the Supreme Court. There was companies like Haldia Petrochemicals which went into a fight with the government. They actually won, but still didn't get the money. So, that sent a negative sentiment down, the investors. So that needs to be corrected quickly, and those have to be honored. And more importantly, a new fiscal policy has to be, brought in place, which should give an impetus to the manufacturing sector in this state. There are a large number of MSMEs, but there are big missing is the big anchor investors which are required. The last one, of course, was Tata Singur, which went away. And since then, there have been a dearth of big time investment in this state. And the reason was, of course, was, this incentive missing, also getting large tracts of land. The new government has promised that they will do enough and more for employment generation. One of them will be, of course, the industrial side, which I just spoke about. The other side, which is of greater importance to the state of West Bengal, there are a lot of talented youth here. Bengalis typically, they give a lot more weight on studies, and it is a very inborn thing. One is culture, singing, dancing. That is a very, very prevalent thing at all houses, including mine. And the other one is giving a lot more stress on studying. Lots of books, magazines you will find much more contextual in that way. Reading a lot of things. Lot of journalists therefore.
That is true. That is true, Abhijit. I think any of us who worked in the profession will have seen a outsized share of Bengali representation in newsrooms. I just want to understand from you, what are the expectations and the timeline that industry wants to give this new government? What are you hoping to see? And are you also hoping for opportunities where the talented youth that you describe can find that kind of chance within the state itself?
Yeah, I had a occasion. I'm also the president of the Bengal Chamber of Commerce for this year. So it's an opportune moment that way. And we got an interaction, we had an interaction with Mr. Sanjeev Sanyal also, just a few months back. And there are a lot of plans which was there on the anvil, which was put sort of, I would say, I would see that coming to fruition now. One of them was, making the city of Calcutta very attractive for youngsters to stay put here. There is this Ganges, the riverfront is likely to be beautified quite a lot. And then we would try to attract and retain the talent here in Calcutta itself. And for that, we need, investments in GCCs, possibly in the IT space, the services. As you know, Tamanna, a lot of these youngsters, they are all staying in Bangalore, in Hyderabad, in Pune, sizable population of Bengalis all over this place. They are going not because they just love those places, but because, there is lack of opportunity here. If that builds up here in Calcutta, and more so if they are near their friends and relatives, and it's a nice place to be in, with opportunity, then I'm sure, most of them would love to stay put. And that's the promise which BJP has made saying that your kids will not have to go out of this state in search of job. We will try and create those here. So we expect, therefore, some amount of work happening in that direction in this state.
Yeah, Abhijit, so very well put. And good afternoon, Alex here. The thing is, from the perspective of the centre and the policies that it wants to engender and get the states to employ, is to have a competitive federal structure, to say that you create policies and you create frameworks that will get companies to come and invest. And so from that perspective, you have a state that has lagged behind, that has a fresh new mandate and a lot of promise, but it's got a lot of ground to cover, Abhijit. Why would a company, and you spoke about Singur. Now this is something that is already so far back in the past that I think if I speak to my 20-year-old colleagues, they'll ask me what I'm talking about. So therefore, how much ground will need to be covered in the very near term for that script to flip?
Yeah, so that is true, because there is a perception issue, and the continuance of the policies is something which people would look forward to. So that is why it is so important that the center and the state gets aligned, and that fortunately will now happen, and it will push this objective in the state. I'm sure the new government led by the BJP will have to focus on this part of the perception change which they have to bring about on the state of West Bengal. And so initially they will try and get this done through some big ticket announcements, possibly doing something interesting, some companies which will come in and hopefully invest here in this state. So we look forward to that. First of all, the fiscal policy and the trade investment policy itself does not exist. So surrounding this state, is Orissa, Northeast, which have very attractive industrial policies, which are fiscal incentives given to the companies. In fact, we also went and bought a land in Orissa and setting up a plant factory there. We do have a plant in Panagar, but now we hope that this is something which the state government will look into and will announce a fiscal incentive for attracting the companies and to come here and invest in state of West Bengal. It has an advantage, or it has many advantages. One of them is the large market size, which is the largest in the East by far, and therefore, the companies would love to invest in this particular state because the market is close by. The second is, talent, which is available readily here and at a very reasonable price. So that is also there. The raw material which is available, especially on the food and agro processing, it is one of the largest state producing large number of items. So there are opportunities here for this state which has to be tapped into, and I am optimistic that things will turn out for the better.
Yeah, I mean, the potential is definitely there. I think in the span of Indian history, West Bengal was at one point a financial powerhouse. There's no reason why it can't happen today and have all its engines firing. Thank you so much, Abhijit Roy, for joining us and speaking so frankly and candidly. You rarely see corporates wanting to speak on political outcomes, but this is more than just an election, isn't it? In terms of the impact it could potentially have on the economics of a large state. Shankar Iyer, author and columnist, joining in. Shankar, thank you for your patience. We wanted to capture all of those corporate voices and what they think, because they don't always come out and speak so openly, especially about politics. You know how squeamish corporates get, but you heard a slew of voices talking about opportunity now getting unleashed. Do you think that there are very high expectations, or can change really take place?
Well, change can take place in a steady pace, as has happened in Assam and Tripura. They came with a plan and they executed the plan. I mean, typically this beginning will be made with infrastructure. West Bengal sort of is hurting for good infrastructure in terms of roads, power, the incomplete projects. It also has great potential in new age technologies. So for instance, it has a large enough, it's a delta, so the tidal power, solar. I mean, all kinds of things can be done there. The question is whether they are able to fix the security issues first, immediately, and then progress the infrastructure projects. The second part of it is Bengal has a large agricultural sector, which for some reason or the other is stuck on one kind of aspect or one facet only. So there is potential for introducing industry into the rural districts of West Bengal for food processing to start with, so that the yield from the land can be improved. If you know, Tamanna, basically all of the assets that belong to the state must yield returns commensurate to their potential, and that is what gives the state and the people the income and the GDP. So in West Bengal, what the problem has been, the land has been left fallow in the sense of realizing the potential. If you go back in history, I think the Birlas, Aditya Birla group, particularly Mr. Aditya Birla, had to leave Bengal and Kolkata, and Tata Singur, which was 20 years back. I mean, you know, for people of my vintage, it was like the sign of hope that finally the left had woken up to the potential of investment in West Bengal, and then that got messed up. And 15 years, West Bengal has hardly seen anything major. I mean, if you travel through Bengal, the thing that hits you is that it is at least 30, 40 years behind the rest of India in terms of.
But this is so true, Shankar, which is why sometimes an election result is seen or viewed beyond the prism of just politics, and this party won, this party lost. I think with West Bengal, their aspirations truly there. I'm so sorry. I'm going to have to wrap it up. We want to invite you back for a longer conversation, but with 30 minutes to go for markets to close, I'm going to have to focus on that. So apologies for that, Shankar, but beautifully explained on what the perspective is. I'm going to Lancelot Decuna, and Lancelot, again, this is one of those days, so I'm going to do a lot of apologizing to you too for making you wait that much. But it was interesting to get all of those corporate views coming in on West Bengal. It's rare that you see corporates speaking so openly. Do you think the markets, though, are looking at broader issues over here, and this will be at the most a sentimental booster for some time?
Good afternoon. Well, I think, it is a sentimental booster as far as markets are concerned. But more importantly, I think for the aspirations of people in West Bengal who are looking forward towards development and growth and maybe jobs creation, which is the key issues that have been raised, I think this probably brings in the winds of change to be able to execute and improve on these aspects. So that is very positive for people in Bengal, as well as many of the companies which are located there. So that sentiment will also drive businesses to start operating more out of Bengal and maybe making further investments there.
Okay. Do stay with us. We have to slip into a very quick break. And by the way, the markets have erased quite a bit of the gains that they had earlier today, now trading with gains of about 0.4% for the Nifty 50. We'll be back on the other side to talk about the potential reasons why and individual stocks that you should watch out for. Stay tuned.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
He has been tracking markets for over a decade.
Back with India market close right here on NDTV Profit. Now the bank Nifty is in the negative, and we've been maintaining through the day that yes, the election results are amazing, astounding, great, etc. But the market has bigger fish to fry, and I think Brent prices, if indeed you are frying the fish in Brent oil, then you have a problem.
Please no.
Then you have a problem because the bank Nifty is showing that Brent above 110, and I think the Nifty bank has come off. Nagaraj Shetty of HDFC Securities and Siddharth on the technicals, Siddharth Khemka, head of research at Motilal Oswal on the fundamentals. Gentlemen, both of you, thanks so much for joining in. And just the intraday dip on the bank Nifty, Nagaraj, brings me first to you. What's the trade there on the Nifty or the bank Nifty? Is there a trade, or would you rather trade specific stocks?
Hi, good afternoon. Yes, market is heavily volatile at the higher levels. We have been watching that market. Nifty has been moving within a range around 24,200, 250 has been a strong resistance at 23,800 is offering a strong support for bank Nifty as well. Today we have seen some massive decline from the intraday highs somewhere around 55,600 levels. The overall chart pattern is still positive, though there is a high volatility in today's session. There is a higher possibility that we could see Nifty and bank Nifty bouncing back from the lower levels, at least by today or by next, at least short term. And the trade setup has to be positive on the long side for the both bank Nifty and the Nifty as well.
All right, we'll circle back on individual counters, but for now, let's go across, I believe, to Siddharth Khemka, just to get a sense on some of the big movers today. And we were talking about, for example, a Bharti Airtel, which is down about 3%. News in the telecom space, of course. Is it a case of one man's poison is the other one's remedy, where Vodafone Idea gets a break, but the other one gets sold into? So would you use opportunities to buy? I think you're on mute, Siddharth.
Sorry. So good afternoon to everyone. And so I think there's a mixed case. I think definitely a positive relief for Vodafone. But what we are reading into it is that this could, in a way, lead to a further delay in the tariff hike, which is what I think the street is reading into this release that Vodafone has got, and hence some profit booking that has happened in Bharti Airtel. But our view on the entire telecom space is constructive. We believe the IPO of Geopolitical, that can be a further trigger for the entire sector. And in a space where Bharti continues to report strong numbers, very strong cash flows and improvement across regions in India as well as Africa. So I think, yes, we are positive on Bharti Airtel, and definitely any decline because of what is happening to some of the other players in the sector, it definitely makes a sense to keep on adding at lower levels.
Got it. Okay, keep on adding at lower levels. Now, what else is buzzing? There's quite a bit, but more importantly, what are the dealing rooms focused in on? Those are stocks that could buzz in the future as well. Soumit Sarkar joining in to tell you about what he's hearing on the street. Good afternoon, Soumit.
Good afternoon, Alex. A few stocks that dealers have highlighted in trade. Firstly is Newland Lab. Now that counter is up nearly 6% in trade. And if you look at what dealers are indicating here is that prominent HNIs have been accumulating this counter in trade today. Dealers indicate that the company's peptide block has already received commitments from multiple clients. So that is one positive news coming in for Newland Labs. Secondly, for Nalco, there are buy flows on the large HNI desk. Dealers indicate positive sentiment upon MSCI inclusion, upon potential MSCI inclusion that is expected next week when it comes to Nalco. For Welspun Enterprise, there are buy flows on PMS desk. Dealers expect positive news flow regarding the water business demerger of Welspun Enterprises. So keep an eye out for this name as well. And lastly, when it comes to Lupin and UPL, a paired trade is what dealing rooms have indicated to their clients. They are asking their clients to buy Lupin and sell UPL based on Q4 numbers expectations.
Okay. Let's go across to one of the gainers today. A quick view on it. Valor Estate in focus, and just look at that stock. It's zooming. Now, why is that? Because the Bombay High Court has dismissed the Salt Department's appeal, ruling in favor of Mira Land. Now, what is this whole story? Mira Land Developers is a wholly owned subsidiary of Valor Estates, which holds nearly 205 acres in Bhayandar, Thane. The Union of India via the Salt Department had disputed the land title they had. A civil suit was filed in 2011. It was dismissed by a Thane court in 2018, and the Salt Department appealed before the Bombay High Court, which has now been dismissed as well. So this is a land parcel they have now, which has put them in focus. But I actually want to ask Siddharth Khemka not just about Valor, I want to ask about Godrej Properties as well. The way real estate has performed in Q4, do you think it reduces some of the doubts that have been in play ever since the West Asia crisis began?
Yeah, I think overall real estate saw some kind of laggard in the previous few months, but now with the Q4 numbers, we are seeing that interest coming back. The only overhang that continues to remain is the inflation-led expectation of a rate hike anytime in the next few months. So that could kind of make the sentiments for real estate a bit negative. But I think some of the players which have fallen sharply, the valuations look attractive, and the execution that has continued at a good pace. So even demand is now improving at some of the key regions. So, for example, Godrej Properties, as you mentioned, we have seen good launches apart from the Mumbai region where their stronghold remains. And even in terms of the collection that grew, that's expected to grow pretty steady in the next few quarters. So we believe one can selectively look at select real estate names, A in the Mumbai region, B in the Bangalore region. So stocks like Godrej Properties, Prestige Estates, these are some of the stocks that we like from this space.
Got it. Okay. Well, so much more to talk about. Should we talk about the stock of the day first? Because first here on, BHEL is arguably one of the key stocks of the day simply because of the surge that it has had after the uptick that it has enjoyed in the last few days and weeks. Now, on the back of a strong Q4 numbers, which may have had some few one-offs as well, Varsha joins in to tell us all about BHEL and off the highs of the day, Varsha, but stunning moves nevertheless.
Yes, absolutely. Numbers did beat estimates when it comes to Q4 FY26, but there were some one-offs which has led to this strong set of numbers that we are seeing for the company. Well, to speak on the numbers, net profit did beat estimates by 62%, most since Q4 FY22. Also, the EBITDA beat estimates by 45%. EBITDA margins were at around 14.2%, which is highest in at least the last 3 years. Now, what led to this beat? Of course, there was a provisional reversal. The company had booked some losses earlier. Now that didn't materialize, and hence back to profit. Other expenses also was down 19% despite higher revenue. This has led to the sharp uptick in margins that you're seeing. Of course, the net profit beat that you're seeing is partially led by higher other income, which grew 58% year on year to 252 crore. Now, talking about the segmental, if you see, power, overall the numbers were up almost 36% when it comes to revenue. EBITDA was up more than double, I would say. PAT was up almost 154%. But talking about these segments, if you see power segment, over here the growth was almost 54%, though industry segment revenue was flat. Talking about the EBIT margin, this for power it grew from 5% to 20%, huge uptick here. While for industrial, if you see, there was a downtick from 31% to 24%. So overall, power at the core business won here. Now, what Kotak is saying is, of course, if you say the numbers look strong, but 750 crore was due to the one-time expenses or the one-time factors, that is forex gains and the provisional reversal that the company has seen, and this has led to artificially increase in the EBITDA margin by around 3.6%. So overall, a strong set of numbers, but yes, there were some one-offs which has led to this sharp uptick in numbers.
All right. Talking about the share price, thanks so much for that, Varsha. Nagaraj, a question to you. BHEL still holding with gains of about 7%, though off the high point of the day. If you manage to buy it earlier, do you continue to hold? Do you take money off the table? Do you initiate at these levels?
I think it has moved up very well, no doubt about that. 250 to almost 370 level, exceptional move without showing any reasonable downward correction in between. I think at the higher levels, there is some profit booking is emerging. Better to exit at once from the higher levels, and there is always be a correction at the lower levels you can enter. I think the overall chart pattern remains positive. There may be some consolidation at a higher level, but eventually after the consolidation, the stock could move up further. And 400, 410 is going to be the next hurdles once it surpasses in the next near term.
Okay, just want to get a view from Nagaraj on the charts on a BHEL as well, which he said was pretty decent. But Siddharth, just talking about those one-offs, which have boosted the numbers optically a little bit. Of course, strong set of numbers, but some of those provisions have definitely helped, or the removal of those provisions have definitely helped, isn't it?
We don't have coverage on BHEL, so we don't have a full detailed analysis. But I think if you look at some of these capital goods companies, especially the government PSUs, Q4 generally tends to be a much stronger quarter, and especially for BHEL, the past quarterly numbers, I think, a bit patchy, and this is where these one-offs kicks in once in a while. But definitely what we see is that overall view on capital goods space is very positive, driven by the strong demand outlook for both power, some of the other manufacturing sectors, and we believe that exports as an opportunity is also opening up out of India. So overall view is positive on the space, and some of the other companies which we have under coverage, I think stocks like Siemens Energy, ABB, L&T, some of these stocks is something that we like in this space.
Demand numbers, it's a small name, but the Q4 numbers on your screen, net profit up 25%. I wonder if the stock is showing any kind of a reaction, but good decent numbers, flattish for now. Siddharth, the one question that I had for you was on MTAR Tech. I mean, the stock was expensive at circa 4,600 when you guys came out with a note with a target of 6,000. It was 6,600 at 6,600, 290 times trailing 12 months PE. 120 times, 130 times 1 year forward PE. I mean, these are expensive numbers, and yet it saw buying. What's next? Would you, if somebody had investments in MTAR, is it prudent to take money off the table of such an expensive stock and maybe put it into some of the others? Is a stock like TD Power or some of the others attractive bets now because of the valuations, or are you still constructive on MTAR?
So Neeraj, I think a couple of things. The EPS growth, I think that is still pretty strong. So for FY27, our earnings estimate, we are estimating a 120%, 118% to be precise, earnings growth, and on that P is of about 92 times. So still, I think about 95 times. So still at a peg, I think it is comfortable. But someone who is already invested definitely makes sense to part book profits, because we have seen even in the last few quarters that stocks which have moved up sharply and are much above in terms of premium valuation, they tend to do some consolidation despite, and even the margin for error remains very small. Even if a small miss in any quarterly earnings going forward, then the stock punishes, the market punishes the stocks a lot. So while we remain very positive, given the sharp uptick, there definitely makes sense to take out some money off the table. Some profits should be booked at current.
Okay, book some profits on MTAR Tech. Now, the update from the legal perspective in the Adani resolution plan for JP, this is something that has been heard by the NCLAT over the course of the last several days, and there's an outcome today. It has dismissed Vedanta's plea. Let's get in Nimit, who studied the detailed order in this for the key takeaways. Nimit, what stands out here?
Yes, so the Vedanta's case has been dismissed categorically on all grounds as per a review of the judgment that we've seen that's come out today. The court earlier in an oral order completely dismissed the case that Vedanta has made and upheld Adani's resolution plan at 15,000 crores odd. Now, the key question here was Vedanta was saying when my plan is 17,000 crore and Adani's plan is 14,500 to 15,000 crore, then how can commercial wisdom dictate that their plan get approved over my plan, which is bigger? The NCLAT has clearly said that it is not simply the value that determines what plan can be approved. Commercial wisdom goes beyond that. It looks at upfront payment, which was higher in the Vedanta plan, higher in the Adani plan, and it also looks at overall timeline, which was higher in the Adani plan. It has also gone into technicalities to find that Vedanta had made modifications to his plan beyond the bidding process, which then cannot be allowed because it makes the process unfair. Overall, it found that it was completely there was no arbitrariness, and it was completely fair the way the COC functioned as well as the way the resolution professional functioned. Now Adani is clear to go ahead and implement this plan. Of course, we await any instruction or understanding on whether Vedanta will appeal this to the Supreme Court.
Okay, thank you for that, Nimit. So, Adani Enterprises in focus, and of course, standard disclaimers there on your screen. A few minutes left to go for markets to close. Nagaraj, do you have any BTST ideas out there?
Yeah, hi. I have two buy-side stock ideas. First one is Ujjivan Small Finance Bank. The chartically Ujjivan, after showing a consolidation phase, it has bounced back very well, a sharp upside breakout from near 56 level. The overall chart pattern is looking positive. Higher tops and bottoms is on the card. Volume and RSI is also indicating more upside. Currently trading around 61.28, 61.30. One can look to buy at this point of time. Immediate target would be around 65. One can place a stop loss at 59. Second one is Anantraj from a real estate front. Anantraj has been consolidation phase recently. It formed a bottom reversal, higher bottom, somewhere around 435, 440 levels, bounced back very well. Currently trading around 509 levels. Overall chart pattern is looking very positive. Technically, on the weekly chart, it is placed at the breakout of a downsloping trend line. So currently trading around 509, 75, 510. One can buy at CMP. The immediate target would be around 535. One can place a stop loss at 495.
Okay, Anantraj 509, one clear data center play out there for sure. I mean, one of the few, of course. The other one is this whole optical fiber play, which a lot of people are talking about because Prismian con call suggested that there will be a fair degree of uptick for optic fiber players, and therefore the likes of Sterlite Tech, maybe an HFCL, maybe some of the others, if they are active, that could be the reason that the global leader Prismian, their call was very solid, and no wonder there. I just saw Sterlite Tech, if I'm not wrong, up about 5%, 4.99% higher. I wonder if HFCL is higher as well. This is because of the call from Prismian and very strong reactions. 8.5% for HFCL as well. Nagaraj, any thoughts here?
HSL has been a phenomenal rally, no doubt, without showing any reasonable downward correction in between, continuously moving up. We have seen some small decline recently, but bounced back very well. That is in a strong uptrend, and no doubt that though placed at the higher levels, still there is no indication of any reversal pattern building at the highs. So trend remains up, more upside is likely. I think 340, 345 is going to be the next hurdles to be watched for the stocks, at least for the 1 month.
Okay, stay on with us. Let's talk about some more stocks that have been moving. Sona BLW specifically under pressure as multiple brokerages have downgraded the stock after the results have come in. Optically, the results seem fine, a bit of squeeze on margins, but the views that are coming in from brokerages are quite negative. Puneet joining in for more details. Puneet, what are they saying?
Well, thank you for that. It's definitely a very interesting quarter for the company. Met all estimates across brokerages and analysts. But what has been interesting is the future, and I think that's the reason why there has been these cuts. ICICI Securities have actually downgraded the stock to an add from a buy rating earlier, but they've actually increased the target price to 660 versus 575 earlier. They've highlighted that Q4 revenue was slightly above their own estimates. The global supply chain is currently under constraint, and Sona actually has been a beneficiary with new order wins being able to supply at this point of time with a healthy order book. But the stock is up 22% just in the last 1 month, and hence they don't see that there can be a material upgrade from here. While they are building in a 23% EPS growth CAGR over FY26 to 28, valuations seem rich, and I think that's the key aspect. So other brokerages like Kotak has also downgraded to a sell versus a buy earlier, but the rating is 525, the target price versus 500 earlier. So you've seen another brokerage increase the target price while downgrading the stock. They've mentioned that there has been strong momentum across verticals like traction motors as well as the newly acquired railway business. They've also won orders, but there will be a higher growth in low margin products in FY27, and hence no margin upgrades expected, with the stock already moving up. The similar view here as well. And JP Morgan, the most bearish across the three, target price of 495 is what they have. And a similar point, the 28% move in the last 6 months versus Nifty being down 7%, and hence don't see EPS upgrades in FY27. That seems to be the common thesis. Stocks also not cheap by any means, trading over 32 times price to earnings. So that's the view on Sona BLW. Results have been quite strong. Commentary is stronger, but brokerages don't see material margin upgrades in FY27.
Okay, Sona BLW, they're feeling the heat. I want to see what Sundaram Fasteners is doing. They also reported results over the weekend and had quite a strong kind of move in the morning. Have gone off their highs of the day, but still about 4% up. Vodafone Idea, another stock in news that we should look at because a couple of things happening, right? AGR relief, and then NDTV Profit also learning from sources. They're in talks to raise up to 35,000 crores via banks. And an SBI-led consortium is now considering lending to Vodafone Idea. Banks are also considering extending working capital and term loans to V. Bankers may approve fresh lending post-government relief on Vodafone Idea's dues. And the reduction of those owed dues has also come in post-market hours on Thursday. I want to actually ask Siddharth Khemka how he's looking at Vodafone Idea right now.
Yeah, so Tamanna, if you look at, we just discussed, I think this is a welcome step, relief for Vodafone, which they have been looking for some time. And I think the cash flows, that is a big issue. Operationally, things are improving, but the continuous market share loss, that is a cause of concern. Plus, I think there was a big challenge in terms of the cash flow, the debt as well as the AGR due. So on the AGR front, there is some relief, and now with the banks accepting to give the working capital requirement, I think there is some lease of life that will be infused into the Vodafone. So right now, although we are neutral and we are watchful of how things improve from here. So key monitorables are the debt reduction. Is there any tariff hike that they are going to take? And finally, the stable subscriber trends. Those are some of the key monitorables in the near term.
Okay. Nagaraj Shetty on the charts, Vodafone Idea, and if you do a comparison with Bharti Airtel?
I think Idea is showing some signs of improvement after a stellar, sharp decline. And I think gradually, steadily and gradually, it could move up further. Around 11:30, 11:50 is going to be the next hurdles to be watched. On the other side, Bharti has been in a constant up move recently. We have seen higher tops and bottoms over the period of time, currently showing consolidation at the higher level, some weakness. I think that is going to be short-lived. We could see Bharti bouncing back again from the lower levels in the near term.
Top gainers on the benchmark Nifty, 53 of them, 4 of them stand out. Adani Ports, Adani Enterprises, Eicher Motors, Geofinance. And let me throw HUL into that list as well, which is gaining about 2.5%. So though the benchmark has given up quite a bit of ground from the high point of the day, these few stand out. And by the way, by ground given up, I'm talking about 177 points from the top. Nagaraj Shetty, from the names that I have listed out, what stands out that could take it to the next level? What would you add at this moment despite the run-up?
You're talking about any specific sector or
individual stocks? I've just listed them out. The top gainers on the Nifty 50, Adani Enterprises, Adani Ports. You have HUL, you have Eicher Motors, and you have Geofinance.
Adani Enterprises, Adani Ports, HUL, Eicher are looking very positive. I think looks like the worst period seems to have ended for these stocks, and important bottom reversals is in the force. I'm expecting more upside in these stocks in the near term.
And Siddharth, a quick word on Adani Enterprises, the results, the EBITDA uptick that they are talking about. What does it all look like for Adani Enterprises?
So Neeraj, unfortunately, we don't have coverage.
Okay, what about
some of the
ports then, Siddharth? Siddharth, what about Adani Ports?
Yeah, so Adani Ports, I think, came out with strong numbers and something that we like. We have been recommending a positive view. Even I think Adani Power that has seen some interest because of the overall demand that is being witnessed in the power sector. But Adani, if you ask me, Adani Ports, that is a pretty beat on estimates. Outlook remains positive. And overall supported by the ongoing capacity addition plus expansion into the value-added segments such as logistics, we believe that the company can outpace the industry growth, and hence we see almost 18 to 20% EBITDA and PAT CAGR, plus our target price is at about 1900, giving a further, I think, 10 to 15% upside from current levels.
Hey, Siddharth and Nagaraj, thank you so much for joining us this afternoon, and we're actually looking like we're ending the markets better than when we started the show. Some climb up at the last 1 hour or so. I want to pull up the intraday for the Nifty if we can, 120 points up. And the advanced decline ratio, yeah, no, absolutely. The advanced decline ratio actually has also improved. Let's pull up the intraday of the Nifty. Let's pull up the advanced decline line chart. That will give you an idea of what's happening. So you've climbed up a tad bit from the low points of the day, but steady. Sell on rise definitely from the high points of the day. So not that kind of a roar once the West Bengal elections were digested. A bit of an improvement here, widening towards the end. The Nifty heat map will also show you that the pressure, if it's coming, is coming from IT stocks today. So there, a bit of pain. Kotak Mahindra Bank as well showing a bit of a downer as far as the Nifty heat map is concerned. And you have Adani stocks which have been firing today. HUL doing pretty well as well.
Yeah, so that's the story with regard, and finally it comes through. So we were talking about this towards the end, right? Adani Ports moving up. There was a block earlier today,
yes,
and some key buyers as well might have emerged. We'll come to know about that soon enough. But 5%, Eicher Motors doing well, Geofinance as well as Adani Enterprises, HUL up and about, Reliance Industries. When we see the contributors chart, you'll see that it's lending quite a bit of strength. On the downside, you have Kotak Mahindra Bank, Bharti Airtel, and there you go. The contributors chart tells you that HDFC Bank, RIL, L&T as well as Adani Ports contributing the most ground, but 50 points just by itself. Reliance Industries lending quite a bit of support.
So a couple of reasons there perhaps. One of them also being that crude has come off after we know that Operation Freedom is in play, or whatever versions of it. Also reports of Iranian super tankers making its way out of the Strait of Hormuz. That means maybe some kind of understanding between the two sides to at least some allow some passageway. I want to pull up the sectoral heat map if we can, just to show you what's worked and what's not worked today in trade. Nifty Realty zooming. So you have a Valor Estates, a Godrej Properties, some of them that have really helped. Healthcare also doing well, metal stocks doing well. IT was the only real drag, about 1% down. PSU banks have also contributed. The top gainers and losers in the broader market should also give you a picture of what was in vogue today. On the losing side, Kajaria Ceramics actually had some pretty good notes on it, but has seen definitely some profit booking. Sun TV down to the election results in Tamil Nadu, I would say, with DMK. It's a mixed bag right now. We don't know who's forming the next government, but DMK doing much worse than was expected. Sona BLW also coming from negative brokerage roads. Mazga, I would say, also down to profit booking because it started off strong.
Profit booking on Avenue Supermarts as well. So decent set of numbers, but the outlook not looking great. But Dr. Lal PathLabs, wow, this could well be contender for stock of the day. SIS, we pointed this out, right? A turnaround quarter and the likelihood of FY27 looking much better for the security company. HFCL, we spoke about that as well. And Vedanta, Chola, as well as Equitas on the back of earnings. So it's telling you that if there are positive developments on the earnings front, that is being rewarded, and how. But the underlying question marks about movement of goods through the Hormuz Strait continues to be the overarching concern.
Before we wrap up, I want to just show all your West Bengal stocks because you know that blending of elections and markets needs to be seen. It's not as if market participants didn't have one eye on elections through the day. So these are companies based in West Bengal.
Wow.
And look at how they're doing. Shree Cement 2.5% up, CESC about 7% up, Bandhan Bank nearly 3.5% up, and there are a whole host of them, right? Imami, Century Ply, Texmaco, all of them in the green. The Texmaco has come off a bit. RK Forgings and Birla Corp about 6% up today.
Good spot.
You're going to have some of that maybe flowing through tomorrow as well, because opportunity has opened up and we've had a whole host of corporates on the show coming and talking about it. But for now, that's all the time we have on this edition of India Market Close. From the team that put the show together, thank you for watching. All the action continues on the other side.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
Economy, business, world, technology. Noise filtered, numbers decoded. Insights that rewire your worldview. From governance to growth, we connect the dots. Your daily edge, your global advantage. India Business Report with me, Gauri Dwivedi, weeknights on NDTV Profit.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to. Get the management to answer questions relevant to you. Watch Know Your Company weekdays at 11:30 a.m. to understand your next big bet. New year, new power panel, India Market Open, now in its boldest lineup. This is where the trends get tested and stocks get conviction.
I'll recommend a buy call on a stock only when I'm fully convinced on the stock. With a table-thumping buy.
And when the street wants the levels, he brings the chart.
Charts speak the truth, and I deliver the levels with no frills.
Parag Thakkar and Kush Bohra are now part of the morning crew with Tamanna, Neeraj and Alex. Same show, sharper voices. Every morning on India Market Open. your favorite market show.
Good evening, you're watching Market Express with me, Shreyanshi Singh, and this is the show that gets you a highlight of everything that is happening right now, be it the trading day or some of the stocks that you should be taking a look at this point in time. But first things first, let's talk about markets. Broad-based buying dominated the market with most sectoral indices trading higher, led by autos, realty, metals and mid-caps. Now, when you talk about financials as well as pharma, they in fact showed steady strength, while IT on the other side remained on the back foot just a tad bit. Overall sentiment, when you talk about this, it appeared positive, indicating risk on behavior and continued sectoral rotation, and that's beyond large cap defensives. Let's also move on and talk about something like Kotak Mahindra that was in focus. Delivered a strong set of numbers on the surface, but when you talk about the asset quality, that really improved. Margins rose sequentially as well. Gross and net NPAs eased while NIMs ticked up on a quarter-on-quarter basis. However, the street impact remained measured when you talk about this particular counter. About a 3% downtick is what you were looking at. Year-on-year margin compression, other than that, there's weaker recoveries that you're looking at. A sharp fall when it comes to trading and MTM income. That also weighed a little bit on the sentiment. Add to that management's signal of gradually moderating NIMs in financial year 27 and additional provisioning under ECL norms. Now, investors appear to be focusing more on the road ahead than the quarter gone by. Moving on then, let's talk about something like a CSB bank that was in focus after a steady quarter, a steady fourth quarter, about a 2.5% uptick that you're looking at for this particular counter. And the net profit really rose about 6% on a year-on-year basis. 202 crore is what you're looking at, aided by strong NII growth as well as sharply lower provisions. When you talk about the asset quality, that improved on a sequential basis, with both gross as well as net NPAs declining, while operating profit also slipped due to higher costs. Lower provisioning supported earnings as well. Overall, you're looking at better asset quality and balance sheet stability that offered comfort despite margin pressures. Moving on then, let's talk about brokerages turning more cautious when it comes to something like a Sona BLW. Now, that stock was under deep pressure, about 5.5% knock coming in on this particular counter, and that's after a sharp rally. When you talk about the brokerage verdict, ICICI Securities is the one that cut its rating to add, citing rich valuations, even as fourth quarter numbers came in slightly ahead of estimates, supported by strong order wins driven by global supply chain disruptions. While the order book remains healthy with a large EV component, you do have the stock's sharp run up already. Prices in much of the optimism. So when you talk about the other two brokerages as well, you have Kotak and JP Morgan that have also downgraded this particular counter. And in terms of commentary coming in from them, they're in fact flagging near-term margin pressure, lack of earnings upgrade triggers, and also recent outperformance versus benchmarks, even as long-term electrification trends remain supportive. Moving on then, let's talk about something like a Bombay Dyeing that surged sharply in trade, jumping about 16% intraday to a 4-month high. When you talk about the close, about 12.7% uptick is what you saw coming in, biggest single day gain that you're looking at since January 2024. So quite a record day coming in for this particular counter. And when you talk about the key triggers, this particular rally is driven by renewed real estate optimism after the company launched an ultra-luxury residential tower, 3ICC in Dadar, and that has a revenue potential of around 6,500 crore rupees. Now, when you talk about this particular move, it underlines the company's sharper pivot toward real estate through its arm, Bombay Realty, which has been steadily expanding its Mumbai footprint as well with marquee residential and commercial projects. So that's something that you're looking at when it comes to this particular account. And the stock, of course, was buzzing away in trade with that 11.5% uptick. Moving on then, let's talk about brokerages turning cautiously more optimistic when it comes to something like a HUL as well. And they in fact cited improving growth visibility. The counter rose, of course, buzzing away in trade, about a 2.5% uptick coming in, and pricing support is also something that you did have coming in for this particular counter in terms of the brokerage verdict. Now, Morgan Stanley in fact has maintained an equal weight rating while also hiking its target price, pointing to better financial year 27 growth prospects driven by a healthier mix of volumes and pricing. Citi, meanwhile, continues to maintain a buy rating, though it has cut its target price, noting that while cost pressures persist, portfolio transformation and calibrated price hikes are helping manage some of the volatility. Overall, the street sees earnings resilience improving, even as inflation and margin discipline remain key monitorables. Moving on then, let's keep it going with brokerages. JP Morgan, in fact, has upgraded Indegene to an overweight rating. They've also hiked the target price to somewhere close to 600 rupees, citing accelerating organic growth and improving medium-term visibility. Now, when you talk about the counter, it was buzzing away in trade with that 6.7% uptick, as you can see on your screens as well at close. But the Q4 print, let's talk about that as well. Slight bit of a mixed print that you're looking at for the fourth quarter. And the revenue beat offset by margin pressure, that's something that's important to take a look at here. Brokerage sees momentum picking up ahead as well. And when you talk about the organic revenue growth, that has moved into double digits, and 2 large deal wins are expected to start ramping up from the first quarter of FY27. When you talk about the word coming in from JP Morgan, they believe that investments are largely behind the company, really setting the stage when it comes to margin recovery and stronger execution going forward. Let's also move on and talk about the shares of Valor Estate that surged to the upper circuit after the Bombay High Court delivered a favorable ruling in a decades-long Bayandar land title dispute as well, and the court dismissed an appeal by the Salt Department upholding ownership of a 205-acre land parcel held by the company's subsidiary Miraland Developers as well, and the verdict effectively brings 4 decades of litigation to an end. And of course, you did have the stock also, as you can see on your screens, cheering this particular verdict and this particular relief coming in. Now investors cheer the removal of legal uncertainty, with the ruling seen as unlocking significant long-term value from the contested land asset. Moving on then, let's talk about something like a Laurus Labs that reported an inline set of numbers, but of course the stock was buzzing away in trade, and we'll tell you why. The profits and margins, that's where the key is, because they in fact showed healthy improvement when it comes to the fourth quarter. So the revenue growth was driven largely by strong traction in the CDMO business and steady performance when it comes to affordable medicines. When you talk about the EBITDA as well, you're looking at about a 22% jump on a year-on-year basis, aided by a favorable product mix and operating leverage, pushing margins higher. Now, when you talk about the business mix, this continues to improve, with the CDMO contribution rising to a third of revenues and dependence on ARV products gradually declining as well. So overall, the quarter reinforces their shift towards higher value diversified growth. Moving on then, let's talk about brokerages remaining firmly bullish when it comes to Adani Ports, with HSBC, Goldman Sachs as well as Jefferies maintaining buy ratings even as targets move higher after the fourth quarter strong execution as well. Now the quarter saw EBITDA beating expectations, supported by higher port realizations, improving margins as well, and a sharp pickup when it comes to volumes helped by recent terminal additions. Now you do have the FY27 guidance factoring in really the geopolitical uncertainties in the Middle East, and the brokerages are also seeing a little bit of clear long-term visibility going forward, and that's driven by organic growth, rising ROC, capacity expansion, as well as ample headroom for acquisitions, keeping the structural growth story as well firmly intact. Moving on then, let's talk about KSB reporting a weak set of numbers for the fourth quarter. And when you talk about the stock, as you can see, about an 8.5% knock is what you had coming in on this particular counter. Profitability is something that came under clear pressure. Despite marginal revenue growth, net profit fell about 23%. And that is on a year-on-year basis to about 40 crore rupees. When you talk about the revenue as well, that edged up just about 1%. Operating performance, let's talk about that as well, because it's also deteriorated further, with EBITDA down about 25%, margins contracting sharply to about 8.5%, and the numbers are clearly pointing to sustained cost pressures and limited operating leverage, keeping investor focus firmly on margin recovery prospects rather than top-line growth. Moving on then, let's talk about Vodafone Idea that rose about 4.5% after the government has slashed adjusted gross revenue liability on debt-ridden company by about 27% after reassessment of statutory dues also. So that's the update coming in as far as something like a Vodafone Idea is concerned. Moving on, then let's talk about Zen Technologies that remained under pressure, about 8.5% knock coming in on this particular counter as well after delivering a weak set of numbers for the fourth quarter, marked by sharp declines when it comes to not just revenue but also profitability and margins. When you talk about the consolidated profit, that plunged about 69% on a year-on-year basis, while revenues fell about 45% as execution and order timing delayed, pushed conversions beyond expectations in the FY26 as well. And when you talk about higher operating and interest costs, they also weighed on margins alongside a temporary slowdown in domestic and export shipments. That said, the company's robust order book, that's something that offered a little bit of comfort, with the management also positioning FY27 as a critical year focused squarely on execution as well as delivery. Let's also move on and talk about the shares of Bharat Heavy Electricals Limited that are on a strong run today as well, surging about 6.5%, almost 7% at close, hitting a fresh all-time high after nearly 2 decades. The rally comes on the back of strong order inflows and renewed investor confidence in capital goods as well. So this is one counter to definitely be watching out for, and the stock, of course, was buzzing away in trade. Moving on, then let's talk about shares of Sun TV Network that are under pressure as of now as well, 4.5%, about a 5% knock coming in at close as well, slipping sharply as trends from the Tamil Nadu Assembly elections weigh on sentiment. The stock is down nearly 10% right now, about 4.9%, like I mentioned, tracking political uncertainty in its key market. Investors are clearly cautious, with election outcomes seen as a key trigger for the media major. Let's also move on and talk about BHEL that has delivered a strong set of numbers for the fourth quarter, with profits and margins really beating expectations sharply. When you talk about growth, that is driven largely by its power segment, while gains from provision reversals and higher other income have also supported the numbers. When you talk about margins, they're at a multi-year high in fact, though part of the boost really comes from one-off factors. Moving on, then let's talk about Bank of America remaining positive on something like a Sona Comstar, also reiterating its buy call and raising the target price here as well. Now the company has posted a steady fourth quarter with strong revenue growth led by its core auto business. However, when you talk about margins, they remain under pressure and could see some near-term weakness. Order wins, especially from Europe, are supporting visibility, really keeping the overall outlook stable. Moving on, then let's talk about some of the other brokerages as well in terms of what they had to say about other counters. Let's talk about HSBC right now, because they in fact were bullish on Kajaria Ceramics, and that's a rating that they're maintaining and raising the target price here. Now, the target price has been raised to about 1,400 rupees from 1,200 rupees. The company has delivered a strong quarter, mind you, helped by disruption in the unorganized sector, which boosted both volumes and margins. And you did have a little bit of profit booking that you had coming in for this particular counter, but the profit has more than doubled on a yearly basis when you talk about their earnings fine print. With competition easing and a buyback really announced, the outlook also remains positive going forward. Moving on, then let's talk about HSBC remaining positive on something like an RR Kabul as well, and maintaining its buy call and raising the target price here as well. Now, the company has ended the year on a strong note with robust growth driven by its wires and cables segment. About 13% uptick is what you saw coming in for this particular counter. Revenues and profits have seen healthy expansion beating expectations, with demand holding firm and the growth story intact. When you talk about the outlook, it continues to remain strong. Moving on, then let's talk about something like a Jyoti Labs that was in focus. Now, when you talk about the net profit, that was down about 12.3%. And when you talk about the revenue as well, you're looking at an uptick of about 7.7%. Now, when you talk about EBITDA, about 13.9% downtick is what you had coming in. 96.7 crore is where the EBITDA was, versus about 112 crores on a year-on-year basis in the previous quarter as well. Now, when you talk about EBITDA margins, you're looking at 13.47%, which compares with 16.86%. So clear margin contraction that you've seen on a year-on-year basis when it comes to this particular counter. Let's also talk about SG Mart in terms of the fourth quarter as well. Now, when you talk about this particular counter also, on the flip side, you're looking at the net profit that was up about 25.1% on a year-on-year basis. Now, when you talk about the revenue, you're looking at 14.3%, and the revenue has also increased to somewhere close to 1,800 crores versus about 1,600 odd crores in the previous quarter when you compare it on a year-on-year basis. When you talk about the EBITDA as well, you're looking at an uptick of about 51.2%, and the EBITDA has increased to 56 crores versus 37.1 crore rupees. And when you talk about EBITDA margins as well, they've also expanded just a tad bit, so about 3.1% is what you're looking at versus 2.3% on a year-on-year basis. Let's also move on and talk about something like a GE Vernova that is in focus after securing an order from Mega Engineering and Infrastructures to supply 9 pumped storage units in India. Each unit will have a capacity of 150 megawatts and will be deployed at the upcoming hydropower project in Andhra Pradesh. Moving on, then let's talk about AB Capital that is in focus after reporting a strong set of numbers for the fourth quarter, and this is the consolidated numbers that I'm talking about. But when you talk about the net profit, you're looking at a rise of about 20% on a quarter-on-quarter basis, compared with 945 crores, so about 1,100 odd crore compares with 945 crores in the previous quarter. When you talk about the total income as well, about 12% quarter-on-quarter rise is what you're looking at. The stock, of course, was not doing all that much. But mind you that the company has also announced an increase in its overall borrowing limit to up to 2 lakh crore rupees, indicating plans to support future growth as well as business expansion. Let's also move on and talk about Exide Industries that was in focus after reporting a healthy set of fourth quarter numbers. On a consolidated basis, net profit rose about 15% on a year-on-year basis compared with somewhere close to 187 crores. So 215 crores is what you're looking at versus 187 crores last year. And when you talk about revenue for the quarter, that increased more than 9% as well. Meanwhile, EBITDA also climbed about 14%. When you talk about this particular counter as well, it wasn't doing all that much, but the earnings fine print looks like that. Let's also move on and talk about Godrej Properties that was in focus after delivering a strong set of numbers in the fourth quarter. Collections rose 14% on a year-on-year basis. The highest ever quarterly collections is what you're looking at by an Indian real estate company. Booking value jumped about 21%. On a quarter-on-quarter basis, net cash flow stood at somewhere close to 600 odd crores. And remember that the company also sold about 7.4 million square feet across 8 cities during this quarter. Moving on, then let's talk about cement prices that are set to rise again this month, with companies planning another increase when it comes to across these regions as well. So the hike comes as cost surge, especially for packaging and transport, putting pressure really on margins. However, weak demand is making it difficult for companies to fully pass on these costs. In fact, analysts are warning that the current increase may not be enough, with profitability likely to stay under strain in the near term. Moving on, then let's talk about EV registrations that are in top gear. EV registrations start FY27 in top gear, with some of those EV registrations also in April jumping by close to 40%. Electric two-wheelers, let's talk about that as well. In terms of the registrations, they rose by 21%. When you talk about electric cars, you're looking at a jump of close to 40% here on a year-on-year basis. Let's also talk about which companies are exactly in focus here as well, and TVS led the chart in electric two-wheeler registrations. Now, TVS had registrations of close to 35,980 units. When you talk about Bajaj Auto, that was at the second spot with somewhere close to 31,000 registrations. Let's also move on and talk about a couple of airlines that are in focus. So Indigo and SpiceJet are the ones that I'm talking about of the latest air traffic data from the Civil Aviation Ministry. Domestic air passenger traffic fell 4%. And this is on a year-on-year as well as month-on-month basis to somewhere close to 140.8 lakh in April. When you talk about international traffic as well, on the flip side, that's risen about 5% on a year-on-year basis, but declined sharply by 20% on a monthly basis to somewhere close to 28 lakh. And this really points to uneven demand across in terms of the trends across segments. Moving on, then let's get you some business news. Bitcoin is back above the $80,000 mark as risk appetite returns across markets. Strong tech earnings, steady ETF inflows, and regulatory optimism are pulling crypto higher, even as geopolitics adds volatility. With institutions stepping up, traders are now eyeing a potential move toward $85,000. Moving on then, let's talk about elections, and that's been something that's been top of mind for a lot of investors this day as well, this trading day as well. The BJP has crossed the majority mark of 148 in Bengal according to the latest trends as the counting of votes began this morning. For the BJP, West Bengal remains the real prize and the result of a cliffhanger of a decade-long tussle with Mamata Banerjee, one of the strongest opposition chief ministers in the country. From SIR to corruption, infiltration, cultural identity and fish, the election issues have woven a flamboyant tapestry, the dark tints dominating really. While one exit poll has bowed out, most others have predicted a BJP victory. Exit polls though are not results, but this is what they're reflecting right now. Moving on then, celebrations are building in the camp of Vijay as his party is edging closer to a strong showing. Now, early trends are pointing to a promising debut, sparking some of the cheer among supporters, as you can very clearly see on your screens as well. The momentum suggests a significant political entry for the actor turned leader as well, and this is his debut that you're talking about. He's essayed a lot of roles of popular leaders over the past, and right now you're looking at a very powerful debut at that. Let's also move on and talk about Chief Minister N. Rangasamy, who secured a comfortable majority, reinforcing his stronghold in the region. The win underlines the continued voter confidence in his leadership, giving a clear signal, a clear boost really coming into his political position in Puducherry. And with that, it's a wrap on this edition of Market Express. Thank you so much for tuning in.
Economy, business, world, technology. Noise filtered, numbers decoded. Insights that rewire your worldview. From governance to growth, we connect the dots. Your daily edge, your global advantage. India Business Report with me, Gauri Dwivedi, weeknights on NDTV Profit.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to. Get the management to answer questions relevant to you. Watch Know Your Company, weekdays at 11:30 a.m. to understand your next big bet. New year. New power panel. India Market Open. Now in its boldest lineup. This is where the trends get tested and stocks get conviction.
I'll recommend a buy call on a stock only when I'm fully convinced on the stock. With a table-thumping buy.
And when the street wants the levels, he brings the chart.
Charts speak the truth, and I deliver the levels with no frills.
Parag Thakkar and Kush Bohra are now part of the morning crew with Tamanna, Neeraj and Alex. Same show, sharper voices. Every morning on India Market Open, your favorite market show just got better. On NDTV Profit, for your profit. When the headlines move fast, perspective matters. On Editor's Cut, our editors come together with experts to distill the week's information blitz into clear perspective. Down the stories shaping the world, from markets and the economy to global conflicts and what lies ahead. This is where experience meets insight. No noise, no hum, just sharp.
The Lal Street Cheers Bengal poll results today. Nifty ends in the green, holding firm above 24,100 levels. Broader markets outperformed the key indices today. All sectors in the green barring IT and PSU index. In a fiercely fought contest, BJP wave sweeps Bengal. Big defeat for TMC as trends show BJP crosses the halfway mark, rejecting Mamata Banerjee. Vijay's blockbuster performance stuns Tamil Nadu. TVK set to give a big blow to the ruling DMK and the main opposition party AIA-DMK in his poll debut. Axis My India's exit poll projection for Vijay matches with the trends. Congress-led UDF surges ahead as left's last bastion slips out of its grip in Kerala. Trends indicate setback for the ruling front. Assam shows faith in Himanta Biswa Sharma's again. The National Company Law Appellate Tribunal, or NCLAT, dismisses the plea filed by Vedanta in connection with the ongoing JP insolvency proceedings while upholding Adani resolution plan. Vodafone Ideas shares gain as government reduces AGR dues by 27%. Sources tell NDTV Profit that we is in talks to raise up to 35,000 crore rupees via banks. SBI-led consortium may lend to Vodafone Idea. India's EV story kicks off FY27 on a strong note. Registration surged 40% in April to 2.39 lakh units, led by electric two-wheelers. Now, passenger EVs also saw a sharp jump. TVS leads in two-wheeler EVs and Tata Motors in electric cars. Oil prices rise as Trump plans to free ships stranded due to Middle Eastern conflict, and Brent crude hovering over $109 a barrel, while Iran wants to strike US forces if they enter Hormuz. And MEA spokesperson Ranveer Jaiswal says 11 of Indian ships have crossed the Strait of Hormuz. It's election fever across the country with some historic political twists and turns that we have seen. Hello and welcome to Profit 360. I'm Nisha Podar. Now, the vote counting for the assembly elections in West Bengal, Assam, Kerala, Tamil Nadu and Puducherry is underway today, and early trends are really already pointing towards a clear verdict in most of these states. Now, two major surprises have emerged so far, one from West Bengal and another from the state of Tamil Nadu. In West Bengal, Mamata Banerjee's Trinamool Congress appears headed for a massive setback, with the BJP crossing leads in over 190 seats, denting a state that had long resisted the Saffron Party's rise. In Tamil Nadu, well, the spotlight is on actor Vijay-led TVK party, which in its political debut has really surged ahead of both DMK and AIADMK. Meanwhile, the Congress-led UDF is really gaining ground in Kerala, pushing the left on the back foot. In Assam, voters seem to have backed Himanta Biswa Sarma once again, with the BJP-led NDA set to retain power and BJP being the single largest party in the state. So there you can see the election fervor really at its peak as the country really is looking in celebratory mode. There you can see from the state of West Bengal. Radhika Ramaswamy joins us from the state of Tamil Nadu. Radhika, is Vijay's surge a temporary wave driven by popularity or a structural shift that is being seen in Tamil Nadu's political landscape? Radhika.
Historic election result in the state of Tamil Nadu. TVK is emerging victorious. Superstar Vijay is turning out to be the king as far as the elections are concerned. Both the Dravidian majors, DMK and AIDMK, being defeated by debutant Vijay. It's just been close to 2 years since Vijay floated TVK, and now TVK almost getting 105 to 110 seats. Of course, it's 4 o'clock. We have some more time for the deal to get closed, deal to be sealed. TVK may need about 8 to 10 more seats to get that majority mark. So we'll have to see how he gets that, who are the allies that he may in fact tie up with. But two Dravidian majors, DMK and ADMK, being defeated by TVK. So this is unprecedented, historic. We are being given to understand that Congress is in touch with TVK for a possible alliance, and some more smaller parties, so that his 105, 110 figure can finally cross that majority mark of 118. But certainly historic, unprecedented election. Vijay becoming a driving, decisive force in the electoral, in the political landscape of the state of Tamil Nadu. We'll just wait for the final numbers to come and whether he will be allying with some smaller parties to get that magic figure. He may just need about 10 to 15 seats more, and he could just be the next Chief Minister of the state of Tamil Nadu.
All right, Radhika, it's a very big upset that has really come in the state of Tamil Nadu, and not just Tamil Nadu. Another big upset is in the state of West Bengal. It's a historic win that we are headed for. Shreyasi joins us from Kolkata. Shreyasi, is this just anti-incumbency against Mamata Banerjee, or are we seeing a deeper ideological shift in Bengal's voter base?
Going by the numbers coming out from the Election Commission of India, it seems it's a clean sweep for the BJP for the first time here in West Bengal. But the Trinamool Congress has not given up as yet. Chief Minister Mamata Banerjee at the counting centre here in Bhawanipur. And of course, just a short while ago, she put out a statement saying that all the candidates need to be at the counting centre till the last ballot is counted and accounted for. Here in Kolkata, of course, all eyes on this particular seat now, with the BJP looking at a comfortable win now, and the final numbers that are expected later on in the day. Here outside the counting centre, the BJP supporters have been pushed back by the central force, who were raising slogans against the Chief Minister here, and everyone now waiting with bated breath to hear if the Chief Minister has something to say, because it seems that for the first time here in West Bengal, the BJP is all set to form a government, but the Chief Minister of West Bengal, the outgoing Chief Minister of West Bengal, Mamata Banerjee, is still not giving up the fight. With GD Shankar, Shreyasi reporting from Kolkata.
All right, Shreyasi, that is a big result that is being anticipated, and market also really cheered this particular outcome. High drama in West Bengal as Mamata Banerjee really leveled serious allegations during counting. Mamata Banerjee claimed that counting has been halted at several centers. Machines show mismatches and that central forces are really acting against TMC workers. Let's listen in to what Mamata Banerjee had to say.
কাউন্টিং এজেন্টরা এবং প্রার্থী ক্যান্ডিডেটরা তারা ভোটিং এলাকা ছেড়ে আসবেন না। স্ট্রং রুমে যেখানে কাউন্টিং হচ্ছে মানে সেন্টারে, সেখান ছেড়ে কেউ আসবেন না। এটা বিজেপির প্ল্যান। প্রথম 2-3 রাউন্ডে আমি কালকে থেকেই বলছি যে ওদেরগুলো আগে দেখাবে, আমাদেরগুলো পরে দেখাবে। আমাদের সমস্ত পার্টির কর্মীদের বলবো অত মন খারাপ করার কারণ নেই। আমি বলেছিলাম সূর্যাস্তের পরে আপনারা জিতবেন। 3 রাউন্ড 4 রাউন্ড কাউন্ট হলেও এটা 14 রাউন্ড থেকে 18 রাউন্ড কাউন্ট হয়, তখন আপনারা জিতবেন। ওয়েট অ্যান্ড সি, ওয়াচ, আমরা সবাই আপনাদের সাথে আছি, আপনারা কেউ ভয় পাবেন না।
All right, so that was Mamata Banerjee lamenting about probably the misconduct and putting allegations there. But those are the visuals coming in from the election fever battleground in so many states, and two important historic outcomes that the country is really basing up for. Now Ratnadeep, he joins us from Assam. Ratnadeep, what has really worked most decisively for the BJP here? Is it the leadership, welfare delivery, or is it the identity politics in the state?
This is a historic victory for the BJP in Assam, which first came to power in Assam in 2016, ending the 15-year rule of the Congress. And ever since, in the last 10 years, BJP has been able to penetrate across the length and breadth of the state, and this has been established today in this huge historic verdict through which BJP is going to retain power along with his allies for the third consecutive term. In fact, this is a hat trick for the BJP, and this time the mandate has been huge, far more seats for the party. In fact, it has also got simple majority, much more than simple majority actually. So therefore, this is a big victory. Now for the Congress, perhaps this is one of the worst performance where its chief ministerial phase, Gaurav Gogoi, has also suffered a defeat. Many of its senior leaders have suffered defeat, and in fact its allies also could not do well. So therefore, perhaps the opposition completely washed away by the BJP tsunami. Also, one of the biggest loser is Maulana Badruddin Ajmal's AIUDF. While Ajmal won his seat, in the last election they have won about 16 seats, and now this time they are in single digits. So therefore AIUDF perhaps is one of the biggest loser of this elections as far as Assam is concerned. But what has helped the BJP perhaps is in the last 10 years, the first 5 years of Sarbananda Sonowal, and now the next 5 years of Himanta Biswa Sharma, BJP has fast-tracked development, employment has been a priority, and their strong action in terms of eviction from land encroachment by illegal immigrants, pushback of illegal immigrants, bulldozer action have also resonated perhaps. The beneficiary schemes, particularly in Assam this time, of the 2.5 crores voters, half of them were women, and women by and large have voted in favor of the BJP. So therefore, the BJP really taking this campaign forward. For the Congress, rather, there was apart from criticizing the BJP and bringing allegations against the BJP, they could not set a narrative.
All right, so that was Ratnadeep really reporting from the state of Assam, third time that Himanta Biswa has really come into power there. Now in Kerala, Congress-led UDF gaining the upper hand, and senior leader VD Satishan, who is also a strong chief minister candidate for the state, says that the momentum is clearly with the UDF. Let's listen in to what he had to say in an exclusive chat to NDTV.
Will you be the chief minister of Kerala? Will you be?
That will be decided by the Congress High Command. There is a procedure. You know that there is a procedure. I am not the competent person to say anything about that. Now, we predicted more than 100 seats. We are now reaching more than 100 seats. We are very happy. There was an anti-incumbency against the government, and we said to the people that we have been criticizing the government for a long time.
All right, so those are the important highlights of how politics and election fever has really paid out in the country. Lots of big takeaways. Let's get an expert chatting on what the developments have been and what it means for national politics. Karthikeya Batra joins us now. Karthikeya, good to have you on NDTV Profit. My first question, of course, two big upsets in the states of West Bengal first and Tamil Nadu second. What does it mean for the political climate in the country?
Thank you for having me. I guess it's difficult to reconcile the two states because they're two very different stories. But one story that is definitely coming out, the last 2-3 weeks, we have seen 3 non-BJP, non-Congress chief ministers be replaced by BJP/Congress chief ministers. So Trinamool Congress, not in power anymore. Whatever was left of the left in Kerala, not in power anymore. That's kind of one big key takeaway. I think Tamil Nadu is a very interesting story, having gone to the field myself. A state dominated by 2 big poles of Dravidian politics, yearning for change. When we look at Tamil Nadu from a distance, it seems like it's really well governed, things are in place, basic public service delivery is in place. But as you reach that level of development, the aspirations of the voters also change. The demands change, the voting patterns change. So here was a state, despite being one of the most developed in terms of socioeconomic indicators, yearning for a change, trying to break away from what they thought was a duopoly of AIADMK and DMK. In comes TVK with a lot of conviction, with the right political messaging, with a face to sell and enough resources to mobilize in the entire state. And there you go. This is not as much an anti-incumbent vote. It is an anti-establishment vote in Tamil Nadu. I'm reminded of the Punjab election of 2022, where the Aam Aadmi Party's entry into power, or the storm of Aam Aadmi Party, was not so much an anti-Congress vote. It was an anti-establishment vote, both against the Congress and the Akali Dal. So today, when you say the TVK, eating into both the votes of the DMK and the AIADMK, the DMK bears additional brunt because it is the party in power. It happens to be the party in power. But if you look at it closely, it is essentially a vote against the established entrenched players. And that, I think, is a fantastic story in itself.
Yes.
The people of Tamil Nadu have found an alternative. Now, West Bengal is...
So that point well made, Karthikeya. Anti-establishment when it comes to down south in Tamil Nadu. But of course, the West Bengal victory for BJP, that's a momentous, historic occasion when it comes to Indian politics, because this has been one state and this has been one leader that BJP actually thought that is invincible for the longest time and had to really fight it very tough. What does this mean for BJP in terms of its overall pan-India presence, being at the center and getting this large state?
BJP, after the 2024 Lok Sabha election, seems to be like a wounded tiger, out for vengeance for its poor performance. And I think over the last 2 years, what I have understood is that a BJP that is high-pitched, high-octane is less dangerous than a BJP that is insidious, that is working on the ground, developing undercurrents, not being so in the face. 2021 Bengal elections were probably one of the most vitriolic, the most high-octane elections that I've seen. But they realized at that point that going after the person herself, Mamata Banerjee, is not a good strategy because she remains popular, even if her government and the Trinamool party's structure is not very popular. 5 years later, despite the loss in the Lok Sabha election, where the BJP was further reduced to just 12 Lok Sabha seats, they changed strategy. It was kind of building an undercurrent. It wasn't so much attacking the face top down. It was more like bottoms up. So what could you mobilize on the ground, especially among the rural Hindu women? Because that was the chunk that had kept Mamata Banerjee in power in 2021. A lot of the minority support and a lot of the female support amongst the Hindu sections. and of course her own charisma. So BJP seems to have worked very carefully on that. Unfortunately, all this was also marred by a very controversial SIR exercise, and I think one should not forget that. But one should not overestimate that either. So there is definitely a lot more that the BJP has done beyond what the SIR could do. And I think that is kind of playing out. Nationally, the BJP's footprint expands, but I think this is a big fillip to the stature of the Home Minister in BJP's internal politics.
That's right, Karthikeya. It is a very important win for BJP. But one question and a quick answer to that. What does this also mean for the economic advancement of the state of West Bengal with BJP coming in?
We can only hope for the best, no? I mean, this is going to be a very different kind of government, hopefully, at least speaking from the perspective of economic policy, than what the left or the Trinamool Congress had. My fear is that, Trinamool Congress came in 2011 promising Parivartan away from the left, but over time it became much like the left in terms of having the same people at the grassroots at its disposal. I just hope for the people of West Bengal, because it is one of our biggest states in terms of population and can contribute a lot to the GDP. I hope for the sake of people of West Bengal, the BJP just doesn't promise Parivartan, is also able to deliver it on the ground and ensures that, enough economic opportunities are created for the young people of West Bengal.
That's right. Having grown up, Karthikeya, in West Bengal from Kolkata, I can see the difference in ideology making a difference, at least in the economic thinking and commercialization as well. Thank you so much for joining us with your expert take on the political events and the election mandate, as well as the outcomes really coming out. And that is really the biggest talking point. Now, in a stunning poll accuracy story from Tamil Nadu, well, Axis My India was the only agency to really project a victory for Vijay's Tamilaga Vetri Kazagam party, and the pollster had really predicted a massive 98 to 120 seats for the debutant party in the 234-member assembly, a call that now appears to be playing out on the ground. NDTV caught up with Axis My India's Pradeep Gupta on how they got it so right. Let's listen into what Pradeep Gupta had to say on this victory.
First and foremost, we have these whistles out for you, and the whistles are for the fact that you got the poll right, which is quite fantastic. Well done. These whistles are ringing loud. You don't have a whistle?
You don't have there's one right there.
Science victory. This is the science, the data science, and second is Axis My India team working in ground and working in back office here in Bombay. This is the victory of science, data science. You would see that why the other polling agency could not predict or could not capture the mood on the ground, because we at Axis My India, we go to all the seats all the time. If you see all our 4 states, all of them this time on the exact poll. That is what Axis My India is known for. Once again, we are able to predict exact poll in these 4 states where we have predicted.
All right, grand celebrations there for getting the Tamil Nadu elections right for Pradeep Gupta, Axis My India. Amidst the noise of election, here's where we give the profit twist to our coverage as well. In fact, my colleague Sharad really joins in to take us through the detailed lowdown of the sectors and companies that could be impacted from the Bengal Janta's verdict. Over to you, Sharad.
For the corporates, it's very much important, especially from Bengal itself. And there are some important companies. These are the mid caps and the large caps, which I picked up for you, which is very much important, which are based out of Bengal and also having significant business exposure. First is, of course, Shree Cement, a market cap of more than 91,000 crores. They are doing an aggressive capacity expansions, especially on the premiumization front. And we know that their cost saving capacity is also very strong for the company. Berger Paints, interestingly, they are expanding their dealer network, and more than 25 500 new color bank machines is also being made. This is based out of Kolkata. Other stocks also which should be in your radar should be Bandhan Bank. Recently very strong numbers also came in, and the company is pivoting to higher secured loans and improving the asset quality. Apart from that, CSC, that's the new energy business, that's where the focus is happening, and they are having a huge power utility monopoly in the state of Bengal. Apart from this, let's look at Imami. This is a rural demand recovery, and the aggressive D2C brand acquisition is something which is standing out for Imami. And for Century Ply, they are expanding into the high margin MDF capacity, and recently there was an MDF price hike also for the industry. Apart from that, we are having companies such as our Cable, that's where they're diversifying into railways and EVs as well, and Titagarh, I mean to say RK Forging, sorry, and Titagarh, that's the second stock I'd like to point out where the Vande Bharat order is showing a very strong revenue visibility coming in. These are the important stocks which should be in your radar. And apart from that, we are having Birla Corp, where Mukutban plant, that's a ramp up is happening over there, and Texmaco, that's a small cap. Over here also they're getting consistently the railway rolling stocks as well, and the EPC execution. So of course we are seeing a lot of stocks, especially in the mid cap and the small cap, buzzing already in trade last week, but definitely these stocks should be in your radar. They will be buzzing at least in the earlier hour of the day's trade.
All right, thanks Sharad for that. Now in a big setback for Vedanta, the NCLAT has upheld Adani's resolution plan for JP assets. Nimit has all the details.
Yes, so the Vedanta's case has been dismissed categorically on all grounds as per a review of the judgment that we've seen that's come out today. The court earlier in an oral order completely dismissed the case that Vedanta has made and upheld Adani's resolution plan at 15,000 crores odd. Now, the key question here was Vedanta was saying when my plan is 17,000 crore and Adani's plan is 14,500 to 15,000 crore, then how can commercial wisdom dictate that their plan get approved over my plan, which is bigger? The NCLAT has clearly said that it is not simply the value that determines what plan can be approved. Commercial wisdom goes beyond that. It looks at upfront payment, which was higher in the Vedanta plan, higher in the Adani plan, and it also looks at overall timeline, which was higher in the Adani plan. It has also gone into technicalities to find that Vedanta had made modifications to its plan beyond the bidding process, which then cannot be allowed because it makes the process unfair. Overall, it found that it was completely there was no arbitrariness, and it was completely fair the way the COC functioned as well as the way the resolution professional functioned. Now Adani is clear to go ahead and implement this plan. Of course, we await any instruction or understanding on whether Vedanta will appeal this to the Supreme Court.
All right, thanks Nimit for all those details. A big corporate development there, but completely out of time on Profit 360. Thanks so much.
Economy, business, world, technology. Noise filtered, numbers decoded. Insights that rewire your worldview. From governance to growth, we connect the dots. Your daily edge, your global advantage. India Business Report with me, Gauri Dwivedi, weeknights on NDTV Profit.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to. Get the management to answer questions relevant to you. Watch Know Your Company, weekdays at 11:30 a.m. to understand your next big bet. New Year. New power panel. India Market Open. Now in its boldest lineup. This is where the trends get tested and stocks get conviction.
I'll recommend a buy call on a stock only when I'm fully convinced on the stock. With a table thumping buy.
And when the street wants the levels, he brings the chart.
Charts speak the truth, and I deliver the levels with no frills.
Parag Thakkar and Kush Bohra are now part of the morning crew with Tamanna, Neeraj and Alex. Same show, sharper voices. Every morning on India Market Open, your favorite market show just got better. On NDTV Profit, for your profit.
Hello and welcome to KYC. I am Sharad Dubey and you are watching NDTV Profit, and we are getting you the hottest show amongst all the KYCs, and we get you the best companies where we try to figure out is there any hidden story to it, and of course we bring out small and mid-cap companies also for your analysis. So let's give you some hints. Ahmedabad-based stainless steel manufacturer, there are a lot, but let's give you some more hints to understand what's happening here. They have delivered a very strong Q4 numbers, and that's where my interest came in the stock. The third hint I would like to give you is the stock is up more than 30%, you could say, in the last 1 month itself. Of course, this name which I'm going to talk about, it's coming first time in KYC, and it's a relatively a newer name. Of course, this was an SME migration candidate also last year. So get that and get more discovery. The company name in focus is Mangalam Worldwide. Seems very new, right? But don't worry, by the end of KYC show, you will understand the company and its growth outlook. But why are we calling this company? That's the main question. क्यों ये अहमदाबाद की कंपनी जो है मेरे इंटरेस्ट में आई है? First question is definitely going to be the Q4 numbers and the outlook ahead. They have been doing really well, and what are the key levers for it, and is there any pitfall attached to it? The second question, most important, is the inflation. Will this inflation impact? Mostly the steel players have been impacted. Will it impact here also or not? That's the key question to be asked. But the company does claim that it has a backward integration at play as well. So that's why you'll try to understand the business first. कि ये धंधा करती क्या है और धंधे में मोट क्या है धंधे में. That's the juice which everybody wants to listen to. Also, another question for Mangalam Worldwide will be the outlook on the value-added products. As we are seeing, the entire industry is moving towards that. Is there any new product foray? And how are the pricing and the realizations looking like? And most importantly, client ka confidence kya hai? That's the question we will be asking. Apart from that, we'll of course ask about the capacity utilization, the capex plans for FY27, and of course the street has given an approval, especially coming in the BSE listing as well. Working capital delays, there is some issues, but is this a business impact or is this seasonal? That's something we'll try to understand about Mangalam Worldwide, and also the growth prospects for the stainless industry as a whole. We know that this is a big industry and it's growing, but we understand how much the organized market is growing और कंपनी का क्या मार्केट शेयर बन रहा है. That's the question to be asked, and Chandragupta Prakash Mangal, the MD of Mangalam Worldwide, will be answering all these important questions to us. But let's try to understand more कि कंपनी करती क्या है. This is a discovery of sorts in KYC. It was established in the year 1995. Interestingly, this is Ahmedabad-based company. It's a fully integrated stainless steel mill which they have, and of course they are having 3 to 4 factories as well. The products they are manufacturing: stainless steel billets, ingots, rolling for SS. SS means stainless steel flat bars. These are different variations of these products: round bars, bright bars, and seamless heat exchanger tubes. Ancillary segment is also something which we are looking at. देखा जाए तो 4 मैन्युफैक्चरिंग फैसिलिटीज इस कंपनी के पास है, और लगभग 1,90,000 1,90,000 million tons per annum facility also the company possesses. The company recently migrated from the NSC, from the SME board to the main board, and this was last year itself in September 2025, and board approval has come in for BSE listings also. The presence is across 30 plus countries and 15 cities in India, largely towards the western side of the country. Recently they entered the retail market also with the castor oil products. That is something which we are watching out for. Apart from that, let's look at the marquee clients for this company. This includes L&T, and looking at the other companies, this includes Voltas and a lot of chemical players. Aarti is there, then we have SRF, and also PI Industries make it to the list, and of course NTPC is also there. So these are the marquee clients which the company is possessing. But let's get into more details about it. Recent approvals have come in from Qatar Energy and SABIC as well. This augurs well for the company. Also, let's talk about the key industry data where the government is expected to boost the steel production in India, and this mark is very much important, 300 million tons per annum. That's the number to look at by terms of production. Now, inclusion of the specialty steel under the PLI scheme, that is where we see the government push is also coming in. Apart from this, of course, the government has been acting on raising the import duty on most of the steel items already twice, each time by 2.5%, anti-dumping duty also coming in. So these are the key industry pushes which is happening for the counter. But what's working for the stock? First is it's a fully integrated stainless steel player. That's the first reason. Secondly, the FY27 outlook, you talk about it, that still remains strong. Let's point the third portion. What's working is the move towards the export market. High margin business रहता है, high value added products रहते हैं. That is where the focus lies. But apart from that, the government push and those initiatives in the steel sector is auguring well for the company. We spoke about what's working for the company. Let's talk about what's not working for the company. That's over there. The working capital days, they have increased. This might be the business model about it. Also, secondly, there are some concerns. There's a lack of analyst coverage. Company का market cap 1,000 crore के पास है, small cap है, so we need to give it more time. Lack of FI and DI participation, so that's pretty much interesting. This might actually go up after it gets more recognition in the BSE listing. But remember, the stock has run up a lot and valuations are expensive for this counter, and that's the reason for what's not working. But let's give you the entire picture of the ratings, how we judge the company in KYC. क्या-क्या आंकड़े रहते हैं जो हमें देखने होते हैं. And of course, income statement, balance sheet, cash flow, as it is, it's very much important. It's the holy grail of accounting. Then we talk about the return ratios. Apart from that, we are having the shareholding and street credit. Stock.
Hi, I'm Tamanna Inamdar. Watch me on NDTV.
Hello and welcome to KYC. I am Sharad Dubey and you are watching NDTV Profit, and we are getting you the hottest show amongst all the KYCs, and we get you the best companies where we try to figure out is there any hidden story to it. And of course, we bring out small and mid-cap companies also for your analysis. So let's give you some hints. Ahmedabad-based stainless steel manufacturer. There are a lot, but let's give you some more hints to understand what's happening here. They have delivered a very strong Q4 numbers, and that's where my interest came in the stock. The third hint I would like to give you is the stock is up more than 30%, you could say, in the last 1 month itself. Of course, this name which I'm going to talk about, it's coming first time in KYC, and it's a relatively newer name. Of course, this was an SME migration candidate also last year. So get that and get more discovery. The company name in focus is Mangalam Worldwide. Seems very new, right? But don't worry, by the end of KYC show, you will understand the company and its growth outlook. But why are we calling this company? That's the main question. क्यों ये अहमदाबाद की कंपनी जो है मेरे इंटरेस्ट में आई है? First question is definitely going to be the Q4 numbers and the outlook ahead. They have been doing really well. And what are the key levers for it? And is there any pitfall attached to it? The second question, most important, is the inflation. Will this inflation impact? Mostly the steel players have been impacted. Will it impact here also or not? That's the key question to be asked. But the company does claim that it has a backward integration at play as well. That's why you'll try to understand the business first. कि ये धंधा करती क्या है और धंधे में मोट क्या है धंधे में. That's the juice which everybody wants to listen to. Also, another question for Mangalam Worldwide will be the outlook on the value-added products. As we are seeing, the entire industry is moving towards that. Is there any new product foray? And how are the pricing and the realizations looking like? And most importantly, client ka confidence kya hai? That's the question we will be asking. Apart from that, we'll of course ask about the capacity utilization, the capex plans for FY27, and of course the street has given an approval, especially coming in the BSE listing as well. Working capital delays, there is some issues, but is this a business impact or is this seasonal? That's something we'll try to understand about Mangalam Worldwide, and also the growth prospects for the stainless industry as a whole. We know that this is a big industry and it's growing, but we understand how much the organized market is growing और कंपनी का क्या मार्केट शेयर बन रहा है. That's the question to be asked, and Chandragupta Prakash Mangal, the MD of Mangalam Worldwide, will be answering all these important questions to us. But let's try to understand more कि कंपनी करती क्या है. This is a discovery of sorts in KYC. It was established in the year 1995. Interestingly, this is Ahmedabad-based company. It's a fully integrated stainless steel mill which they have, and of course they are having 3 to 4 factories as well. The products they are manufacturing: stainless steel billets, ingots, rolling for SS. SS means stainless steel flat bars. These are different variations of these products: round bars, bright bars, and seamless heat exchanger tubes. Ancillary segment is also something which we are looking at. देखा जाए तो 4 मैन्युफैक्चरिंग फैसिलिटीज इस कंपनी के पास है और लगभग 1,90,000 1,90,000 million tons per annum facility also the company possesses. The company recently migrated from the NSC, from the SME board to the main board, and this was last year itself in September 2025, and board approval has come in for BSE listings also. The presence is across 30 plus countries and 15 cities in India, largely towards the western side of the country. Recently they entered the retail market also with the castor oil products. That is something which we are watching out for. Apart from that, let's look at the marquee clients for this company. This includes L&T, and looking at the other companies, this includes Voltas and a lot of chemical players. Aarti is there, then we have SRF, and also PI Industries make it to the list, and of course NTPC is also there. So these are the marquee clients which the company is possessing. But let's get into more details about it. Recent approvals have come in from Qatar Energy and SABIC as well. This augurs well for the company. Also, let's talk about the key industry data where the government is expected to boost the steel production in India, and this mark is very much important: 300 million tons per annum. That's the number to look at by terms of production. Now, inclusion of the specialty steel under the PLI scheme, that is where we see the government push is also coming in. Apart from this, of course, the government has been acting on raising the import duty on most of the steel items already twice, each time by 2.5%, anti-dumping duty also coming in. So these are the key industry pushes which is happening for the counter. But what's working for the stock? First is it's a fully integrated stainless steel player. That's the first reason. Secondly, the FY27 outlook, we talk about it, that still remains strong. Let's point the third portion. What's working is the move towards the export market. High margin business रहता है, high value added products रहते हैं. That is where the focus lies. But apart from that, the government push and those initiatives in the steel sector is auguring well for the company. We spoke about what's working for the company. Let's talk about what's not working for the company. That's over there. The working capital days, they have increased. This might be the business model about it. Also, secondly, there are some concerns. There's a lack of analyst coverage. Company का market cap 1000 crore के पास है, small cap है, so we need to give it more time. Lack of FI and DI participation, so that's pretty much interesting. This might actually go up after it gets more recognition in the BSE listing. But remember, the stock has run up a lot and valuations are expensive for this counter, and that's the reason for what's not working. But let's give you the entire picture of the ratings, how we judge the company in KYC. क्या क्या आंकड़े रहते हैं जो हमें देखने होते हैं. And of course, income statement, balance sheet, cash flow, as it is, it's very much important. It's the holy grail of accounting. Then we talk about the return ratios. Apart from that, we are having the shareholding and street cred, जहाँ पे हमें पता चलता है कि स्टॉक ने मीडियम टर्म लॉन्ग टर्म बेसिस पे रिटर्न्स कितने दिए, कितना आपने कमाया, एंड वैल्यूएशंस विल डू अ चेक विद द पीयर्स. एंड लास्ट बट नॉट द लीस्ट is the outlook segment. Let's see the income statement, what's happening here, and overall the numbers ऑन द ग्रोथ बेसिस ज़्यादातर एबिडा देखा जाता है स्टील प्रोडक्ट्स से कंपनीज की रेवेन्यू कम देखा जाता है एंड एबिडा इज समथिंग वेयर लुक एट द नंबर दैट्स अराउंड 70% 3 year CAGR is coming in and that is where the strength is coming in this counter. This is what I liked about the company and the Q4 numbers if you talk about it also the EBITDA number has been strong, the margins has hit the double digit. So let's give you the entire picture over the last 5 to 6 quarters how things have happened and of course interesting data has come in after a long time. It's a double digit margins coming in. If you could just point out to show the margins how they have worked and yes it's there from FY22 to FY26 it's between 2 to 8% but now fourth quarter this is at 10%. So we'll be understanding from the management is this margin sustainable or not. That's the question but right now income statement I would be giving this a strong thumbs up. The second one is balance sheet. Let's look at the numbers, how the balance sheet pans out. Borrowing, that seems to be going on the higher side. Cash levels are decent, but the borrowing is on the higher side at 233 crore rupees. Company expand kar rahi hai and net, the debt equity ratios still are balanced. It's not to be a very big concern. So I'm going to give this a neutral rating when it comes to the balance sheet. Let's talk about cash flows and that's very much important over the last 3 to 4 years how the cash flows have changed for the company and overall we see there's a good move happening almost our cash flow from operations has turned positive in FY26 and same thing goes for PAT and the net cash flows also has actually improved as well. So definitely the cash flow improvement has happened and that is why I'll be giving this a strong thumbs up. But let's talk about return ratios, very much important to judge the company and there are two return ratios I'll be getting, the ROE and the ROC. In FY23 the return ratios for the ROE was around 18.6%. There was a dip and then the up move again coming back to that 18%. So definitely the return ratios are good. Lagbhag 15% ka return ratios you can expect for a company or an industry like this. And the ROC numbers have also done well and it was around flattish to 12 to 11 on the last two financial years. So this time we're seeing it's healthy 15.4%. That's the ROC numbers. That means ROC and ROE both of them are improving and on an uptrend and because of that I'll be giving this a strong thumbs up as well. Let's also talk about the shareholding segment, what has happened and largely the shareholding has remained same. Promoters has been 66 odd percent and it's around 67%. But there's a issue with me in the analysis. There's no FIs and DIs. Though the company's size is small, it just migrated from SME last year. But even after that, the absorption is not coming from institutions. So that's a little bit of concern. Rest things remain the same. So shareholding, I've given this a neutral rating as well. Let's talk about the street cred, about how much the stock has given the earnings overall and for the investors, congratulations. Most of the parameters it has ticked in. The last 1 month the stock is up 33%. From March lows itself you talk about it, stock is up 41% and since its IPO the last 5 years data or whatever is nearer we have seen a 247% gains and 123% gains coming in the last 1 year itself. So congratulations for of course medium term, long term shareholders for this stock and that is why I'll give a strong thumbs up when it comes to the street cred. Let's talk about the valuations and see what's happened here. Mangalam Worldwide, remember the overall numbers are at their lifetime high levels. That is why it's the highest P is coming at trailing 12-month P of 34 times. The nearest competitor which we can actually adjust or we could compare is Venus Pipes, that is around 30 odd times. So both of these players the valuations are on the higher side and currently the valuations are not that attractive if you are listening to this KYC right now. So it's a negative rating or a thumbs down when it comes to the valuations. Apart from valuations, let's talk about the outlook. There's a direct listing in BSE. It's already listed in NSE. Now the board approval has come to get it listed in BSE as well. And because of that, of course, a lot of institutions might be looking at this stock. And that is why we get you these companies in KYC. The strong FY27 demand across oil, gas, chemical, pharma, engineering and infra. This is what the management commentary has come in the outlook going ahead. But take a lot of things with a pinch of salt whenever any management outlook also comes in. Let's look at the other outlook also. This includes the integrated business model. That is where the street is remaining bullish on because of this integration. And that is why in case even the costing goes up, they can nullify that. Short-term, medium-term outlook, may be impacted due to inflation. That's a concern happening across the industry, and of course this might impact the company as well. How much it impacts, how much the company mitigates, that's the important thing to look at. So it's a neutral rating when it comes to the outlook for Mangalam worldwide. But let's give you a revision of how much ratings in KYC we are giving this company, and of course we'll ask the management also about a lot of queries in this segment. Largely income statement cash flow has been positive, return ratio is good, 15% के ऊपर generally अच्छा होता है. That's why I've given a strong thumbs up. Looking at the street cred, the stock has already given a strong returns to the investors, and because of that steep up move, the valuations are not attractive right now for this company. Shareholding, of course, FIDI participation is not there, and that's a little bit of concern for me. Outlook, of course, medium term, long term looks strong, but the rising inflation costs will definitely impact the entire industry. And to give a little bit perspective, the entire rating is around 5.5 out of 8. This is largely in line with what the numbers we generally give. So definitely the stock has run up, and that is why a little bit of concern on the valuations is there. Joining us right now is Chandragupta Prakash Mangal. I'm sorry for the delay which has happened. There's some technical error was there. But Mr. Mangal, I have a question for you. The Q4 numbers were strong. Your FY27 outlook, what it is? Give us both the answers.
Yes, as already mentioned that the Q4 numbers have been strong. The Q4 has this year has performed way better in terms of the EBITDA and PAT levels compared to the Q4 in 2025. The EBITDA is around 10.99% this year as compared to 4.82% last year, and the PAT levels are at 5.77% compared to 2.61% last year.
Right.
Going forward in this year, FY27, we look towards a similar growth that we are expecting.
And what about the rising cost, which is plaguing your industry? Is there going to be a kind of a margins hit, at least in the first quarter, because we are seeing there's a rise happening of costs all across?
Yes, there is certainly a rise happening in the cost of the goods that we manufacturing. A part of it is absorbed by the company and a part of it is passed on to the customers. Also, being fully integrated gives us an additional advantage that we are selling more of the value-added products, which are the finished products, and those have more margins compared to what we sell in the initial level.
What will be your margin outlook on a blended basis for the next 2 to 3 years?
I'm positive that it will be in the EBITDA levels will continue to be in double digits.
Okay, so EBITDA level, double digits, that's something to look out for. But this is the first time which your company is coming in KYC show, and generally it's a largely untracked company. So I just want to understand a little bit about your company and what's your moat against your peers.
So Mangalam Worldwide Limited is a fully integrated stainless steel mill, starting from scrap melting, where we are melting capacity is around 66,000 tons annually. And then we are rolling these products and further finishing these products into bright bars. And furthermore, we have a piercing unit where we are finishing our own bars into seamless pipes and tubes. So you can say we have a full range of products. We have a diverse range of products. We are more into grades, higher grades, where we are producing 300 series grades and TI grades and Martin's grades as well.
Right, and so Mr. Mangal, want to understand a little bit more about the pricing and the realization trends of your industry. What is it currently right now? How the pricing and the realizations looking like?
The pricing with regard to the products, right?
Right. Right.
So the pricing right now in the last quarter, you can say due to the rising cost and raw material has increased more than 15%. And it is continued, the raw material pressure is still there and continue to rise. And we see we expect a further rise of 5 to 10% in this quarter.
So, Mr. Mangalam, you are talking about the growth, but on the other hand, the price rise and the realizations is also as a pass-through.
Angle to the development of the city and the state. And I look forward to playing my own small little role in the transformation or development of the state, as the case might be.
When we'd met in Kolkata, while the elections were going on, you'd pointed out during the course of an interview, a lot of your investments were happening outside, in states like Uttar Pradesh, etc. What do you think this mandate means in terms of what the new government needs to prioritize for West Bengal, Dr. Goenka?
I think there is a lot of anticipation, there is a lot of expectation, and there is a belief, there is a confidence. And I think it will be good to bring back the confidence of industry in investing in Bengal, in the state of Bengal.
My colleague Vishnu Shom has a question for you, Dr. Goenka.
Dr. Goenka, Vishnu here. It's an interesting day, fascinating for politics in Bengal. A quick question. One of the big concerns over an extended period of time has been people moving away, particularly young people from the state of Bengal, migration, professionals migrating elsewhere. How do you believe these professionals, extremely educated, skilled, need to come back to centers, whether it's Kolkata or elsewhere?
You know, it's not about Bengalis migrating. It's about getting good talent to Calcutta. It doesn't matter where they might be from. It's about getting that talent into Calcutta, into Bengal. I can only share that I had told my son and daughter-in-law a few years ago that feel free to live wherever in the country you want. And they said, no, we are happy living in Kolkata. So I think we need many more of those, and we need many more people to come, invest, and happily live in the state.
So West Bengal is the only state that still has a land ceiling act. It's one of the states where incentives were given to industry, then pulled back. How important would it be, from your perspective, for the new government to prioritize these kind of things? Because these are relics of the past, which is why several parts of West Bengal look like they're frozen in time.
Absolutely. I think, frankly, the urban land ceiling is as you said, an act which reeks of a relic of the past. I would imagine that it's outlived its utility completely. And when I had met you maybe a fortnight ago, I did say that what we need is also a consistency of policy, not an announcement of policy and then pulling it back. And we are very confident that the BJP will actually imbibe confidence and encourage people and industry to invest.
Okay, we'll leave it out.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to get the management to answer questions relevant to you. Watch Know Your Company weekdays at 11:30 a.m. to understand your next big bet.
Economy, business, world, technology. Noise filtered, numbers decoded. Insights that rewire your worldview. From governance to growth, we connect the dots. Your daily edge, your global advantage. India Business Report with me, Gauri Dwivedi, weeknights on NDTV Profit.
New year. New power panel. India market open. Now in its boldest lineup. This is where the trends get tested and stocks get conviction.
I'll recommend a buy call on a stock only when I'm fully convinced on the stock. With a table thumping buy.
And when the street wants the levels, he brings the chart.
Charts speak the truth, and I deliver the levels with no frills.
Parag Thakkar and Kush Bohra are now part of the morning crew with Tamanna, Neeraj and Alex. Same show, sharper voices. Every morning on India Market Open, your favorite market show just got better.
Hi, we're talking about Your Money Matters on NDTV Profit, and my name is Alex Matthew. You're going to need 40 crore rupees to retire in 20 years. That's a statement that took the social media space, at least as it related to personal finance, by storm sometime last week. It sounds like an alarming number. And that's because most people wouldn't have even contemplated putting together half of that number. It sounds really, really unachievable. So the conversation that I'm going to have today is to ask, first of all, whether inflation calculators, which generally tend to give you such a mammoth number, should they be taken at face value? And two, what are scenarios that might be more relatable to you? How should you make your own calculations? And more importantly, how should you achieve them? I'm joined today by Megha Malpani, who's partner at Zvest Financial Services. Megha, thanks so much for taking the time. I'm not sure if you caught that conversation that I'm referring to, at least the cliff notes of that, but it sounded pretty alarming. Do you think, and this is the first question, that these inflation calculators that throw up these numbers should be taken at face value?
Hi, Alex. Thank you so much for having me here. I'd not like to comment on the number, but, I would like to leave the viewers with some thinking frameworks, because that is what is probably going to be more useful to them. So to answer your question, the short answer is no, because most inflation calculators are built for convenience and not for truth. As Morgan Housel very rightly points out, that the most important part of every plan is planning on your plan, not going according to the plan, right? Now, the biggest problem or fallacy that I have seen with inflation calculators is that it assumes that your life is just going to, stay the same, which in reality does not happen. It assumes a 6 to 7% lifestyle inflation versus the CPI numbers, which, is the targeted rate of inflation. But the reality is a lot of numbers don't stay the same, and some, expenses do drop off the list as well. So let me start by addressing what exits. Education inflation, which is roughly about 10 to 12%, in K-12 category, and about 8 to 10% in higher education, actually drops off your list. What else drops off? We have, expenses like mortgages, because by 60, it is often assumed that, you would have taken care of your mortgages. The lifestyle creeps, which are present in terms of your working life, they also start, weaning out gradually from the expense bucket. But what comes in is the biggest elephant in the room, and which is almost 3 times the CPI numbers, which is healthcare inflation. So Alex, just to share some very interesting data with you, the medical inflation in India runs at about 13 to 14% as of April 2026. And you'll be surprised to know that every 1 in 4 Indian families borrow to take care of a medical need. 62% of the expenses is out of pocket, and that is the amount of dependency that is the amount of under penetration we have towards health insurance in India. There was also some data which suggested that as you age, 17% of your expenses are only towards medical needs. Now the point that I'm trying to say over here is that it just doesn't inflate, it actually compounds. So you should be very cognizant of budgeting your expenses towards sustenance and housing, which could be in the range of 4 to 5% inflation rate, healthcare, which is about 13 to 14%, and travel. While we all wish and aspire to travel, but what we have at least seen is that travel peaks just post retirement, goes on like that till about 70, and after that we have often seen that travel is just restricted to visiting your kids more often than not, and it has a declining share to add to your expenses.
To the basket
Yes.
of expenses. Yeah.
Yes. So the point is that, while we can have these spreadsheets to give us a number, but we have to be more cognizant of how we are accounting for different buckets of expenses.
Yeah.
If we do that, these numbers definitely hold true.
Okay, so that's fair. So a few major line items move out of the picture, understandably, because your kids only take 10 to maybe, no, actually more than that. So 15 years, you can say, to be completely educated most often, right? And some people even end up taking student loans to fund things themselves. So that's not necessarily something that you have to completely worry about. Of course, you apportion for it. But the point that you were making on medical inflation and medical costs, even this is a conditional thing, right, Megha? No one assumes that they will go for X procedure or Y procedure. It's an umbrella provision that you need to make in the event that something happens. So how do you account for that? Do you say that you have to consistently account for medical insurance? Is that the big cost that you have to plan for?
Yes, I think medical insurance is a must. It is a non-negotiable. Before even you get into doing investments, to my mind, ensuring you have a medical insurance and adequate cover for that matter, which is going to be relevant at the time you need it, is the important point that I'm trying to drive across here.
Okay, and what would people do in a scenario where beyond a certain point you don't have adequate coverage? Even if somebody is willing to give you an insurance product, the problem is that for various reasons, the actuarial science, that is what an insurer will look at when they weigh the risk, will say they can't cover you. They'll give you a product, but it might be out of your price range. So what do you do then?
Right, Alex. So, see, there are only two options here. One, try to take a health cover when you're fit and fine. Because as they say in terms of, any underwriting which happens on the medical insurance bit, that, when you're happy and hearty, nobody, you don't wish to take, because you take it, you think of it as an additional cost. But, when something happens, that is when most people try to, lean on to taking individual, standalone covers. And more often than not, we have seen people just relying on corporate insurances to take care of it. Well, that's a good to have, but I think a standalone health insurance is a must to have. But in case you cannot afford to take a medical insurance, then you don't have a choice but to actually make a kitty for any health exigency, because some lifestyle related issues are very common as far as, the Indian lifestyle is concerned. And what happens as a result of that is that, you are not going to leave somebody to, in a hospital saying that, we don't have money. You start dipping into your retirement corpus, and that is a amount of corpus which is gone forever. Yeah. And medical expenses can also be recurrent expenses. I think that is something which we need to keep in mind.
Yeah, that's a fair point. So therefore, the big point that comes in is the medical expenses, and also potentially at very high ages, when you're talking about super senior citizens, then the possibility of having someone take care of you, etc., right? You need to have help available to you, so that's an additional expense that you need to provide for. But having said that, there is such a thing, Megha, as a withdrawal rate, which is when you reach that retirement age, how much are you dipping into your saving on an ongoing basis? And the global standard, or at least it is a standard in certain developed markets, is 4%. Can you explain this withdrawal rate, one? And two, can you take us through what this should be in the Indian context?
Right. So you have accumulated a certain corpus when you retire, and you would like to withdraw from it, to take care of your monthly expenses and annual expenses every year. What you withdraw from your retirement corpus, what percentage as a part of your total corpus is what is the withdrawal rate. In US, it stands at 4%. But in India, there have been numerous studies done even in 2024, which states that, it should be in the range of 3 to 3.5%. The reason being Indian capital markets are more volatile. Our rates, even the fixed interest space in India is more volatile compared to the US market. And add to it, we do not have any social security. So in that scenario, when, you may, end up living, closer to 85, 90, because the current life, the current life expectancy stands at about 73 and 76 for men and women respectively. And this is only going to get, higher. So the point is that if you withdraw too much, you may reach a point wherein, you do not have adequate corpus available to, carry on your daily life.
Okay, let's talk about the assumptions that you have to make, and you've kind of touched on these subjects. So the question I'm asking you, and we'll get into 3 scenarios that should capture pretty much everybody. But before we get into those scenarios, when you look at, suppose somebody who is in their 30s right now, possibly somebody who's 35, who's watching this program and is panicking a little bit, let's face it, to say, how much do I need to set aside? How do I reach my number, Megha?
Right. So I think, some of the important assumptions or caveats, one should pay enough heed to is inflation, which we have already alluded to earlier. Second is the rate of return. I don't think for a post-retirement kitty, taking recourse to a 12 to 13% kind of a return, which the equity markets have delivered, is a true and realistic rate of return to consider. Because at that point in time, you would have to start moving certain part of your corpus into fixed deposits, into fixed income and equivalent categories. So to my mind, 8 to 10% should be an adequate rate of return to consider on the post-retirement corpus. Third, I think something which is very important and not spoken about enough is the sequence of returns risk, which means that you also should account for some factor wherein, just at the start of your retirement, the market crashes by say 20-25%. Now you are forced to withdraw from that at lower levels. So that acts like an, immediate dent in the portfolio for a very, very long term. So I think one should also, pay heed to those kind of scenarios. Healthcare, we have alluded to earlier. Another point is, post-tax returns. We have become so, I would say we've got so used to talking about 12 to 13% equity returns, and we generally don't talk about post-tax returns. Now, if you see the history of Indian taxation as far as equities is concerned, the equity taxation rates have only been increasing. So be mindful of that when you calculate your post-retirement corpus. Another point which I have seen, investors often go wrong with is they, kind of account for a lot of positive liquidity events, which could be in terms of inheritance, which could be in terms of a property sale, etc. To my mind, yes, these should, kind of be okay if they come. They should act like a bonus, but we should not depend on them while we're kind of building our corpus. And last and most important being the human capital window. Now, if you look at, typical working style of any individual, it peaks out at around 40, 45, at best 50 if you're really good at what you do. Beyond that, career disruptions, it could be because of health, it could be of industry shifts. These are real. So, you cannot just account for the fact that your income is going to stay linear or, grow at a certain rate beyond a point.
Okay. So these are all assumptions that you have to bear in mind. We'll come to individual scenarios which will help people understand this better, Megha, but we have to slip into a very quick break. On the other side, viewers, what we'll do is we'll take these 3 scenarios that we've built up for you, and you should be able to understand where you fit. And then we'll talk about how you should look to start targeting those goals and achieving them. Stay tuned.
Economy, business, world, technology. Noise filtered, numbers decoded. Insights that rewire your worldview. From governance to growth, we connect the dots. Your daily edge, your global advantage. India Business Report with me, Gauri Dwivedi, weeknights on NDTV Profit.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
He has been tracking markets for over a decade. Spots the trend.
Welcome back. This is Your Money Matters. And we were talking about how you should plan for retirement. Of course, in the context of somebody saying that you need 40 crores in 20 years to have a suitable retirement. You may not need that much. Let's talk about this in the form of scenarios, though, and we'll find out for you where you sit in the spectrum. Megha Malpani is with me. Megha, the three scenarios that I built out is one, where you have a single income couple with one child, relatively less affluent, and we'll define these, of course. The second scenario is a double income couple with no children, which is a lot of people, and this is called DINK as well. And the third scenario is double income couple with one child and slightly more affluent. So I think we've covered quite a few bases. Let's start with the first. And what do you think about this?
Right. So, Alex, before we get on to the numbers and the frameworks, I would like to, kind of address a few disclaimers here. That, we're talking to, about 1 to 5% of the Indian population which pays taxes and is, typically in the urban, formally employed sector. If your income is lower than that, please do not take the numbers at face value. You will need to adjust for it accordingly. And, these spreadsheets are not to copy, but just to help you, come out with certain frameworks that could help you. Now, Alex, to answer your question of a single income, one child, relatively less affluent, let's look at what happens in these kind of households. To my mind, these households require the most honest conversation as far as retirement is concerned, because there is very little slack left for any shortcomings. Let's look at, probably a household income of 2 lakhs post taxes. And in this context of, a city, someone living in an urban city, the expenses are real, a rented home, a child in school, no second income. It is definitely a stretched situation to be in. Now, to my mind, after, I tried to do a lot of iterations and I figured out that, about a 50 to 60,000 in SIPs is a fair assumption to have in this kind of a household. If you do a SIP of about 50,000, assuming it grows at 12% for a period of 25 years, you would be easily able to accumulate about 8.5 crores.
Quick question here. Okay, this is an ideal scenario, Megha. Let's face it, right? Because you think about it, at 12% per year incrementing, it would end up a pretty mammoth figure in the 20th and 25th year. Fair?
Yes.
So therefore, this is an ideal situation, right?
It is an ideal situation and rests on the assumption that you have not stopped your SIPs in the interim period. Second, you have not really taken out anything from here. And second, you have let the compounding happen till a period of 25 years, which is also a very uncommon scenario as far as, Indian investors is concerned.
Yeah, but complete the point that you were making. You started off with about 50,000 rupees. And you've actually made certain assumptions on rent, on household expenses, on arbitrage fund, which actually is a very important point here. And you've started with 62,000, if I'm not mistaken, and that total comes to 2 lakh rupees. how do you build out that corpus and where do you end up at?
So, Alex, let's take it step by step. Let's assume this this household has an income of, say, about 2 lakhs. Yeah. Close to about 80 to 90,000 just goes towards expenses. Let's assume 50,000 of the remaining corpus is towards long-term retirement needs. And the remaining of this is used as more as a cash flow management technique, which could be used for, funding your insurance premiums, funding towards school fees. It could be, towards ad hoc expenses and some bit of travel. If 50,000 out of this is done towards long-term investments, which should be done in my view, because that is just about 25% of savings rate, this alone for 25 years at 12% can compound to, about 8.5 crores. Now, we are also assuming a base case scenario that here this couple has no savings till date, which is also not a very realistic assumption to have, because they would have something in PF, or some kind of investments as well, right? Some points under consideration here is that, these plans don't require perfection in this kind of household, but they require a lot of consistency and a little head start that is going to, aid them towards a more comfortable retirement. One point, they should also keep in mind is that as and when income increases, they should consider very, very seriously stepping up your SIPs, feeling that, you will have not enough dry powder or not enough incremental corpus, which can come handy in terms of adverse situations. Another point that is a non-negotiable in this kind of a household is term insurance, which should be anywhere in the range of 12 to 15 times of the earning member, because this acts as a load-bearing will in such households, right? Another point, again, is towards family floater health insurances that we discussed, because one medical exigency is going to raid the corpus and is going to break your SIP forever, and, it will not leave you with a situation you would ideally want to be in. It breaks when, you take inaction in early years towards investing. You show a lot of inconsistent investor behavior patterns. And if you have a situation wherein you are, exposed to a medical exigency without insurance.
Sure. Okay. So in the numbers that you drew up, you would accumulate a corpus of close to 9.5 crore rupees, and the target is about 10.4 crore. I'm reading off the document you've shared. And so therefore the gap is about 1 crore, which is manageable. So let me ask you.
If there is some retirement, that you have built something that will also grow. So sure. If that is there, even a number of 5 lakhs, as basic as 5 lakhs left to compounding is going to bridge that gap for you.
Yeah, so that's fair. My question is, what if you can't accumulate that much? And I guess this is true for everybody who starts saving, to say that if your target was 10 crore and you managed to put, say, 7 or 7.5 crore together in those 25 years. You can adjust certain things in your consumption patterns later, because that's all you have. You don't have another choice, right? But it's possible.
It is possible, but nobody likes to scale back, Alex.
Sure.
That is also the reality. The only option, I think, there are only 4 options that are available. One, you take higher risk, which is not recommended, because taking higher risk in your retirement years could be catastrophic. Second option is you work longer. I think that is the only sane option which exists, that, you try to take some opportunities where you get some kind of passive income. It could be in terms of consulting, etc. But it is important to keep in mind that during your working years you have invested enough to reskill yourself. It only happens under those situations. Third option, as you rightly called out, is reduce your living standards. But when you try to do that out of compulsion, it is very difficult situation to be in.
Yeah. Let's talk about the second scenario, which is double income, no kids. And I think this is what a lot of people aspire to for various reasons, and no judgment here. Mega people are making these choices on an ongoing basis. I know there are overarching conversations about fertility rates and all of that, but let's face it, people are making this choice. How does this scenario work?
Right. So, Alex, to my mind, this is one of the most interesting, households that we work with because they're often underestimated. Now, if you look at what is happening here, there is no school fees, no education corpus, no child, which creates, urgency. And that is precisely the risk, right? They have maximum potential, but minimum urgency. And that is the paradox in which, houses with double income, no kids live in. The structure doesn't change here. Let's assume they are, on the moderate levels as far as income is concerned. And let's, for simplicity's sake, assume they have an income of close to about 3.5 lakhs per month, right? Now, one important expense in these households is travel because that is where, their experiences are lived and that is how they would like to live their life. So it forms a huge part of their expense. Even after doing so much, it leaves them with an investable corpus of, say, easily close to about 1 lakh plus, which at about 12% over 25 years can grow to about 20 crores. It also leaves them with some amount of surplus in terms of arbitrage funds, towards your lifestyle expenses, travel expenses, etc., which can also be used as a dry powder. Liquid cash always, to my mind, gives you that optionality feature in the portfolio, which if utilized, from a tactical asset allocation point of view, can work wonders, right? What is the real risk, if you ask me? The real risk that we have at least seen in some of the households that we have worked with is a gradual shift from long-term investing to, some short-term needs, which could be in the form of a car upgrade, it could be in the form of home upgradation, etc. And remember, every 25,000 of SIP which you don't do for this stipulated time frame is going to, get you a number which is 5 crore less after 25 years. So that is a number you should be very, very mindful of.
Megha, we're running out of time, so we'll have to very quickly run through that last scenario, which is double income single kid, and maybe jump straight to the working and talk about a few salient points.
Right. So, in terms of double income, one child, affluent household, let's assume, their monthly income is in the range of about 6 lakhs. Now, a big expense for these households would be in terms of education, in terms of both undergraduation and post-graduation. If you intend to send your child overseas for education, please ensure that you start building dollar-denominated assets for them early on and not when, it's the time to go for investments. To my mind, today, post-graduation overseas is anywhere in the range of $85,000, which would amount to close to about 2.4, 2.5 crores by the time a 5-year-old child would require it. That is something you have to be very mindful of. Generally, we have seen the math after, even accounting for mortgage, etc. They would be easily left with a corpus of close to about 1.6, 1.7 lakhs, which could be used as far as long-term retirement corpus is concerned. And that in itself would be able to account for close to about 32 crores in 25 years, which would suit what their current expenses are. This also has the element of higher education. So, you will still be left with, over 25 crores to suit your requirement. One point that I have seen in these households is that, the decisions around, money are centered around one person. And I think, irrespective of which case we are talking, it is very important to highlight that both the partners should be equally involved as far as, your financial journey is concerned, feeling which, we have seen the retirement corpus just lying in fixed deposits or, on very, very wrong investment categories, which can kind of completely play a very negative consequence as far as your retirement is concerned.
Yeah, important. So therefore, this is the long and short of it. And even the numbers, I think, that Megha has highlighted for you are indicative. She told you this at the start. This is supposed to help you put pen to paper or whatever numbers in your Excel sheet and help you construct what your retirement would look like. Those numbers do look scary, but remember, the power of compounding helps small numbers become very, very large if you don't trouble them or tweak them in between. Megha, it's been an absolute pleasure having you on the show, and I think this is a very important conversation to have had. Thank you so much for taking the time.
Thank you, Alex. Thank you for having me.
That brings us to the end of this edition of Your Money Matters. Thanks so much for watching. Do stay tuned. This is NDTV Profit.
I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
Economy, business, world, technology. Noise filtered, numbers decoded. Insights that rewire your worldview. From governance to growth, we connect the dots. Your daily edge, your global advantage. India Business Report with me, Gauri Dwivedi, weeknights on NDTV Profit.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to get the management to answer questions relevant to you. Watch Know Your Company weekdays at 11:30 a.m. to understand your next big bet. New year, new power panel, India market open, now in its boldest lineup. This is where the trends get tested and stocks get conviction.
I'll recommend a buy call on a stock only when I'm fully convinced on the stock. With a table thumping buy.
And when the street wants the levels, he brings the chart.
Charts speak the truth, and I deliver the levels with no frills.
Parag Thakkar and Kush Bohra are now part of the morning crew with Tamanna, Neeraj and Alex. Same show, sharper voices. Every morning on India Market Open, your favorite market show just got better. On NDTV Profit, for your profit. When the headlines move fast, perspective matters. On Editor's Cut, our editors come together with experts to distill the week's information blitz into clear
Abhijit Roy, MD and CEO of Berger Paints, with us on the show as well. Abhijit, great talking to you. Neeraj, good afternoon. And could this be the start of many good afternoons for the state of Bengal? Simply because every leader who's your peer, who you've spoken to through the day to day, has said that there was a case of underinvestment in infrastructure, in job creation activity, and all of that is something that they're looking forward to change. Would you second the same? Would you add on or supplement that thought?
Yeah, so I think, these are good times. Hopefully we are looking forward to a lot more development happening on the economic front in West Bengal. West Bengal, unfortunately, for the last almost 49 years, 34 years of the left rule and 15 years now of Trinamool, most of the time it has been at war with the center. And so a lot of the development which could have happened, suffered a bit on account of that. So now with the double engine Sarkar coming in place, we would expect a lot more spends happening on the infrastructure side, and the completion of jobs which are still incomplete, sort of like the metro rail project, which is small tracts of land which are pending to be acquired, or it just needs speeding up a little bit, and I would see a lot more happening there on the infra side. As far as other areas are concerned, I think two big areas stand out. One is the fiscal incentive and an industrial policy which deals with that. That is missing as of today. In fact, the West Bengal government actually passed a retrospective act saying that all incentives given earlier also stands cancelled. And that went into the Supreme Court. There was companies like Haldia Petrochemicals which went into a fight with the government. They actually won, but still didn't get the money. So, that sent a negative sentiment down, the investors. So that needs to be corrected quickly, and those have to be honored. And more importantly, a new fiscal policy has to be, brought in place, which should give an impetus to the manufacturing sector in this state. There are a large number of MSMEs, but there are big missing is the big anchor investors which are required. The last one, of course, was Tata Singur, which went away. And since then, there have been a dearth of big time investment in this state. And the reason was, of course, was, this incentive missing, also getting large tracts of land. The new government has promised that they will do enough and more for employment generation. One of them will be, of course, the industrial side, which I just spoke about. The other side, which is of greater importance to the state of West Bengal, there are a lot of talented youth here. Bengalis typically, they give a lot more weight on studies, and it is a very inborn thing. One is culture, singing, dancing. That is a very, very prevalent thing at all houses, including mine. And the other one is, giving a lot more stress on, studying. Lots of books, magazines, you will find, much more, contextual in that way, reading a lot of things.
That is true. That is true, Abhijit. I think any of us who worked in the profession will have seen a outsized share of Bengali representation in newsrooms. I just want to understand from you, what are the expectations and the timeline that industry wants to give this new government? What are you hoping to see? And are you also hoping for opportunities where the talented youth that you describe can find that kind of chance within the state itself?
Yeah, I had a occasion, I am also the president of the Bengal Chamber of Commerce for this year. So it's an opportune moment that way. And we got an interaction, we had an interaction with Mr. Sanjeev Sanyal also, just a few months back. And there are a lot of plans which was there on the anvil, which was put sort of, I would say, I would see that coming to fruition now. One of them was, making the city of Calcutta very attractive for youngsters to stay put here. There is this Ganges, the riverfront is likely to be beautified quite a lot. And then we would try to attract and retain the talent here in Calcutta itself. And for that, we need, investments in GCCs, possibly in the IT space, the services. As you know, Tamanna, a lot of these youngsters, They are all staying in Bangalore, in Hyderabad, in Pune, sizable population of Bengalis all over this place. They are going not because they just love those places, but because there is lack of opportunity here. If that builds up here in Calcutta, and more so if they are near their friends and relatives, and it's a nice place to be in with opportunity, then I'm sure most of them would love to stay put. And that's the promise which BJP has made, saying that your kids will not have to go out of this state in search of job. We will try and create those here. So we expect, therefore, some amount of work happening in that direction in this state.
Yeah, Abhijit, so very well put. And good afternoon, Alex here. The thing is, from the perspective of the centre and the policies that it wants to engender and get the states to employ, is to have a competitive federal structure, to say that you create policies and you create frameworks that will get companies to come and invest. And so from that perspective, you have a state that has lagged behind, that has a fresh new mandate and a lot of promise, but it's got a lot of ground to cover, Abhijit. Why would a company, and you spoke about Singur. Now this is something that is already so far back in the past that I think if I speak to my 20-year-old colleagues, they'll ask me what I'm talking about. So therefore, how much ground will need to be covered in the very near term for that script to flip?
Yeah, so that is true, because there is a perception issue, and the continuance of the policies is something which people would look forward to. So that is why it is so important that the center and the state gets aligned, and that fortunately will now happen, and it will push this objective in the state. I'm sure the new government led by the BJP will have to focus on this part of the perception change which they have to bring about on the state of West Bengal. And so initially they will try and get this done through some big ticket announcements, possibly doing something interesting, some companies which will come in and hopefully invest here in this state. So we look forward to that. First of all, the fiscal policy and the trade investment policy itself does not exist. So surrounding this state, is Orissa, Northeast, which have very attractive industrial policies, which are fiscal incentives given to the companies. In fact, we also went and bought a land in Orissa and setting up a plant factory there. We do have a plant in Panagar, but now we hope that this is something which the state government will look into and will announce a fiscal incentive for attracting the companies and to come here and invest in state of West Bengal. It has an advantage, or it has many advantages. One of them is the large market size, which is the largest in the East by far, and therefore, the companies would love to invest in this particular state because the market is close by. The second is, talent, which is available readily here and at a very reasonable price. So that is also there. The raw material which is available, especially on the food and agro processing, it is one of the largest state producing large number of items. So there are opportunities here for this state which has to be tapped into, and I am optimistic that things will turn out for the better.
Yeah, I mean, the potential is definitely there. I think in the span of Indian history, West Bengal was at one point a financial powerhouse. There's no reason why it can't happen today and have all its engines firing. Thank you so much, Abhijit Roy, for joining us and speaking so frankly and candidly. You rarely see corporates wanting to speak on political outcomes, but this is more than just an election, isn't it? In terms of the impact it could potentially have on the economics of a large state. Shankar Iyer, author and columnist, joining in. Shankar, thank you for your patience. We wanted to capture all of those corporate voices and what they think, because they don't always come out and speak so openly, especially about politics. You know how squeamish corporates get, but you heard a slew of voices talking about opportunity now getting unleashed. Do you think that there are very high expectations, or can change really take place?
Well, change can take place in a steady pace, as has happened in Assam and Tripura. They came with a plan and they executed the plan. I mean, typically this beginning will be made with infrastructure. West Bengal sort of is hurting for good infrastructure in terms of roads, power, the incomplete projects. It also has great potential in new age technologies. So for instance, it has a large enough, it's a delta, so the tidal power, solar, I mean, all kinds of things can be done there. The question is whether they are able to fix the security issues first, immediately, and then progress the infrastructure projects. The second part of it is Bengal has a large agricultural sector, which for some reason or the other is stuck on one kind of aspect or one facet only. So there is potential for introducing industry into the rural districts of West Bengal for food processing to start with, so that the yield from the land can be improved. If you know, Tamanna, basically all of the assets that belong to the state must yield returns commensurate to their potential, and that is what gives the state and the people the income and the GDP. So in West Bengal, what the problem has been, the land has been left fallow in the sense of realizing the potential. If you go back in history, I think the Birlas, Aditya Birla group, particularly Mr. Aditya Birla, had to leave Bengal and Kolkata, and Tata Singur, which was 20 years back. I mean, for people of my vintage, it was like the sign of hope that finally the left had woken up to the potential of investment in West Bengal, and then that got messed up. And 15 years, West Bengal has hardly seen anything major. I mean, if you travel through Bengal, the thing that hits you is that it is at least 30, 40 years behind the rest of India in terms of.
But this is so true, Shankar, which is why sometimes an election result is seen or viewed beyond the prism of just politics, and this party won, this party lost. I think with West Bengal, their aspirations truly there. I'm so sorry. I'm going to have to wrap it up. We want to invite you back for a longer conversation, but with 30 minutes to go for markets to close, I'm going to have to focus on that. So apologies for that, Shankar, but beautifully explained on what the perspective is.
A big market voice and an apt guy to have today, Rajiv Batra, Head of Asia and Co-Head of Global Emerging Markets Equity Strategy at JP Morgan, with us on the show. Rajiv, great having you. Thanks so much for taking the time out, and I'm sure all three of us want to quiz you so much on what's happening globally and the relevance thereof, because that's the bigger story for the market. But since we are on this topic, and it seems like there is a change afoot in West Bengal, and very likely a change afoot in Tamil Nadu as well, two of the largest states going into the elections this time. What does the political story in India tell you, and the implications of that for the markets?
Thanks for having me back on the show. I'll say that the alignment of state and the central government with the common parties, and also the stability what investors as well as people want at a regional level, plus at a state level too, if that start appearing at a broader term, it will definitely boost the potential growth prospect for the country. We have seen potential growth estimate have improved over the last few years, but it has not risen as substantially as what one wants. But if results what initial numbers are showing that fructify once the official counting close, yes, markets on a near-term basis will take it in a positive stride.
And so let me then zoom out and ask about the latest situation with regard to Project Freedom. There seems to be some sense of relief at the start of the trading day today that says that maybe things are easing out, but would it be too early to call? Ultimately, you have to see that reflected in crude oil prices, and they're still elevated.
No, well pointed out. Right now, the big bone of contention over here is when the Strait of Hormuz will get open, which have never gone shut in the human history, and now it is shut. So till that doesn't get open and amply reflected into the oil prices, till then only we will get clarity overall. So if oil prices start receding for the next 6 and 12 months to the direction of $80 mark, which subside any kind of a growth concern, till then, like any kind of a rally, especially in the spaces where growth still remain a concern, will be meant for selling rather than buying overall, because for sure, our base case is that diplomacy will prevail over escalation, but because of this uncertainty, we still expect input cost and oil prices to remain elevated for at least next 3 to 6 months in a row, and that will put, you can say, a downward pressure on growth and earnings estimate.
Rajiv, here domestically today, I think some of the focus on election results and your commentary on it was very well put about how the center-state tandem is being looked at. But do you think the bigger concern as far as India goes continues to be what happens with the flow of energy and the Strait of Hormuz? Because we seem to get beaten no matter what happens, sometimes more than those participating in the war. And does that become one pain point that continues till there is some clear solution?
100% oil derivatives or anything which is imported and that is getting disrupted because of this, you can say a small strait getting impacted overall has been a concern for India. Remember when we started this year, it was a Goldilocks regime for global as well as emerging markets overall, where you would have been seen a broad-based global growth plus policy support around the corner, which means anything that is cyclical, value, high beta have tend to do well. But since this conflict broke out, there have been a regime shift overall, where now anything which is energy sensitive or you can say a cyclical is taking a whack, and anything which is non-economically energy sensitive or structural growth, they are tend to doing well. So we are in a two-speed economy at this juncture, where anything that is linked to energy or you can say imports that are getting impacted through this transit route will be in some sort of trouble. Now, whether it is just a blip or it is a longer term pain, that will be decided on how longer this uncertainty continues.
Rajiv, you have a great sense on flows, and the overarching beliefs is that because India is not present, quote unquote, in the AI trade, flows are leaving India and going to places where the AI trade is present. South Korea, etc., in the emerging market space, Japan and US in the developed market space. Is it as simplistic, part one? And does this change at some point of time? What can cause that change?
So yes, flows are getting impacted, and flows are not just negative in India. We are seeing that outflows even in Southeast Asia country, that is ASEAN. We are seeing outflows in some of the, you can say EMEA or CEMEA markets also, which are also oil and gas importers per se. In fact, in the month of March, entire emerging markets saw outflows, even the AI favorite markets like Korea and Taiwan. This particular month, or you can say last month in April, when flow started resuming, obviously the commodities world, that is Latin America, or the tech related market, that is Korea, Taiwan, were the first one to see the rebound related inflows overall. So till we don't shift back from a stagflationary tilt scenario, which we are in right now, towards back to above potential or a Goldilocks growth scenario, it will be a struggle for commodities, oil consumer, or you can say an energy derivative sort of a country to receive meaningful inflows. Some bit of a flows may stay in a developed market, particularly the US, for a safe haven prospective purpose. But beyond that, if it is coming outside, it will largely go into, as I've said, to a non-economically energy sensitive, that is structural growth sector like AI and tech, or it will go to a real assets based sector, which has a tailwind of higher oil and commodity prices, which largely is Latin America and some part of Middle Eastern countries.
Go across to Harsh Goenka. He's joining us now. He's put out a post earlier today saying industrialists are thrilled with the result. His family comes from Kolkata. They'd left, one part of the family is still there. He's moved now to Mumbai and elsewhere. Mr. Goenka, welcome. Do you want to summarize what you think is the feeling amongst business communities, families like yours that trace their roots to Kolkata, and how you process this result in West Bengal? Mr. Goenka.
I've spoken to a lot of businessmen today, and there is a general sense of euphoria that it's great news for the business community. There will be a shift from welfare politics and dole to sustainable economic development in the state. There is a general feeling that now there will be an industrial revival, and there has been a fair amount of migration that has taken place. There would be a reversal of that. And for growth, one needs less of local tensions and societal cohesion, which will come. And more important is there is a lot of entrepreneurship within the Bengal community. And I think startups, entrepreneurs, and MSMEs will get a lot of boost. One found a lot of resistance from what is known in Bengal as syndicates. I am sure there will be greater law and order and more jobs. I think it's extremely important to have the migration reversal. So all in all, the entire business community seems to be absolutely delighted.
What would you like to change? What would you like should change in West Bengal with the new government coming to power, Mr. Goenka?
I think the entire the focus on economic development, on industry, something that I hope that will happen. It has been neglected in the last several years, and I would say several decades. Once the CPM came in, and then Singur happened, somehow or the other, the Bengal never got its brand back as which it was. And I hope that the glorious days of the past come back to Bengal. It has lost the race to so many other states like Maharashtra, Gujarat, Tamil Nadu, etc.
Mr. Goenka, it is so poignant that you mentioned Singur because this was a seat that was continuously held by the Trinamool Congress. It catapulted Mamata Banerjee to the Chief Minister's chair, and today the TMC has lost on this seat. Becharam Manna, who was the right-hand man of Mamata Banerjee in the Singur agitation, he's lost this seat. Do you think, in that sense, Bengal has come a full circle in the verdict today?
Absolutely right. It has come a full circle. And people in Bengal are looking for employment. They are looking for better opportunities, better economic growth. So it's extremely vital that the state comes back to its old glory.
We leave it over there. I know you don't want to get involved in a hectic political conversation, but we leave it over there. Many business families had to leave Kolkata, not just during the Trinamool rule, but going back as well. They, of course, would be delighted with the fact that the government has changed. Thank you, Mr. Goenka.
Economy, business, world, technology. Noise filtered, numbers decoded. Insights that rewire your worldview. From governance to growth, we connect the dots. Your daily edge, your global advantage. India Business Report with me, Gauri Dwivedi, weeknights on NDTV Profit.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to. Get the management to answer questions relevant to you. Watch Know Your Company, weekdays at 11:30 a.m. to understand your next big bet. New year. New power panel. India Market Open. Now in its boldest lineup. This is where the trends get tested and stocks get conviction.
I'll recommend a buy call on a stock only when I'm fully convinced on the stock. With a table thumping buy.
And when the street wants the levels, he brings the chart.
Charts speak the truth, and I deliver the levels with no frills.
Parag Thakkar and Kush Bohra are now part of the morning crew with Tamanna, Neeraj and Alex. Same show, sharper voices. Every morning on India Market Open, your favorite market show just got better. On NDTV Profit, for your profit. When the headlines move fast, perspective matters. On Editor's Cut,
Good evening. Welcome to the big question on NDTV Profit. I'm Vikram Oza. Yes, tonight West Bengal is staring at what many are calling a political reset. And the larger question is whether it finally triggers an economic reset as well. So after decades of decline, a decisive BJP victory has put the spotlight back. It's back on growth, on jobs and investment. So corporate leaders like Harsh Goenka of RPG believe that development is back on the agenda, that jobs will follow and a more stable social climate could finally emerge. And the numbers are telling a rather sobering story. So in 1960-61, Bengal accounted for 10.5% of India's GDP, the third largest in the country. Today, that share has nearly halved. It's gone down to 5.6%. So per capita income has slid. It's gone down from what was 127% of the national average to just about 84%. So industry has voted with its feet. Between 2019 and 2024, more than 2,200 companies relocated their offices out of the state of West Bengal, nearly 40 out of those listed firms. So citing cost pressure, some of them were talking about administrative hurdles, but they all did move out of West Bengal. What about manufacturing growth? That too has lagged the national pace, as it were. And history still casts that long shadow. You remember the Tata Nano project? It was scrapped. It was scrapped in Singur after land protests took place. That remains a turning point that reshaped investor perception about the state of West Bengal. So even today, structural issues are there. They persist. For one, West Bengal has quietly undergone this structural shift from being a magnet for workers to becoming one of India's biggest exporters of labor. So there are out migrants, over 21 lakh migrant workers from Bengal are officially recorded as working outside the state. That places the state among India's top labor exporting states. And then there is the problem of land as well in the state. West Bengal is among the few states where the Urban Land Ceiling Act of 1976, way back, of course, that is still in force. It's the act that caps land holdings in cities like Kolkata, and it brings it down to as little as 500 square meters, which adds layers of approvals. There are NOCs, there are exemptions, of course. But yes, this is a big hurdle for industry, which is why tonight we ask, can a political mandate finally reverse the decades of industrial decline that the state has seen? Will jobs in factories return, or has Bengal already lost that race? And what must really change for confidence to come back to the state of West Bengal? We've been getting a whole cross-section of views from industry. You know, people from Berger Paints, from Titagar Wagons, Sanjeev Goenka, all of them have a strong perspective on what this political shift could mean for the state going ahead from here. Listen to them as we get into the debate.
Now with the double engine Sarkar coming in place, we would expect a lot more spends happening on the infrastructure side, and the completion of jobs which are still, incomplete, sort of like the metro rail project, which is small tracts of land which are pending to be acquired, or it just needs speeding up a little bit, and I would see a lot more happening there on the infra side.
I think job creation and infrastructure development, I would probably put two of them together. Job creation by way of larger industrial impetus, and I suspect the jobs are going to come up if there is industrial growth in the state. Bengal used to be an industrial capital and engineering capital of the country, and it has lost over the last so many decades this position. So now is the time that we need additional industrial investment here.
All right, so you've heard a strong sense of optimism from industry leaders. There are more reactions we've got, but the real question is whether this political moment can translate into lasting economic change on the ground. Joining us on this debate is Prabhakar Sahu, and of course he's going to join us in a bit. We have Dr. V.K. Vijaykumar as well. But Mr. Sahu, I understand, is already with us, Program Director for Economics and Finance at Niti Aayog. Good to have you, sir. Dr. V.K. Vijaykumar is the Chief Investment Strategist at Geojit. He joins us on the panel. Also from Industry and Enterprise, we have Anil Bharadwaj. He's the Secretary General of FISMI. And of course, Sushil Podar is on the panel. He's President of the Federation of West Bengal Trade Association. Completing the panel is Ambrish Balaga, Independent Market Analyst. Good to have you all with us, gentlemen. Mr. Sahu, this election has been projected as this turning point. So can a political shift alone, you think, realistically stop the long-running exodus of industry in West Bengal, the kind of exodus we've seen on the jobs front? Or is that expectation too optimistic right now?
Of course, it is very optimistic view. And what happens is whenever there are like parties both at the center as well as state, they are in the same party, then things make a lot more easier, lot more comfortable. And of course, given the alignment of the state government's policies and the central government's focus, I completely expect that, okay, this optimism, of course, it will take some time to realize or to capitalize or things to happen on the ground. But I feel it is better for the state when it comes to infrastructure development, job creation, industrialization. Now, of course, things will not happen in a day or two. It will take some time, but maybe 3 to 6 months on the ground, things will change.
So you're very optimistic. At this time, we are looking at a change, a possible shift. Mr. Bharadwaj, more than 2,200 companies, they relocated out of the state. This happened in just 5 years. What do you think it's going to actually take to stop further exits right now, even before we talk about bringing the firms back?
See, first of all, let me tell you that the MSME communities in West Bengal are extremely happy, cautious they are, because they have been through a very heroic period of time for a long, long time, earlier under the regime of the leftist government and then under the TMC. Especially the informal rent seeking and the tolabaji and the cut money and fear of local level intimidation, etc. So, what they are looking forward is, first of all, that rule of law is restored and people would ultimately start expanding their businesses that they have been either postponing or they have tried to shift elsewhere other than West Bengal. Somebody actually, because of other preferable taxation regime like in Assam also. So I think once the law and order issue is sorted and there is confidence among MSMEs. See, one important difference between large and MSMEs is that, MSMEs are embedded in their socio-economic milieu. They can't shift. They are not loose-footed, so to say. I mean, they won't shift as quickly as large companies can do. For a Tata to shift from Shingur is easy.
Yes.
But for someone who is born and brought up there, has family there, the whole ecosystem there, it's not easy to shift from West Bengal to an alien place. So they had to really put it up, and they had been through a very harrowing period of time.
Yes.
So they are looking forward to it. And I think, as I said, that if law and order is sorted out and this intimidation regime is gone,
true,
at the local level, they would start expanding the business.
What about the markets, Dr. Vijay Kumar? Deeper structural issues is something the markets did not like low industrial depth, the weak manufacturing, the policy inconsistency. How do you think that's likely to change by way of perception in the markets as well?
Well, the perception of the market will change dramatically because this is the election result is a real political game changer with the BJP government in the state, supported strongly by the NDA government at the center. Big changes can be brought about. There are structural issues. There is no doubt about that. There are issues relating to the poor industrial base. You refer to the per capita income and the contribution to GDP from West Bengal in the 1960s and present situation, and also the migration of companies. So 2,200 in the last 5 years. If you take the last 15 years, 6,600 companies have moved their registered office from West Bengal to other states. And that includes 110 listed companies, 110 listed companies. So these companies will be having second thoughts about that with the bold declarations by the two governments, particularly by the Prime Minister. Big changes are possible. The market is looking forward to big changes from the announcements from the government, both at the center and the state, followed by very strong policy decisions implemented on the ground.
Mr. Podar, you heard what Mr. Bhardwaj is saying. Often the issues with businesses point towards law and order concerns, the syndicate culture, the hidden costs in doing business. So how decisive have these been in pushing the firms out of Bengal, and how quickly do you expect change to happen?
The change will happen very quickly because the faith, it is a question of confidence. Now people are thinking the magic will come. So as the announcement of the government, new government has came that the other side is winning and they are coming in a big way. So all the businessmen and especially from the trading segment, they are very happy that now the trade with this state will more happen, especially with the neighboring states and with the neighboring countries also. So this is very essential that very quick all the promises made by the party in their manifesto, that not of even for the 15 days licensing system and one window system. And this can be done in 15 days also. If we decide that we have to do in 15 days, so this can be happen in 15 days. So this magic and this miracle will definitely will send a positive message to the trading community, and they will start the more business here.
Yeah, so Amrish, if a new regime is going to promise the end of cut money, impose a certain amount of transparency, how quickly can sentiment turn into real investment decisions according to you, or do you think markets wait for proof?
No, I see markets are the first to react. So we have already seen their reaction. The markets had moved up in the past few days. And today it corrected only because, whatever was expected had happened. But yes, after this, I think markets would wait for some sort of a proof that things have started moving. Because, this is the first time in the last 5 decades that Bengal would be having the same government which is at the center.
Yes.
So after decades of neglect, I mean, we are clearly expecting some boosters for Bengal. I think some will flow in terms of infrastructure industry, growth. And mafia, clearly, I think that syndicate which you're talking of has been a major issue in Bengal all through. I mean, earlier during the CPIM days, you ask any businessman there, during CPIM days, you had to pay them to ensure that you are able to work freely. And once the TMC came, you had to pay both of them. You had to pay TMC as well as CPIM goons, and still you couldn't do your work. So if that is taken off, if the bureaucratic corruption is brought down, single window clearance happens, I think the first to take off would be those who are already doing business in Bengal. Right. I think they need to expand. And those who are outsiders who will be setting up business in Bengal for the first time, I think we will wait for a while for that proof. So I think that could take about 2 or 3 years.
Fair enough.
And if talking in terms of sectors, I think the first to take off would be real estate, because that will, take off first, possibly followed by infrastructure growth, and then industries. I think industries will take about 2 to 3 years more to really see a difference.
So you're painting us that sectoral picture, which is an essential part, but for industry to kind of grow from this point onwards, Mr. Sahu, the new government will have to consider Bengal's debt levels. They're already quite stretched. So can the state afford an industrial revival while sustaining large welfare commitments that have already been made? Or do you think that could become a fiscal constraint for them?
Of course, the West Bengal has been actually lagging behind when it comes to the fiscal health. In fact, it's not now, actually, for quite some time. In fact, it has its debt level of 38%, which is next to the Punjab. And Niti Aayog brings out a fiscal health index report where West Bengal is one of the lowest category states. So that is where they will find it very difficult to really mix both, continuing with the large social welfare programs, which they have to do anyway, because in a democratically elected government, it's very difficult. But central government would certainly facilitate the infrastructure project, all this express highways, the industrial corridors, or of course facilitate investment in West Bengal. I'm sure it is not going to work in one day, as it has been already pointed out. There are some pain points, whether it is syndicate or infrastructure development. There are issues related to land, labor. These are all political sensitive issues. So things should gradually happen. Maybe I think 3 to 6 months. The business houses would try to show interest and queries and all that. And maybe 2 to 3 years it will take for the industrializations to take place. But when it comes to the fiscal position of the state, I'm sure the new government will have a long-term, at least a medium-term fiscal strategy to strengthen the capex level, reduce the debt level, because the interest payment is something around 15% of the revenue receipts. That is not something actually good for the state, because capex becomes a residual expenditure. But now that both the state government and central government, they are the same party, they align with each other when it comes to the policies, the coordinations. I'm sure a lot more help from the central government for the infrastructure development, where the economic activities will take place, and also reduce the trade and transaction cost, thereby attracting the private investment.
Do you agree? Do you agree, Dr. Vijay Kumar? Is Bengal facing that classic welfare versus capital investment trade-off? And can a new government realistically rebalance that without any kind of backlash from the market?
Welfare development trade-off is a problem with most states.
True.
And therefore, it is not going to be a problem of West Bengal alone. As you said, as you showed in the slide, West Bengal is among the 5 most indebted states of India, and their expenditure on interest alone is 15% of the total expenditure, almost unsustainable. But there are other states like Punjab, which has got a worse record. Kerala also is worse than West Bengal as far as interest payments as a percentage of total expenditure is concerned. So this is a classic trade-off. Even Tamil Nadu's growth has been very good, one of the best in the country, but their fiscal situation also is terrible. But then the populism and excessive welfare spending in Tamil Nadu by the DMK government did not give Stalin a second chance,
True.
a third chance. Rather. Therefore, there are limits to populism also.
Yes.
That is one thing that we have to learn from this.
So there is definitely that entire debate carries on about populism versus, the kind of capital expenditure for growth that a state and the centre would push for. But Mr. Podar, when you talk about governments promising single window clearances, every few years you hear this. On the ground, do businesses believe that this time in West Bengal it's going to be different? Because we hear of this so often about the ease of doing business.
Yes, definitely. Because as I told earlier also, that if the government want, the single window system will help. Because you see, in last so many years, if we calculate the so many years, the first time after 50 years, the double engine sarkaris came into the state. So this will help us for lot of things to whatever we will support want from the center. That support will get directly from the center. And the big thing is that if the single window system will introduce fast, the people will show their interest to do this business there fast. Otherwise, you take the example of GST or other things. If the people will more involved into the solving all these issues, so this is very difficult for the traders. Traders are totally fed up with this system that lot of these implements and like this compliance is there. So now people wants to come out with that. So this will help, very much help to the.
But there was a huge perception damage that took place during the time of Singur Amrish. Do you think Singur still damages the investment credibility of the state, or you think investors have mentally moved on?
No, I think history will play a major part. And it's clearly up to the new BJP government, which comes in the state, to help people erase that memory. Because, I mean, you go back a couple of decades, I mean, Bengal was one of the, like in the front as far as industrialization was concerned. And we have seen that decay. And I think this is a great time for them to rebuild that back. I mean, they've got that opportunity. I don't think they should lose it. So possibly a Gujarat type model implemented sincerely in Bengal, I think should show results. But don't expect results overnight. Like I said, it will take about 2 to 3 years for industries to come back into. But then I think those steps, if taken properly, I think should pay off before the next election.
Let me ask Mr. Podar if he agrees with you. You know, Bengal realistically competing with the likes of a Gujarat, Maharashtra, a Tamil Nadu that was brought up for the large investments. Do you think that is possible, or does it need a different strategy now, a niche strategy considering its history?
Some different strategies definitely will work out, but the mindset of the people are thinking if some new change has come now, so they can put up the new ancillary unit and etc. Because you see, we have seen in the time of Singur, when the Singur gone back from the year. So now maybe the magic will not happen gradually, because you see, West Bengal is a big consumer state.
Yes.
And according to me, if you will ask me, frankly, we have 11 crore of people population, but I say always that we have the market of 40 crore people, because we have nearby states, 3-4 states, 7 sisters are sitting above the hills, and 3 countries are totally dependent, Bhutan, Bangladesh and Nepal namely. So this will help us, and the people may start, because everyone knows the consumption, if the consumption is there, they will put the industry here, so their cost will be lesser.
True.
So this will definitely help us.
What do you make of this entire push towards creation of more jobs as we go along, Mr. Bharadwaj? The manifesto of the BJP promising massive job creation, but now the question is, where are those jobs realistically going to come from? How soon can they actually materialize?
See, if you look at it from the number of enterprises that are in the West Bengal, it may be close to 90 lakh informal enterprises. But how many of them are registered? Less than actually 20% are registered. And why people are not registering, or they have been shying away from registering, is because of this fear of intimidation and extra legal collection of money, etc. So I think the jobs are already there and the opportunities are already there. The demand is already there. The only thing is if the situation of predictability, the environment of predictability, zero tolerance for extra legal collection and local interference is there, people would start investing and declaring and registering their businesses. So the businesses that are there informally working, employing people informally would come into the formal fold, would also declare the workers on rolls. And that would happen if this environment is more stabilized. And many of our members are actually reacting very cautiously because they know they say that the system of intimidation has been very institutionalized in the last 30-40 years. So they would be wait and watch for a couple of years, yes. And also how opposition parties, because it has not been completely decimated.
Yes.
So there are approximately 90 seats or maybe around 100 seats by the time the time closes. And they are going to be a formidable opposition.
True.
So, would we see some kind of a backlash from the opposition, street fights and street demonstration and something? Whether that would happen or not, only time will tell. But Bengal has seen a history of this. Similarly, the Canada has been has seen a history of this. So I think it's a wait and watch. But so far, so good, and the people look forward to it very cautiously and optimistically.
So this is a very valid point, Mr. Sahu. Do you agree with this? Because it's still a formidable opposition that Bengal is going to have. Going ahead, when you're talking about migrant labor, there are more than 20 lakh workers who have migrated out of the state for work. So now the question is, can the state reverse that trend, or is outbound migration so structurally embedded and you're going to have resistance as far as the culture of the opposition, which was, of course, the incumbent government is concerned?
Fact is, so many people have migrated out of West Bengal. It shows the desperation for the jobs. I think your data only shows that how over 65 years, West Bengal has lost from 10% share in the national GDP to 5% today. Today, West Bengal gets only $2 billion or less than that compared to 18 or 19 billion the Tamil Nadu case. I think overall, people have realized that, okay, the West Bengal as an economy, as a place for industrialization, for job creation, for, better standard of living. I think there is a good understanding of the people. I'm sure there would be better cooperation, even from the opposition parties, that, if they go the other way, come on the way of development and progress and job creation, I'm sure it will not be taken very positively by the... So more or less, I feel it is all positive from my side, the way I look at it.
Yes.
Given that, the BJP always creates an ecosystem for business, is ecosystem for reforms. I'm sure all these pain points that have really created havoc or harrowing experience for the MSMEs or business houses, things would take maybe little time, but will certainly happen. It's not only single window clearance, it's the structural rigidities on the ground.
Right.
That will take some time for the investors to get that confidence. And investment is all about the certainty, and certainty both in terms of governance, stability, as well as the rate of return. And given that these are the objectives of the central government, I'm sure this BJP-led government, the next government in West Bengal, will certainly follow that.
Dr. Vijay Kumar, a quick word from you. What is the single most decisive reform that you would like to see in the first 100 days that would convince industry and investors that Bengal is serious about ending industrial flight and get the jobs back?
Well, the single most important reform that we are looking forward to is some breakthrough in land acquisition.
Right.
Land acquisition, the problems in land acquisition has been a major constraint in the execution of projects. Many projects have been stalled, like in railways, metros, ports, all because of the non-availability of land. So there has to be a breakthrough in that. And also, trust has to be transmitted. Trust is hugely important. Businessmen had lost trust in West Bengal for the past, not just during Mamata regime alone, even during the CPM regime before that. That trust has to be brought back. Even if you go for single window clearance and big reforms in ease of doing business, it will not translate into the ground. I'll give you the example of Kerala. In Kerala, during the last 10 years of the LDF government under Pinarayi Vijayan, the government has gone big way into ease of doing business. In fact, Kerala is one among the top 4 states in India in the ease of doing business. It has climbed quite a lot.
Yes.
But this has not translated into investment on the ground because the LDF had a very long, decades-long anti-business, anti-industry attitude.
Right.
Therefore, the trust factor is important. Unless you give trust to the investors,
consistency of policy. Yes.
Money will not come back.
Very true.
Money will not come.
Yes, indeed. So Bengal's political shift has definitely opened a window, like all of you are saying, but economics does not run on sentiment alone. Jobs will not return on slogans. Investment will not wait forever as well. What matters now is execution. There is credibility that needs to be built and proof that this time the change is actually real, because optimism is easy. Delivery, though, is not. Many thanks to our panelists for joining us. Prabhakar Sahu, VK Vijay Kumar, Anil Bharadwaj, Sushil Podar, Amrish Baliga. Thank you for joining us and sharing your perspectives. And for viewers, this is an important piece because there is a massive political shift that's taking place in West Bengal. But rhetoric alone is not going to be enough. Now it's about execution. It's about the reforms that a new government will bring in that perhaps will change the fortunes of the state that have been stalled for some time now. We'll be watching that space very closely. I'm Vikram Oza from me and the team. Good evening.
I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to get the management to answer questions relevant to you. Watch Know Your Company weekdays at 11:30 a.m. to understand your next big bet. New year, new power panel, India market opening, now in its boldest lineup. This is where the trends get tested and stocks get conviction.
I'll recommend a buy call on a stock only when I'm fully convinced on the stock. With a table thumping buy.
And
this is day one of Vijay's victory. He could be giving a speech, he could be addressing media, not entirely certain. But days to come, as Vasudha pointed, is going to be difficult, as crowd control is something that Tamil Nadu police will find it difficult to manage. There is, of course, frenzy all around here as Vijay has become a powerful force as far as Tamil Nadu political landscape is concerned.
Actually, an incredible moment, Radhika and Padmaja. Chennai is the city of my birth. Obviously there's a date, but I can't remember when the Dravidian duopoly was, didn't exist.
So you are seeing an entire state machinery, an entire state administration that is going to be under a non-Dravidian dispensation for the first time in the 60s. So you are talking about a political milestone of enormous proportions right now. Imagine what would be going through the bureaucracy, the political system, the many layers of the IPS, the police, etc. in Tamil Nadu.
6 decades of that system.
How it is going to reconfigure now to this complete outsider, a person who has shown contempt for what the DMK stand for, calls them their ideological enemy, said he's got nothing to do with Dravidian politics, etc. And how that is going to get into a place like Tamil Nadu, which is, by the way, Padmaja, a very well-governed state. Vijay is on his way to meet his father in a short while from now. We'll have live coverage of that. We've already heard from his father and mother. Sam Daniel, in fact, is at the location where Vijay will shortly be arriving to meet his father. Sam, parents of Vijay have spoken out. We haven't heard from Vijay himself just yet, but very, very emotional scenes from his family so far today. Sam, tell us what's going on right there.
Well, Shiv, we come to you from outside Vijay's dad's house in the Adayar area, and actor Vijay, who's now set to perhaps take claim to form the next government if things work in his favor, is all set to visit his dad, who a short while ago felt so emotional that the family is so happy that almost a 20-year-long dream of actor Vijay has now been fulfilled, that he is all set to become the chief minister to fulfill his dream for Tamil Nadu, as he calls it. Hundreds of people are dotting either side of the road, stretching from the main road on the Adayar road here. And Vijay is set to first meet his father and then go to the Loyola College, where his constituency's counting center is, to officially get his certificate there. And then we'll have to wait and watch what will be his next political move. His party, although, is still confident that the counting isn't over yet and that they'll be able to touch that magic figure of 118 to be able to form, to get a majority of his own. And still, even in otherwise, they say they are optimistic that there will be support from unexpected quarters. Already the Tamil Nadu Congress sources say they are willing to extend support to Vijay. Remember, Vijay, in fact, the Congress had flirted with TVK during the seat-sharing talks with the DMK. At that time, sources indicated that the TVK was willing to offer 40 seats for the Congress, but the Congress used that to leverage and get more seats from its ally, the DMK. It's in that context now they say Congress could extend support. There are also other smaller parties like the CPI, CPM, MDMK, and perhaps PMK from the AIDMK alliance could extend support to Vijay, which could make them partners in the government and then be a strong ally as well. Let's speak to some young people here. Are you all happy about the development?
Yeah.
Did you vote for Vijay? What are the expectations?
While you speak to people, very quickly I want to tell our viewers what they are seeing on their screens. The first image of Vijay on your left, and on the right, Himanta Biswa Sarma, who's got one of the highest tallies in the state and definitely the highest tally for the BJP in Assam. He's now got 101 seats for the BJP, and more importantly, his party has scored a hat-trick in Assam. Yes, the first time around it wasn't under his leadership, but the second time, with him as chief minister, he steered the party to 60 seats on its own. The alliance got a majority, but this time the BJP on its own has a majority in Assam, plus the alliance has breached a century. The highest ever in Assam has been 114 for the Congress party, but this was way back in 1972. And after that, you've got the BJP storming to a hat-trick with 101 seats over there. But back to you, and while you speak to the people there, Sam Daniel, a quick update also, because Sam spoke about how the Congress may be flirting with Vijay, is willing to offer support. Rahul Gandhi has just spoken to Mamta Banerjee, to MK Stalin, and also spoken to Vijay and extended his congratulations to the man who has been the biggest surprise of this election. Yes, over to you, Sam.
Thank you. That's right. That's what we are hearing. But it will be an interesting night to observe and see what kind of political developments take place in Tamil Nadu, particularly to help Vijay stake claim. At the moment, Vijay is still at least short of 11 seats, 11 MLAs or 11 candidates to be able to stake claim to form the government. And his party sources indicate they're extremely confident, but we'll have to wait and watch what will be his ultimate call, whether he would try and get support from other parties, or would he wait and perhaps seek a fresh mandate, as many call it, to make sure that he'll have absolute majority on his own, now that his strength is proved. Many say that if he goes for a mandate after the 6-month-long wait, there could be an overwhelming support for him. But these are all at the realm of speculation at the moment. But his team is extremely optimistic. From which quarter will they get the support from? That's something at the moment nobody is opening their mouth. But the possibilities are Congress, CPI, CPM, MDMK, perhaps PMK from the AIADMK stable. There could be more clarity tonight. But at the moment, Vijay has certainly given a stunning performance with 107 seats. The party leading in 107 seats. Vijay himself leading in both the seats. He fought one in Chennai and one in Trichy East. And the TVK sweeping Chennai, the DMK bastion. In fact, Chief Minister M.K. Stalin at the moment has lost, and it all appears that his son Udayanidhi Stalin, if everything goes well, could end.
Sam, in fact, Prime Minister Modi has just put out his statement congratulating Vijay on his spectacular blockbuster entry into Tamil Nadu politics. He's just put out a statement there congratulating Vijay, and
the plot thickens.
The plot thickens. He says, gratitude to the voters of Tamil Nadu who supported the NDA in the Tamil Nadu Assembly elections. We will always remain at the forefront in addressing people's issues and improving their lives. Congratulations to TVK on their impressive performance, which is an understatement. The centre will leave no stone unturned in furthering the progress of Tamil Nadu and the well-being of their people. Because Padmaja and Sam, there has been so much speculation over which way Vijay will go. Sam has added another angle to it, saying maybe he'll seek a fresh mandate. All of this is speculation. He's spoiled for choice in terms of what he can actually do. And AIADMK minus the BJP, Congress, the other parties, whatever it is, the AIADMK, we don't know what he's going to do, because Vijay has made silence his companion and ally in this entire election, and I think he's going to continue to use it and keep everyone guessing until he actually makes a choice.
I want to ask you something. It's very few people who've actually managed to speak to Vijay. Most have just seen him at his rallies where he gives his speeches. You've actually met him. What is he like? Does he seem like somebody who's cut out for such a huge responsibility? It's one thing to be a superstar, but then it's quite another to deal with running an entire state, and that too of the size of Tamil Nadu.
Yeah.
Did he seem like he was ready for it?
Look,
cut out for it?
Look, he's a superstar, and even in his unassuming sort of persona, Padmaja, you can tell that this is a man who is a star. I'm a little biased because I grew up in Tamil Nadu, so I've always been aware of Vijay's stardom. But beyond that, I can tell you that even in his sort of humility with which he answered all our questions and interacted with us, and he's very sort of sober and soft-spoken. The things he said kind of signaled how ready he possibly is. Because when we were talking about numbers, he smiled and listened to what we had to say. And he's basically said, no, we're winning with clear numbers. We are winning with clear numbers, because we were talking about, what if you're kingmaker? If you have numbers and it's a hung, then who will you go with? And those things. And he smiled and he said, we are winning. We are comfortably winning. There is no tension about who we're going to go with. So, what did he see, and now what did Pradeep see that we didn't see, or somebody else didn't see, or the other pollsters or the other rivals didn't see, is a question, I think, for the history books. But ultimately,
it's about his ideological kinship, who he feels closest to in terms.
He didn't answer those questions. I think the reason why he didn't answer those questions is because he wants that to be something that is subjective, nebulous, keeps everyone guessing. It may be strategic as well, Padmaja, for a situation like this, when you when the huge adulation you have got is because you have distanced yourself politically from the status quo in Tamil Nadu, whether it is the AIADMK, the DMK, Dravidian politics, all the other stuff that happens, atheism, etc. Any attempt to sort of associate with one side or the other makes you more vulnerable and less distinct from the others. And I think that's something that he's going to be very reluctant to let go of. That's why no commitment towards any one sort of view in terms of Tamil politics. But Sam, I want to bring you back in on this discussion. You know, one thing we are not going to jump the gun about is, of course, the numbers, where they settle. Let that be the Election Commission's job. But clearly, government formation is going to be on the TVK's mind. They will be thinking about government formation right now. Those discussions, as Vasudha reported earlier, have already begun happening. The TVK has opened a channel of communication with the Congress, and I'm sure with others as well. We don't know what that inside track is yet. But who are the people who are close to Vijay, Sam, who will most likely be part of any Vijay-led dispensation in Tamil Nadu?
We understand from reliable sources from the TVK shift, the core members of actor Vijay's team could be part of the cabinet. This would include his General Secretary Bussi Anand, his General Secretary for Elections Adav Arjun, one of his spokespersons Raj Mohan, and another former IRS officer who is from Tiruchendur, who is fighting from Tiruchendur. He could also be in the cabinet. So they say the key team, his core team, is all set to be part of his cabinet. And they say there could be many surprises in terms of ordinary people who have been now elected to be appointed as MLAs could also be part of the cabinet. Young faces, people from humble backgrounds, they say he could consciously choose them to be part of the cabinet. And these names are certainly doing the rounds, but we'll have to wait and watch what kind of a shape would Vijay give us. Ultimately, it will be his prerogative. And right now, the mood is extremely jubilant here, as Vijay is all set to drive in here to visit his father, Director Chandrasekhar, who has played a very key role in nurturing a political interest in him and to keep that dream alive and active for over 20 years. And his father had said that it's an emotional moment for himself, as here it is, the convoy coming here, and Vijay is making his first stop before collecting the certificate from the counting center to take the blessings of his father, filmmaker S.A. Chandrasekhar, where he would meet his father and his mom before going to the Loyola College, from where he would get the certificate. Vijay had just left from his house at Nilankarai, and his first stop after this massive, stunning victory is his father's place, where any moment now we can see Vijay driving. Here he is, Vijay sitting in the front of this car and entering. Here he is, Vijay's car entering his father's house here at Adayar in Chennai. His first stop after the spectacular performance before he would go to the counting center, that's Loyola College, to collect the certificate that he has been elected as a member of the Legislative Assembly. And at the moment, the numbers are still, he's short by at least 11 seats for a simple majority, but his party is extremely confident that Vijay will be able to muster that number. Number one, they hope that there will be some surprises before the counting officially concludes this evening. Even otherwise, they feel that Vijay would get support from unexpected quarters. Much of speculation from here he would get the numbers, including the Congress and parties like MDMK, CPI, CPM, which they hope would be happy to extend support. But all these are in the realm of speculation. We'll have to wait for any official word. Some sources say that the swearing-in could happen on the 7th of this month. They say it's an auspicious day, but that only if there is an absolute confirmation and clarity in terms of who's going to support TVK so that he'll be able to stake claim to form the government here. PMK, some sources say, has asked for time till evening to be able to take a call. They fought elections in alliance with the AIADMK, the key opposition earlier. And now we'll have to see whether they would want to switch sides to Actor Vijay's thing. Tamil Nadu Congress sources, though, have said that they're optimistic that they would be able to support, but all would depend on what the Congress High Command in Delhi take. But they point out that at some point the Congress was keen to forge an alliance with Vijay, but it did not happen. At one point, even Vijay had said that Congress people, the real Congress people, are with the TVK. He had mentioned that in Tirunelveli. And they say there could be a change of heart and this could be a new beginning for the Congress. At the moment, they fought elections with the ruling DMK and they have 5 seats at the moment as things stand now. So lots of questions, but certainly a very stunning performance by Actor Vijay, who has emerged to be, at the moment, as the largest party. His TVK has emerged to be the
Get pictures from the inside, Sam. It's fantastic that NDTV's cameras have been positioned just at the right place to capture Vijay entering his father's residence in Adyar, not a long distance away from Neelangarai, where Vijay himself lives. It's also interesting what you say about the Congress missing an incredible opportunity. A small band of the Vijay faction of the Congress party who are very keen on tying up with him for this election must be having the biggest I told you so moment for the Gandhis. Remember, Rahul Gandhi may have been keen on some kind of a connection with Vijay. He, remember, was one of the first few to reach out to him after the Karur tragedy. Express his condolences over the deaths of fans. That was being read, Padmaja, as possibly the beginnings of some kind of a new dynamic. But the Congress's relationship with the DMK is of course, there are way too many interlinkages there, even though there are some aberrations. But the possibilities now are endless. And politics, of course, as always, is the art of the possibilities. So we don't know whether there could be something cooking here. But Rahul Gandhi, who Vasudha was just telling us, has gotten together with the other India Alliance members to...
Vijay coming.
Vijay's first pictures from that balcony.
Oh, he does have a balcony.
He does have a balcony. His father has a balcony. His father has a balcony.
On the balcony of his father's house, waving at the waiting crowd here, walking both sides and waving his first public appearance in that sense. From a vantage point, after he visits his dad to seek his blessings before he would go to collect the certificate from the counting center, that's the Loyola College. Fans on a frenzy here outside his father's house as Vijay waves hands from the balcony of his dad's house at Adyar. Moments before he would go to collect his certificate, Vijay, just a few minutes ago, arrived at the home of his father, Director S.S. Chandrasekhar, at his home in Adyar, and now he's all set to leave from here to the Loyola College to collect his certificate. Certainly a stunning performance by Actor Vijay, emerging to be the single largest party, something unprecedented in the history